So let's begin the CA Inter audit and auditing and ethics, the face-to-face revision. And of course, the entire this particular session is being recorded and also live telecasted. As I already told, as an introduction to this particular session, like what are the topics that we are going to cover in this and what we are not covering. By the way, is the audio clear to everyone? Yes, is it crisp and clear? Yeah. So I already told in the video before I declare about this particular revision, there are certain topics which I will not be covering. Like for example, if you take the entire syllabus, we are having the syllabus is for 120 marks, correct, right? So this 120, out of this 120, we know that 30 marks is for MCQs and 90 marks is of descriptive paper. So 30 marks is for MCQ and 90 marks is for descriptor. Earlier in the old scheme, we also have 14 marks of true or false statements, correct or incorrect questions. But now in the May attempt, whatever is completed in the new scheme for the first exam in the new scheme May attempt, they have not tested any correct or incorrect questions kind of. So complete 90 marks are going to be for descriptive. By the way, if at all you don't know earlier how in the old scheme is, true or false statements they'll be asking, each one carries 2 marks. Now in the new scheme, if you observe, they are asking 3 marks questions. They are asking 3 marks descriptive questions. So instead of asking true or false statements, they are anyhow asking 3 marks questions. That could be the logic why they discontinued correct or incorrect statement, that concept. So now we have 30 marks MCQ and 90, and within this we have 20 marks choice. Within this we have 20 marks choice, and how remaining 70 marks will be tested is 14 marks questions of 5 each. So they'll be testing 5 questions. Each of that carries how many? 14 marks. Now within this 5, question number 1 will not have any choice, and that is why it's called as what? Compulsory question, because that will not have any choice. Whereas remaining, they will give 5 questions, out of which 4 you need to attempt. Now if you look at the composition of each and every descriptive question, suppose for example whether you take question number 1 or whether you take these 4 descriptive questions, each of it carries 14 marks. Now, out of this they'll be asking like 2 4 marks questions and 2 3 marks questions. So 8 plus 3 plus 3, total 14 marks they'll be asking you. So this is how the pattern of testing. Most of the questions, 90% of the descriptive questions are either 4 marks questions or 3 marks questions. Whereas in question number 1 alone, they'll ask you 5 marks, 5 marks and 4 marks. 3 questions possibility is there. This combination is also possible. Either within a single question, either 3 questions they'll be asking or 4 questions they'll be asking. Any of these pattern only it will come. Effectively, if you observe, total 5 main questions, each question will have 4 sub questions or 3 sub questions. Either 4 sub questions will be there or 3 sub questions will be there. So which means 5 into 4, assuming 4 sub questions, 20 descriptive questions will be there. This is how the question paper pattern is about. Since we are at the revision stage where our exams are just hardly 1 month away, not even a month, we are just 25 to 28 days away from the exam. So that is why I'm specifically discussing about the paper pattern that is followed. So each question will have 4 questions and 5 into 4, 20 descriptive questions will be there. Now what I always tell is, let us be perfect in 3/4 of the syllabus. Let us all be perfect in 3/4 of the syllabus, rather moderate and below average in 100% of the syllabus. Like every student, most of the students in every chapter, they will try to take some choice. In every chapter they will take some choice, like they analyze each chapter into 3 categories: A category, B category, C category, which is a very dangerous approach. Now in the May exam you take, November 23 old scheme exam you take, May 23 you take, past 6 or 7 attempts if you take, in fact 8 attempts if you take, past 4 years, 5 years, the pattern of testing has changed a lot. Now there is no discrimination between A, B, C category. Understand paper setter point of view. The person who is setting the paper, what instruction is given to him. He can test any question from anywhere in the given book. Whatever ICS study material is there, from any corner he can test. So, like typically, out of 120, this entire, like we, if at all you recollect, we are totally having 11 chapters in CA final, sorry, CA inter audit. We totally have how many? 11 chapters. 11 is what the institute number is also. Institute number, as per institute book, total number of chapters are 11. And the 11th one is what actually, terms of engagement and ethics. So that is what the 11th chapter. First chapter is nature, objective and scope of audit. So these 11 chapters are asked for 120. Like within this, what I always tell is these chapters, risk assessment and internal control. Different types of entities. What is it? Different types of entities, or nothing but in the institute book it is called as audit of various entities. Inside that you have government audit, societies audit, hotel audit, cinema audit, like that. There is some topics were there. I hope, since it's a revision class, I assume that you are aware of the syllabus. Okay, so these two, and even SA 520 which is analytical procedure, SA 530 which is sampling. Except these 4 topics, rest all other topics we will try to cover with this revision. Rest all other topics. 90% we will try to cover each and every sub-concept also. But detailed line by line reading is not possible because the time that we have is hardly 22 to 23 hours of time. Within this 22 to 23, we have to cover almost rest of the entire syllabus. 3/4 syllabus have to cover. Now these 4 topics collectively occupy 20 marks to worst scenario 30 marks. 20 to 30. This is the maximum weightage of the topics which we are not covering in the revision. Whereas remaining all other topics, I'm not listing it out. They occupy minimum 90 marks, 200 marks. Minimum 90 to 100. So this is what we are going to cover in the revision session. Now, so this is the brief introduction. Now, what are the chapters that we have? If you look at, like in this book, you will find one chapter called Fundamentals of Auditing, where I will be discussing about certain basic terminology. What are the basic terms that we have? Like certain terms which repeat across every chapter. These terms will repeat in every chapter. So that will be discussing nature, objective and scope, ethics and terms of engagement. If you look at ICA book, this is actually 11th chapter, but that is not something to be discussed at 11th place. It is something to be discussed at first place, at the initial level. Inside this, there is a topic called part 3, quality control related discussion is there. This we will be discussing at last. Then we will be discussing immediately audit report. When we are discussing audit report, simultaneously we will be discussing some of these standards. Then we will be discussing various auditing standards. Then we will be discussing audit strategy chapter. Then I will discuss items of financials. Finally, I'll come to bank audit. Then I'll come to quality control. Are you getting the point? Quality control standard you can understand only when you have a detailed, brief idea about all these issues. Like only when you understand remaining standards, audit report, opinions, like documentation, only when you understand all these topics, combined understanding of all these topics is what quality control is about. Quality control means what? It says how qualitatively you have to render the services. What are the various segments, various like parts that are there when you are rendering services. So that is what quality control typically contains. So that we will be discussing, quality control will be discussing at last. Understood clearly? That's it. So without any delay, let's begin the fundamentals of auditing. Just a minute. Yes, coming to the book which we are using, this is the latest smart notes, which is nothing but a colored notes, which covers 100% of the syllabus from ICS study material as it is. Like whatever topics they have covered, whatever definitions, concepts, everything, we as it is without any modification maintained intact. But we have colored it so that you can understand much more better way, you can differentiate. And you see here, whenever there is a change in color, you have to change the sound of reading. For example, concepts of periodical checking and verification existed even in those times. The word audit originates from Latin word audio, meaning to hear. You're able to understand? So every time a color changes, you need to give a pause, preferably. In fact, some students want to give pauses at every 3-4 words. Like for me, irrespective of whatever is their color, I can give pauses. The reading, how we are reading is very important to understand. So understanding is a byproduct of quality reading. So you have to read qualitatively. Don't worry, through this revision session, I will be teaching you how to read the subject, like how to remember the subject in a much better way. All the techniques I'll be discussing. So this is the entire 100% concept book. Parallelly, we also developed a question bank. You can see this question bank. So question bank, and in this we have included question papers RTP, MTP from May 2022 onwards. Even the latest September 2024 MTP, RTP is there, right? Even that is also included. MTP 2 is not there right now. So MTP 1 is included, RTP questions are included. Now if you see, we have given table of contents. For every chapter you see, there is a breakup of 3 to 4 parts will be there. Illustrations from ICS study material, test your knowledge are from ICS study material, question papers, questions from RTP, MTP and question papers. So in every chapter you will find separate plot, separate section for ICS study material illustrations, separate ICI test your knowledge questions, and all past examination RTP, MTP questions at one place. That too, if you look at some chapters where standards are discussed, we have given past year RTP, MTP question paper questions and all standard wise breakup. We have given standard wise breakup. So you can see standard wise. This is purely question bank. Those of you who do not want to get hard copy, suppose, you can happily get free PDF, which is available in our website. You can open the website restofcasma.com. So inside that you will find colored smart notes, PDF, which is free. The PDF, whatever the PDF which I'm using, whatever the book that is available for sale. Getting it? Like book, as I already told you can pick it, or you can order in the website also. In our website also you can order. If at all any of you are unable to take physical hard copy by attending face-to-face session, you can order even in the website. The same website you can take. So this is the book. And suppose you see question bank. This is a question bank. So this is a question bank. You can download it and then use it. You can even take on your own print also. That is your choice, absolutely. So PDF is given at free. Hard copy is also available for sale. So that is your choice. For face-to-face, we are selling at the premises itself, the hard copy. Question bank right now is not available as a hard copy. You have to place order. We will try to bring question bank depending upon requirements of the students from tomorrow or day after getting it. But rest, smart notes, hard copy is available, colored notes. If at all you are studying this concept book and this question bank, you need not touch any other resource. The revision class which you are attending now, and the question bank, whatever concepts I'm covering in this revision class, 3/4 syllabus, and the question bank, corresponding question bank, if you solve that, that's enough. And I'm also releasing MCQ book, by the way. MCQ book will be available as a free PDF on the same website in the same place. MCQ book also will be available by 22nd or 23rd August. It will be available by 22nd or 23rd August onwards, MCQ booklet. And I will also show you how we can design MCQs on our own. 2 minutes, I'll design one big case study. You give me 2 minutes time. In 2 minutes, I will design a big case study before you write them in live. I will do that. When I'm discussing the subject, nature and objective and scope of audit, I will do in live in 2 minutes how to design a very big case study with 5 MCQ questions with 4 options each. We'll do that exercise. So this is about the material which we are using. So I already covered what is a portion that we have, what syllabus that we are covering, what chapters that we are not covering. Let's proceed to fundamentals of auditing. So let's begin the first topic, that is fundamentals of audit. Now we all know that audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size and legal form, when such an examination is conducted with a view to express an opinion thereon. Simply speaking, today the companies are expanding at global level. Indian company shares are being sold at outside company shares are sold at inside. Today you are downloading some US stocks related applications, you are buying shares just by looking at financial statements and their reports. And without even actually visiting the company, without even knowing who are managing the company, you are blindly trusting the financial statements and investing. Because we know that these financial statements are verified for its authenticity. These financial statements are verified for its authenticity. And that process is what nothing but called as audit. So now what they mentioned here? Audit is an independent examination of financial information. So what is financial information? So what is financial information? Financial information is broadly classified as two parts. One is books of accounts and financial statements. Both put together we call them as what? Financial information. Information about entire financial aspects of the entity, where it will be there. Books of accounts and financial statements. So we know very well what do you mean by books of accounts, because in fact I have given you the definition of books of accounts somewhere here. So books of accounts means what? All sums of money received and expended, all sales and purchases, assets and liabilities, items of cost. So all this data, wherever we keep, that entire set of documents, we call them as what? Books of accounts. Today the books of accounts are completely what? Electronic format. Today almost in every entity, small entities, medium entities, large entities, irrespective of size of these entities, books of accounts are being maintained in electronic form. Now these books of accounts includes, by definition of books of accounts, includes supporting documents. What are they? Supporting documents. Supporting documents means what? Very simple. Suppose you purchased goods. Now the other guy from whom you purchased, from whomever you purchased, they'll give you the bill, right? And that's called purchase invoice. And that purchase invoice is called as what? Supporting document. In books of accounts, we will generally have ledger accounts, journal sheets, ledger sheets, trial balance, and balance sheet and P&L, which is in the accounting software. Then we should also simultaneously prepare something called financial statements. Now these financial statements are broadly classified into two types: general purpose financial statements, special purpose financial statements. What is general purpose and what is special purpose? In this entire subject of CA inter audit, we are discussing the subject in the context of audit of general purpose financial statements. We are discussing this in the context of audit of general purpose financial statements. Then what is special purpose financial statements? Let's understand general purpose after we discuss what is special purpose financial statements. What are special purpose financial statements? These financial statements are the one which are prepared using special purpose framework. If the financial statements are prepared using special purpose framework, we call these financial statements as what? Special purpose financial statements. If the financials are prepared using special purpose framework. What is a special purpose framework? Special purpose framework is a financial reporting framework. What is it? It's a financial reporting framework. What do you mean by financial reporting? What do you mean by framework? Financial reporting means preparation and presentation of financial statements. In accounts, you have a chapter called preparation of financial statements. In accounts, you have a chapter called preparation of financial statements. So preparation and presentation of financial statements, preparation and presentation of financial statements is nothing but financial reporting. Financial reporting is nothing but preparation and presentation. See, they are not using the word final accounts. They are using the word financial reporting, because today the financial statements are prepared not for our self-evaluation, but to report it to various stakeholders. Like some foreign investors may use, Indian investors may use, stock market analysts will use, employees of the company will use. Anybody can use these financial statements. So that's why when we are preparing financials, it is not for our own evaluation. We have our own books of accounts. We can evaluate about our financial position, financial performance based on our books of accounts. Then why are we preparing financial statements separately? In order to report it to external parties. In order to report it to external parties. And that's why it's called as what? Reporting. Financial reporting. The process of preparation and presentation. You see, they're emphasizing the word presentation because you are presenting the financial statements to outsiders. So preparation and presentation of financial statements is called as what? Financial reporting. What is framework? Framework means rules and regulations. Framework means what? Rules and regulations. Framework is nothing but rules and regulations. So what do you mean by rules and regulations? Like framework, what do you mean by rules and regulations? You know, this framework is a word which is used in multiple contexts. It is not in the just context of financial statements. It may be within the context of financial statements, or it may be other than the context of financial statements. If at all the rules and regulations are drafted for financial statements preparation and presentation, we call it as what? Financial reporting framework. Suppose if rules and regulations are formed for construction of a building, it's engineering framework. If rules and regulations are formed for some water pollution or any air pollution related thing, then it's pollution control framework. What is it called as? It's pollution control framework or environmental framework. If rules and regulations are made for development of laws and regulations, then it is called as what? Legal framework. Framework is a word which can be used in any context. The framework can be used in any context. We are discussing which framework, in which context the framework we are discussing? Preparation and presentation of financial statements. Now, so what is a special purpose framework? It is basically a financial reporting framework. We are discussing in the context of financial reporting framework. It's a financial reporting framework where financial statements are prepared and presented. Exactly as per the requirement of the framework. I will show you the definition of the in this one, special purpose framework. You see here in the definition, financial statements prepared in accordance with a special purpose framework. If the financials are prepared as per requirements of a specific user, then they are known as special purpose financial statements. If the financial statements are prepared exactly as per the requirement of a specific user, here I will add this word, prepared as per prepared here exactly. I will add one word for understanding the intensity. If the financial statements are prepared exactly as per the requirement of a specific user, then they are known as special purpose financials. Now you see, suppose some when mergers and acquisition happens, amalgamations, we call it as amalgamations. When companies get amalgamate, the amalgamation means what? There is a selling company, there is a buying company. Selling company will be selling all its assets and liabilities to buying company. Buying company is called as purchasing company. I hope you are aware of it. Purchase method, pooling of interest method, all that. Okay. So now before the purchasing company purchases the selling company, purchasing company want to see exactly true financial position, true performance of this selling company. Now selling company gave, sir, we have prepared balance sheet P&L from the past 10 years. You take all this balance sheet P&L for the past 10 years that we prepared, they are giving. You will understand position and performance, all that. The purchasing company said very clearly, this is a general purpose financials which you prepare every year, is a general purpose financials which generally useful for everybody. But now I want to purchase your entity. Normal accounting principles may not be sufficient for me. You have to prepare entire financial statements, let us assume on a cash basis. You choose cash basis of accounting, purchases, entire sales, entire purchases, all expenses, all revenue, entire thing, account it on cash basis. Your P&L account shows super profit, I understand, but all of it are credit sales. And all the credits also turning into bad debts. So I exactly don't know how much cash profit that you are generating in reality. So I want to know your real position in cash terms. In terms of cash, I want to know exactly how much you are making money every year. I don't want your assumptions, accounting estimates, provisions, accrual basis, ignore all that. Of course, I take that into account. I want even general purpose financials. Every year, whatever the financial statements that you prepared for the past 10 years, I will definitely consider that. But in addition to it, I want you to prepare financial statements of past 3 years under cash system of accounting. Why I want this? I have my own reasons. Now tell me, this selling company, as per the requirement of the purchasing company, should prepare financial statements on a cash basis, right? Now, the financial statements are being used by everyone or only the purchasing company? Only the purchasing company, exclusively for the requirement of a specific user. If we prepare the financial statements, we call them as what? Special purpose financial statements. Are you getting it? Special purpose financial statements are generally confidential in nature. They are not a public document. Special purpose financial statements, you need not inform to ROC and all. You need not file with any regulatory authorities and all. This is just for internal settlement purposes. These are internal documents. They are not relevant for outsiders. Are you clear? Then what is general purpose financials? Whatever every year every company prepares, right? Balance sheet, P&L. They are all called as what? General purpose financial statements. These financial statements are prepared using generally accepted accounting principles. These financial statements are prepared using accounting standards. These financial statements are prepared by following Schedule 3 in case of a company. These financial statements are prepared as per IRDA financial statements framework in case of insurance companies. These financials are prepared as per Banking Regulation Act format in case of banks. Whatever the banking regulation format, whatever IRDA format of financials, whatever Companies Act Schedule 3 format, whatever accounting standards, whatever NDAs, they are all collectively mainly talking about general purpose financial statements. What is the purpose of financial statements? No specific reason. Generally, I am preparing every year. As a custom, every year we want to discuss, we want to disclose what is the performance of this year, what is the position on so and so date. As a yearly practice, we are doing this. This is general purpose. The users are so many. Then what is technical definition of general purpose financial statements? Suppose if the financial statements are prepared in accordance with general purpose framework, they are called as general purpose financial statements. What is general purpose framework? That is a financial reporting framework. General purpose framework is a financial reporting framework designed to meet the common financial information needs of wide range of users. General purpose framework is a financial reporting framework. How this framework is developed, how this framework is designed, how the rules and regulations are drafted, they are designed in such a way that it will meet common financial information needs of wide range of users. Suppose my customers, my company has some customers, they are depending on my products, but they want to know whether they can depend on my product or not. Like in long run, can they depend or not, they want to know. First of all, if they want to use my product forever, some 7 years, 10 years, 15 years, so long I should be existing, right? Okay, customer is ready to use the products, but I should also be existing, right? Now the customers will check my general purpose financial statements to see how long the company is working, what is the profit of this company, what is the position of the company, all that. Tell me one simple example. Whenever somebody comes and tell you that I'm doing a business, what questions generally you will be asking? What business you're doing, how much turnover you're having, much before turnover, what business you're doing, how much you invested in the business, capital, how much is the capital, where you invested, what you purchased, then how much is the turnover that you are generating, how much is the profit or loss that you are having right now, what is the position of the business. Is this a common question we ask? Even if you go to a banker, you ask for a loan, they will ask the same questions. You tell any of your friends that you are doing a business, they will ask generally these questions. Means generally people want to know some common information about our business. Generally people want to know some common information about our business. So everybody want to know, whether it be it my customer, be it my creditor, be it the banker, be it my shareholders, or even my directors, even the employees, even the government, tax departments, everybody want to know exactly what business I am doing, how much turnover I am making, what are the expenses that I am incurring, what is the profit I am getting, where I have invested my assets, what are the liabilities I have, what is the capital I have invested. Generally people want to know these informations, correct? Common financial information needs. What is it? Common financial information needs of wide range of users. They may be shareholders, they may be businessmen, they may be creditors, they may be banker. Everybody want to know some financial information needs. Commonly they want to know. Now tell me, when multiple public is involved, when multiple people from various categories of public are involved, generally their government enters. Generally their what? Government intervenes. Are you getting the point? See, if at all it is a transaction between you and some another guy, two people, between two people, government need not interfere. You both will discuss terms and conditions. If at all the other guy cheated you, then civil court procedure and all will apply. But generally, when my data is being used by thousands of people, who we also don't know, we don't know who is going to use, who are going to use. When public is being used, their government generally interferes. General purpose framework is generally decided by what? Government. That's why you see, we prepare financial statements of a company by following Schedule 3. Who gave Schedule 3? Under Companies Act it was given. By Parliament it was decided. Are you getting it? Because why? Because a company financial statements are not just used by the owners. They are even used by shareholders who are also owners. But they don't know what is happening in the company. Reliance Industries is there. 25 lakh number of shareholders they have. Number of shareholders, I'm telling. 25 lakh shareholders they're having. It's not about number of shares, not paid up capital. No. Number of shareholders are 25 lakh. Tell me this question. Do you have right to visit the company? A shareholder. Can a shareholder has right to access to books of accounts? Simple question. No. The answer is no. Shareholders do not have right to access to books of accounts. Section 128, what it says, books of accounts can only be accessed by board of directors and any person authorized by them. Books of accounts you can't access. Suppose if at all Companies Act has given a power to shareholders, yes, you can access books of accounts. What will happen? Every day 10 shareholders will go to corporate office of Reliance. And you know what? When books of accounts we are accessing, like tell me, we commerce students itself, we don't understand what is exactly books of accounts unless we solve the sum. Correct? We generally don't understand. How do you think a normal shareholder who is not from commerce background understands about books of accounts? Correct? So definitely, if at all that access is given to shareholders, what will happen? Every day 100 shareholders will go to Reliance corporate office, which is there in Mumbai. Every day they will be sitting and asking the accountant, what is this, why you spend like this, why you spend like that. I'm a owner, this fellow is having one share only, and this fellow will go and do all this overaction. Now accountant will be sitting and explaining, because you're the owner, even one share also you're a owner. So tell me, is this risky process or not? That's why Companies Act cleverly said books of accounts are accessible only for board of directors. Now 25 lakh shareholders who are having their money in the company, they can't visit the company, they can't access to books of accounts, they can't look at what exactly company is doing. Are you getting it? That's why regulatory is there. That's why the lawmaker is there. That's why MCA, Ministry of Corporate Affairs, is there. So they define. You don't worry. Don't go to corporate office and all and disturb them. Don't worry. What you want information? You want to know exactly where and all company spent. You want to know exactly how the company generated income. You want to know what assets they purchased, what liabilities they have. You want to know all this, right? Don't worry. Company will give all the details. We will design a framework in such a way that you will get whatever information you want in that. Not just you. Government departments want to know. Prospective future investors want to know. Banks also want to know about what is happening inside the company. So considering all the financial information needs of various users, we will develop rules and regulations on how to prepare financial statements, what information should be included in financial statements. Let us prepare that. That is why general purpose framework is controlled generally by government. General purpose framework is generally given under law. Are you getting the point? So it's a financial reporting framework which is designed to meet common financial information needs of wide range of users. Now this is general purpose framework where fundamental accounting assumptions, GAAP, accounting standards, these are the statements which are prepared annually. That too every year they prepare, correctly? It's not just 1 year. Every year they prepare periodically. So these are the characteristics of general purpose financial statements. Understood clearly? Financial statements are two types: special purpose financials, general purpose financials. Now tell me, in our CA inter audit, we are discussing audit of financial statements. See what is the definition of audit? What it says? In order to give opinion on financial information, auditor is examining independently the financial information, irrespective of size, legal form, all that keep it aside. But we want to give opinion on the financial information. Ultimately, we want to give opinion on the financial statements. So financial statements means what? Generally means what? General purpose financial statements. Entire CA inter audit subject we are discussing in the context of general purpose financial statements audit. In CA final, we have even audit of special purpose financial statements in the syllabus. We have audit of special purpose financials, which is actually there in 800 series. We have standards on auditing, right? I hope every one of you know that there are standards on auditing, and we have standards on auditing which are numbered in hundreds, 200s, 300s, 400s, 500, 600, 700. Yes or no? Like that, we have series up to 800. It's up to 800 series. Auditing standards are up to 800 series. 800 series auditing standards deals with special purpose financial statements, which this particular syllabus we have only in CA final. There are 3 standards: 800, 805, 810. So these 3 were there only in the CA final. Then we have standards only up to what? 700 series. Now all these standards predominantly discuss about what financial statements? General purpose financial statements. Up to 700 series, all these standards predominantly discuss about what? General purpose financial statements. We discuss in the context of general purpose financial statements audit. Now again, these general purpose financial statements, no, they may be prepared. These general purpose financials, they may be prepared using a fair presentation framework or compliance framework. This terminology, the terminology that we are discussing in this particular topic is very important, because these are the words which we come across every time. First chapter, first question, second question or second topic, what is the objective of audit? You remember what is the objective of the auditor? The objective of auditor is to obtain reasonable assurance whether financial statements are free from material misstatement and whether the financial statements are prepared in accordance with the applicable financial reporting framework. What is applicable financial reporting framework? What is financial reporting framework? What is financial reporting? What is framework? That is what we are discussing. Everywhere, in across various standards, we continuously come across the word financial reporting framework. In Audit Report 700 series, we continuously discuss the word fair presentation compliance. Fair presentation compliance. What does it mean? Are you clear? So, this general purpose financial statements can be again 2 types. One is compliance framework. Another one is what? Fair presentation framework. Generally, no, it's not just about general purpose. Financial statements based on presentation. Based on presentation, the financial statements, the frameworks are 2 types: fair presentation framework, compliance framework. You know what is a compliance framework? It is a framework where you have to prepare financial statements exactly, as per the requirement of such framework. Where you have to prepare financial statements exactly as per the requirement of such framework. It refers to a framework where financial statements are prepared and presented in accordance with requirements of such framework. You see the word, without deviation, no deviations. Purchasing company asked you to prepare financial statements on cash basis. I know under Companies Act cash basis is not allowed, but I am not asking you to prepare financials as per Companies Act. That is internal, between us only it is. You are not going to publish outside. You prepare financial statements exactly as per my requirement, for my special purpose requirement. Exactly you follow these rules. Purchasing company will give rules for preparation of financial statements. They will give the rules. You have to prepare exactly like that. You can't deviate. Sir, some of the rules given by you are not fair. Like for example, I am following depreciation, sir. Like I am calculating depreciation. Very simple example I'll take. I am following depreciation. I am calculating depreciation. There is a mission which I purchased. For that mission, units method is applicable. For that mission, what? Unit method is applicable. But you are asking me to use depreciation method either SLM or WDV, which is not fair. In my company, for that particular mission, which is a high costly mission, where depreciation amount is very big, but you are not allowing me to deviate. That is what compliance framework is. Whether that method is suitable or not, whether the rules which I give to prepare financial statements is suitable or not, doesn't matter. You have to follow that rule. You can't deviate from the rule. You can't deviate from the rule. And that is called compliance framework. What is that framework is called as? Compliance framework. Compliance framework is a framework where financial statements are prepared exactly as per the requirement of such framework without any deviation. Exactly have to follow. That is called compliance framework. Now, what is fair presentation framework? What is Fair presentation framework. Fair presentation framework, if you see, it refers to a framework. Fair presentation framework is a framework where financial statements are prepared and presented in accordance with requirement of such a framework. You see, the definition is almost similar to compliance framework. It refers to a framework where financial statements are prepared and presented in accordance with requirements of such framework. Without deviation is what I added actually. In the original definition it is not there, but to convey you the meaning of the definition I added this. And you see, fair presentation, exactly same compliance framework definition, only copy pasted. That is why I gave here in the bracket word compliance framework, same definition, but it is not end there. The definition not ends here. The definition continues and may deviate from the requirement of the framework, may deviate from the requirement of the framework to achieve fair presentation. Explicitly, they'll give you the word, they'll use the word explicitly, may deviate, explicitly may deviate from the requirement of the framework to achieve fair presentation. What does that mean? Suppose if you look at accounting standard, suppose my company is there and I have to prepare financial statements every year, general purpose, let us assume. But when I open and see accounting standard, for example, the accounting standard says only WDV or SLM method. For example, accounting standard says only WDV or SLM. At the end of the standard, they gave one more point. If the method suggested under this standard is not suitable for the company can choose any other method which is suitable in that scenario. The company can choose any other method suitable in the given scenario, which means the accounting standard is offering you flexibility to deviate, correct? The accounting standard is offering you a flexibility to deviate from the original requirement. Original requirement is what? Either WDV or SLM, whatever method. But if that method is not suitable, you can deviate. If the accounting standard, if the generally accepted accounting principle, if the framework specifically, explicitly, if it is telling you, if it is explicitly is telling you to deviate, you are allowed to deviate. By the way, what is the objective behind deviating? Do we want to violate? No. Why are we deviating? So that fair presentation comes. In my company, that mission is depreciable on units method, sum of units method. So units method, if I follow, I will get right amount of depreciation every year. My financial performance, profit and loss will be the right amount. Are you getting the point? So in order to achieve the fair presentation, I am deviating. Is the deviation allowed? Yes. If explicitly the framework is allowing you to deviate. If explicitly, if the framework means what? The rule according to which you are preparing financials. The rules and regulations according to which you are preparing financials. If these rules and regulations explicitly is allowing you to deviate, then that's a fair presentation framework. Not just about deviation. It is not just about deviation. It can contain disclosures beyond the requirement of that framework. Suppose accounting standard you see or schedule 3 you see, for every asset that you are depreciating, what is the life of the asset, what is the original cost of the asset, what is the installation expenses, total capitalized cost is how much, what is the useful life, which method you are following, any other information company want to give. So they are giving these are the minimum disclosures. These are what? Minimum disclosures. Can I give additional disclosures? If at all I want to give additional disclosures, can I give? Suppose I want to tell where the asset is installed exactly. I want to tell in which of my factory, in which of the company's factories exactly the asset is installed. And I want to also give information about asset condition. This is not the accounting standard. Accounting standard is silent on this. Schedule 3 is silent on this. But I want to give additional information so that I want to be more transparent with my shareholders. Can I give like that? Suppose in the standard there it is silent. Can I give additional disclosures? The standard is silent. But the standard preface, if you see, any accounting standard preface you see, schedule 3 preface you see, the requirements of accounting standards, the requirements of schedule 3 are only minimum, correct? Have you heard this? Have you heard this? The requirement of Schedule 3, the requirement of accounting standards are only a minimum requirement. If you want to give additional, it's your choice. Means impliedly, the framework is allowing us to give additional disclosures, right? So if at all framework explicitly or impliedly, if it is permitting you to give disclosures beyond requirement, accounting standard says give these 6 disclosures, but you are giving 8 disclosures. Can I give that extra 2 disclosures? Yes, you can give, because framework does not prohibit. Framework does not prohibit. Suppose in the accounting standard they say clearly you are supposed to give only the above 6. Any other information is prohibited. If they specifically prohibit, then I am prohibited. If accounting, I'm telling you, every accounting standard does not contain any such prohibition. In fact, the accounting standards introduction preface, it also says that the disclosure requirements under accounting standards are only minimum in nature. If at all company want to give any other extra information for better presentation about the company picture, you can give. This is called what? Fair presentation framework. In fair presentation framework, I will try to prepare financial statements as per the rules. Original rules, whatever you say, I will try to follow WDV method, SLM method, I will try to follow. That is why you see, it refers to a framework where financial statements are prepared and presented as per the framework. I will try to prepare as per the framework. But I can deviate from the requirement of the framework, or I can give additional disclosures from the requirement of the framework. Why am I deviating? Why am I giving additional disclosures? To achieve fair presentation. What is the reason? To achieve fair presentation. For achieving fair presentation, you can give additional disclosures. For achieving fair presentation, if at all this method is not suitable, you can deviate from the method. That is called fair presentation framework. Understood? Everyone, these fundamentals are very important. If you don't understand these fundamentals, it's very difficult for you to comprehend the actual standards. Why we always study auditing but we don't remember, we don't understand, is because we don't understand the fundamental terms. Next. So generally the word true and fair view appears only in this type of framework. True and fair view word we can use in which framework? Fair presentation framework. Suppose if the financial statements are prepared using compliance framework. If the financials are prepared using compliance, whether the financials are fair or not doesn't matter. They are prepared exactly as per the rules. Some rules are given, you have to strictly follow the rules. You prepare as per the rules. So there, what is our opinion? What is our objective? Our objective is whether they are prepared as per the rules or not. If they are prepared as per the rules, we will give positive opinion. If they are not prepared as per the rules, we will give negative opinion. That's it. Whereas, if the financial statements are prepared using fair presentation framework, we will not only check with rules, we will also have to check, is the financial statements presenting true and fair picture? We will also see what? True and fair picture. Fair picture is shown or not also we will see. In which framework we will see fair picture, whether it is there or not? Fair presentation framework. Every year, every company is preparing financial statements, right? That framework is what actually? Fair presentation framework. All the general purpose financial statements, all general purpose financial statements across every country, the framework is fair presentation. Compliance framework is not popular anywhere. Compliance framework is popular only for special purpose financials. Compliance framework is only popular for special purpose financials. It is not popular for normal, only fair presentation is popular. Clear? All of you? Now we have seen this word. Have you heard of this applicable financial reporting framework? What is applicable financial? Okay, we understood financial reporting means what. We understood framework means what. We also understood financial reporting framework. What is financial reporting framework? Any rules and regulations for preparation and presentation of financial statements is called as what? Financial reporting framework. Then what is the applicable financial reporting framework? What do you mean by applicable financial reporting framework? What does it mean? For a bank, the framework, the financial reporting framework is different from an insurance company. Agreed? The financial reporting framework from insurance company is different for NBFCs, and the financial reporting framework is different for normal manufacturing trading companies. So in view of nature of the entity, and the objective behind financial statements, the framework which the management adopts. Who will prepare financial statements in any organization? The management, the board of directors will prepare financials in view of the nature of entity, means depending upon the nature of the entity, whatever the framework they follow, that framework is called as what? Applicable financial reporting framework. So the financial reporting framework applicable for banks is different, financial reporting framework applicable for insurance companies is different, financial reporting framework applicable for NBFC is different, and applicability of financial reporting framework for normal manufacturing trading organizations is different. That's why you see auditing standard objective, you see whether financial statements are prepared as per schedule 3. No, they are not asking that. Whether financial statements are prepared as per applicable financial reporting framework. Why are they saying applicable financial reporting framework? If you are doing banking companies audit, then see whether the bank prepare financials as per applicable framework, whether insurance company prepared financials as per applicable framework. Whatever the entity that you are auditing, to that entity what framework is applicable, have they prepared financials as per that framework, check out and then give opinion. That's it. Correct? So that's why the word applicable financial reporting framework is used. You see the definition also I've given. What is applicable financial reporting framework? In view of nature of the entity and objective of the financials. Objective means what? Is special purpose or general purpose or whatever. Okay, fair presentation or compliance or whatever. The framework which is adopted by management. How the management adopt the financials? Management will adopt the framework. The management will take the rules and regulations depending upon the nature of the entity, in view of the nature of the entity. So the framework adopted by management for preparation and presentation of financial statements is known as applicable financial reporting framework. Whatever framework adopted by management. How they select this framework? Depending upon nature of entity. Depending upon objective of the financials. Two ingredients. Getting it? So whatever framework they adopt, that is the applicable financial reporting framework. So that's it. Major terms we have understood. So now once again, come back to the definition of audit. Come back to the definition. So what is an audit? An audit is an independent examination of financial information. Now we understood how financial information means. What is financial information means? Of any entity, whether or not profit oriented. Tell me, what is my auditor's objective ultimately? My objective is to give opinion. Opinions are two types. Let us not understand technical words right now. Let's understand at basic level. Positive opinion or negative opinion. What do you mean by positive opinion? Suppose company made a loss. Can I give positive opinion? It's not whether company made loss or profit. It's about whether financial statements are rightly presented or not. If the company is presenting financial statements honestly, clearly, even though they have a huge loss, even though their negative net worth is too negative, but they're honestly presenting everything, which opinion I will give? Positive opinion. I will say that financial statements are true and fair. Suppose if the company made extraordinary profits, super profits really, but they are not showing it in the financial statements. In the financial statement, they are showing it as a loss picture. Some reason, but the company actually had super profits, cash flows are very good, but company manipulated entire balance sheet P&L. Tell me which opinion I will give? Negative opinion. If the financial statements are not showing the true picture, true and fair picture of the actual affairs, then I will give negative opinion. If the financial statements are representing the true and fair picture of actual affairs, then I'll give positive opinion. Whether it has a profit, whether it has a loss, whether it has a positive net worth, whether it is a negative net worth, that and all doesn't bother me. Whether the company works for profit motive or whether the company is a Section 8 charitable organization, Section 8 company, that and all doesn't matter. Irrespective of profit oriented or not, doesn't matter for me. Even if a charitable institute called me for doing audit of financial statements, there I will check whether balance sheet and income and expenditure account are true and fair or not. If Reliance Industries, which is a profit oriented company, whether they called me, there also I will check whether balance sheet and P&L are they rightly presenting information or not. Whatever the company called me to audit, my audit objective will not change, whether they are profit oriented or not. Maybe the way I do audit will change, but the objective is same. My objective is just to give opinion. That's it. Whether they're right or wrong. That's it. My objective is simple. Whether they're right or not, irrespective of its size. Next one is what? Irrespective of size. Whether a very newly started company having just 50 lakhs turnover, whether they appointed me as an auditor, or Reliance Industries Limited who is having 9 lakh crore turnover, whether they appointed me as an auditor, whether a medium organization having some 5,000 crore turnover, whether they appointed me as an auditor, it doesn't matter. In everywhere, if 50 lakhs turnover company appointed me, I will check whether 50 lakhs is correct or not. They showed in the P&L 50 lakhs turnover, whether it is right or not, I will check there. Even if Reliance appointed me 9 lakh crore turnover, there also my checking is same. Is 9 lakh crore correct or not? This company had a profit of just 10 lakh rupee. Reliance company has a profit of 60,000 crore rupee. Whoever appointed me, doesn't matter. Size doesn't matter. My objective remains the same. My objective remains the same, irrespective of size, irrespective of legal form. What is legal form? See, Sarvana Bhavan, Adiyar Ananda Bhavan, restaurants, A to B, restaurant, that's a private limited company. You know that? A to B limited, A to B is a private limited company. And Sarvana Stores is a proprietary concern. Sarvana Stores, which is a retail. DMart, that's a listed company. But tell me, how legal form is relevant? DMart and Sarvana Stores, for example, you take Sarvana Stores, which is a popular retail store across Tamil Nadu. Especially in Chennai, they're very big. So Sarvana Stores, what they sell actually? They sell all groceries, cosmetics, everything. Garments, apparels, they sell everything. Electronic appliances, everything. What DMart is doing? Same only, no? What business they are doing, is it influenced by legal form? No. Legal form doesn't matter technically. So Sarvana Stores, what they're doing, DMart, what they're doing, both are same. But the legal form is different. Is legal form relevant for checking financial statements accuracy? Not required. Maybe Sarvana Stores prepare balance sheet P&L in a different format. DMart, since it's a listed company, they prepare financial statements in a different format. Format alone varies. But my objective is same, right? I have to check whether DMart financial statements are true and fair or not. I have to check Sarvana Stores financials whether they are true and fair or not. That's it. A to B, it's a restaurant. Doesn't matter. It's a private limited company. Technically, legally, how A to B established? It is established as a private limited company. First of all, I can do business without registration. Who are you to ask me to register? Me and my friends, 3 of us want to start a restaurant. We can start on our own, right? Restaurant. Why we need registration? GST tax and all. Okay, I will take GST registration. I will take permanent PAN number for the business. I will take GST registration. I will pay taxes on time. Why should I register as a company? It's not compulsory. Companies Act, every business should come and register on Companies Act. No. Companies Act is not compulsory. Partnership Act is not compulsory. LLP Act is not compulsory. So why should I register? I will do without any registration. Without any registration, if you do business, 2 or more people without registration, that's called AOP. What is it called as? AOP, unregistered associations. We simply call them as what? AOPs. Legal form in audit is irrelevant. We only check legal form to know what framework exactly applicable. We want to see the legal form exactly to know what framework. For example, if your company is a listed company, then Ind AS is applicable. If your company is an unlisted company, a private limited company, then normal accounting standards you can follow. But ultimately what we see, whether the profit you showed, whether the assets and liability numbers you showed, are they right or not, only we have to verify. Correct, everyone? So that's it. So irrespective of legal form, irrespective of size, whether or not profit oriented, then why are you doing this examination? Why are you doing? When such an examination is conducted with a view to express an opinion thereon. I just want to give opinion. What opinion? Either positive or negative. Whatever I feel, after verifying them, whatever opinion I get, that opinion I'll give. Whether the financial statements are true and fair, or whether the financial statements are not true and fair. Only these two. Either they are true and fair or not true and fair. I will give these two opinions. Now what is difference between true and fair? What is difference between true and fair? Provision for bad and doubtful debts example you can take. Provision for bad and doubtful debts example you can take. Very simple. I sold goods for 100 crore credit throughout the year, and I collected 80 crore already throughout the year. As on 31st March, 20 crore amount is outstanding. As on 31st March, 20 crore is outstanding, and I have invoices, proofs, e-way bills, everything is there that I sold. I have a proof that I sold. This 20 crore I have to receive. It's true. But Out of them, some debtors became insolvent very recently. Very recently, they became insolvent. Tell me whether they're insolvent or not. Truly speaking, how much I should collect? 20 crore. But 5 crore worth of debtors, they cannot pay. They cannot pay. But still, do I have right to collect or not? Still, do I have right to collect or not? Still, it's my asset or not? Yes. So, 20 crore is true value. But tell me, in the balance sheet, if I show exactly 20 crore, what people think, are company is having 20 crore worth of asset? People think like that, right? But tell me, fairly speaking, how much the company can collect? 15 crore only the company can collect fairly, reasonably, logically. They can't collect 20 crore truly. I know 20 crore is true picture, I know. But fairly, you tell me how much you can collect? 15. Substance over form. Are you getting it? That is what fair presentation framework is. Financial statements must be presented not only in true sense, but also in fair sense. So your financial position that you're showing is not just true. It should be not just, it should be true, but it should also be fair to the public. Show the real picture. Show how much you can really collect. That is what true and fair view is all about. Understood? So fair means that. So provision for bad and doubtful debts, provisions for future losses, all this comes because of fair presentation framework. Because we want to show the fair picture of the company, fair performance of the company, fair position of the company. Next. So understood until now? Then finally, let us look at objective of the auditor. What is the objective of the auditor? In a simple way, to express opinion whether financial statements are free from MMS and whether they are prepared as per applicable framework. Now, whether they are free from material misstatements. What is a misstatement? Just that alone I'll explain, then leave. What is a misstatement? Whether they are free from material misstatement is the objective. Now, what is misstatement? Materiality we'll discuss later. So, what is a misstatement? First of all, you know, in financial statements, mistakes can happen, right? In how many ways mistakes can happen in financial statements? How many ways a company can mislead people in the balance sheet and P&L? They can mislead people in 4 ways: amount, classification, presentation, disclosure. Amount, classification, presentation, disclosure. You know, definition of misstatement, if you see, what is a misstatement? At the last it is there. Misstatement is a difference between amount, classification, presentation, disclosure of a reported financial statement item and amount, classification, presentation, disclosure that is required as per applicable financial reporting framework. So the difference is called as misstatement. You read like this, you don't understand. So break up. So misstatement is difference between amount, classification, presentation, disclosure of reported financial statement item. Reported financial statement item, and difference between this and amount, classification, presentation, disclosure required as per applicable financial reporting framework. As per applicable framework, what amount you should show, what classification you must show, what presentation you must show, what disclosure you must show. As per applicable framework, what you should show this and what you reported. If both are same, no. If both are same, no. There is no difference between what is applicable, what applicable framework says and what you reported. If there is no difference between them, there is no misstatement. Suppose if there is a difference between what is applicable, what you have to do as per applicable framework and what you exactly did. If there is a difference between these two, then that's called as what? Misstatement. Misstatement is difference between this and this. Correct? Now, how a misstatement can happen? Either it can happen in amount, or it can happen in classification or presentation, disclosure. Amount, simple example I'll take: inventory valuation. Inventory valuation. Inventory valuation, suppose we all know company has to show inventory at cost or NRV, whichever is lower. Let us assume inventory as per Companies Act, as per applicable framework, the inventory value to be shown is 50 crore. Actually, 55 crore is 45 crore. 45 crore is NRV. 45 crore is NRV. 50 crore is cost. So as per the framework, what you have to show actually 45 crore. But you know, the company ignored that. They showed it 50 crore. They showed it what? 50 crore. Now tell me, is it a misstatement in amount or not? Yes. Now we all know, you see, I'll give you this two simple balance sheets I'll give you. Tell me which company financial position is stable. You have to tell me which company financial position is stable. This is company A, this is company B, or else this is assume company A. This is type 1, this is type 2 balance sheet. Okay, which type is correct? You have to tell me. Which type of the balance sheet shows a stable financial picture? Fixed assets 150, current assets 50, current liabilities 100, equity and reserves and surplus are 100. The total balance sheet is 200. Another side, fixed assets 50, current assets 150, current liabilities 100, equity is 100. So balance sheet is tallied in both the cases. No matter whatever you do, balance sheet will always tally. That's why it's called balance sheet. Always tallies. A sheet which always balances. That's why it's called balance sheet. Getting it? In electronic accounting, there is no chance that balance sheet will not get tally. In electronic accounting, it is impossible to find a balance sheet without tally. Always balance sheet will tally. In exam only for you it will not tally. Okay. So tell me, this is type 2 balance sheet. This is type 1 balance sheet. Which company financial position is good? Type 2. Why? Current assets are more than current liabilities, which is actually a positive working capital. Correct? Positive working capital. Whereas in type 1 balance sheet, if you see, current assets are less than current liabilities, which means it's a negative working capital. Company will default. Array, more than assets, current assets, you have current liabilities. How will you repay? I will sell fixed assets and repay. If you sell fixed assets, how will you do business? Are you getting the point? So between these two types of balance sheets, type 2 is indicating stable position. Type 2 balance sheet is indicating stable. You know, this is company's original picture. Type 1 is actually original picture of the company. Type 1 is original picture of the company. But if at all type 1 balance sheet is released, public will lose confidence on the company. So what company did, you know? Some fixed assets, you know, they're wrongly classified as current assets and showing to the public a misleading picture. Correct? Now tell me here, amount and all they didn't manipulate. Classification they manipulated. Misstatement can happen even in the form of classification. That's why classification is very important. Non-current asset, current asset, very important, because classification gives a very big, you know, if wrong classification leads to wrong interpretation of financial picture. Right classification only is important. Clear? So we auditors should not only check whether amount is correct or not, should also check whether the expenditure, the asset, the income, the liability, is it recorded in the right way or not also we should see. A current liability should be recorded only under current liability. A non-current liability should be recorded only under non-current liability. A current asset and non-current asset should be recorded as per exactly the same. Correct? So this is classification mistake. Then we have mistake in what? Presentation and disclosure. Presentation mistakes means what? You know, how debtors must be shown. Trade receivables minus provision for bad and doubtful debts, then you will get the balance value which will come in the outer column of the balance sheet. Correct? Or provision, no, alternatively I can show under liability side. Right? Provision for bad and doubtful debts will have a credit balance, so I can show it under liability side. Trade receivables total gross amount I can show it under assets side. You know very well, when trade receivables is there, provision will also be there, so you will search in liability side whether provision is there or not. But normal layman, how do he know? In a real company, the assets are so many, the liabilities are a very big list. How will a person, how will a normal layman understand there is some provision? So this is the accepted presentation. Correct? This is accepted. This is presentation as per applicable framework, but you are presenting like this. Can you do misstatement in the form of presentation or not? Disclosure. Disclosure misstatements are two types. In disclosure, the misstatements are two types. Non-disclosure is a misstatement. Correct? Partial disclosure is a misstatement. Correct? Both are mistakes only. Suppose schedule 3 accounting standard says for depreciation you need to give 6 points disclosure. That's the minimum disclosure. Suppose you are not giving that. That's a misstatement. What is required as per framework? What you are reporting? Both are not matching. You are not reporting anything. What is required in the framework? You are not reporting. So not reporting means there is a difference, right? So it's a misstatement. Or they asked you to give 6 points, you are giving 3 points. That's a misstatement. Inadequate disclosure. What is it called as? Inadequate disclosure. Or what they're asking is different from what you're disclosing. Wrong disclosure. What is it called as? Wrong, improper, inappropriate disclosure. So misstatement can happen in the form of disclosure as well. Suppose it's a secured loan, you're not showing it as secured. Suppose the loan you bought as a unsecured loan, so you got unsecured loan, but you're showing in the balance sheet as secured loan. Disclosure misstatement or not? So misstatement in financial statements can be any of these four: amount, classification, presentation, disclosure. So we auditors have to check whether financial statements are free from material misstatements in all these four angles. That's it. With this, fundamentals topic is over. Easy or not? Hardly we spent 45 minutes to 50 minutes, 50. So we understood some basic terminology. Then the next topic that we will start is nature, objective and scope of audit. Okay. Yes, let's begin nature, objective and scope of audit. So in this, we are briefly discussing about, like whatever I have discussed in fundamentals topic, objective of audit, definition of audit, they were little bit detailedly discussed here. And we are specifically talking about scope of audit. What we cover in audit, what we don't cover in audit generally. When we are doing financial statements audit, what is covered within our competence, what is not covered within our scope of competence. So that is actually is what scope of audit. So in the initial, like we have given all the questions, I mean all the concepts as question and answer format. So in the first question entirely they just talk about background of the audit, that's not required. Then meaning of the audit. So meaning of the audit we already have seen, right? An audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of size or legal form, when that an examination is conducted to express an opinion. So this we understood very well in depth. So what is nature of auditing? So you see the chapter nature, objective and scope. What we have seen is definition of audit. So what is nature of audit? Audit means what? It's an independent process. Audit is an independent examination. What do you mean by independent examination? Tell me, you know very well that maker and checker should be different. Yes or no? Maker and checker should be different. So maker and checker should be different. So that is what exactly called as independence. That is what exactly called as what? Independence of mind. Independence has two meanings. Independence of mind, independence in terms of appearance. We have ethics chapter, right? Discussion. There we will be discussing about in-depth about independence concept. Independence of mind means the same person, suppose I only prepare books of accounts and I am only checking whether they're right or wrong. Tell me, how can I find a mistake? Because since I only prepared it, generally I cannot discover the mistakes which I made. Because the judgments, assumptions which I followed, I always feel they're right. So if auditor is a person who is different from the person who did this, who prepared books of accounts, definitely he will interpret the books of accounts with his own mindset. So independence of mind will be there. When independence of mind will be there, I will interpret with my knowledge and with my understanding your work. So I can find if there is any mistake easily. So that's independence of mind. What is independence of appearance? Appearance means how are you, I mean whether are you, I mean for the public, for an outsider, are you appearing as independent? For an outsider, are you appearing as independent? Tell me, the financial statements which we are auditing, the audit report which we are giving is being used by lakhs of shareholders. Yes or no? Is used by various external parties. Now, whether our report, when they will trust our report, tell me first of all, when they will trust our report, suppose I am also belonging to board of directors. Suppose I am also part of the management of the company. I am a relative to director. I am a brother of a director. And if I say everything is true and fair, will anybody believe it? Because you are related party to the company, you are not independent. Okay, you have not prepared books of accounts. You only audited. Independence of mind is there. Getting it? But what is the guarantee that you act independently, honestly? What is the guarantee that you act honestly? What is the guarantee that you act independently, honestly, without any bias? So independence of appearance is also important. In all statutory audits, independent in terms of appearance is also mandatory. That's why if you remember company audit and appointment of auditors topic in company law, if you look at that, auditors disqualifications are given. What they said in disqualifications: auditor should not be an officer of the company, auditor should not be an employee of the company, auditor should not have shares in the company, auditor should not have loan with the company more than 5 lakhs, auditor should not give guarantee to the company, auditor should not have business relationship with the company, auditor should not be having any other relationship with the company. Why? Auditor should be an outsider. Why outsider? Only then your opinion will be trusted by people. Only then you can work honestly, independently, without any bias. That is what the concept of audit: independence in terms of appearance. So an audit is an independent examination of an independent examination of financial information. What is independence? It implies that judgment of a person is not subordinate to directions of another person. Somebody will not direct my decision making process. So that is exactly is called as independence. More about independence we'll discuss in ethics chapter, second chapter, nothing but ethics in terms of engagement. Now tell me, we are doing audit of financial information, right? We are doing audit of financial information. What is the nature of financial information? The financial information is like the entity. What is the nature of the entity? Is it only profit oriented or not profit oriented? Anybody it can be. So that is what they are talking about here. What is our objective ultimately? To express our opinion. To express opinion. Opinion is of how many types? Positive opinion, negative opinion. So that is what entirely in this they are describing. What is the purpose of audit? Like we understood definition of audit. What is purpose of audit? Why audit? It increases confidence of users of financial statements. Audit increases confidence of users of financial statements. The purpose of an audit is to enhance degree of confidence of users. Users may be shareholders, employees, customers, government, regulatories, bank, all that. When multiple users like this is there, what type of financials they're talking about? Exactly, general purpose financial statements is what they are talking about. So in this is important question in exam. What are the aspects to be covered in audit? They'll give you a question like this. Write about definition of audit. What are the aspects to be covered in audit? What we will cover in audit? We will verify whether the information given in the financial statements, are they matching with the books of accounts? Whether the information given in the financial statements are conformity with the books of accounts. This we will check first. Now, okay, financial statements are matching with books of accounts. Now we need to check whether books of accounts are right or not. Whether the journal entries in books of accounts are supported by evidences. Means whatever transactions you are recording books of accounts, are they genuine? First we need to check. Whether books of accounts transactions are genuine or not, we will check. Then we will check whether financials are matching with the books of accounts. And we will have to check whether there are any omissions, whether there are any duplications, whether there are any fictitious entries. So there should not be duplication of entries. Some transactions they should not omit. Suppose some big expenditures were the revenue expenses. Company is not recording it. Tell me, can the financial performance be clear? No. So see that information conveyed by financial is clear and unambiguous. Means without any vulgarity, without any sort of confusion. Getting it? The financial statements must communicate clearly the information. There should not be any ambiguity. It should be clear. We should check all these points. In audit, we should check whether financials are giving clear data, whether financial statements are matching with books, whether books of accounts are having supporting documents and vouchers, journal entries and all proper, whether is there any omission, is there any duplication, is there any fictitious entries, and see that amount, classification, presentation, disclosure, they are all as per accounting standard. We should check all this, whether are they as per accounting. When I say as per accounting standard, indirectly what are the testing? Are they as per applicable financial reporting framework? Whether financial statements as a whole present true and fair view. Indirectly here we are checking what? Fair presentation rules and all we are checking. So we should see whether financials are fairly presenting, whether financials are giving all the amounts classification as per accounting standards, whether they are giving a clear and unambiguous picture, whether are they containing any omissions, duplications, fictitious, whether are they supported by sufficient appropriate evidences, nothing but documents, sufficient bills, vouchers, whether books of accounts and financials are matching. These are all the aspects that we cover in audit. Clear, all of you? In exam you will get for 4 marks, you just have to write any 4 points. In exam you will generally get this as a 4 marks question or maybe 3 marks question. 3 marks question means minimum 3 points. 4 marks means 4 points. Now many students will ask, sir, can I write in my own words? Obviously you can write. Tell me what else you will write for this substitute. whether the financial statements are, suppose whether the information in the financial statements are conformity with the books of accounts. This is what the actual sentence in the study material. How will you write in your own words? You may write whether financial statements are matching with the books of accounts. But you can't write altogether different point, right? You cannot write altogether a different point. Same point you can write in a different way, but meaning should convey the same. So your own words are permitted, no problem at all. For me personally, I don't know that much English which you know, because I don't have that much English knowledge to use an alternative sentence. Whatever is given only I will try to present that. You're getting my point. So you please read whatever is given here intensely. If you read intensely, you absorb better. So that intense reading is important. While you're reading, you should be able to process this information, understand the context. Like, immediately when I say this, whether they are in conformity with accounting standard, means immediately you said applicable financial reporting framework. That is what actually called as contextual learning. You see, for this book, on every page I mentioned the real scoring subject. It is, yes, the scoring subject. Why? Accounting, advanced costing, in group 2 you have costing paper, or FM paper is there. FM weightage is how much? Only 50. But how many hours FM classes will be? Minimum 90 to 120 hours. Financial management alone, the classes will be 90 to minimum. I'm talking about productive classes. So minimum around 90 to 120 hours. And you will be spending another 100 hours for solving financial management. 200 hours you are spending close to for FM alone, for financial management. How much you are scoring in FM generally? 25 to 30 students will score out of 50. Out of 50 students generally score how many? On an average, 25 to 30. I'm talking about those who qualified. Generally, those who qualify in FM, those who qualify in group 2, on an average, the score in FM, financial management, is 25 to 30 out of 50. For that, how many hours they are spending? 200 hours. Auditing is, technically speaking, 100 marks paper, right? Technically speaking, you should spend 400 hours, right, in audit? Honestly, technically speaking, you should spend 400 hours, right? If you spend 400 hours, you will get 70 plus in audit. 70 plus is pakka. In fact, 80 plus. If you spend 400 hours on CA inter audit, because you are spending 200 on FM, no? Why can't you spend 400 on audit, which is 100 marks paper? Students will not spend time. They only want to finish audit in 50 hours class, another 50 hours revision, 100 hours. They go exam, get 20. And blame that auditing is not a scoring subject. You compare the number of hours that you are spending in FM, the number of hours you are spending in accounting, the hours you are spending in costing. Are you spending the same number of hours on audit? No, hardly half or 60%. He will not spend. First of all, he will not understand what is audit. He will understand definitions. He will read definitions. He will reproduce. Only 10 or 15 points and he will reproduce. Rest all other he think he remember, but not. Student will think that he remember. So, the time that you are giving for other subjects, if the same amount of time you give it for audit, same attention, same effort you give for audit, damn sure I'm telling you 70 plus pakka. 70 plus for sure. My regular class, of course, you need not take now. So it is 105 hours, where I discuss so in depth, so detail, all the topics, 105. And I tell students to study at least 75 to 80 hours revision. Class is a way of revision, way of preparation. Class means it's a preparation. I don't know, I still don't understand student psychology. Many, sir, first watching classes, then when should I prepare? Watching classes itself is a preparation. What are you watching classes? What are you doing? What are you doing in the class? No, you are understanding each and every word in the book. You are understanding the context. You are understanding the linkage. Correct? You are able to understand everything. Finally, next what you have to do, because I understood the learning part over. Now revision part starts. How many hours are you revising the audit as a whole throughout the, like before the exams starts? How many hours that you are revising on the audit? Technically speaking, what I observed in many students is 30 to 40 hours only they are spending. They are not spending time more than that. I am talking about effective spending of time. I am talking about spending time on revision after effective learning. What is effective learning? You listened to class, but you didn't understand anything. Then there is no point of listening to the class, right? You need to get something out of it. So once an effective understanding of the classes is completed, If you spend 70 to 80 hours on revision, 200 hours totally on audit, CA inter audit, including RTP, including face to face, whatever, the YouTube marathon, what, everything, question bank, 200, worst case 230 hours. If you spend on audit effectively, you will score 80, 75, 80 plus. In the last May attempt, many students have got 80 plus marks in audit. 80 plus marks, so many have got. One of our students got 85 in audit. Some two students got 83, some students got 82. Only reason, they followed the process. You follow the right process, you will score well. As we go further, nature, objective and scope of audit, ethics and terms of engagement, audit report, documentation, evidence, as we discuss further, you will understand how beautiful the subject is. So that's it. These are the aspects to be covered in audit. So what is the relationship between auditing and other disciplines? Other discipline means other subjects. How audit is different from other subjects? Why we should have a diverse knowledge? Like, what is the need for auditors having diverse knowledge? You must have knowledge of accounting first of all, because you are doing audit of financials. Financial statements are result of books of accounts. Books of accounts is nothing but accounting. If you don't understand accounting, how do you audit them, whether they're right or not? You must understand taxation law. Yes or no? You must have a decent knowledge, because in books of accounts, provision for tax is created. How do you know whether the provision is created correctly? So you must understand tax law. You must understand financial management. You need to check whether a company going concern ability is correct or not, proper or not. You need to check whether a company financial stability is good or not, because the financials are prepared based on going concern basis. So you are indirectly saying next 1 year company will happily continue without any problem. How do you say next 1 year company will continue? Right now already company is having losses. Financial management expertise is required. Correct? And in audit, generally what we do, we deal with people. When we are going and doing audit in companies, mainly we interact with whom? We interact with the management, we interact with the top management, we interact with various employees. You must understand behavioral science. You must understand how to deal with the people. You must understand the economic factors, because when you're doing audit of big companies, you need to understand what is their environment, what industry they belong to. You see the risk assessment 315 standard, understanding the entity and its environment. So an auditor should have diverse knowledge of various fields in order to effectively conduct the audit. That is what this entire question is actually talking about. Not that important. So what is the objective of the auditor? What is the objective? In conducting an audit of financials, the objective of the auditor is like SA 200. As per SA 200, this chapter is completely taken from 200 standard. Most of the concepts that are discussed in this chapter are taken from 200 standard. So as per 200, overall objectives of an independent auditor and conduct of an audit as per standards on auditing. Overall objectives of an independent auditor and conduct of an audit in accordance with the standards on auditing. As per that, what is the objective? The objective of the auditor is to obtain reasonable assurance. Why reasonable assurance? What is reasonable assurance? Because look, DMart is having 380 stores across India right now. 380 stores. In each store, approximately 500 employees will be working. 300 to 500 employees. Close to they are having 1.2 lakh employees. How much? 1.2 lakh employees. To all of them put together, the company will be paying in a year, salary is approximately 10,000 crore. The company is paying a salary of how much? 10,000 crore. Now, financial statements, whether profit and loss account is true and fair or not, you should verify, right? Which means whether the profit is right or not, you should verify, right? Which means when the profit will be right, if all the incomes are recorded rightly, expenses are recorded rightly, then automatically profit will be right. Now, so tell me, in order to verify whether profit is right, I have to verify all the expenses. One of the major expenditure is employee cost. One of the major expenditure is what? Employee cost. Should I verify this entire 10,000 crore worth of employee cost? Now I should go to each and every DMart and put attendance for all the employees there. Is it possible? It's impossible. In audit, we cannot verify 100% of the financial statements, 100% of the transactions, 100% of the events. It's impossible. It's impossible. Generally DMart, for example, you take DMart is nothing but Avenue Supermarts. That's a company name. Avenue Supermarts Limited. It's a listed company. Now, Generally, Avenue Supermart's audit will be conducted by one auditor. CA firm, one CA firm will be there, audit firm will be there. So they will be appointed as an auditor for Avenue Supermarts. How many days do you think DMart audit will be conducted? Hardly 60 to 70 days. Hardly 60 to 70 days. By how many team members? From the firm, how many will go? One partner will go for sure. One or two partners of the firm who are CS, they will go. Some 2 CA employees will go for sure. 4 CS will be there. And articles will be there. Senior articles, junior articles, all that. Put together some 20 team members. 15 to 20 members will be there. Per day, 15 to 20 members will be working for 60 to 70 days. Maximum, I'm telling you. That's a maximum number I'm telling you. So, 600 man days. What is it actually? 600 man days. For example, 10 of us working today. Only one day we work. 10 people worked. 10 into 1 means what? 10 man days. I hope you know this. Costing. Man days language, you know. Yes. 600 to 700 man days is the maximum time that is available for doing audit of entire DMart. Now sales they need to cover, which are there in 380 locations. Purchases you need to cover, go down, stock you need to cover, fixed assets you need to cover, employee expense you need to cover. So many were there. How will you cover 100%? You can't. So how we do audit then? We do audit on a sampling basis. We do audit on a sampling basis. Since the time available for audit is very limited, since the time available for audit, resources available to audit are very limited, we will do risk assessment. Since resources availability is very limited, we generally do what? Risk assessment. Okay, I will do one thing. Since I have very lesser time, I will not focus on each and every area of the financial statements. I will not verify each and every employee. I will not verify each and every store. I will figure out where risk is high. In employee cost, risk is high. Purchases risk is high. Sales risk is high. Or fixed assets is the risk is high. Inventory is the risk is high. I will do a risk assessment. Wherever risk is high, risk means what? Possibility of fraud, possibility of error. Like I told misstatement definition right in fundamentals. Why misstatement happen in financial statements, by the way? Why a mistake happen in amount classification, presentation, disclosure? Sometimes errors happen. Unintentionally, sometimes it happens. Sometimes intentionally happens. If a misstatement happens intentionally, we call it as what? Fraud. Otherwise, it's called as what? Error. Now, 100% of the entire financial statement area we cannot cover. It's impossible for us to cover because the time and resource we have is very limited. With the limited resources, we should cover 100% of the, we should verify overall financials and give opinion whether they are right or wrong. Now, whether our opinion is absolutely to be interpreted by people, can they interpret absolutely about our opinion? No, our opinion is based upon reasonable assurance. We verify based upon reasonable. Why reasonable? Because I'm not verifying 100%. I'm only verifying based on sample. I'm only conducting audit based on samples. Whatever based on sample I get clarity, whatever based on sample I feel, I apply it to the population. If sample is true and fair, I assume entire financial statements are also true and fair. So this is how, reasonable assurance we generally get. Reasonable assurance is nothing but sufficient and appropriate audit evidence. Reasonable assurance is also expressed as what? Sufficient and appropriate audit evidence. Reasonable assurance is a high level of assurance, but not absolute assurance, because we cannot give 100% pakka. This is a pakka 100%. Financial statements are pakka. Why can't you give absolute assurance? Look, the time and resources that we have is very limited. Moreover, we have so many limitations. We have so many limitations which we cannot overcome. What are the limitations? These limitations are called as inherent limitations of an audit. What are the inherent limitations of an audit? Let me discuss that. That's an important question. So what are inherent limitations of an audit? Inherent limitations are nature of financial reporting. What are they? Nature of financial reporting, nature of audit procedure, and audit is not in the nature of investigation. Okay, this is not actually a type of limitation, it's actually a side heading which is given. The next limitation is timeliness of financial reporting, future events. 4 limitations mainly we have: nature of financial reporting, nature of audit procedure, timeliness of financial reporting, and future events. These are the 4 limitations we have in audit. Now, what are the future events? What do you mean by future events? Like in exam, they'll give you 3 marks question. Going concern is one of the inherent limitation of an audit, which auditor cannot ascertain about sometimes. Future events are uncertain. So comment in light of SA 200. What are the inherent limitations, especially with related to future events? See, suppose, first of all, we are giving opinion on what? On the financial statements, which are already prepared. For which period? Already which is completed. Financial information is what information here? Actually, historical financial information. What financial information? Historical financial. We are not giving opinion on right now, ongoing financial. No, we are not giving opinion on future. We are giving opinion on past. You appointed me as an auditor to give opinion on whether the profit shown in the profit and loss account is right or wrong, whether the assets and liabilities shown in the balance sheet are right or wrong. You appointed me for that. They are all these events, transactions are already happened. Whether they're right or not is what you're asking. So about past you are asking. Now tell me, when I give opinion on the past, yes, they are right. Am I giving guarantee about future? I don't know about future. I don't know whether in future, whether the company will perform well or not. I'm not at all sure. I don't know. Anything can happen. You asked me to give opinion on the past financial statements, 31st March, past financial year, historical financial information. Only there I have to give opinion. So future events and conditions may affect the entity adversely. These events will affect the going concern, continuity of the business. The business may cease to exist in future due to change in market conditions. So my assurance is only reasonable assurance about the historical data. I cannot give assurance on the future. Getting the point? But we have a standard called going concern 570. That standard says auditor should check whether company can honor, whether company can continue for the next 12 months from balance sheet date. From the balance sheet date for which you are signing audit report. The balance sheet that you are signing, from the date of the balance sheet on which you are signing, next 12 months minimum, can the company continue? Based on the information, you just tell whether the company can continue or not in the next 12 months. That is what 570 standard requires. Yes or no? 570 standard requires exactly that. So can the company continue for the next 12 months is what they are asking. Now, based on information available at the time when I am doing audit, based on the company condition, business condition, cash balances, bank balances, director's performance, based on the present conditions, I will say yes, the next 12 months it is good. But am I giving guarantee? Anything can happen in the next 12 months, because future events may affect adversely the company. Therefore, an auditor cannot provide guarantee that the financials are free from MS due to frauds or error. Like, we cannot give guarantee about the future. Are you getting the point? This is one limitation. Future events is one limitation. Another limitation is what? Nature of financial reporting. Nature of accounting. It's actually nothing but what? Nature of accounting. Tell me, in profit and loss account, each and every debit and each and every credit, are they based upon real transactions only? Are there any provisions, assumption based amounts? Assumption based amounts are there, provisions based amounts were there. These are highly judgmental, right? These are highly judgmental. Now suppose I'll tell you, Reliance Industries Limited, in 1920 financial year, they have increased useful life of the missions. Useful life of the mission, life is increased from 30 years to 50 years. From 30 years to 50 years. What is the value of the machinery? 3.6 lakh crore. What is the value of the plant and machinery? 3.6 lakh crore worth of plant and machinery. Life has been increased from 30 to 50. You know how it will affect? Depreciation and all, everything will affect. Financial performance and position of the company will drastically affect, because life of the asset is exactly doubled almost. The life has been doubled. So depreciation will be half exactly. Last year, whatever depreciation we showed, this year it will be substantially lesser. Profit of the company suddenly appears very high. It's an extraordinary event. Are you getting the point? Now you see, Depreciation, is it 100% accurate amount? Exactly, asset after working 50 years it will stop. We don't know. Your accounting itself is not 100% accurate. How can I give 100% assurance? Sir, no. Why we are giving reasonable assurance? Because of inherent limitations. Why you cannot give absolute assurance? Because of inherent limitations. I have so many limitations. That's why the level of assurance I provide, the level of confidence I provide is only reasonable. I cannot give absolute confidence to anybody. I myself don't have absolute confidence. Why you don't have? Because accounting itself is not 100% correct. Accounting itself, nature of financial reporting itself is not 100% accurate. Suppose I created provision for bad and doubtful debts, 10 crore I created, but next year bad debt is 20 crore. Next year bad debt is 20 crore. Is my provision 100% accurate? So financial statements, many amounts you see. Preparation of financial statements involves making judgments which involve decisions. So there is a degree of uncertainty. Some uncertainty is there. Therefore, auditor cannot obtain absolute assurance that financials are free from material misstatement. I cannot say financials are 100% right because the financials themselves are not 100% right. They are based upon judgments. They are based upon assumptions. So, management is responsible for preparation of financial statement, right? Sometimes management while preparing financials, management has to ensure the financials are free from MS. Management has to put so many controls. Management has to establish internal controls. Management has to put some policies and procedures so that only a genuine transaction is recorded in books of accounts. Only that transaction will appear in profit and loss account. Sometimes these processes will be violated. Controls will not work effectively because one of the director is fraudulent. He may try to pass fictitious entries. And since we auditors do audit based on selective method, based on sampling, we cannot verify 100% of the mistakes. So nature of financial reporting is one of the major reason why we cannot obtain absolute assurance, why we are only giving reasonable assurance. See, yeah, that's enough. Next, another one is what? Nature of audit procedure. Another limitation is what? Audit procedure. We have some practical and legal limitations. We have some practical and legal limitations to get information. Tell me, how will I do audit? I'll give you one example, comprehensive example, so that this example we can use every time. Suppose this is a company financial statements. Fixed assets are some 100 crore. Investments are some 50 crore. Current assets are some 50 crore. Some other non-current assets, other than fixed assets and all, some 50 crore. Equity is some 50 crore. Reserve some surplus is 100, and current liability is like 150, 250, like 100 crore. So this is the balance sheet. How will I do audit here? I will have to check whether what is the fixed assets breakup. Yes or no? By the way, fixed asset breakup is what? Gross carrying value minus accumulated depreciation, net carrying value. The net carrying value is 100 crore. Depreciation is accumulated 100 crore. Gross carrying value 200. This is a breakup. Now this gross carrying value 200 crore is there, right? What is this breakup? So many assets. 5,000 fixed assets were there. For the company, how many assets were there? 5,000 fixed assets. Like some 150 air conditioners were there. Okay, some 200 and like some 900 tables were there. Some 1,500 chairs were there, and some go down plant and machinery. Some machineries and all were there. Printing machines were there. Photocopiers were there. So many machines, so many furniture items were there. Electrical fittings were there. So all these items are put together. How many number they have? 5,000 fixed assets they have. All these 5,000 fixed assets, what is the cost? 200 crore. On that, what is the accumulated depreciation? 100. Our balance amount is what? 100. Now tell me whether this 100 is right or not. First, how should I verify? How should I find out whether this 200 crore is right or not? First, I should verify. Whether this 200 crore is right or not, how should I verify? What is the breakup of 2,500 crore? I should check. This 500 crore worth of, 200 crore worth of total assets are represented by 5,000 number of assets. Each and every asset original invoice you should check, right? Yes or no? Whether this 200 crore is right or not dependent upon how 5,000 asset items are accounted. Each and every asset, what is the cost at which the company purchased? Really company paid money or not? I should check or not? This back end will go each depth, in depth, like one by one will go in depth. So we'll dig into the root. So that's how I verify. So like, I saw fixed asset. The company gave me a big list. The company gave me a big list of register, fixed asset register they gave me. In that register, there is the like asset number 1, asset number 2, asset number 3, like that asset number 5,000 assets were there. Asset number 1, what is the original cost, at what price it is purchased, from whom it is purchased, on which date it was purchased, when it was installed. So many details were given. I will randomly select some assets. I will go and physically see whether they are there. I will ask documentation, give me invoice, show me bank statement of how you paid, when you paid, when this is installed, show me installation certificate. I will ask in this way, but I will do only on a sample basis. I will sample basis verify randomly. Which asset I will verify, company also don't know. Randomly something I will verify. 50 assets I verified. How many? 50 assets I verified. Then I got confidence. Okay, whatever asset number I ask, the company is immediately showing me. I got, after verifying 50 assets, I got satisfaction that yes, all the fixed assets are available with the company. 5,000 assets are honestly available with the company. The value 200 crore is correctly arrived. Then I will verify depreciation working. Whether useful life is correctly chosen or not, I will verify. Like that, I verify entire fixed assets. Like that, I will get a confidence on 100 crore value. Then I will verify investments. Same way, I will go in depth. Then I will verify current assets, same way, trade receivables, inventory, cash and bank balances, I'll verify same way. Then I'll go to remaining non-current assets. Then I'll come to the liabilities. Then I will see equity and reserves and surplus computations and all. Then I will check P&L account, all the revenues, other income, then expenses, bills, vouchers, for what purpose it is spent, is it belonging to company or not. In so many angles, I will be verifying the financial statement. Are you getting it? So this is what we really do in audit. Only this is what we do in audit. Slowly we will increase this explanation as we go further. So nature of audit procedure. Now tell me, sometimes I have to verify assets. Like suppose I want to verify some fixed assets. Some fixed assets were there in the godown. Some fixed assets were installed in the factory, some factory. Company has some 5 factories. At one factory, I am unable to access. I am unable to go to one factory because there is some strike going on. Now tell me, is it a practical limitation or not? Sometimes the information which I want, I will not get. I cannot see each and every asset. 5,000 assets were there. Can I go and physically verify each and every asset? It's a practical limitation. What is it actually called as? It's a practical limitation. Because of practical limitation I have. Because of legal limitation I have. Practical limitation means we do audit based on sampling, right? Why are we doing audit based on sampling? Because practical it is not possible for me to verify 100%. Because of practical limitation. Legal, suppose I want to verify randomly some assets, but those assets company is not giving me access. Management is not giving me access. Tell me, can I force the management to give me and to show me the information? I don't have any right to force them. I can only ask them. If they show me, then I will verify it and I will get a confidence and I will give opinion. If they did not show me, what will happen? Okay, you don't show me, fine. I will report the same in the audit report. I will report the same that you are not showing the data. But ultimately, we have a limitation or not. Practically, we have a limitation. Sometimes legally, we have a limitation. Because of practical and legal limitations, we cannot apply our audit procedures. What is audit procedure? Verification procedure. Audit is nothing but what? Verification. Audit is nothing but what? Examination. We cannot apply our verification procedure. We cannot apply our audit procedure because of various practical and legal limitations. So, the auditor carries out his work by obtaining evidence through performing audit procedures. However, there are some practical and legal limitations on the ability of the auditor to get evidence. Audit evidence means what? Information. Audit evidence is nothing but information. Whatever information I require for audit. Information means what? Whether financials are right or wrong, I have to check the information, background information. Whether books of accounts are right or wrong, I have to check the background information. Information is called as evidence here. Information is called as evidence here. For example, auditor cannot test all the transactions and balances. He forms his opinion based on sampling. It is an example of practical limitation. In exam, they'll ask you, audit suffers from various inherent limitations. One of the inherent limitation is nature of audit procedure. give few examples of, give an example, nature of audit procedure, give an example of practical limitation and legal limitation. You should give this introduction, you should explain this, and you should say that audit suffers from practical and legal limitation, and one of the example of practical limitation is we cannot verify 100%, we only do audit based on sample. Sometimes management may not provide complete information as requested by auditor. I want information to audit, but management will not provide, they will hide from me so many things. How do I know? Whatever I see, I only think that only available. Based on that only I have to convince myself. We get information, right? Do we get conclusive information or we get convincing information? In audit, the nature of evidence that we get is convincing in nature, persuasive in nature. They are not conclusive in nature. In audit, the kind of information that we get is what? Persuasive. The kind of evidence we get is what? Persuasive. Based on whatever information available, I will convince. In reality, what happened, we also don't know. I cannot do a narcotic test to the directors or no. Tell me whether amounts are right or not. Can I do? Can I apply third degree on the directors and then get the data? I can't know. Legal limitations. Whatever information I may require, company may hide it from me. Company may not disclose it to me. Can I enforce them? I cannot enforce them. I cannot force them to give. This is a legal limitation. There is no way an auditor can force management to provide complete information as may be requested. In this case, he is not provided with the required information. He can only report. If at all your management is not giving you required information, you report that. That's it. You don't have any other. See, we are called as watchdogs. Yes or no? We are not bloodhound. You can't bite. You can only bark. If they are not giving information, say that they are not giving information. That's it. You don't have any other right. So this is an example of legal limitation. Management may contain dishonest people. They may conceal frauds. They do frauds and conceal it cleverly. Auditor cannot figure out. Auditor cannot identify that. Next. Further, audit is not in the nature of investigation. We are not here to investigate the affairs of the company. Can I apply third degree on the board of directors and ask them whether financial statements are true and fair? I cannot. I am not doing investigation, understand? You cannot do narcotic test and all. Yes or no? So audit is not an investigation. Auditor cannot obtain absolute assurance. Based on records, based on vouchers, based on bills, you can tell whether they're right or not. That's it. Maybe in reality, all the bills, vouchers, everything is false. All the bills and vouchers, everything can be false. Getting it? Further, we are giving opinion on what? Historical financial information. We are giving opinion on what? Historical financial information, means past data. Now, see, tell me, when I will get better evidence? When the transaction is happening, I'm seeing it. That is best evidence. A transaction already completed, documents on, I'm seeing. Which is best evidence between these two? First option. If transaction is happening simultaneously when I'm seeing it, I have a very good evidence. Yes, because it happened before me, so I understand that. But I'm looking at documents, result of the transaction. Purchase bill I'm seeing, means purchase already happened. Whether they really purchased or not, all that I don't know. Information available for audit is belonging to past, which loses its relevance as time passes by. So the relevance of information decreases over time. Auditor cannot verify each and every matter. Therefore, a balance has to be struck between reliability of information and cost of obtaining it. Simply what they're saying is timeliness of cost and benefit. You just convince yourself enough. Purchase, whether suppose P&L account shows 10,000 crore purchases, debit. 10,000 crore having a breakup. So many invoices were there. Take randomly, whatever you want you take. How do you know whether this is a real purchase? See whether e-way bill is there. See whether delivery challan is there. See transport copy is there or not. See amount is paid from the bank account or not to them. Whether goods are received in the godown or not, check out. See payment slips. See goods received is entered in the stock register or not. See, by looking at all this, you convince yourself that it is true and fair. So future events, these are the limitations. In exam they'll ask you what are inherent limitations. Straight question, 4 marks they'll ask you, where you have to write future events, the first point. You have to write timeliness of information, this first paragraph. You have to write nature of audit process, first point. Nature of financial reporting, first point, when entire question is asked. Sometimes what they will do, Nature of financial reporting. Sometimes they'll ask, nature of financial reporting is one of the limitation. Describe, 3 marks question. You have to read both the points. Only sub point can be asked in exam, or full question itself can be asked in exam. Now, slowly the speed will increase, so you have to be very alert. Next. So tell me, what is included in audit ultimately? What is not included in audit? What is included in audit? What is not included in audit? What is not included in audit? I'll tell you first. We are not expected to perform duties which fall outside our domain of competence. For example, Reliance Industries is there. One of the major business for them, 60% of the profit and turnover of the Reliance company, 50% more than, comes from petroleum refinery. People are crying, Jio recharge prices are increased for Anant Ambani marriage. No. Reliance Jio is only contributing 20% of the total profits of the company. Not even 20, 15 only. Major profits are coming from petroleum refinery. Petroleum refinery means they have a very big 13,000 or 14,000 acres refinery plant is there, Jamnagar. So they have a refinery. So they do petroleum refinery. They have storage wells and all will be there. Storage tanks will be there. Now, closing stock valuation we have to do, right? Reliance Industries Limited inventory closing stock valuation is there. Inside that oil reserves were there, some closing stock. Some 1,000 crores they kept. Can I go and check 1,000 crore value worth of closing stock? Is it in my competence? But remember, I have to check it. I have to check whether closing stock is correctly valued or not. How do I have that competence? I don't know what oil it is, what grade it belongs to, what percentage of mixture it has. I don't know anything. So auditor is not expected to perform each and every task on his own. You can take help of expert in these cases. In order to do effectively audit, if at all you think you require an expert assistance, you can happily take, no problem. Are you getting it? So auditor is not expected to perform activities which are outside his scope. For example, physical condition of asset, how it is, how a asset is working, how the asset is working. Is the asset is in good condition or bad condition? I don't know. I technically cannot understand. An auditor is not expert in authentication of documents. An audit is not an official investigation. Investigation means it's a different assignment. I will slowly discuss about investigation, various engagements. I will slowly discuss. So, as already been discussed, objective of the audit is to obtain reasonable assurance whether the financial statements are as a whole free from MMS. That's it. In this first chapter, we have lots of content, like where they discuss generally the various points. General discussion. Even if you read on your own, you will understand that. Then what is included in the scope of audit? I have to cover all aspects. All aspects means what? I have to cover closing stock, I have to cover purchases, I have to cover sales, I have to cover employee cost, I have to cover depreciation, I have to cover fixed assets, I have to cover inventory, I have to cover trade receivables. Every aspect of the entity I have to cover in audit. All aspects. Internal controls I will check. So an audit of financial statement should be organized in such a way that you cover all aspects of the entity relevant for financial statements. Second, what else you need to cover? You need to check. You need to obtain reliable information, sufficient information. Auditor should satisfy that the accounting records and other data are sufficient. Nothing but financial statements are prepared based on books of accounts. How books of accounts are prepared based on actual transactions? What is the proof for transaction? Bills and documents. You should check whether the bills and documents are matching with journal entries, whether they are matching with books of accounts, whether they are matching with financial statements. That alone you should check. That's enough. So that is there within your scope. You should check whether financial statements are giving proper disclosures. So whether financial statements, it may be with respect to accounting policies, it may be with respect to application of accounting policies, it may be with respect to accounting estimates, it may be with respect to the process of recording transactions. Accounting to financial statements, whatever steps are there, you have to verify. The scope of audit includes, you need to check whether financial statements are properly prepared. You need to check whether information used for preparing books of accounts and financial statements are reliable and sufficient. You should cover all the aspects of the entity. This is there within your scope. What is not in your scope? Technical duties are outside your scope of competence. Clear? See, this is a revision class, remember. I cannot cover each and every point. I cannot give that entire discussion. Next. So that's about scope of audit. I think almost initial 7 questions we have completed. Then now tell me, is audit compulsory for every organization? No. So we have, based upon whether audit is compulsory or not, the audits are broadly classified into two types: statutory audit, non-statutory audit. Statutory audit means audit mandatory under a law. Statutory audit means audit mandatory under some law or regulation. Tax audit, which is mandatory under 44AB of the Income Tax Act. Company audit, which is mandatory under 139 section of the Companies Act. Bank audit, which is mandatory as per Banking Regulation Act. Of course, bank audit is conducted as because of Companies Act regulation, but Banking Regulation Act format is also applicable. Insurance audit is compulsory as per Insurance Act. So if audit is compulsory and the auditor is appointed because there is a compulsory requirement under the law, statutory, we call it as what? Statutory audit, statutory auditor. Some entities, no, sole proprietors, partnership firms, even though they don't have any compulsion, they still appoint auditor. We call that audit as what? Non-statutory audit. We call that auditor as what? Non-statutory audit. Ultimately, so two types of audit: statutory audit, non-statutory audit. Tell me, in statutory audit or non-statutory audit, where terms and conditions have to be clearly discussed with the management? Non-statutory audit. In non-statutory audit, we should clearly discuss terms and conditions with the management. In second chapter, we will hear in terms of engagement. In non-statutory audit, engagement letter is highly important. Why? In stat audit, no. Whether management understands my duty, see, very simple. Whether it is stat audit or non-stat audit, scope and objective of audit. Scope and objective of audit. Responsibilities of management. Responsibilities of auditor. These three must be agreed, right? Responsibilities of management, responsibilities of auditor, what auditor has to exactly do. These three has to be discussed, right? These three has to be agreed upon by auditor and management, right? Generally, these three will be there in the law itself in case of stat audit. What auditor has to do, what management has to do, everything is given in the law itself. Whereas in non-stat audit, there is no law. There is a high possibility that auditor and management will fight. Hey, this is not my duty, this is your duty. Both of them will be fighting. So it is very important in non-statutory audit to have a predetermined terms and conditions for audit. So this point we'll discuss again. So, and you know, whatever work that we are doing, audit, see, once we qualify as a chartered accountant, what we can do, either we can come into practice or we can go for some employment, or none of this, you can go and settle in your family business, something if at all there. Suppose if I choose practice, we will work, right? We will give some services, right? These services are called as what? Engagements. These services are called as what? Engagement. Engagement means nothing but it's an arrangement. It's an arrangement. It's an arrangement between two people. Engagement is nothing but an arrangement between two people. So that is called engagement. Audit is a type of engagement, correct? We call audit as what? Audit engagement. We have standards, right? I hope you're having a decent knowledge of standards. You know, we have totally 46, we have totally 46 engagement and quality control standards. We have how many? 46 engagement and quality control standards. Out of this 46, one is quality control standard, which we call it as SQC. Remaining 45 standards are called as engagement standards. What are the remaining 45? Engagement. Out of this 45, 38 are audit engagement standards. 38 are what? Audit engagement. Out of 38, 35 are normal standards on auditing, whereas 3 specifically is for special purpose financial statements audit. Whatever we have now, 200 series to 700 series, these are 35 standards we have. How many standards we have? 35 standards we have, right from 200 series to 700 series. Another 3 standards are dealing with special purpose. Then we have 10 more standards, 7 more standards. We have 7 more standards which are dealing with something called review, which are dealing with assurance, which are dealing with related service. Whatever work that we provide, they generally be classified under related service or assurance or review or audit. What we basically provide, tell me, what services we basically provide? We either provide assurance service or we provide non-assurance services. The auditors know they either provide assurance services or non-assurance services. Assurance on what? On historical financial information other than historical financial information. On historical financial information, you can give two levels of assurance: reasonable assurance, limited assurance. What is it? Reasonable assurance and limited assurance. In case you are giving assurance, on historical financials, which is a limited assurance, then standards on review engagement will apply. If at all you are providing reasonable assurance on historical financial information, then standards on auditing will apply. Standards on auditing is denoted with SA. Standards on reviews are denoted with SRE. Then suppose you are appointed to give assurance on. You have to give assurance on. The moment assurance means what? Tell me. Your report is being used by third party. The moment you are giving assurance, what does it mean? Your report is being used by third party. Some third party is using your report and taking a decision based on the report. That is called assurance engagement. Assurance engagement have three parties. One, responsible party who prepare the matter, who prepare the financials. In audit, responsible party means top management who prepare financials. Auditor will come and verify the financials, give the audit report, and that audit report is used by users of the financial statements. Three parties were there. One is management, auditor, and users. In all assurance engagements, three parties will be there. In all assurance engagements, three parties, whether it is audit, whether it is review, or whether it is assurance service. Actually, audit is also a type of assurance. Review is also a type of assurance. But audit and review, they are giving assurance on historical financial information. They are giving assurance on what? Historical financial information. Suppose, if at all you are giving assurance on other than historical financial information, suppose if you are giving assurance on other than historical financial information, then that is simply called as assurance engagement. When an assurance engagement is called as audit engagement, if assurance is given on historical financial, that to what level of assurance? Reasonable assurance. Then it is called as what? Audit. If assurance is given on historical financial information but with a limited assurance, it's called review engagement. Suppose if assurance is given on other than historical financial information, then it is simply called as, there is no separate name given to it. Now, for this we have separate standards. These standards are called as SAE, standards on assurance engagement. Standards on auditing 200 series to 700 series plus 800 series. Then review 2000 series, standards are 2000. Now assurance standards are 3000 series. You know what are assurance on what? Assurance on what? Assurance on other than historical. Other than historical means what? Future financial information. That is called as what? Prospective financial information. It is called as what? Prospective financial information. So if auditor is giving assurance on prospective financial information, standard on assurance engagement will apply. Apart from this, I will also do some other categories of work. Apart from assurance, audit and review, I will also provide some services. What services you will provide? Whatever I agree with management. Like management will call me, sir, can you please come and can you please come and do only external confirmation work for debtors? You are only appointed to get external confirmation. I hope you know external confirmation, right? You are appointed only for external confirmations. Nothing, no audit, nothing, sir. Very simple. You come, sir, these are the debtors, these are the creditors, these are the loans and advances. Just raise a confirmation request and get the information, compile it and then give it. Agreed upon procedure. What is it called as? Agreed upon procedures. Like where management will agree with you some procedures to be done. You just do that procedure, enough. Suppose some companies, they'll specifically call you, sir, we have to prepare financial statements. Our auditor is external auditor, one CA firm is there. They're asking us to prepare financials so that they will come and do audit. We don't have any competence. We don't know how to prepare Schedule 3 format accounting. We don't understand. Can you please come and just help us preparing financial statements? You agreed. That's called compilation engagement. What is it called as? Compilation engagement. Compilation of financial statements, we call it as. Whether you are doing compilation of financials work or whether you are agreed upon procedures that you are rendering, whatever it is, you are not providing any assurance to third party. Company will ask you to do something, you just do and then give a report to the company. You are not giving report to any third party. Some other party is not using your report. There is no assurance involved. You are not giving any assurance whether they're right, they're wrong. No. They give you data. Based on the data, you prepare it and then give it back. That's it. You are not giving any assurance whether the data is right, whether the data is wrong. You're not supposed to give any assurance. These services are called as what? Non-assurance services. What are these services? Non-assurance services or non-assurance engagements. Now for all the non-assurance engagements, we have what? Standards on related services. For related services, related to what? Not related to audit, review and assurance. Getting it? Related to entire audit, assurance. No, these services are useful for auditors. These services which I am providing are useful for the reviewers. These services are useful for the persons providing assurance services. But I am not providing them. I am only providing some services which are related to that. I am not giving any assurance. These are called as what? Related services. For that we have a separate standard called standard on related services. So if at all you are doing any, if at all you are accepting any work for any company to prepare financials, suppose you are accepting any agreed upon procedure works, related services standards will apply. Since you are a chartered accountant, all these standards you have to follow. For whatever the work you are providing, some standard will apply. You have to follow that standard. You clear. So all the related service standards are 4000 series. Confident? So these are the standards that we have. Engagement standards. Whatever it is, related service is an engagement, review is an engagement, audit is an engagement, assurance is also an engagement. Clear? We only have in the syllabus up to 700 series. We don't have 800 series, 2000 series, 3000 series, 4000 series. We don't have in the syllabus in CA. It's there only in the CA final. Confident? You know what is the standards weightage in CA into? 70 marks, pakka. 70 marks. Standards weightage. Right now, the first chapter we are discussing on nature, objective and scope. It's actually 200 standard. What we are discussing is nothing but 200 standard. Terms of engagement, second chapter, it's 210 standard. Quality control, SQC 220, 2 more standards. In audit report, we are discussing some 6 or 7 standards. Every chapter we are actually discussing standards only. Entire auditing 70% syllabus is standards only. Understood. So, what is an engagement? Here they have given engagement means an arrangement to do something. In the context of audit, what is an engagement? It's an agreement between auditor and client where auditor will be providing audit services. So this audit services will be generally what audit? External audit engagement. External audit engagement means what? An outsider will come and do the audit. If it is compulsory under law, it's a stat audit. If it is not compulsory under law, but we are calling outsider to come and do audit, it's voluntary audit. Are you clear? Sometimes auditor can be internal party also. Internal audit. Sometimes auditor can be internal. So anyhow, that we'll discuss later. What are the benefits of audit? I hope you can read this on your own. Benefits of audit. Is audit mandatory or voluntary? Just now I have covered. Who appoints the auditor? Who appoints the auditor? In case of government companies, C&AG will appoint auditor. In case of partnership firms, partners will appoint the auditor. Auditor is appointed by partners. In case of some other statutory corporations and all, government authority will be there who will appoint the auditor. In case of a normal company, private sector, I'm not talking private limited, I'm talking private sector. Private sector means what? Not a government company. So if private sector is doing, if private sector people are, if a private sector company is looking for auditor, who will appoint? Shareholders will appoint at annual general meeting. Simply, generally auditor is appointed by owners. In some cases, it is appointed by constitutional authorities or governmental authorities in accordance with the laws and regulations. Next. What is an assurance engagement? Just now I told. Assurance engagement means what? An engagement in which practitioner means chartered accountant. In India, we are called as chartered accountants. In our US, they are called as certified professional accountants. Like getting it. So assurance engagement will have 3-party relationship. Okay, this will continue the next session. Little discussion is there in this. So we'll continue in the next session. In the next session, I will cover all this and then we'll start with the terms of engagement and ethics. That's it. This first chapter alone is little bit like this. As we go further, the class will be much more interesting. This first chapter will have basic concepts. First chapter, fundamentals. Terms of engagement at least will be little interesting. Ethics and terms of engagement will be little interesting. Audit report onwards, the super interesting part will start. Clear all of you? Are you in flow? Are you in like grip with me? Like are you all in grip? Perfectly? Yes, and remember this is a revision class, not a regular class. Yeah, take care. So we are in the discussion of assurance engagement means what? Assurance engagement means we have three-party relationship, right? One, generally these three parties includes what? One is the practitioner, means the auditor, who expresses assurance, who expresses opinion. In case of audit, we express opinion. In case of review, we call it as conclusion. In case of audit, we give opinion. In case of review, it is called as a conclusion. And review is called as a limited assurance. Audit is called as a reasonable assurance. And what's the basic difference between review and audit is, if you recollect audit evidence chapter, in that, what are various types of audit procedures or what are various methods through which audit evidence can be obtained? You might have, like, there are some methods through which I can get evidence: inquiry, inspection, recalculation, recomputation, analytical procedure, external confirmation. Yes or no? Whereas in review, we only do inquiry and analytical procedure. We don't do anything else. We only do inquiry and analytical procedure. We will not inspect generally any records. We will not do recalculations, reconfirmations, ledger reviews, all that. We will not go for any external confirmation, nothing. We just inquire management. We just logically see whether financial statements are logically correct or not. We will just see. Analytical procedure is nothing but logical evaluation. We just see logically are they correct or not. If logically, based on the understanding of the company I have, based on interaction with the company and people, logically based on the financial numbers, whatever is there, if everything appears good, I give a positive conclusion. I give what? Positive conclusion. Whereas in audit, we should do inquiry, analytical procedure, inspection, recalculation, reconfirmation. We should get assurance that the numbers are correct. So reasonable assurance we want. That's why if you see in audit report, we give opinion like this. If at all we want to give positive opinion, we give opinion like this. In our opinion, to the best of our information and according to the explanation given to us, the aforesaid financial statements are true and fair. We give a positive opinion like this. You know how we give opinion in review? First of all, in review, we don't give opinion, we give a conclusion. We just give a basic conclusion. How we give conclusion, you know? Based on our examination, nothing has came to our knowledge. Nothing has came to our knowledge that the aforesaid financial statements are not true and fair. The aforesaid financial statements are not true and fair, such that I did not receive any information. Like that we will reply. It is like suppose if you go for a movie, if the movie is really good, you will say it is good. Suppose if movie is not bad actually, but at the same time it is not super also. So generally when somebody asks you, what you will tell in this case? One time watch or not bad. You will just say like not bad. There is a difference between good and not bad, correct? In audit, we have to give an assurance in such a way that you should tell either it is good or it is bad. Whereas in a review, is it not bad or bad? Getting the point? So you need not tell whether the financials are true and fair. You need not give a positive affirmation. You should give opposite of negative affirmation. Are you getting the point? So in a review, we give our opinion in such a way that nothing has come to our attention to cause us to believe that the financial statements are not true and fair. In this way, we give review conclusion. That's why the review conclusion is treated as what? Limited assurance. Whereas in audit, it is reasonable assurance. Clear? Next. So there will be a three-part relationship. One is practitioner, who actually provides assurance. The word practitioner is broader than the word auditor, obviously. Responsible party, who is responsible for preparation of subject matter. In financial statements, what is the subject matter? What is the subject matter in financial statements? In audit of financial statements, what is the subject matter? Financial statements is the subject matter. In review also, what is the subject matter? Financial statements. In assurance engagement, what is the subject matter? Prospective financial information. So subject matter means on what we are working on. That is what subject matter. This subject matter will be prepared by whom? Responsible party. Now we are the one who are providing assurance, and our report is being used by whom? Some users. So three-party relationship. So practitioner, responsible party, intended users. And audit is related to historical information, whereas practitioner will provide assurance, not necessarily, audit is related to historical, whereas practitioner may provide assurance, may not be related to historical financial. Practitioner may give assurance on what? Future financials or historical or maybe other than financial information also. We have a standard call 3402. We have a standard call 3402 where we give assurance on internal controls, where we give assurance on controls. Actually, that's a controls audit. What audit it is? Controls audit. It's not financial information audit. We are not auditing financial information. We do audit of controls and give opinion whether they are operating effectively or not. This audit is called as SOC audits. What is this called as internationally? SOC audit, systems and organizational controls. Systems and organization controls audit, SOC audit we call it as. This is not a financial statement audit. This is other than historical financial information, means other than financial information audit. Other than historical financial information can be either controls audit or it can be prospective. Able to understand. Next. So in audit, there is a three-party relationship. There is something called subject matter. Now tell me how I will evaluate, how I will evaluate the subject matter, how I will evaluate the subject matter against some criteria. In audit, what is my responsibility? My responsibility is to obtain reasonable assurance whether financial statements are free from material misstatements and whether the financial statements are prepared in accordance with the applicable financial reporting framework. Applicable financial reporting is the criteria. So directors prepared so-and-so financials, and I'm the auditor who should give opinion on the financials. Financials is a subject matter on which I should give opinion. What should I give? Whether this subject matter is prepared as per so-and-so criteria. Whether this subject matter is prepared as per applicable financial reporting framework. Applicable financial reporting framework is what? Suitable criteria. What are the elements of assurance engagement? If somebody asks you, what are the elements? In assurance engagement, generally what will be there? There will be a three-party relationship. There will be a subject matter. There will be a criteria. And auditor will get evidence. Auditor will get evidence. Auditor will gather evidence whether the subject matter is prepared as per the criteria. So that is what exactly there in the assurance engagement. These are the elements. Finally, of course, how do we give assurance? Through a report, through a written report. That's it. These are the elements of assurance engagement. So what is the difference between audit and review? Like as I already told, assurance engagement, the services that we provide, the engagements that we provide basically are broadly classified into two categories: assurance based services, non-assurance based engagements. Assurance engagements, non-assurance engagements. Assurance engagements means again two types: on historical financial, other than historical. On historical again two types: reasonable assurance, limited assurance. On limited assurance, what we provide is called as, the limited assurance is called as review. The reasonable assurance engagement is called as what? Audit. Now you see, what is the difference between a review and audit? Or in other words, in exam they'll ask you, what is the difference between reasonable assurance engagement and limited? I told you, in audit we do all types of audit procedures, whereas in review we do few procedures like analytical procedure, inquiry. It performs, like you see, in a limited assurance engagement, we only perform fewer procedures as compared to reasonable, whereas in this we perform elaborate and extensive procedure to obtain sufficient and appropriate audit evidence. Here we will draw reasonable conclusions, whereas in review we draw limited conclusion. What is an example of reasonable assurance engagement? Audit. What is an example of limited assurance engagement? Review in our context. So reasonable assurance engagement provides high level of assurance, whereas limited assurance engagement provides lower level of assurance than reasonable assurance. That's it. So this way they can directly ask us a question: what is the difference between reasonable assurance engagement and limited assurance engagement? In exam when you're writing, no, you fold the paper. You fold the paper. How you should fold the paper? You should not fold exactly to the half. You should fold to the margin. Are you getting it? For example, like suppose if you have paper like this. So this is the paper, right? So this is where you can write. Now to this center point you should figure out. You should figure out center point between this. Understood? So when you're folding the paper, you should fold only up to this margin. So you will get the center point. Some students, no, they fold up to the actual first before margin, left complete corner. So that's why they'll get little space here. Here they'll get 40% space, here they'll get 60% space. So, getting it? You can fold the paper, no problem at all. And pencil use for margin. Preferably use a pencil for margin. Generally present in such a way that you don't require to put a line in between. The person, the moment examiner sees your answer, he should understand that, okay, this is left side, this is right side. Some students, know, they write in such a way that this will go up to here and this point will start here. That should not be. Presentation should be neat. Presentation means not neat handwriting. Presentation means like legibly it should be. Legibility is what important. Like if he is able to read your answer and understand, that's enough. Next. Then we have, can we have any assurance engagement related to subject matter other than historical financial information also? Yes. We provide assurance services on matters other than historical financial. So what are they? Besides reasonable assurance engagement and limited assurance engagement, there is another kind of assurance which related to matter other than historical. These may be related to prospective information and not related to historical, correct? Or it may be related to assurance on internal controls in an entity. Prospective financial information means what? It means financial information based on assumptions about events that may occur in future and possible actions by the entity. It can be in the form of a forecast, it can be in the form of a projection, or it can be in the form of a combination of both. Generally, when I prepare future financials for the next 1 year, we generally call it as projection. We generally call it as projection. Sorry, forecast. We generally call it as forecast. If it is beyond 1 year, the next, suppose a company is preparing next 5 years future prospective information, next 5 years prospective financial information. First year is forecast, remaining 4 years is called as projection. Are you getting it? Because forecast means high accuracy. In future only, both are talking about future figures only, but forecast is generally high accuracy, whereas projection lesser accuracy than forecast. But remember, both are assumption based. Both need not turn into reality exactly. Clear? Now tell me, how can auditors certify that future? How can auditor certify the projections and forecast and all? How can he certify? Past itself we are able to get reasonable assurance. That itself we are unable to get absolute assurance, which already happened, recorded, actual transactions. Future something that will may or may not happen. How come auditor will certify? Auditor will not certify future profit and loss account. Auditor will not certify future balance sheet which contains assets and liabilities. We are not certifying the assets and liabilities at a future date. We are not certifying the income and expenditure at a future date. What we are certifying is, we are certifying whether assumptions are reasonable or not. In a prospective financial information, what we audit, we audit not the numbers, we audit the assumptions. Whether the assumptions used are reasonable or not. In 3.4, there is a standard called 3400. So audit assurance on prospective finance report on prospective financial information. Assurance report on prospective financial information. It clearly says auditor has to verify, the practitioner has to verify, the accountant has to verify whether the assumptions used behind this projection, the assumptions used to forecast, are these assumptions reasonable or not in light of the past? These assumptions are generally developed based on past experience. You should check whether based on past experience this assumption is possible or not. Suppose in the past 5 years company is growing every year 10% sales are increasing. Suddenly in the next 5 years they are increasing 50%. Tell me, is the assumption reasonable? No. Getting it? So in such a type of assurance engagement, examination is not of historical financial information. In historical, it relates to economic events and conditions in past period, whereas the later means what in this prospective financial information, it relates to information based on assumptions about future events and actions by entity. Therefore, historical information is rooted to past, prospective financial information is rooted to future event. And in prospective financial information, we generally give which assurance? Moderate assurance. You see, again, there is a third type of assurance they brought. Audit is reasonable assurance. Review is a limited assurance. Assurance on prospect of financial information is moderate assurance. They are saying, what is it? Moderate. Now some students ask me, sir, what is the difference between limited assurance and moderate assurance? There is no difference, technically speaking. Limited assurance is also a moderate assurance, Limited assurance is also a moderate assurance. Just for the sake of convenience, they have used a different terminology. Just for the sake of convenience. Tell me, limited assurance means, can I quantify? Can I quantify scientifically what is limited assurance? Can I quantify what is reasonable assurance? Can I quantify what is moderate assurance? We can't. We can't number it, no? We can't quantify it, right? It's not possible to quantify. So, when auditor is giving assurance on prospect to financial information, the standard is saying it's only a moderate assurance, but not a reasonable assurance. Reasonable assurance means what? High level of assurance. Anything other than reasonable assurance is a low level of assurance. Anything other than reasonable assurance is a low level of assurance. Moderate assurance is a low level of assurance. Limited assurance is also low level of assurance. Don't again interpret why it is limited, why that is moderate. No, don't worry. Because when somebody designing the standard, assurance standards, getting it, that fellow would have got this word, moderate assurance. When they are designing review standard, this is not a reasonable assurance, we have to give less than reasonable. That time the word what striked for them is limited. So they gave the word limited assurance. That's it. No here, no that scientific logics and all, nothing. So in an assurance involving prospective, the practitioner obtains evidence to the effect of management's assumptions. You see, we get evidence about assumptions. And we ensure that they are not unreasonable. We have to verify whether the assumptions used by the management are not unreasonable. For that only we get evidence. We have to obtain sufficient appropriate evidence to ensure that the assumptions used by the management are not unreasonable. Hence, the type of assurance that we provide is only moderate in nature. It is not even high level of assurance. It is not even reasonable assurance. Moderate means what? It is not high level. That's what they're trying to tell. You clear? See, assurances based on, again, high, medium, low, 3 levels. High level of assurance, medium level of assurance, low level of assurance. High level of assurance is what? Reasonable. Limited assurance, they said no, it is not a low level of assurance. What they said, it is not a low level, but it is less than reasonable. What is reasonable? High level. So less than reasonable means what? Middle level, moderate assurance. Limited assurance is also can be called as what? Moderate assurance for the understanding purpose. Clear? Therefore, in these assurance engagements, practitioners will provide a report assuring that nothing has come to practitioner attention to suggest that the assumptions do not provide reasonable basis. You see, this is one more proof I have to say that moderate assurance is nothing but limited assurance. Limited assurance also, how we give opinion, nothing has come to practitioner attention that cause him to believe that the financial statements are not true and fair. What here they are saying, nothing has come to practitioner's attention to suggest that the assumptions do not provide reasonable. I don't have any information to say that assumptions are not reasonable. Are the assumptions are not reasonable? I don't have anything to say like that. So, whereas in conclusion, review also, what are we saying? Nothing has came to my attention to say that the financials are not true and fair. Wordings are exactly same. That is why I say moderate assurance is another name for limited assurance. But in exam, you should not use interchangeably. When the review comes, you should select limited assurance. When moderate assurance, when assurance other than historical financial information they use, you must use moderate assurance. Clear? Next. What are the qualities of an auditor? What should be the qualities of an auditor? She should study important questions. No, right? Fine. What are the qualities of an auditor? The qualities are broadly classified into 2 types. Personal qualities and professional qualities. See, the qualities of auditor, the qualities are something which are same for every other profession. Whether you are a doctor, lawyer, engineer, any profession have actuary, architect. For every profession, like we have second chapter ethics, right? Ethics and terms of engagement. Ethics we are discussing now. Fundamental principles we are discussing, right? Next. These ethics, fundamental principles, qualities of the professional accountant, these are all same for every profession. Basic human being, they tell some sentence. The auditor must have basic human qualities apart from technical requirement of professional education and training. Whatever basic human qualities everyone should have, the same qualities must be there even for auditor. Auditor must be tactful, auditor must be cautious, auditor must be firm, auditor must have good temper, integrity, discretion, industry, judgment, patience, clarity of thought, reliability. These are all basic personal qualities of an auditor. Professional qualities means what? He should constantly and critically review financial statements, and obviously it is not possible for him unless he have an extensive knowledge of accounting. So you must be having a thorough knowledge of accounting principles. You must have a very decent knowledge of tax laws, taxation, company law, costing, financial management. You must have decent knowledge of all this. You must have expert knowledge in auditing and accounting, and decent knowledge in others. Taxation everywhere, if you have decent knowledge, that's enough. Because if you are doing audit, what knowledge you require is mostly about auditing frameworks, accounting frameworks. So this knowledge is what mostly important for you. Clear? We have a standard called 620. We don't have in CA Inter, but in CA final you'll be having using the work of an auditor's expert. Using the work of an auditor's expert. In this, expert definition is defined. Who is an expert? Any person who is having a specialized skill or talent, in any field other than accounts and audit. So the standard says a person who is specialized talent and skill, who is having a specialized talent and skill in any field other than accounting and audit. Because in accounting audit, who are experts? We are experts. We don't agree even if somebody says they are expert, right? We don't agree, That's what even standards also, because standards are drafted by whom? Members only, Auditing and Assurance Standard Board, yes or no? Auditing and Assurance Standards Board? Have you heard of it? Auditing standards are issued by whom? Auditing and Assurance Standard Board. Accounting standards are issued by whom? Accounting Standards Board. Heard of it? Yes. What are these boards? What is Auditing Standards Board? What is Accounting Standard Board? These are nothing but committees of ICA. I'll just give you a brief idea about it. You open ICA website, you see on the top there is something called committee. Yes or no? You see non-standing committees below. Accounting Standard Board is a committee of ICA. Auditing and Assurance Standard Board is a committee of ICA. Board of Studies is a committee of ICA. That is what BOS portal now. Yes or no? So these are all various committees of ICA. Ethical Standards Board. Now we are discussing the second chapter, ethics, In that entire that fundamental principles, code of ethics, entire that who releases that? Ethical Standards Board releases that. So tax audit quality review board, so many boards were there, you see here. So Auditing and Assurance Standard Board is one committee of ICA. Have you heard of ICA Council? Have you heard of Council of ICA? Council? Institute is run by 40 board of directors. We actually call them as council, not board of directors. 40. Out of them, 32 were elected from five zones: north, south, east, western, and central zone. 5 zones, central council members, we call them as 32. 8 members are nominees of central government, nominated members. Totally 40 members. So these 40 people are the one who are taking entire decisions about ICA. Their tenure is for 3 years. Every 3 years they'll be elected, and every year president and vice president will be elected. That's how it will be. Current vice president will be next year president of the ICA. So typically speaking, for vice president only the election will happen. President you automatically become. Once you become vice president in ICA, you become president in the next year. So this is about like a brief idea about what is an Auditing and Assurance Standard Board, Accounting Standard Board, all that. They are nothing but committees of ICA. So I hope you are clear until now. Then we have standards. I already gave introduction to standards. We have totally 46 engagement and quality control standard. What are engagement and quality control standards? This is there in ICA book only, You're all seeing as if petrol bunk lo zero path madri paathitranga. You're all able to recollect, right? Yes. So write about engagement and quality control standards. So we have 4 types of engagement standards. We have 4 types of engagement: standards on auditing, standards on review, standards on assurance, standards on related services. Now, whether your firm is providing, by the way, once again, let me discuss this. We can, I told you, right, we can do practice. Once a CA, once you become a CA, you can do practice. How you can do practice? You can do practice as a sole proprietor individually on your name, or you can do practice with association. You can do practice with association of persons, like multiple people put together, like 2 or more than 2 members. The moment 2 or more than 2 comes, it's called association. If you are alone, it's called sole proprietor, single owner. Now, the sole proprietor can incorporate a firm. The sole proprietor can incorporate a firm. That is called, when you incorporate a firm, no, it's called, it will get a registration number, and that number is called as firm registration number. Same way, if 2 or more than 2 CAs are working together, they will form partnership firm, or they can form LLP, limited liability partnership firm. Understood? When suppose, no, in the firm, no, there is only one owner, then that is called sole proprietary firm. Then that is called as what? Sole proprietary firm. Firm means it's not partnership. By default, people think firm means partnership. In income tax, firm means partnership only. In income tax, firm has a definition. Firm is defined. As per income tax, firm means partnership firm and LLP. Whereas general meaning of firm means organization. General meaning of firm means entity, enterprise, concern, establishment. Clear? So sole proprietary firm. So a member can practice in any of these way. Now this firm can render various services: audit, review, assurance, and related services. Now when you are rendering all these services, you should maintain quality in these services, right? Yes or no? In order to ensure quality in services, Institute has released a quality control standard, and that's called SQC. You see SQC heading, quality control for firms that are providing audit, review of historical financial information, assurance, and other related services. This is the heading of the SQC. Last time when I conducted this face-to-face, no, I was not at all well. I'm having full cough. How many of you have attended last time? Okay. Yes. I think you can see significant difference, no? But last time I was like not at all well completely. But now I'm full energetic. So standards on auditing. So standards on auditing, they apply in the context of audit of financial statements. And they have been issued on various issues. For example, what are the objectives of an auditor, how auditor has to maintain documentation, how to do risk assessment, what is an audit evidence, how to form an opinion. On various varieties of issues, auditing standards were issued. Standards on review. In exam, they may ask you this question, 4 marks question or 3 marks question. Write about standards on review engagement. Give a brief intro, give a brief introduction, or comment briefly on standards on review engagement. They'll give you a question like this. We don't have review engagement in syllabus, but since this paragraph is there, they'll give you a question on this. So standards on review engagement apply in the context of review of financial statements. It's a limited assurance engagement that provides lower level than audit. Even in review also, we try to get sufficient appropriate evidence, but by performing limited procedures, inquiry and analytical. Give a few examples of review standards, or what? Only 2 standards we have. In review, we have only 2 standards. 2400, engagements to review historical financial information. 2410, review of interim financial information performed by independent auditor of the entity. This standard is generally popular in listed entities. This standard 2410 is generally popular in listed entities. I hope you are aware of listed entities has to prepare quarterly financial results. Listed entities, no, they will release quarterly results. Now quarterly results, whatever they're issuing, no, that will be reviewed. They're not audited. They are not audited, but they were reviewed by their own auditor, independent auditor. Mainly you are appointed for doing audit of annual financial statements, give annual audit report, correct? But since the company where you are auditor, it is also giving quarterly results, right? So the SEBI says you should only give a review report on, assurance report on quarterly results also. Since you are auditing, why can't you give assurance on quarter results? Okay, fine. Until I do full year audit, I can't give reasonable assurance. If you want, I'll give you limited assurance. I will just inquire and I will see whether the quarterly results which company is publishing, are they not true and fair or not? I will just check it out. If at all nothing is contrary, I will give positive conclusion. Next. Then we have another standards on assurance engagement. This itself can be given as a 3 marks question. This is another set of standard which apply in assurance engagement dealing with the subject matter. What is the subject matter here? Other than historical information. Such assurance do not include audit and review. These standards are known as standards on assurance. For example, assurance on prospective information. Now in this, examination is not about historical information. Here what we examine mainly assumptions of the management, and these are the examples. Then the other standards that we have is what? Engagement standard, standards on related services. What are standards on related services? These standards apply in engagements to perform agreed upon procedures, and you can also use another word, compilation engagement. What is it? Compilation engagement. When a practitioner is called upon to render agreed upon procedures, or a practitioner is called upon to provide compilation engagement, these standards, related services standards, will apply. Understood? So we have two types of related services. One is agreed upon procedure. Two, compilation, important for MCQ. It is important for MCQ. An engagement to perform agreed upon procedure may require auditor to perform certain procedures concerning some item of the financials. For example, trade payables, trade receivables, purchases, related party transaction. Some company, they called you, sir, can you please come and do related party verification? Only related party transactions. We have to give related party disclosures at one place, sir. You just come and prepare related party information, so that we will give as it is to our accounts department, finance department, they will put it in the financial statements. So that our statutory auditor, he will come and do the audit. This is agreed upon procedure. Suppose a company called you, sir, we don't know how to prepare financials, we are not experts, sir, we are just a private limited company, ours is a restaurant business, me and my mother and my grandmother, we three are running this restaurant, so we three are directors, we don't know, the auditor is saying schedule 3, applicable financial reporting framework, all that is saying, sir, that nonsense, no, I don't know. So please come and prepare financial statements and give it to our auditor. He will verify financial statements and then give audit report. Understood? That is called what? Compilation engagement. Now tell me, simple question, can a practitioner who is compiling the financial statements, can he audit the same? No. Yes or no? Maker and checker should be different. And the last set of standards that we have is, apart from engagement standard, we have one standard is called quality control. Whatever engagement that you are providing, you must render it with proper quality. In order to render services with proper quality, you must establish quality control policies and practices. So quality control policies and practices means what? What is the standard on quality control? We will discuss at last. Right now you can't understand at this moment. I will discuss at last. Quality control standard importance I will discuss at last. Why the standards are needed? To standardize. Standard means what? Standardization. Standardization means what? Whether you do audit or I do audit, every one of us, whoever is doing audit, suppose tomorrow a company appointed me as an auditor, the way I do audit, the way I verify the things, the way I select the samples is same like how you do. Correct? Huh? Whether you do the audit of financial statements or I do the audit of financial statements, 99.99% of the cases we both will generally come into a common conclusion. You will also get the same conclusion like what I get. That is why standards are required. Suppose if there are no standards, like if there is no process established, you do audit in the way you want to, I will do audit in the way I want to, definitely public, they will not get confidence. If at all there is a standard processes that we are following, if at all standards are established on audit process, the quality of audit can be maintained. The quality in you see, Domino's Pizza is there, Pizza Hut is there, KFC is there, McDonald's is there. You have anywhere the KFC in India, you have KFC chicken anywhere in the world, the taste remains same. Whether the chef is 10 years experienced or 20 years experienced or a new fresher, doesn't matter. How to prepare that pizza, there is a clear instructions, quality control practice is there. There is a SOP, standard operating procedure on how to make a pizza. How much percentage of dough you have to use, how much percentage of salt you have to use, everything is predefined. In fact, packaged. You just have to tear the package and throw it and use it. Yes or no? Whoever cooks Maggi, it comes the same taste. If at all you exactly follow the instruction. Standardization ensures quality. That is why standards are needed. Standards ensure carrying out audit against established benchmarks at par with global practices. Standards improve quality of financial reporting. Standards promote uniformity of audit. Standards equip professional accountants with knowledge and skill. Standards ensure audit quality. Like need of the standards. If a super senior citizen is setting the paper, he will definitely ask this question. Getting it? If a paper setter is more than 70 years of age, definitely he will test this question. Next. Finally, what is our duty in relation to engagement and quality control standards? What is our chartered accountant's duty? We have to blindly comply with that. You don't have any other option. Correct? Can I deviate from standard requirement? Whatever the standard says, I have to exactly do the procedure. Can I deviate? You can do so in exceptional circumstance, and you should also prove that by deviating, you are not violating the standard. So whenever you depart from any auditing standard, when you are doing, for example, what is a deviation from standard? For example, no, if inventory is with a third party, suppose I am doing audit of a particular company. In that company, there is an inventory, and the inventory is with a third party. The inventory is with a third party. Generally, what SEP 501 says, when the inventory is lying with third party, get external confirmation. 2, if at all there is a doubt on the reliability of external confirmation, you visit directly. Any of these two I must perform for getting evidence on inventory lying with a third party. I don't want to do at all. I don't want to check inventory at all, which is lying with a third party. Why you don't want to check inventory lying with the third party? What is the reason? You should document it. If you are not following SA 501 procedure, you should document why you are not following SA 501 procedure. And how do you obtain evidence regarding inventory lying with the third party? In that case, the standard says 2 methods. If at all you are obtaining evidence to third method, not external confirmation, not visiting also. Like already third party gave a confirmation to the entity. You know, they do periodical settlement every 15 days once. They both do, you know, like settlement of like, you know, how much balance is outstanding, how much company has to pay. Like that, they'll have a settlement statements. I just saw that and convinced that this is sufficient. Once again asking third party from me directly, it's not required. So is this okay? Is this enough for you? How do you feel this is enough? You should document the reasons. Clear? Else, best thing is what, you know, comply with the standard. Because if you don't comply with the standard, you should give reasons why you did not comply with standard, what else you did not as per the standard, all that you should document. When I'm discussing 501, I'll tell you why deviation generally happens. So that's it. With this, nature, objective and scope of audit is completed. Okay, next. So let's begin ethics and terms of engagement. In this chapter, this is actually 11th chapter in your ICA book. In this chapter, totally 3 parts is the discussion. 1 part is dealing with ethics. Part 2 is dealing with terms of engagement. Part 3 is dealing with quality control. Inside this, we have 2 standards, SQC and 220. With discussion, it takes little amount of discussion. SQC and 220 takes little discussion. Now, first we'll discuss terms of engagement. First, I will discuss terms of engagement. Nothing but part 2 I will discuss. So, agreeing the terms of audit engagement. Agreeing the terms of audit engagement. 210. Agreeing to the terms of audit. That is the standard heading. Agreeing the terms of audit engagement. That is the standard heading. You know, in small and medium entities, no, private companies especially, what they think is, they think if we appoint auditor, they take care of everything. They generally assume that, like a private company, who have who are all like, who incorporated this private company. There is one person is there who is running a restaurant. That fellow happily doing business, happily selling, you know, all breakfast items, you know, lunch, whatever, small restaurant. Happily suddenly he met a CA, and that CA would have told him, why can't you incorporate a company? Because the CA will get some fees. Okay, so he suggested him, why can't incorporate a company? Then this fellow asked, what is the advantage of company? And nothing, you will have just a corporate identity, you will have a separate legal entity. What do you mean by separate legal entity? He said, Tomorrow, if at all, no, you borrowed any loan, all that. You borrowed any loan, whatever it is. You genuinely worked upon it. You genuinely invested in the company. As a shareholder, you borrowed, you are a shareholder, company borrowed loan. For example, you are a shareholder, for example. You are having ownership in the company. Company borrowed loan. Or you appointed somebody else to manage your business, restaurant. You appointed some director to run this business. Director is nothing but the one. Director. Who is executive director and executive? Executive means what? Vele sekara. Nothing but. I'm not good at Tamil, okay? I hope you're able to get my context. Chief executive na mukyamana vele sekara. He is chief executive officer. So he is the most busy in that company. So tomorrow, if you want to retire from the company, you retire from the restaurant business, but you want to own the restaurant, you can appoint somebody else to run this restaurant, and if they do fraud, you will not have any liability. Suppose if you run as a sole proprietor, even though you appointed somebody as an employee, though you are behind, though you didn't involve in any fraud, you will have unlimited liability. Suppose if you are incorporated as a company, just only structure is only different. In sole proprietor as well as here, both the cases, you are employing somebody to run the business. You are only investing. You are just a capital loan you invested, but you are in the behind only. If it is in a sole proprietor form or partnership form of organization, you will have unlimited liability because you are the owner. If it is a company form of organization, they will have the unlimited liability. You will not have the unlimited liability. Shareholders will not have unlimited liability. Director will have. So shareholder will not be responsible. Whatever amount I have given, to that extent I will bear. Whatever loss is there. Beyond that I cannot bear. So that kind of separate legal entity will be there. So he educated me. Somehow I want to incorporate. Then immediately I got this thought. So okay, let us go with company incorporation. I agreed. That CA said, sir, but in order to incorporate a company, private company, let us go. It is not public, private. Public company means what? Anybody can become the owner in this. Anybody can buy shares in this. Public can buy shares in this. General public. Private means what? Public and all cannot. Only private people can buy. You and private people, according to you, whoever is private to you, they can only enter into shareholding. So that is private limited company. Okay, fine, sir. So private limited company means minimum 2% is set. The 2, I don't require 2, sir. By astrologer told 3 is good. This fellow will reply. Okay, so third person is who? My party is there. So she will be the director. She will be the shareholder. So 3 of them became shareholders. No, you will see the same in articles. Once you join articles, you will see in a private limited company, 3 directors will be there. Who are they? That fellow who is doing the business actually, his mother and his grandmother. Why 3 members are there? Because his astrologer told him 3 is good, lucky number for him. So 3. Huh? Edu? Our kalyanam agalappa. Okay. Fine. So 3 of them. 3 are there. So, and they both don't know that they're directors. His mother and his grandmother doesn't even know that they're director. Now for them digital signature is required. How should digital signature? How we will give digital signature? Through this thumb impression, Aadhaar authentication, and then that's how you will get a digital signature. So somehow they incorporated a company with the three shareholders, where 3 of them are also directors, because this fellow will only go with the 3, except marriage. Okay, so the incorporated company. Now immediately this fellow don't know what are the consequences of incorporating company. All these runs happily running as a restaurant. No accounts, nothing. Now the CA is telling me, sir, you should maintain accounts. Adukagada nee incorporate panni veche. Because of this only you made me to incorporate this company. Now he is saying, no, monthly we will charge 10,000, we will maintain your books of accounts. The CA is telling, monthly we will charge 10,000 because your turnover transactions are less. Fine. After 6 months he is coming and telling again, sir, auditor is required. Why auditor is required? All these days I am doing business without any auditor, nothing, accounts and all. You incorporated a company, for that you took 20,000 fees. And again you are saying every month accounts have to be maintained, and I am giving 10,000. GST return filing, 2,000 you are charging again. All that, okay, fine. Again after 6 months he is coming and saying audit is required. Fine, I will, okay, fine. I thought initially, because when the moment he told me company means, I thought he will take care of everything. Every time I am fighting with him. So that's why especially in all the cases, stat audit or non-stat, whatever it is, clients will not have knowledge of what is an audit. They think auditor means he takes care of everything. We know audit means we only audit financial statements. We know that, but they don't know, right? He's just a restaurant owner. Maybe he has studied some BCom or degree or some BTech or something. They don't know all these formalities and all, right? So since the client is not aware of auditor's responsibilities and their responsibilities exactly, since they are not aware of, whenever we are taking up any engagement with them, it is better to enter into a written agreement. That is called agreeing to terms. What is it? Agreeing to terms of an audit. So in an audit, what are the terms should be? That auditor is responsible to give opinion on the financial statements. My responsibilities are only to conduct the audit. My responsibility is to identify material misstatements if any were there. But remember, because of inherent limitations, I cannot identify all the material misstatements. You are responsible for designing and implementing internal control system. You are responsible for ensuring that the financial statements are free from material misstatement. You are responsible for providing access to people, information, unrestricted access, information, additional information, unrestricted access to people, all that. The moment I gave him entire these responsibilities that he has to follow, he died. Because what all this is I'm happily running restaurant without any of this complication. Yes or no? I have seen these cases. Many were there. In reality, many were there. But see, in a big company, it's a different. The issue is a different. In a big company, generally they'll have lots of accounting work will be there, lots of resources will be there. That's a different. But a small company, for them, company form of organization is also not required. For them, company form of organization is also not required. So, ultimate story is, whenever you are rendering an audit service or any other service, not just for audit, I'm telling you, any service you are rendering, as a practitioner, we are rendering any service, you must enter into terms and conditions. You must enter into terms of engagement. In audit, it is terms of audit engagement. In review, it is terms of review engagement. In assurance, it is terms of assurance engagement. In related service, terms of related service. You need to enter into terms. Why terms are required? The terms of engagement will avoid disputes. The terms of engagement will reduce misunderstanding about objective and scope of auditor, will reduce misunderstanding of auditor responsibility, management responsibility, applicable financial reporting framework, all that. You see, engagement letter will have these. What are the contents of engagement letter? It must contain objective and scope. It must contain responsibilities of auditor. It must contain responsibilities of management. It must contain identification of framework. It must contain how auditors will give audit report, in what format they will give audit report, expected form and content of auditor's report, all this. Tell me, terms and conditions, who should give? Buyer or seller in a goods? Seller. In a service, who should give the terms and conditions? Service provider. Seller or service provider are only the one who can give terms and conditions. Buyers don't know what are the complications and all. They are just buying the product. I know what are the complications if you buy a mobile. Seller only will understand. Seller only will understand what are all complications he will get when selling the goods or providing services. Correct? Huh? Buyer don't know. Suppose you are going a saloon shop. Who will design terms and conditions in saloon shop? Service provider. You are going to watch a movie. You are buying a movie ticket. Behind the ticket, terms and conditions are printed, right? Who decided? Service provider. In all service, in all sale of goods, sellers and service providers are the only one who design, who create, who put all the terms and conditions to avoid misunderstanding between the other party and to avoid misunderstanding between these two parties. In audit, who are service providers? Auditors. Who are service receivers? Client. Who will have the knowledge of all the complications? Auditor. Client may not aware of all the complications. So who should give engagement letter to whom? Auditor should give engagement letter to client. Engagement letter purpose is what? Engagement letter purpose is to reduce the possibility of misunderstanding. So audit engagement letter is sent by auditor to client. It is in the interest of both the parties to issue engagement letters so that possibility of misunderstanding is reduced to a great extent. With whom you discuss all these terms? With those charged with governance. The auditor shall discuss the terms of audit with the management or those charged with governance, as the case may be. What is those charged with governance? Governance means accountability plus authority. Governance means what? Accountability plus authority. Those who are having authority, those who are accountable at the same time, these people are called as those charged with governance. In a Reliance company or in Infosys company, if something issue happened, immediately whom you will blame? Top management. because they are only accountable, right? The top management is the only one who are accountable for who are accountable for running the affairs in a smooth manner. If at all top management is not discharging the duty properly, governance issues and all will come. Those charged with governance generally means top management. Generally means what? Top management. We have a standard called 260. There we have a one full question. Who is those charged with governance? There we will discuss once again. Management means what? Generally, it may be low level management, middle level management, or even top level management. Management is a very broader term. Whenever management and those charged with governance are used together, management means middle level and low level. Those charged with governance means top management. So auditors shall discuss terms of audit with the management as well as those charged with governance. Generally, you will discuss with management. If management is not able to understand, then you will go and discuss with those charged with governance. In a private limited companies, there will not be multiple level of employees. There is only one employee. He himself is a shareholder, he himself is a director, he himself is those charged with governance. So in some entities, the same people are management, the same people are those charged with governance. In some other entities, management will be different, those charged with governance will be different. And obviously, engagement letter must be in writing, and it is most important in non-statutory audits. In non-statutory audits, the chances of disputes are even more high, because what you have to do, what he has to do, there is no law. So it is better in case of non-statutory audits to agree terms of audit engagement between the auditor and client. So what are the contents? Engagement letter must have objective and scope. You should define objective and scope. Responsibilities of auditor, responsibilities of management, identification of the framework, reference to expected form and content of the report. Your ultimate objective is what? To give opinion. How do you give opinion? By a report. How the report is going to be. You give them an idea. Like I will show you the engagement letter format. I will show you the engagement letter format. So we have engagement letter format in so this is how an engagement letter looks like generally. It is there in ICA bookmark, don't worry. So and so firm, this is our firm name, for example. This is so and so date, place, city, to board of directors. Objective and scope of audit. What is the objective? You have requested that we audit the financial statements of so and so company. You requested me, not I requested you. In reality, it's different. Okay. We are pleased to confirm our acceptance and our understanding of this audit by means of this letter. So we are pleased to confirm our acceptance and our understanding of this audit by this letter. What we know about audit? What do you mean by audit? Through this letter we are telling you. See, responsibilities of auditor. We are first explaining what? Responsibilities. We will conduct our audit as per standards on auditing. These standards require that we comply with the ethical requirements. As a part of audit, we exercise judgment. We maintain skepticism. We do risk assessment. We obtain internal control evaluation. We check accounting policies reasonableness. We check management's accounting estimates, going concerns, all that. We will also see overall presentation, structure and content of the financial statement. These are all we do. This is what our duty. And remember, we have so many inherent limitations. That is why some material misstatements may not be detected even though we properly plan and perform. So at the beginning of the audit itself, by the way, engagement letter must be given at what time? Beginning of the audit. Before you start the audit. Before you start, the moment you accepted the appointment, immediate first step is give engagement letter. And tell them very clearly that what are your responsibilities, what are their responsibilities. And we also tell what? Responsibilities of management. The next side heading is what? Responsibilities of management. What we tell here? Our audit will be conducted on the basis, that means we do audit. We start our audit on the assumption that management and top management acknowledge and understand that they have the following responsibility. Like what is the responsibility? For preparation of financial statements that give true and fair view. Responsibility for preparation on going concern basis. For selecting and applying accounting policies. And for internal controls to ensure that financials are free from material misstatement. Management is responsible to provide us, who should give us access to books of accounts, who should give us explanation if at all any doubt in books of accounts? Management. If I want to talk to any employee, who should give that information? Management. So management is responsible to provide us with access to all the information, records, documents, access to additional information if at all we are asking, access to people within the entity. Unrestricted means nothing, very simple. You should not restrict me. If I want to talk to anybody in the organization, you should let me, because I will get some information from them, valuable information. Tell me, financial statements are nothing but result of books of accounts. Books of account is nothing but result of transaction. Transaction means only accounts people will involve. Sales personnel will be involved, purchase department will be involved, production people will involve. So obviously, if I have to know something about go down, warehouse, I should talk store manager, I should talk to store people. And if I want to know exactly how the scrap is generated, if I want to know scrap sales, other income, if I want to know scrap sales and how the scrap is generated, I must be able to interact with the production department also. Correctly. So you should give me unrestricted access to everybody. So we are telling management what is your responsibility, and we are also telling at the beginning what are our responsibilities. Then finally we will report to the members whether in our opinion financials give true and fair view or not. We are telling in the engagement letter itself what we will do ultimately. We will report to your members whether the financial statements are true and fair or not, based upon in light of our findings. Sometimes like we also mentioned, we may need to amend the audit report if at all some observations were there. Generally we give unmodified report. Generally what management expect from us? Unmodified report, unmodified opinion. I'm not using that, I'm using the word unmodified report. Unmodified report is nothing but audit report format as it is you copied from 700 standard. If you copy audit report format as it is from 700 format, that is unmodified report. If at all you are including emphasis of matter para, other matter para, key audit matter, other information para, material uncertainty related to going concern para, then the report is called as modified report. Or you are modifying the opinion, then also it is called as what? Modified report. I understood that you didn't understand. Okay, so I'll discuss in the next chapter, don't worry. What is unmodified report, what is modified report, I'll discuss in briefly. Okay, so finally, so in agreement with management have to sign this letter and then send it to the auditor. 2 copies, 1 copy with us, 1 copy with them. So now tomorrow if management comes and says, sir, why you are not preparing books of accounts, why you are not preparing financial statements? Sir, see the financial statement, see the engagement letter. We clearly told our responsibility is only to do audit. Your responsibility is to maintain books of accounts. Your responsibility is to prepare financial statement. That's not my responsibility. So engagement letter establishes terms and conditions for the audit to avoid misunderstandings. Correct? Now, so now there is something called preconditions to an audit. What is a precondition? They are nothing but responsibilities of management. Preconditions to audit is nothing but what? Responsibilities. Tell me, only if preconditions are present, I will start the audit. Precondition to an audit means what? Before starting the audit, what should be the condition? Only if these preconditions are agreed by the management, I will start the audit. How management will agree to these preconditions? Through engagement letter. What are the preconditions? Like first of all, you see, preconditions for an audit may be defined as use by management of acceptable framework and agreement of the management and those charged the framework to the premise on which audit is conducted. Preconditions to audit is nothing but management has to prepare financial statements using financial reporting framework that is acceptable. What do you mean by acceptable framework? Suppose if the company is a private limited company, financial statements have to be prepared as per Schedule 3 and accounting standards. Then only it is acceptable. If at all they are not following accounting standard, then are they be acceptable? No. If at all applicable financial reporting framework is followed, if company is following applicable financial reporting framework, then that is acceptable framework. So auditor should check what are preconditions. You should check the preconditions, only then you can accept the audit. You should check the preconditions. You should also design an engagement letter. You should get a signature. So the auditor shall determine whether financial reporting framework is acceptable. You should check whether financial reporting framework is acceptable. Nothing but the rules and regulations which they are preparing for preparation and presentation of financial statements, the rules which they are following, is it acceptable? Now, these preconditions at the beginning we should check, right? At the beginning, why the hell company prepare financial statements? The financials are generally prepared at the end of the year. If the financials are going to be prepared at the end of the year, how do I know whether financial reporting framework is acceptable at the beginning itself? We will get an acknowledgement that they will prepare as per acceptable framework. This is what? This is an acknowledgement of management that the financial statements will be prepared by them in acceptable manner. And I will obtain agreement of the management that it acknowledges for preparation of financial statements as per applicable financial reporting framework. Management is responsible for internal control so that the financials are free from MMS. Management is responsible to provide the auditor with access to all information. Additional information I'm asking, unrestricted access to persons. Suppose if preconditions to an audit does not present. If preconditions to an audit does not present, like what do you mean by preconditions does not present? If auditor determined that financial reporting framework to be applied is unacceptable. Financial reporting framework to be applied is unacceptable. You see, they have clearly used the word to be applied. They didn't use the word facts. Financial reporting framework applied. They didn't use. To be applied means what? In future they are going to prepare. And you got to know today itself that in future whatever the financials they are going to prepare, they are not going to be prepared as per acceptable framework. If you determine that, you should not accept the audit. What? You should not accept the audit unless required by law. If at all there is a compulsion in the law that you should always continue, you should accept this audit, then you can't do anything because it's mandatory under law. Suppose if at all it is not mandatory under law, if it is not mandatory under law, what is not mandatory? Accepting is not mandatory. Accepting this audit is not mandatory. You are given the option. When will you accept? 1, if the financial reporting framework is acceptable. 2, if the management is acknowledging all its responsibilities. Only in these 2 cases you will accept the audit and continue with the audit. If financial reporting framework is unacceptable, or if management is not acknowledging its responsibilities, will you accept? So if the preconditions are not present, the auditor shall discuss the matter with the top management and shall not accept the audit. When you shall not accept, if financial reporting framework is unacceptable and if agreement of the management is not obtained on matters related to understanding of the responsibility of management. Suppose initially itself they are asking some limitations, like you sent, as an auditor we have right to access to all the information, all the explanations, like that we said, and we are telling in the engagement letter that you are responsible to do all this. Company without signing, the management without signing this engagement letter, they are asking you, sir, this and all you can't do, sir. So and so branch, so and so people, you should not ask any questions. So and so director will not come and answer you any questions. Like that they are giving some limitations. Before accepting the audit itself, if at all you are giving limitations, why will I accept it? So if management or those charged with governance impose a limitation on the scope of auditor work, the auditor, it will result in what? Disclaimer of opinion. Suppose if at all you are not giving me information that I want, at the beginning itself you are telling. At the beginning itself you are telling that you will not provide so and so information, you will not provide access to so and so people. At the beginning itself you are restricting me. With restrictions, how can I get evidence I want? If I do not get evidence I want, how can I give opinion? Tell me, if I do not get evidence, can I say whether they are right or wrong? Can I say whether so and so item is right or wrong without that item verification? Obviously not. You are not giving information. Without getting information, can I conduct audit? If I cannot conduct the audit, if I cannot verify something, can I give some opinion like positive or negative? Can I suppose somebody asked me, how is the new phone released in the market? I didn't see that. Can I say good or bad about that? I can't say anything about it. If there is a limitation on the scope before accepting the audit, and with the kind of limitation, you know that you cannot conduct audit properly. You know that ultimately you cannot give opinion properly. Why to accept the audit? Don't accept. If limitation is there before accepting of the terms and conditions, don't accept. Now you will get it out. Sir, what if I accepted and I gave engagement, they also agreed everything. Now during the audit, now they are not giving me information. During the audit, they are not giving me the information. I will resign. I have another right called right to resign. I will resign that time. If after accepting the engagement, if management imposes limitation, I have right to resign. That we will discuss in 705 standard. Next, this change I will come back to it later. Now, what about engagement letter? Like, should I give engagement letter every year? Suppose I was appointed as an auditor for 5 years. It's a private sector entity. It's not a government company. It's a non-government company. Non-government company can appoint auditor for how many years? 5 years. Continuously for 5 years they can appoint. Should I give engagement letter every year is the question. First year you give, because first time you are dealing with that management, so you don't know what their knowledge about audit. They don't know what is, what auditor will exactly cover and what he will not cover. So first year you give engagement letter, you clearly explain them, these are your responsibilities, these are my responsibilities. You clearly explain what you are going to do, everything is good. Should I give engagement letter in the second year also? Should I give engagement letter in the third year also? If current year I do audit, next year also I am only doing audit, that's called recurring audit. First time if I am appointed, that's the initial audit. First time when I am appointed, that's the initial audit engagement. Next year, it's a recurring audit engagement. In a recurring audit engagement, do engagement letter has to be issued again and again is the question. Generally, in reality, we issue. Just for the sake of convenience, we issue. But is it compulsory under SEA 210 standard on auditing 210? It is not compulsory. But when it is compulsory, even though it is a recurring audit, when it is compulsory? When changes in terms have been changed, or when the management with whom originally I discussed these terms, that is changed. Getting it? When scope of work has been changed, or when there is a change in business of the entity, then I will have to issue new engagement letter. You see, any indication that entity misunderstands the scope and objective of the audit, if at all you think they are misunderstood, that time you once again give engagement letter with even more clear terms and conditions, so that they will not misunderstand. A revised or special terms, there is a change in terms, then you should give engagement letter. A change in law, suppose if there is a law which says that you must issue engagement letter, then you must. Change in applicable financial reporting framework. In last year engagement letter, I clearly told that financial statements have to be prepared as per Schedule 3 accounting standard. But this year onwards, for the company, Ind AS is applicable. Now tell me, should I give once again engagement letter saying that you should prepare financial statements as per Ind AS? Or change in audit reporting requirement. In 2018, up to 2017 and 2018, the audit report format is different. Whereas from 2018-19 onwards, the audit report format is different. Generally, let us assume last year audit report format is different. This year audit report format is different. Until last year, management is thinking, I will give audit report in so and so format for this year also. So management perception is wrong, right? So I should tell management that audit report format is changed. A significant change in nature and size of business. In the engagement letter, I also told about the company so and so service they are providing, so and so products they are dealing with. But now that products and services changed, engagement letter has to be updated. Very common sense. Generally, should I issue engagement letter in recurring audits? Not required. In the initial audit engagement, if you issue, that is enough. For recurring audits, it is not required. Even though it is a recurring audit, under what circumstances engagement letter is compulsory? If there is an indication that management misunderstood the terms, or there is a change in terms, or change in law and regulation, change in applicable framework, change in audit reporting requirement, change in top management, change in nature and size of business. In all these cases, it is better once again to issue engagement letter. So the auditor must issue engagement letter in case of newly accepted appointment. Whereas recurring audit, auditor has to decide whether reissue of engagement letter is required or not. In the following cases, reissue of engagement letter is compulsory. So this itself can be asked as a 4 marks question. Suppose you issued engagement letter. Management, they did not sign. They are coming and asking you, sir, let us change some terms and conditions. They are asking to let us change some terms and conditions. They proposed changes. Engagement letter contains basically terms. They proposed changes in the terms. Will you blindly accept? You will check whether there is a reasonable justification to do so. You will check what? Whether there is a reasonable justification. If there is a reasonable justification and audit work performed will still comply with the standards, then you can agree for changes. Like suppose they proposed some changes in terms and conditions. Even after accepting the changes, you still do audit as per terms. You will still do audit as per standards on auditing. There is no non-compliance. By accepting those changes, there is no non-compliance. For example, company originally appointed you as an auditor for the entire company, including all 10 branches. But now they came up and telling you, sir, let us do one thing. You do main head office and 5 branches only. For remaining 5 branches, let us appoint somebody. Is there anything wrong here? In fact, company is reducing my work burden. Yes or no? My work burden is reduced. So if I reduce number of branches, getting it, will it affect my legal formalities? No, I can accept it. Suppose company came up with this condition. Sir, let us change one terms and conditions, sir. You said in engagement letter, management responsibilities, that you want access to everybody in the organization. That is not possible, sir. These management persons, you cannot talk to them because they will not interfere. Like that they are coming. Now, will this be a limitation on the scope? Now, can I accept this term? No. If the change in terms are such a way that they are restricting my scope and power, I will not accept the change. If changes in terms are in such a way that they are reducing my work burden, but not affecting my authority, they are not affecting my quality of audit, I will accept that change. So if there is no, if the auditor shall not agree, if where there is no reasonable justification. Suppose management proposed changes, you are not agreeing to the changes, management is not cooperating with you, what will you do? You will withdraw from the audit. And when you withdraw from the audit, you have to communicate the withdrawal to top management, regulators, SEP, ROC. When you resign, you have to inform to ROC. When you resign from a company, you have to inform to ROC. That's it. Why management will request changes in terms? First of all, why they will ask changes in terms? Because circumstances changed, or management misunderstanding of the nature of auditor services. Management thought you will take care of everything. Now after reading engagement letter, they came to know that audit means only audit, nothing else. So management will come up with a request to change terms in the following circumstances. One is change in circumstances, misunderstanding of the nature of audit or services originally requested, a restriction on the scope. Management may come up with changes in terms that restrict the scope of audit. Restriction on scope of audit means what? Number of branches maybe they will reduce. Maybe you were originally asked for income tax audit and tax audit. Now they want you to do only stat audit, company audit. Getting it? So like that, there could be any reason why there is a request from the management regarding changes of terms. That's it. So with this, main concepts were completed. In exam, they'll give you this 12th question also. What should auditor consider before agreeing to change? Before agreeing to change the audit engagement to the engagement providing a lower level of assurance. Suppose if company comes and asks you to change the terms and conditions. Now if you accept those conditions, you cannot get reasonable assurance. You cannot get a reasonable assurance. You will get a lower level of assurance. If at all management is proposing you to accept terms and conditions that reduces level of assurance, what points you should consider before you give acceptance? What points you should consider? Before agreeing to change of an audit terms, before agreeing to change an audit engagement to a review or to a related service. Suppose company proposed you, sir, you were originally appointed as an auditor. Now they are coming and asking you to change some terms and conditions. If you accept the terms and conditions, it will no more become an audit. It will become something like a review, or they may completely go into non-assurance category, related service. If at all there is a change in audit engagement, there is a change from audit engagement to a review or to related service, auditor need to assess any legal and contractual implications of the change. Generally it will not happen. Audit means audit only you will be doing. They will not ask you to change from audit to review or audit to related service. If auditor concluded that there is a reasonable justification, the work performed, he will accept it. He will accept it. Tell me, suppose I am appointed as an auditor under Companies Act by shareholders. I am an auditor. Now company is coming and asking me, sir, can you withdraw from the audit? Can you change the terms and conditions from audit to related services? If it's a non-statutory audit, maybe I can accept, because it's a non-statutory, nobody is there. Getting it? So this point is not required. Fourth point. That's it. Actually, whatever I have covered is whatever I've explained is only covered here. With this 210 is completed. So in 210 what is there? Ultimately, you must issue engagement letter to the client to avoid misunderstanding. To avoid misunderstanding about what? Objective and scope of audit, responsibilities of auditor, management responsibilities, applicable financial reporting framework, reference to form and content of the auditor's report. Engagement letter must have these contents, nothing but these are the contents of engagement letter. Is it necessary to issue engagement letter in recurring audits also? Generally not required. In initial audit engagement it is compulsory. In recurring audit, only in the following circumstances you have to: 1. Management misunderstood the original terms. 2. There are changes in terms, a revision in terms. 3. Change in top management, change in law or regulation, change in applicable financial reporting framework, change in audit report format, change in nature and size of the business. In all these cases, we issue engagement letter. Confident? Suppose if company requested you to change terms of engagement to, changes in terms of engagement from audit to a review or audit to a related service. So they want you to withdraw from audit and perform review or related service. If there is a reasonable justification and not against any law, you can accept it. If it is not reasonably justified, you will not accept the change. If you do not accept the change and company is not letting you to work peacefully, you withdraw from the audit, resign from the audit. When you resign from the audit, what you have to do? You have to communicate resignation to the management and top management. Reasons also you should communicate. Not only them, do you have any legal responsibility? Check out. Communicate to lawmakers also. With this 210 is complete. Confident? Then we will have to discuss ethics. So let's begin the discussion on ethics part. So one of the part is terms of engagement, that is completed. Now we have ethics. Ethics is nothing but, here we are only discussing fundamental principles. Code of ethics is very big. In CA final, we have a chapter called professional ethics. There we will be discussing full code of ethics. Right now, whatever ethics syllabus that we are discussing in this particular chapter, this entirely will get repeated once again in CA final. Believe me, CA inter audit, if you learn perfectly, CA final audit 50% is done. 50. Because same standards, same content will be repeated once again in CA final. Maybe little extra, bit practically we will discuss, little more practically we will discuss in CA final. But most of the content that you are going to learn in CA inter will be repeating once again in CA final. Simply in CA final 100% audit syllabus, 50% is from CA inter only, copy pasted. Only extra 50 only you are learning in CA final audit. Those who are very good at CA inter audit, for them CA final audit is damn easy. So in ethics, the second question onwards will start. Write about principle based approach of ethics and rule based approach of ethics. Generally, how ethics is implemented in any profession. They will give you some rules. For example, rule based approach means what? Before I discuss about this, a principle based approach, rule based approach, what are first of all fundamental principles of ethics? What are the fundamental principles of professional ethics? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. These are the fundamental principles. These principles are something common in every profession, not just a CA profession. Fundamental principles of professional ethics is something common for every profession. Integrity means what? You have to be straightforward and honest. Since our profession, since we chartered accountants, our report is being used by lakhs of users, especially in case of audits of big entities. Our approach should be honest. We should not collude with the client. We should be honest and loyal to the shareholders. The auditor shall not associate with any report. You shall not certify any statement which contains materially false statements, which contains information provided negligently, which omits important information or misleading information. Omitting will result in misleading picture. You should not associate yourself with any financial statements or statements that contains materially false or misleading statement, that contains information which is provided negligently, or that omits required information where that omission is misleading. You should not associate. If at all you're associating means what? You can only give modified opinion on that. Suppose a financial statement is there, in that some amount is materially misstated. Can you sign that? You can, but mention in the audit report that that is materially misstated. If something which is important is omitted, mention that in the audit report that it is omitted. Then, so that is integrity. What is objectivity? Objectivity is nothing but unbiased nature. What is it? Unbiased nature. The auditor should not compromise. The objectivity requires an auditor not to compromise judgment because of bias, because of conflict of interest or undue influence of others. Objectivity, independence go side by side. When you are independent, naturally you are objective, or when you are maintaining objectivity, you are naturally independent. You are not influenced by bias, like the client belongs to our caste or creed or religion, something like that. You should not have any such kind of bias towards any client, or he is my relative. No. It requires that professional accountant shall not undertake a professional activity if any circumstance or relationship influences the judgment regarding that activity. Don't accept any work where you think you cannot work independently, where you think where your competence, your skill, everything will be affected. Some undue influence is there. Don't accept that work. That is what the second fundamental principle, objectivity, says. The third fundamental principle, according to me, is confidentiality. What is confidentiality? Whatever information the client is sharing with you in the course of audit, you should not share it with outsiders without permission of the client. Confidentiality means you should not, share client information. Which client? Present or past or future? Everyone. Even in respect of past client also, I should maintain confidentiality. Even though the client and me does not have a proper relation, still I have to maintain confidentiality. If at all you breach confidentiality, you are liable for guilty of professional misconduct under Schedule 2 to Chartered Accountants Act 1949, where 5 lakhs is the penalty. Up to CA Act, ICA will levy the penalty. I'll show you disciplinary mechanism just for an idea. In ICI, disciplinary ICI, this is disciplinary mechanism in the ICI, like you just type DISC ICI, there will be a site which will open, disciplinary mechanism, code of ethics, all that. So in this, you can file a complaint on a chartered accountant. You can file a complaint on a CA. So you have to pay 2,500 rupees plus a GST to file a e-complaint. If you won the case, it will be refunded. Getting it? So there will be an e-form. You see, name of the complaint, like you have to mention your name. If at all you are a member of ICA, membership number. That's why it is not compulsory. Membership number is not compulsory, because what if a non-member is filing a complaint? So name of the member against whom you are filing a complaint. Like this, you need to file a complaint with ICI. Then immediately the disciplinary mechanism will start. They will call information from you. They will call that guy, whoever is a CA on whom you complain. They will look into facts and circumstances, and they will classify what offense he did. Now offenses, whatever offenses that a CA do, they are broadly classified under 2 categories: Schedule 1 offense, Schedule 2 offense. We will discuss this entirely in the CA final. So in CA final audit, ethics is there. In that, this only we are discussing. How to do practice, what you should not do in practice, what you should not do in employment. All that entire code of conduct is defined by ICA. The moment you are a CA, you are bound by the ICA code of conduct. The moment you become a member, you are bound by ICA code of conduct, whether you are in practice or employment, even otherwise. Even if you are not in practice, even if you are not in employment, you are bound by ICA guidelines. There is something called other misconduct. If at all a CA is bringing disrepute to the profession, if at all a member, whether in service or in practice, if at all any of his activities are bringing disrepute to the profession, the institute will punish him. the institute will punish him under schedule number 1, even though he did not conduct any professional misconduct. Professionally, he didn't do anything wrong. Some personal issue. In that he did wrong. But since you are a CA, institute will punish you. Are you getting it? Since you are a member, institute will punish you. Recently, there is an article in the in the newspaper which says that a CA has been misbehaving in the car. Obscene act in some car, okay, in Nagpur. That fellow attached CA sticker front back and and doing all the nonsense on the road. So what they did, they would have told something, at least name, at least you can. A chartered accountant is doing so and so. Like, why chartered? What he did? What chartered accountancy profession did? What doctor did? Why you highlight doctor and CA in the media? Because they want attention. If for somebody name, if they mention name alone mention, and they were doing something illegally, something like that, nobody will see. But if they put chartered accountant word, everybody will see. At least yes or no, what he is doing. Educated, brute, all the comments are there in the below. And what ICA will do, since a chartered accountant word is used, this fellow, whatever you do, why you are putting stickers? Unnecessarily spoiling ICA name also. Across the country, it is seeing that particular thing. So institute name and fame are being affected. So institute will punish you under other misconduct. Part number 4, schedule number 1, CA Act. So that is, we will discuss that in CA final. So whether you are doing any wrong activity, not in professional capacity also, you are attracted by, you are bound by ICA punishment. You will have to pay 1 lakh penalty there, minimum. Minimum penalty is what? 1 lakh. So, by the way, so confidentiality. You have to maintain confidentiality, requires a professional accountant to respect the confidentiality of the information as a result of professional relationship. So, the confidential information may be disclosed when it is required by law or when it is permitted by law and is authorized by client. Only with the client approval you can disclose information to third parties, or if there is a requirement under law, then you have to disclose, even if client do not agree. Even if the client do not agree, because that's a requirement in the law. That's it. And CA may behave professionally. You must behave professionally. The moment you qualify CA, you should not post 100 rupees income tax return, 99 rupees only income tax return, like that. Any post and all you should not. You're doing articles. In how many of you are here articles? Especially you people should not call the clients and tell them that we will do it at lesser price the service. You should not call the clients of the firm where you're doing articles and offer them that you will do better service than that at a lesser price. That is not a professional behavior. Yes or no? If you do like that, there is a punishment in CA final. We will discuss that punishment. Okay, so there is a punishment if you grab clients of another CA by demeaning others. So everything, anything you do, some punishment, penalty, something will be there in the CA Act. So CA Act is protecting every one of our interest. Suppose if you, with your knowledge and skill, you acquired a client. If another CA suddenly comes and takes away that, you need not worry. ICA will punish him. You just complain them. That's enough. Next. So that is professional. So professional accountant has to comply with laws and regulations and avoid any conduct that might discredit the profession. Professional account shall not engage in any employment or occupation that impairs or might impair integrity, objectivity and good reputation of the profession. Demonetization time, no? 2016. CS are the one actively participated in converting from black to white. Next, there is a case on that. In CA final audit, there is an example also on that. Then, professional competence. Being competent is your moral responsibility. Being professionally competent is your moral responsibility. Suppose, how our CS know they act is, they accept the work even though they don't know how to perform it. As if doctor is agreeing to operate a patient even though he don't know how to operate. But there it is live threat. Here it's okay, little bit only. There it is live threat. You must have, you must make yourself extreme competent in whatever the works you are doing. It is your moral responsibility to serve the client qualitatively. So that is a fundamental requirement, ethical principle. So professional competence. Second one is what? Due care. You should discharge the duties with the utmost care. You must work on audits with carefulness, skillfulness. So skillfulness and carefulness is what? Professional competence and due care. You know, you will shock in November 23 exam. This one asked in CA final as 5 marks question. This question in CA final they're asking, what are fundamental principles? Enumerate. 5 marks question in CA final. And in the recent May 24 exam in CA final again, in confidentiality we have some in-depth discussion in CA final. In that one of the sub point they asked. That sub point has again 4 sub points. So that one they asked in CA final in the recent May 24 exams. So whatever you are studying in CA inter will also help in CA final. So these are the fundamental principles. Now tell me, these are all general principles, right? Principle based. Yes or no? But remember, ethical behavior cannot be enforced on members just principle based. Sometimes lawmakers have to make rules also. That's why Companies Act have disqualifications. Companies Act has given disqualifications. Why disqualifications are given? To ensure that you are independent, to ensure that you are objective, to ensure that because you are independent and because you are objective, you work honestly. Honesty is a byproduct of independence, correct? Later on, whether you are really honest or not, that's a different issue. But by default, if an unknown person is there, I generally use my mind clearly than a known person. If I audit my relative company, generally I will have some impact. Influence will be there on me. If at all I am auditing a company where there is no relationship at all, I seriously look into affairs. Genuinely, correct? If it is known company, my best friend company or my brother company or my wife's company or relative's company, I will not do audit with that kind of seriousness. I will compromise on the quality of the audit. Whatever they wish, I will give report accordingly. So independence is most important. If independence is there, generally honesty will be there. So integrity, objectivity, independence, confidentiality, professional competence and due care, professional behavior, these are all interrelated. These are all interrelated. These are all principle based ethics. But principle based alone is not sufficient. Rules are also required. But at the same time, you know, like in company audit, when we have company audit in CA inter audit, no, earlier in the old scheme, students used to ask, suppose there is a question, a person or his partner or relative having securities in the company or holding company, subsidiary company, associate company, subsidiary of the holding, sister company, he is disqualified. Like that, there is a provision. I hope you remember this. Company law, there is a syllabus right now on this. And then if at all you are exclusively a new scheme student, it is there in company law. How many of you are exclusively registered for the first time on the new scheme? So you're all first timers in May 24. You didn't give November 23 attempt, right? So that is what, okay, very less, fine. So now some students, they'll ask me, sir, can I invest in subsidiary of the associate company? He'll come and ask me, because that is not covered in the list. Can I invest in the subsidiary of the associate company? Because it is not covered in the list. Is it a violation? See, rules cannot be exhaustive. Law can never be exhaustive. Law can only be illustrative. Rules can only be illustrative but cannot be exhaustive. Understand the intention of the law. Understand the principle behind the law and accordingly decide. If at all accepting audit of a subsidiary company of an associate company of the company for which you are doing audit, if at all you are having shares in that subsidiary of the associate, this company is associate for your company where you are doing audit, and you want to buy shares in subsidiary of the associate company, if you think that affects your independence, don't buy. Company law is silent on this. They are not restricting it. But if you think it affects your independence, don't buy. Principle based approach. So ethical guidance may follow principle based approach or rules based approach. Rules based approach strictly follows, clearly establishes rules. They may lead to narrow outlook and spirit of the ethics may be overlooked while strictly adhering to rules. Rules based approach is somewhat rigid. It may not be possible to deal with every practical situation just by relying upon rules. So principle based approach is what you should primarily focus on. Principle based, is it affecting your independence? Check out. If it is so, what rule says, keep it aside, don't accept. So you should see principle based as well as rules based in order to comply with the code of ethics. So that's it. So that is what the second and third question is about. Write about independence of the auditor. Integrity and independence are essential characters. Independence means what? Judgment of a person is not subordinate to wishes and directions of another person. Your decisions are based upon your conscious knowledge. Your decisions are not influenced by others. So that is what we call it as independence. And for auditors, independence should be the most. Next, rules of professional conduct dealing with independence are framed primarily with a certain objective. The rules cannot create or ensure existence of independence. Independence is a condition of mind as well as personal character and should not be confused with superficial or visible standards of independence. What do you mean by visible standards of independence? Sir, I don't have shares in the company. I don't have any loan with the company. I don't have business relationship with the company. I am independent. Yes, you are independent in terms of appearance. But whether you are acting independently in terms of mindset, whether you are acting independently with the people by not colluding with them, we can't determine. So, the independence is two perspective. The independence has a two interlinked perspective. One is independence of mind, another one independence in appearance. Independence of mind is what? It is a state of mind that permits expression of an opinion without affected by influences that compromise decision making, allowing an individual to act with integrity, exercise objectivity and skepticism. So the CA will act independently, integrity, with honesty. If some mistake is there, he will definitely point out. So that kind of attitude is called independence of mind. Now, for the public, in case of listed companies, to get confidence on the auditor's report, they not only see independence of the mind of the auditor. First of all, independence of mind is not visible. Honesty is not visible. Integrity is not visible. Your approach is not visible. They only say, are you related to the company? If at all they find that you are related to the company, you are having some relationship with the company, either in the form of shares in the company, loan with the company, business relationship with the company, or your relatives are working in the top management in the company, public generally feels that you are not independent. Even though you really acted independently, they don't believe your reports. So independence of appearance means what? The avoidance of facts and circumstances that are so significant that a reasonable and informed third party having knowledge of all relevant information, including any safeguards applied, would reasonably conclude that a firm or a member of assurance team had been compromised. Integrity, objectivity had been compromised. Like, what does it mean? What are they saying? A reasonable and informed third party test. What is it? Reasonable and informed third party test. If a reasonable and informed third party means what? Whether a CA is independent from the company or not, who can tell? Another CA can tell. Or any CA related profession person who has this knowledge can tell. Normal layman cannot tell. First of all, he will not understand the significance of independence here. He will not understand significance of independence here. Knowledgeable and informed third party means that. Informed third party means what? The third party who has knowledge of this affair. So if from that point of view, from his point of view, if you are acting independently, then good. If at all from his point of view, your independence, objectivity, integrity are compromised, getting it? Then you are not independent. So how, you should avoid facts and circumstances that are so significant that a third party would reasonably conclude that your independence, integrity has been compromised. Like what? When they will conclude that your integrity and all compromised? When you are having ownership in the company, when you are having loans with the company, when you are having business relationship with the company. So based on these facts, if you are having ownership in the company, business relationship with the company, if this fact is known to the third party, he will think that you do not have independence. So independence in terms of appearance means we will look at actual facts and circumstance. So we should avoid facts and circumstances of engagements where third party thinks that your independence is compromised. You should avoid those kind of engagements. The terminology used is bit tough, but this is the meaning. Understood the meaning? Now you read in this context, you read later. Independence has not only exist in fact. In fact, you're independent because you don't have any relationship with the company, but should also appear in the person. Independence is not only in fact, but should also appear in person. The relationship between the auditor and client should be such that he himself satisfied about independence, and secondly, no unbiased person would be forced to a conclusion that your independence is compromised. Like third party should not assume that your independence is compromised. You should maintain that behavior with the client also. There is a concept called rotation of auditor. Yeah, rotation of auditor. Why? But actually, this fellow do not have any ownership in the company. This fellow do not have any sort of interest in the company. No loans, nothing. But still, we have to compulsorily change. Why? Familiarity threat. What is it? Familiarity threat. So, what is familiarity threat? I will discuss now. So, there are threats to independence. Like independence is the utmost important. Independence has to be protected. Now, how independence is affected in various cases? Why a professional accountant independence is affected? If at all you look for reasons, these reasons are broadly classified into 5 categories: self-interest threat, self-review threat, advocacy threat, familiarity threat, and finally intimidation threat. Intimidation threat means what? The client is either blackmailing you or bribing you. Blackmailing and bribing both comes under what? Intimidation. So the intimidation threat occurs when auditors are deterred from acting objectively with adequate degree of skepticism. With adequate degree of, like you are deterred from acting objectively, you are deterred from acting skeptically. Means you are influenced by the client. How they will influence you? Either by blackmailing you or by bribing you. Basically, this could happen because of threat of replacement, blackmailing, over disagreement with application of some accounting principle, something. You disagree with the management. When you disagree with the management, they will say, sir, next year we will not appoint you. It's a kind of blackmailing. Or the auditors are being threatened with litigations. These threats attempt to intimidate auditors to deter them from acting objectively. So that is intimidation threat. Then we have another threat called familiarity threat. Familiarity threat means what? These are self-evident and occur when auditors form relationship with the client where they end up being too sympathetic to the client's interest. Generally, where auditor is having long-standing relationship with the client. Many private companies, 30 years onwards, auditor is same. Right from its incorporation in 1990, even today, the auditor is same, the firm is same, partners alone are changing. How come such a long association? If you have such a kind of long association, how auditor will ensure quality? He will think, since I know this company very well from long ago, he will not be focusing on the audit that much in depth. He will be carelessly doing the audit. And client taking this as an advantage may do fraudulent activities. So anyhow auditor will not be seriously doing. He will be listening whatever he says because they have so much of bonding. Sir, no. So what are the examples? For example, long association between auditors and client. Close relative of the audit team working in a senior position of the company. Former partner of the firm is a director of the company. Earlier, right before in our firm, he is a partner. Now he is a director in the company. Familiarity will be there, right? Acceptance of gifts and hospitality from the client, company, directors and employees. The client is treating you super with hospitality, all that. It indirectly indicates that client has done something wrong. You should not attempt for the hospitality, all that, and you should act independently. Next, advocacy threat. What is advocacy threat? Advocacy threat occurs when auditors promote a client's opinion to a point where people may believe objectivity is compromised. You are the only one who are supporting client opinion, where people are thinking that it is illogical. Then people naturally think that auditor is just a puppet of the client. Whatever client says, auditor also will say the same. That threat is called as what? Advocacy threat. This generally comes when auditor is dealing with shares and securities of the company. You are trading in the shares and securities of the company. Naturally, when you are trading in that company shares and securities, you will positively promote the company, whether in reality it is so or not. Advocacy threat. Or auditor is becoming the client's advocate in litigation and third party disputes. Client is having some disputes. Their auditor is placing as an arbiter. You are acting as an arbiter, mediator for those litigations. You have to do audit of financial statements, independently verify whether they are true and fair or not, and you are ignoring that job and you are supporting here. Advocacy threat, we call it as. So in these situations, auditor can be perceived as backing and championing causes of client, and it may lead to believe that auditor is not acting and working objectively. The another threat is what? Self-review threat. Self-review threat arises when maker and checker both are one and same. Suppose previously I am a director in a company. Now I withdrawn from the director capacity and I started my practice, CA practice. Now the company is appointing me as an auditor. Tell me, will I have a self-review threat or not? Because until last year I am the director, I am the one who designed entire accounting systems, financial information systems, software implementations, everything. I know everything about the company, how they do everything. When I go and do the audit, obviously I naturally have a confidence that everything is right because I only designed. Nah, you will not be doing, you will not be justifying your work. That threat is called as what? Self-review threat. This occurs when during a review of any judgment or conclusion. This occurs generally when you are reviewing a judgment or conclusion reached in a previous audit or non-audit engagement. Previously you worked in that company either in audit or non-audit, something you did. Earlier you only taken the decision. Now again you are only verifying that. Then what threat comes into picture? Self-review threat. I myself reviewing my decisions. So if you review your own decisions, that threat is called as what? Self-review threat. Examples. When auditor having recently been a director or senior officer of the company, or when auditor performs services that are themselves too subject matter of audit. Suppose you are the only one who did GST filing everything. Client gave the information. Client gave you the entire GST related information. You compiled GST return and filed. Now in audit, no, you should verify GST returns. So it's a self-review threat or not? That's it. Then self-interest threat. This threat occurs when auditing firm or any partner benefiting from financial interest in the audit client. This threat occurs when auditing firm or any partner is getting some financial interest in the client. Like what do you mean by financial interest? Direct financial interest. What is meant by direct financial interest? I'm having shares in the company. That creates a self-interest threat. Means tomorrow if I find something wrong in the company as an auditor, I will not disclose it because my ownership also will affect. Loan or guarantee too are from the client. Undue dependence on the client's fee. I won't comment negatively about this client because of him only I am running my firm. Undue dependence on the client. Self-interest threat. What that is called as what? Self-interest threat. Close business relationship with the client. Potential employment with the client. Potential employment means client is tempting you that tomorrow he'll give you so and so work. That is actually intimidation also. That's a kind of bribing. As well as since you are having interest in that affects your independence. Some examples in this they can be debatable. It can be sometimes self-interest threat, it may be familiarity threat, or it may be intimidation. Any of this it can be. Contingent fees for audit engagement. Actually we are not supposed to accept audit fee on a contingent basis. We are prohibited. Auditors are prohibited. There is a clause number 10 in ethics. You are prohibited to accept fees on a contingent basis. So these are the threats to independence. Why a CA's independence, why a professional accountant independence will be compromised? Because of 5 threats: self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Now generally when threats are there, what we have to do? Suppose a client approached you, sir, we want you to be our auditor, and you found that some threat is there to the independence. What you have to do? Apply safeguard. Apply safeguards to the independence so that independence will not be affected. If you are unable to apply safeguards, don't accept that audit. Don't accept. Suppose if threat to independence arise and after you accept the audit, try to eliminate the threat or reduce it to acceptable level. Try to reduce it to acceptable level. What do you mean by acceptable level? For example, my relative is having shares in the company. My relative, if at all having shares in the company, generally what will have? Self-interest threat or familiarity threat. Something it will come. Yes or no? Self-interest or familiarity, some threat will be coming because my relative is having shares in the company. But under Companies Act, up to 1 lakh face value is permitted, right? That is a safeguard. What is it? That is a safeguard. If at all, like I should put safeguard. The moment the company approached me as an auditor, I should tell all my relatives, whoever is investing in stock markets, don't invest in this company. Okay? If at all you already invested, if it is less than 1 lakh face value, then I will tell them please stop. don't invest beyond. I should take this kind of safeguard. Suppose already my relatives are having more than 1 lakh face value. I should tell them to sell it so that the value becomes less than 1 lakh. That is what? Reducing the threat to acceptable level. Because what is accepted under Companies Act? Up to 1 lakh is accepted. No problem. So I should tell my relatives and convince them to sell the shares so that the face value becomes less than 1 lakh. If at all that is not possible, what should I do? If I am unable to implement proper safeguards to eliminate the threat to independence, what should I do? Withdraw from the engagement. Don't accept the audit. So the CA has the responsibility to remain independent by taking into account the context in which they practice. The threats to independence and safeguards available to eliminate the threats. The following are the guiding principles. For public to have confidence, it is essential that auditors should always appear to be independent of the entity they are auditing. Public will have confidence only when you appear independently. In case of audit, the key principles are integrity, objectivity, all that. So before taking any work, auditor must consider whether it involves any threat to independence. Where such a threat exists, what auditor has to do? You should either withdraw from the task or take certain precautions to eliminate the threat. Suppose if auditor is unable to implement credible and adequate safeguards, if at all you are unable to implement safeguard, he must not accept the work. Easy. Next. Write a short note on skepticism, professional skepticism. With that, it will be over. Ethics discussion will be over. What is skepticism? Skeptic. What is skepticism? Skeptical means questioning mind. Skeptic means questioning mind. See, can I start audit of any company with an assumption that the director is a fraud? No, no need to. Can I start or can I conduct audit with an assumption that books of accounts are completely fraudulent and misleading? By default, you can feel that books of accounts and management are genuine person unless contrary exists. Unless you find contrary evidence, by default you can assume they are independent. They are genuine. They are proper. Books of accounts are genuine, directors are genuine, everything is proper. But you should be alert. You should be alert to what? You should be alert to information that contradicts other information. Audit evidence that contradicts other audit evidence. Suppose you saw balance sheet, you saw P&L account, draft P&L, turnover is shown some 200 crore. You opened a sales ledger, it shows 180 crore. Immediately you should get a doubt, right? When you will get this doubt? When you're only alert. The skepticism, indirectly what are they saying? In skepticism, by highlighting the word skepticism, SA 200 says you have to be skeptical. Skepticism means be alert, don't sleep. Getting it? They are saying indirectly, don't sleep, do not sleep, be alert, be awake. Be awake when everyone else is sleeping. So, skepticism means you have to be alert. See, that is what they say. Professional skepticism refers to an attitude of questioning mind, being alert to unusual situations, and a critical assessment of audit evidence. Unusual situations, if you find something, immediately you should be alert. Unusual means what? Suppose P&L account sales value, books of account sales ledger sales value, if everything is matched, that is usual. If both are not matching, that is unusual. When something is unusual, you must immediately react. Alert. Alert to information that brings into question reliability of the documents and responses. Suppose there is a bill, some purchase is there, 2 crore is the purchase value, there is a bill, the bill is shown. On the bill, that whatever print, that is erased. There's only like a white paper is there. Very transparent letters were visible, very slightly it is visible. You felt that this is a fake document. Immediately what you should do? You should become alert. Alert means what? Only if you are skeptical, you will be alert. See, skepticism means, one more point is also there. It is also something like, I also call it as common sense. I also call it as alertness. If something is wrong, you should be alert. You need not suspect the client, but be alert for suspicious situations. What is a suspicious situation? You may get information that is contradicting from other information. You may find information that brings into question reliability of the document. The document appears fake. How come you accept it? Suppose, like, sir, some company purchased 5 crore worth of mission. Sir, where is the bill? The company showed bill. like manual, handwritten. They just gave you bill like this exactly. He went and wrote bill and brought. This fellow took a white paper, so and so company name he edited, 5 crore he put, and he 5 crore he put. Just he brought that white paper where he edited all that. He wrote all that and then showed you. Will you accept it? You skeptical means what? Alert means what? You should check whether it is genuine or not. Is it reliable or not? Yes or no? So that is what skeptical means. And you should be alert to conditions that indicate possible fraud. So when I'm going to the go down, when I'm walking in the go down of the company, or when I'm walking in the accounts department of the company, cash locker is there. That was not locked. The door was kept open and some cash is also visible. Nobody is there. CCTV camera is also not there. Is it a condition of possible fraud? You must be alert or not. What is the risk here? Nobody is there. Camera is also not there. That was also not locked properly. The door was slightly open. Anybody who notices it can steal the cash. But since cash is stolen, but that is not known to the accountant, books of accounts balance shows higher cash balance. Balance sheet shows higher cash balance. In reality, that cash is not there. Is this a risk or not? This is fraud. What is this called as? Fraud. Fraud is again two types. Fraudulent financial reporting, misappropriation of asset. Misstatements in the financial statement arises because of two reasons. One, fraud. Another one, error. Wrongly you accounted some transaction. That's an error by mistake. Intentionally you did that. That's fraud. This fraud is again two types. Fraudulent financial reporting means accounting fraud. You intentionally accounted something wrongly. That is FFR. Second, misappropriation of asset. What is misappropriation of asset? By stealing assets but not updating in the books of accounts. Books of accounts will show higher balance, whereas in reality that will not be there. Easy example I'm telling you. Actually there is a big discussion in CA final. 240, there is a standard called 240 which is not there in CA Inter right now. So in 240 we have in CA final 10 pages discussion. Lengthy discussion, 240. So auditor has to be alert about evidence that contradicts other evidences. Auditor has to be alert about information that brings into question the reliability of the document. Auditor has to be alert about situation of possible fraud. Auditor has to be alert. Is there any area where I need to perform additional procedure than required under the standard? Standard says you do this and that, over. But some areas will be there where I may have to investigate further. Getting the point? So when you are alert, you will get all this into mind. If you're not alert, carelessly you're doing audit, carelessly you're walking in the finance department, even though you saw the door open, everything, you didn't observe it. You didn't observe. Carelessly you are pretending. So that is, you are not skeptical. Skepticism means an attitude of seriousness, alertness. Next. Why skepticism is necessary throughout the audit? Skepticism is necessary throughout the audit to reduce risk of overlooking unusual circumstances, risk of overgeneralizing, risk of taking inappropriate decisions regarding nature, timing, extent of procedures, all that. So because of skepticism, you will reduce risk of taking inappropriate decision, risk of overgeneralizing can be reduced, risk of overlooking can be reduced. By default, the auditor may accept records and documents as genuine unless he has reason to believe contrary. Unless you find some circumstances where you know that it is fraudulent. Suppose you heard privately, you heard that director and accounts manager is discussing that let us manipulate all the records, everything already manipulated, everything is going on. You heard that, then you cannot accept that they are genuine. If at all you know nothing is suspicious, by default you can accept them as what? Genuine. So that is what skepticism concept says. Be alert. You need not doubt the client, but be alert. There is a possibility of wrong things can go on. There is a possibility that duplicate documents they will show. There is a possibility that you may have to do some additional works. There is a possibility of frauds. So be alert for all these possibilities. If you are alert like this, you can reduce audit risk. You can reduce what? Audit risk. Tell me why we have to comply with all the standards, why all this we need to learn? To reduce audit risk. What is audit risk? Risk of expressing inappropriate opinion when the financial statements are materially misstated. When the financials are materially misstated, you are expressing a wrong opinion, inappropriate. When financials are materially misstated, you should give negative opinion, but you are giving inappropriately positive opinion. Inappropriate opinion when the financials are materially misstated. Audit risk means risk of expressing Inappropriate opinion when the financials are materially misstated. When the financials are materially misstated, what is appropriate opinion? Negative. When financials are misstated materially, inappropriately, you give which opinion? Positive. Tell me, if financial statements are completely wrong, fraud, you said they are true and fair. Tomorrow the fraud was discovered. What public will think? Auditor colluded with management and cheated investors, everybody. Yes or no? So that is why it is called as audit risk. Suppose if the financials are completely right, they are not that wrong. Some mistakes were there, but they are not that much like to say financials are completely wrong. But I am very conservative. Whatever sample I selected, no, it is a mistake. It resulted in mistake. Out of total population, 2% mistake is there. Bad luck of the client, I got the 2% only in my sample. What generally I assume based on sample, I think every entire balance sheet P&L is completely wrong, and I gave an opinion that entire balance sheet is completely wrong. Tomorrow, let us assume fraud was discovered. Will anybody blame me? Because I already told that everything is wrong. Adverse opinion I already gave that everything is wrong. So nobody will blame me. Audit risk will be 0 if you give adverse opinion. Then immediately you may get a doubt. So then in every case we can give adverse opinion. Happily. You give who denied it. Prove the mistakes. Client is also ready. Prove the material mistakes. See, if you have to give adverse opinion, you should prove the client that this mistake is there. If you are unable to prove, you can't give adverse opinion. You can only give unqualified opinion. Understood? We auditors give unqualified opinion not because the financials are right, because we could not find material misstatements. In most of the audits, we won't discover mistakes. Why we won't discover mistakes? Point number 1, there are no mistakes probably. Point number 2, mistakes were there, they were concealed. Because of these reasons, which we give which opinion? Unqualified opinion. You want to give adverse opinion, you give client is ready. Show him the proof that this is materially misstated. Show him the proofs that what are all misstated materially, then he will be silent. If you are unable to show, no, I want to reduce my audit risk to 0, that's why I want to give adverse opinion, why? He will agree. Show mistakes and then give adverse opinion, correct? So, and further, the auditor cannot be expected to disregard the auditor cannot be expected to disregard past experience of the honesty and integrity of the management and top management. Nevertheless, a belief that management and top management have integrity does not relieve the auditor to maintain skepticism. Don't ignore past history, management's honesty, everything you know, right? Don't ignore that. Consider that. And accordingly, only be skeptical. But be skeptical. Even though they are honest, even though they are with integrity, don't think everything goes well. Top management may be very with good honesty, all that. Production manager is, with a bad attitude. He may manipulate production records. He may manipulate scrap sales and all. So be alert. Skepticism means that. Are you clear? Even if this point is there in the standard or not, we will be skeptical when we are doing audit. Don't we be skeptical when we do audits? We generally have this questioning mind. We will try to see, is there something wrong? Is there something wrong? Is there any, suspicious issues going on? All that. Clear? With this, ethics is also completed. The dry topic is completed until now. NOS audit, nature, objective and scope of audit, ethics and terms of engagement. They are not that highly interesting, but decent. So that we completed. Now we will start audit report. So 2 minutes. Okay, we'll begin audit report. So let's begin the next chapter, that is auditor's report, audit report. In this chapter, what is the learning objective? We should learn how to prepare audit report. That is a learning objective. The reason why we are studying this chapter is at the end of this chapter, you must understand how to prepare audit report. So we have various standards in this chapter. Like we are going to discuss 700, 701, 705, 706, 299, 600 basics we have, 710 we have, 570 which is there in completion and review chapter. That also we are discussing along with this chapter. Then we are going to discuss about something called CARO, reporting requirements, all that. This chapter will have a weightage of minimum 10 to 15 marks. This is the minimum weightage of this chapter, minimum weightage 10 to 15 marks. Previous chapter we completed terms and ethics. In that quality control part we kept pending. Including quality control and ethics and terms of engagement put together, the weightage is 10 to 15 marks again. That chapter also has a weightage of 10 to 15. Nature, objective and scope of audit also has 10 marks weightage. Minimum 5 for sure. Up to 10, sometimes in rare cases 15 also they can ask. But 5 is pakka. First chapter, nature, objective and scope. Second chapter, terms of engagement, 5 marks pakka. Ethics, 5 marks pakka, 10. Quality control is there a topic, from that 5 marks pakka. So 15 marks is the minimum weightage of chapter number 2. Now this is chapter number 3, audit report, 10 to 15. Sometimes it go up to 20 to 25 marks also, sometimes. Sometimes the weightage will go up to 20 to 25 also. Fine. So what is the objective here? Very simple. We are learning how to draft an audit report. Once we become an auditor, once we conducted the audit and completed the audit, how to draft the audit report. Now we understood what is an audit, what is the nature of auditing, what limitations we are suffering from, what is the objective of the audit, and what are various types of engagements that we can perform, and why independence is important, what are the ethical compliances that we must comply with, and how to establish terms of engagement. All that we understood. Now the next thing in audit is what? How to do the audit. How to do the audit we'll discuss later. Once after we completed doing the audit, what we should do ultimately? We should express our assurance. We should give our assurance report. In audit, that report is called as what? Audit report. In audit report, what we will give? Opinion. What we will express? Opinion. But today, audit report is not just about opinion. You see, audit report format is there. In the same book at the below I have given contents of audit report. What is it? Contents or elements of audit report which is conducted as per standards on auditing. How to give audit report? What are the contents of audit report? This report shall be in writing. The report must have title. The title must contain the name. Independent Auditor's Report. The title must contain a name called Independent Auditor's Report. These are various companies' auditors' report. Tata Motors I will take for a better example. Yeah. This is Tata Motors Auditors Report. You see there is a title right clearly here. Independent Auditors Report. There is a title. The second thing in the audit report is what? Addressee. You should mention addressee. Generally addressee whom we will mention in case of general purpose financial statements to the members. In case of special purpose financials to the appointing party. Whoever appointed you, that party. Then the first thing in the audit report after addressee and title is the first thing that we give in audit report is what? Opinion. You see Tata Motors, they gave opinion. Now, how many types of opinions we have? You see the introduction to this chapter. I think in 705 I have given. Yeah, in 705 I have given. We have to give opinion, right, ultimately. As I already told in the previous sessions, opinions are two types. Either they are positive opinion or they are negative opinion. But, just a minute. Just a minute. So, the opinions are broadly two types. So, one is positive opinion, another one negative opinion. Positive opinion is called as unmodified opinion. Negative opinion is called as modified opinion. That is what until now I am telling. But I just, for the sake of convenience, though I use the word positive opinion, negative opinion, the actual words are what? There are two types of opinions. One is unmodified opinion, another one is modified opinion. When I will give unmodified opinion, suppose I was appointed as an auditor of a company where they prepared books of accounts and financial statements completely done. And I verified financial statements and books of accounts, everything. And financial statements, after I verified, I concluded that they are completely true and fair. They are completely true and fair. If they are completely true and fair, tell me, do they require any modification? No. Books of accounts and financial statements are completely true and fair. They don't require any modification. I will give which opinion? Unmodified opinion. Simple. Suppose I found some mistakes. In the financial statements, balance sheet, P&L, I found some material mistakes. I reported to the company. Sir, there are mistakes like this. Can you please rectify? They said, we will not modify. The company directors replied, no. Balance sheet P&L is prepared, finally signed by the directors also. Now all the directors went for abroad and all. They went for some works and all. They can't come back. If I modify again, they have to come and sign it. It is not possible to modify the financial statements. Let the mistakes be like that. Okay, you don't modify the financials so that they are free from mistakes. Like, now tell me, when I'm asking them to modify, what does it mean? Financial statements are free from material misstatements or not free from material misstatements? Since they are not free from material misstatements, what I will do? I will modify my report. First you modify. I'm giving you chance. You modify the financial statements so that they are free from MMS. You're not modifying. Okay, I will modify the report. The point. If you don't modify to ensure that the financial statements are free from MMS, I will modify the report because the financial statements are not free from MMS. So modified opinion indicates financial statements requires modifications. That is what modified opinion indicates. Unmodified opinion is called as unqualified opinion, which is also called as clean opinion, What is clean opinion? They're completely true and fair. Not even a single mark. That's called clean chit, clean opinion. Modified opinion is again 3 types. Modified opinion are again subclassified into 3 types. Qualified opinion, adverse opinion, disclaimer of opinion. Modified opinion is subclassified into again 3 types: qualified, adverse and disclaimer. Now some of you might have got the doubt, why unqualified opinion is a positive opinion? Why qualified opinion is a negative opinion? Generally qualified means what? It's a positive terminology, right? Why it is given under negative connotation? Generally medical terminology, legal terminology, qualified means what? I have a qualification there. Means what? I have a reservation there. I have an objection there. Qualified opinion means conditional positive opinion. What is it? Conditional positive opinion. It's a positive opinion only, but with exceptions. So qualified opinion is a conditional positive opinion. It's a positive opinion, but it contains some exception. Unqualified opinion means it's a positive opinion without any reservations, without any qualifications, without any exceptions. That is called unqualified. Qualified means some exception is. That is what the meaning of qualified opinion. Fine. So under what circumstance I'll give unqualified opinion, when I will give qualified opinion, when I will give adverse opinion, when I will give disclaimer of opinion. That is what we are going to learn in this chapter. Not just opinion. You see, in audit report we have various parts. Various parts were there. We need to discuss, we need to discuss opinion, then how to draft this opinion section, what are the definitions of the opinion, what is basis for opinion, and we have so many other material uncertainty related to going concern, key audit matter, emphasis, other matter paragraph. So many were there like this. So we will be discussing all of this in the auditor's report chapter. So opinion discussion alone, opinion discussion alone takes some 20 minutes to half an hour in revision. 20 minutes it will take minimum. So fine, let's discuss that. When auditor will give unqualified opinion, like as I already told, it's an unmodified opinion. When auditor concluded, based on sufficient appropriate evidence, that financial statements are free from material misstatements and are prepared in accordance with applicable financial reporting framework, which means there is no difference between what is reported and what is applicable as per framework. When there is no difference between what is reported and what he has to report as per framework, then the financials are prepared as per the framework. When they are prepared as per the framework, there are no material misstatements. When there are no material misstatements, I will give positive opinion, which is called as unqualified opinion. Like in a simple term, if you have to look at the balance sheet, suppose fixed asset 100 crore, very simple example I will take. Current assets 100 crore, equity and liabilities 100 crores, current liability 100 crore, and I verified, I found that fixed assets are completely correctly valued, correctly done. I have seen the asset register. I have physically went and seen some assets randomly. Everything is pakka. Documents are pakka. This value is correctly arrived. Depreciation calculation is perfect. Current assets, inventory, trade receivables, everything. External confirmations I got. Everything is perfect. Current liabilities perfectly accounted. Equity perfectly accounted. Profit and loss account is perfectly accounted. No mistakes I found. Which opinion I'll give? Unqualified opinion. They are all crores. I'll give which opinion? Unqualified opinion. Suppose in this current assets, there is an item called inventory. The inventory value is 30 crore. Inventory value is 30 crore. This inventory net realizable value is 29 crore. The net realizable value is what? 29 crore. But company showed 30 crore only. NRV they did not consider. Now, is there a misstatement? How much is the misstatement? Is it material to this company? Yes, 0.5% of the total assets. It's 0.5% of the total assets, and it is 0.5% of the turnover also. Let us assume company turnover is 200 crore. Anything generally, anything which is 0.5% of the turnover, we consider material. We generally consider 0.5% of the turnover as material. Now, 1 crore worth of mistake is there, or let us assume 2 crore, 1%, for better understanding. 2 crore worth of misstatement is there. Inventory NRV is 28 crore, but company showed inventory at what? 30 crore. 2 crore worth of mistake is there. Now, when the misstatement is 2 crore, which is material, can I, whereas remaining fixed assets, remaining current assets, everything is right. Remaining current liabilities and equity, everything is right. Just that inventory valuation 2 crore went wrong. To that extent, profit and loss account profit also overstated. To that extent, reserves are also overstated. Just combined effect. Except this 2 crore, rest everything is accounted properly, everything is disclosed properly, everything is correct. Which opinion I should give? Can I say this entirely is wrong? No, they are right entirely, except that 2 crore. So that is called qualified opinion. Suppose same example you take, fixed assets 100 crore, current assets 100 crore. In this 100 crore, 30 crore is inventory. 30 crore is what? Inventory. In this inventory, 2 crore worth of inventory is with the third party. 2 crore worth of inventory is with the third party. I want to get confirmation from the third party. I want to get a confirmation from third party whether this 2 crore worth of inventory is there with him or not. Company is not allowing me. When I ask the reasons, they said, sir, with the third party right now issue is going on. Please don't disturb them. Already some court case is going on between us. So even the mediators, lawyers also told not to interact with the third party for a certain number of days until the court dispute resolves. But you are showing in the balance sheet that you have to receive from the third party 2 crore worth of goods. You are saying this 2 crore worth of good is lying with the third party for some work, for some job work you sent. How do I know whether this 2 crore is really with him or not? Sir, no sir, this is the problem. Now tell me, is this a legal limitation or not? I am unable to get evidence here, 2 crore. Can I say this 2 crore is really lying with the third party? Can I say no? Or can I say this is completely fraud? I am unable to decide. Now tell me, since 2 crore worth of information, I don't have sufficient, since 2 crore worth of item, I'm not having sufficient information, can I say, sorry, I can't give opinion on the financials? Rest of the items you verified, na? Rest of the items you verified. I agree, 2 crore is material. But remaining items you verified. No, even though this 2 crore is material, remaining items you verified. No. Give opinion on that, sir. Okay, I will give. Qualified opinion I'll give here also. Which opinion I'll give? Qualified opinion. Except for this 2 crore, rest of the financial statements are true and fail. What about this 2 crore? I don't know. We did not get evidence. Whereas in previous case, 2 crore worth of material misstatement is there. There is a proof. I have a proof. NRV workings is there. 28 crore. Your company valued at 30. I have a proof also. There is a mistake. It is proved. But company is not rectifying. So I qualified saying 2 crore is wrong. Whereas here, I don't know whether 2 crore is right or 2 crore is wrong. I don't know. Then also I will give which opinion? Qualified opinion. Here exception is what? I am not saying 2 crore is wrong. I am saying 2 crore I don't know. I did not get evidence. except that rest of the financials are true and fair, except for an amount of 2 crore worth of inventory lying with third party, in respect of which we are unable to obtain sufficient and appropriate evidence. That itself is enough. That exception, you indirectly mentioned that 2 crore worth of inventory is with third party, we did not get any evidence, except that remaining financial statements are true and fair. So indirectly, what are we telling to the people? 2 crore worth of inventory, we also don't know what exactly happened. Directors will explain them later on. Just true. What if here it is not 2 crore worth of mistake, but it is 15 crore worth of misstatement. NRV is how much? 15 crore. Cost is how much? 30 crore. But company showed how much? 30. Whereas NRV is 15 only. Now tell me, 15 crore worth of mistake is there. You know what is actual company profit? 1 crore only. Right now, what is the profit of the company as per P&L? 1 crore. If at all they value closing stock at NRV, it is not profit. It is going to be 14 crore loss. If at all they value this inventory at NRV, closing stock will be reduced from 30 crore to 15 crore. Which means P&L account credit total will reduce by 15 crore. Profit 1 crore means automatically 1 minus 15. 14 loss it will be showing. Complete position and performance of the company will alter altogether. Now can I say P&L is true and fair except this 15 crore? You cannot say the bike is very good except the engine. Predominantly it's pervasive, yes or no? This is actually what? Pervasive. What should I do? Adverse opinion. I will say that financial statements are completely not true and fair. I will say that financial statements are not true and fair. Because material mistake, not only material, significantly impacting the financial statements as a whole. Pervasive misstatement. Correct? Suppose, let's assume here it is 20 crore. 20 crore worth of inventory he is saying lying with the third party. And he is asking me not to get a confirmation from the third party, and I can't even go and visit. 20 crore, 20% of the total assets of the company, 20 or 10% of the turnover of the company. This much worth of inventory is lying with the third party. Okay, it's okay, no problem. But I want to go and verify. Company is not letting me. Now tell me, can I give opinion on this financials? Can I give opinion on this financials? I want to give. Everything is true and fair except this 20 crore. Suppose no, I'm a mechanic and somebody called me to verify bike condition or car condition. Except engine, you verify everything and tell me what is the condition of the bike or car. How can I? Yes or no? Array, a material item this is, not just material, it is a pervasive. If at all this goes wrong, entire balance sheet picture will be wrong. Entire P&L will go wrong. Shareholder decision will become completely different. Such a big item, you're not giving me access, you're not giving me information. How can I give opinion? I will not give opinion if you don't give me information on this. Tell me, if at all client is not giving me information about 20 crore worth of item in this case, will I give opinion? Or can I say everything is right or everything is wrong? Like that, can I come to any conclusion? I cannot. If I am unable to conclude whether to give positive opinion or negative opinion because I don't have evidence for a material and pervasive item, which opinion I'll give? I will not give opinion, and that not giving opinion is called as what? Disclaimer of opinion. Disclaimer of opinion means what? Not giving opinion. Denial of opinion. Understood? When disclaimer of opinion comes, when there is a material misstatement in the financials or non-availability of evidence. Exactly. You will give disclaimer of opinion not when you found a material mistake. Disclaimer of opinion will be given generally for non-availability of evidence. That too, evidence is material and also pervasive. Qualified opinion also will be given when evidence is not available. Not available evidence. That time also will give qualified opinion. But their evidence is material but not. We give qualified opinion in another circumstance. Mistake is there. I have a proof and the mistake is material but not. Suppose if the mistake is pervasive also. Exactly. Over. Confident. So the material opinion discussion is mostly over. We have to discuss the definitions part. We have to discuss the definitions part. See, they have given a diagram here. Suppose you got evidence. Suppose you obtained sufficient and appropriate evidence. Is material misstatement existing? No. You got evidence that there are no mistakes. Automatically, will pervasive concept apply? Not. So directly I'll give which opinion? Unqualified opinion. Have you got the evidence? Yes, I have got the evidence. Do you found any material misstatement? Yes. Do you have a proof for that? Yes, I have a proof for that. There is a material mistake. Is it pervasive? No. Then which opinion I'll give? Qualified. Suppose I have found material mistakes and it is also pervasive, adverse opinion. Suppose now you see here the questions are different. Here the questions are different. Here the questions are different. Observed? There are two scenarios. One, I'll highlight with some other color. This is one question. This is another situation. Getting it? This is a situation of evidence is obtained. This is a situation where evidence is not obtained. When evidence is not obtained, can I talk about misstatement? Because I don't know whether it is right or wrong. How can I talk about misstatement if I don't have evidence? If evidence is not there, I can only talk about its materiality. Correct? I did not get evidence. What you can think of next thing? Is it big item or small item? If it is big, if the answer is yes, but the effect is not pervasive, which opinion I'll give? Qualified. Except that big item, rest of the financial statements are true and fair, I will tell. Suppose if it is pervasive, means ignoring this I can't give opinion. Keeping this aside, I cannot give a qualified opinion. Qualified opinion will not be enough to communicate gravity of the situation. If I keep this aside and want to give qualified opinion, that is not sufficient. That is not that kind of just material. It is pervasive. That time what I will give? Disclaimer of opinion. Now tell me, when I have not obtained evidence, or when I have obtained evidence and found material misstatements, am I talking about individual items or collection of all the items? Aggregate picture I should see. What I should see? Aggregate picture I should see. For example, suppose inventory, debtors, 2 crore mistake is there. 20 crore worth of inventory is with the third party. In the same 200 crore turnover company, 2 crore worth of debtors materially misstated. 20 crore worth of evidence I don't have. Now tell me, 2 crore worth of mistake I found, 20 crore worth of evidence I am not getting. Which opinion I should give? As a whole check. Major item you are not getting evidence. Major item you are not getting evidence. Pervasively you are not getting evidence. Forget about this mistake. Give disclaimer of opinion. Which opinion? Disclaimer of opinion. Getting it? Total effect we should see. Understood? That's it. These are various types of opinions. Now, in the next session, what we will be understanding is how to draft these opinions. What are the definitions of these opinions? Another 15-20 minutes, 15 minutes hardly it will be over. Then immediately we'll be discussing basis for opinion section. Confident? So, in audit report, now you see Tata Motors, they just gave a side heading called opinion. You know what opinion they gave? Unqualified opinion. If at all in the audit report, the side heading is simply opinion, that's unqualified opinion. Suppose if you are giving qualified opinion, you must use the word qualified opinion. If it is adverse opinion, you must clearly put the side heading called adverse opinion or disclaimer of opinion. Now, whatever opinion you gave, for that some basis will be there. Na? What is the basis for opinion is what the next section in the audit report. What is the basis for the opinion? Suppose if you give qualified opinion, basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. When you are modifying the opinion, what are the points you should consider? All that we will be discussing in the next session. With this opinion discussion is mostly done. Only opinion discussion. Drafting part we should see. Definition part we should see. If that is also completed, opinion discussion is completed, and then we will be moving to basis for opinion. Once that is also completed, then we'll be moving to emphasis of matter paragraph, other matter paragraph, key audit matter, material uncertainty related to going concern. Once that is completed, then we'll be discussing CARO. With that, audit report will be completed. Okay? That's it. Okay, we'll meet in the next session. So let's begin the discussion on the continuation of audit report chapter. So we have discussed about various opinions. Like the opinions are broadly two categories: unmodified opinion and modified opinion. And we understood what is unmodified, modified opinion briefly. And we also understood when unmodified opinion, or of various categories like qualified, adverse and disclaimer, and when we will give that opinion, that also we understood. So if you observe, no, we will give qualified opinion in two circumstances, whereas disclaimer of opinion will be arising only in one circumstance, adverse opinion will arise only in one circumstance, whereas qualified opinion comes in two circumstances. What are the two circumstances? One, you have got the evidence and you found that there is a material misstatement, and the misstatement is material but not pervasive. Another case where we will give qualified opinion is you are unable to obtain evidence, you are unable to obtain sufficient appropriate evidence, and the impact of that evidence that you are not able to obtain, no, that impact is going to be material but not pervasive. Suppose if the impact of the evidence that for which you are not getting, no, impact of the information that you are not getting, if it is material and also pervasive, then we give disclaimer of opinion. Suppose if the misstatement is material and pervasive, then we give adverse opinion. So this is what we understood. So now if you look at the broadly the definitions, if you briefly look at the definitions, so qualified opinion, the auditor shall express qualified opinion when auditor obtained sufficient appropriate evidence, concluded that misstatements are material but not pervasive. Suppose if it is misstatements are both material and pervasive, adverse opinion. Now you see second part of the qualified opinion. When in another circumstance I will give qualified opinion, the auditor is unable to obtain sufficient appropriate evidence on which to base opinion, but auditor concluded that possible effect of undetected misstatements, if any, could be material but not pervasive. You see, they are using the word possible effect of undetected misstatements. Possible effect of undetected means what? We have not got the evidence. We didn't get the evidence. Without getting evidence, how do I know whether there is a real misstatement or not? But what if there is a mistake? What if the item for which I am not getting evidence, what if 2 crore worth of inventory is not with a third party? What if it is a fraud? Possibility we talk. When evidence is not available, we just think of possible effect of undetected misstatement. That is what we actually think of. So what is a possible effect of undetected misstatement? What is the possible effect if it is just material but not pervasive? When evidence is not available, we think of the impact. We think of the impact of mistake if it is there. Are you clear? Suppose if the impact is going to be possible effect of undetected misstatements, if any, could be going to be material and pervasive, we give which opinion? Disclaimer of opinion. You see here there is a matter. The auditor shall disclaim in extremely rare circumstances involving multiple uncertainties, and auditor concluded that notwithstanding having obtained evidence, like sometimes you may not conclude disclaimer of opinion at the beginning of the audit. You might have conducted some 20 days, 30 days audit, you gathered so many evidences already for so many items, but suddenly one big item is there which is pervasive, huge item, for that evidence is not available, and you concluded, excluding that you can't give opinion, like qualified opinion you can't give there. You decided without this evidence, I cannot frame an opinion, you understood. Now tell me, whatever evidences you gathered all these days for remaining items, will you consider that? Ignore it. Notwithstanding the fact that evidence is available for other items. When the auditor concluded that for pervasive item you are not getting evidence, you may end up giving which opinion? Disclaimer of opinion. Now what is pervasive? Like we have seen, material means okay, we can understand. What is pervasive? Pervasive means very significant. In fact, I can say pervasive means substantial. What is it? Substantial is best word to describe pervasiveness. Material means it's big amount, significant. Substantial is much more severe. When do we conclude the financial statements are pervasively misstated? When substantial number of items are misstated. Sometimes there may not be number of items, there may be only single item, but that single item will be substantial portion. That single item will be substantial portion. For example, what is pervasive? It's a term. Pervasive effect is a term used in the context of misstatement to describe effect on the financials of or possible effect of the undetected misstatement. In case of inability to obtain evidence, possible effect we talk. In case evidence is obtained, mistake is there, we talk about the actual effect. Pervasive effect on the financials are those in auditor's judgment. Pervasive effect is something what? They are not confined to specific element. They are not confined to a specific account. They are not confined to a specific item. They are not confined to. What does it mean? They are not limited to a specific item. What does it mean? In the balance sheet and P&L, so many items are affected, not some one or two items. It is not some specific item. Many are affected. But if so confined, sometimes, it may be only a specific item. It may be only a specific account. It may be a specific element. Some specific element only affected. But that element represent a substantial portion of financial statements. Pervasive means what? Generally, pervasive effects are those, in auditor's professional judgment, they are not limited to specific item. Means they are affecting multiple items, or they may be limited to specific item. If so confined to a specific item, that specific item could represent a substantial portion. For example, the company has made an investment in joint venture, and that investment value in the total assets is more than 50%. That investment value, you are unable to get information behind it. You are not getting data behind that investment. You got evidence for fixed assets, you got evidence for current assets, you got for remaining non-current assets, all that. For one item only you didn't get. But that one item is what? 50%, 70%, 80% of the entire total assets of the company. Single item only. Still, it may become pervasive if that single element is substantial item. And pervasive can also come. The concept of pervasive will also come into picture if at all they are related to disclosures that are fundamental to users. One of the fundamental disclosure is what? Going concern. Suppose if the company made going concern related misleading information. Suppose if going concern related information company is not giving correctly, they are not giving properly the picture of going concern correct manner, we call that also as what? Pervasive. Now, so this is what pervasive means. Now tell me, ultimately, which type of opinion is appropriate? Like we know, suppose if we are unable to get evidence, we have to modify the opinion. If at all we find material misstatement, we have to modify the opinion. We know that. Now, which type of modified opinion? Because within the modified opinion, qualified is there, adverse is there, disclaimer is there. Which type of modified opinion is appropriate? Depends on what? It depends upon nature of the matter giving rise to modification. Whatever we understood, that we are explaining it as an answer. Which type of modified opinion? How do you know? How do you decide whether to give a qualified or adverse or disclaimer? I know you are not going to give unmodified opinion. You are going to give modified opinion. How do you decide which type of modified opinion is appropriate? It depends upon nature of the matter that gives rise to modification. Why I want to modify? First of all, is it because you found a material misstatement? Or is it because you are unable to get evidence for a material item? What is the reason? Is it because of non-availability of evidence? Or is it because you found a material misstatement? What is the reason? That is what? Whether the financial statements are materially misstated or you are unable to obtain sufficient appropriate evidence. What is the reason? So which of these reason? What is the nature? Not just that. Suppose, case number A. This is the reason I want to give modified opinion. What is the case number A? Financial statements are materially misstated. Okay, you decided to modify the opinion because of this fact. Which modified opinion? Qualified adverse? Depends upon judgment about pervasiveness of the effect. A judgment about pervasiveness of the effect. If it is not pervasive, I will give qualified opinion. If it is pervasive, I will give adverse opinion. Suppose the nature of the matter is inability to obtain sufficient appropriate evidence. The nature of the matter because of which I want to give modified opinion is I am not getting evidence. Then what is judgment about pervasiveness of possible effect? What is your judgment about pervasiveness of the possible effect on the financials? That is the second point you should check. Suppose if it is not pervasive, I am not getting evidence for material item, but it is not pervasive. Which opinion I will give? Qualified. If it is pervasive also, what I will do? I am not getting evidence for material item, moreover it's a pervasive item also. Which opinion I will give? I will not give opinion. I will straight away disclaim the opinion. That's it. So this itself can be asked as a question in exam, 3 marks question. Which type of modified opinion is appropriate? What are the, discuss about that, discuss about the factors that assist the auditor in determining the type of modified opinion. They will give you a question like this. What type of modified opinion is appropriate? It depends on what. So this is how they can ask. That is what below I have given it in the form of a table. So now, like how these opinion wordings and all will come. Like just now I showed you definitions. Yes or no? Unmodified opinion, modified opinion, qualified, adverse, disclaimer. We saw the definitions. We understood which type of opinion is appropriate. All that we understood. Now let's look at how the wordings will be looking like. So this is one of the illustration in the audit report. This is original 700 standard. Inside that, I'm showing you the illustration. You just observe it and then leave it. No need to read it. It is there in the CA Inter in your material. It says CA Inter audit material is an ICA material. Inside that, audit report chapter is there. Inside that, it is there. Inside audit report chapter in the ICA study material, they have given illustration. Illustrative formats of audit reports, nothing but illustrative formats of audit report. Suppose how an auditor's report on financials of listed company which are prepared using fair presentation framework. So how this audit report looks like? We know there must be title. What is the title? Independent auditor's report. Addressee to the members of the company. First, you see here they are giving this word, report on audit of standalone financial statements. What does it mean? Suppose the company that you are auditing, if at all that company has a subsidiary company, Companies Act, subsidiary company definition includes associate company also. Joint venture and associate company both are covered within the definition of subsidiary company under Companies Act. But the accounting treatment is different. How to consolidate a subsidiary is different from consolidation of associate. Subsidiary we consolidate by using line by line consolidation method. Associate we show it as an investment. Joint venture again proportionately we will consolidate, correct? Is this the consolidation method? Yeah. So now when I'm auditing a company which has a subsidiary company, naturally that company will be preparing two sets of the financial statements. One, that company's own separate financials which are called as standalone financials. Which are called as what? Standalone financials. And the group consolidated financials. That company plus subsidiaries put together, they will combine and then prepare. That is called as what? Consolidated financials. For example, Reliance Industries Limited has prepared separate financial statements which are called as what? Standalone. Across the world it is called as separate financial statements. Or in India we are calling it as standalone financial statements. Reliance also prepares what? Consolidated financials. This includes what? Standalone financials of Reliance plus subsidiary companies plus associate companies plus joint ventures, all put together we will consolidate the group and then show. That is consolidated financials. Reliance consolidated financials includes, first of all, Reliance own financials plus subsidiary companies. 290 subsidiary companies they consolidated. Approximately 140 associate companies they consolidated. 30 joint ventures they consolidated. Close to approximately 400 companies. Balance sheets and P&Ls were consolidated and presented as a single financial statement, consolidated financial statements of the Reliance. Now, when the company is preparing two sets of financials, which means consolidated financials and standalone, we have to give audit report on what? Both. We should give audit report on both standalone financials, consolidated. 129 subsection 3, which talks about consolidated financial statements related requirement. That section clearly says whatever rules and regulations that are applicable for standalone financial statements are equally applicable for consolidated financials, which means if standalone financials are audited, consolidated shall also be audited. If on standalone financials opinion is given, on consolidated also auditor should give opinion. Clear? Now, when we are giving audit report on two financials, two audit reports we will be giving. One is on standalone, another one is on consolidated. So when you are giving two audit reports, you should separately highlight this audit report deals with which financials. You should highlight, right? That's why they are highlighting. Now, directly, what is the first thing that in the audit report they are discussing? Opinion. When the side heading is very simple, opinion. What opinion is it? It is unqualified opinion. You see what they are saying? We have audited standalone financials of ABC company, which comprise balance sheet, P&L, statement of cash flow, notes, everything, all that. So introduction they give. What we have audited, what we did. We have audited so-and-so financials of the so-and-so company comprising so-and-so items. Okay, what is your opinion? In our opinion, to the best of our information, according to the explanation given to us, the aforesaid standalone financials give information required by the Act in the manner so required and give true and fair view in conformity with the gap. Did they use any exception? Did they use any exceptions, exclusions, subject to kind of any? Nothing. Straight away clean opinion. Yes or no? In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are giving a true and a fair view. Clearly they gave, correct? Now you see in this one. Now let us see the illustration on qualified opinion. Let us see the illustration on qualified opinion. Suppose if I give qualified opinion, how the wordings will modify. How the wordings gets modified if we give qualified opinion. Suppose you are giving a qualified opinion illustration due to material misstatement in financial statements. Like what is the misstatement? Here they gave that hint also they gave. Here itself they might have inventories are misstated and the misstatement is deemed to be material but not pervasive. So which opinion is appropriate? Qualified opinion is appropriate, correct? So how auditor is giving qualified opinion? You see the side heading they modified accordingly. Because they are giving qualified opinion, they are using the word side heading qualified opinion. Means as a reader, I need not even actually read the paragraph to understand that it is a qualified opinion. By looking at the side heading, I can understand auditor qualified something. Yes or no? You see here, in our opinion, to the best of our information, according to the explanation given to us, except for the effect of the matter described in basis for qualified opinion section of our report. In audit report, we have so many elements, right? Opinion, basis for opinion, key audit matter. These are all called as elements of audit report. These are also called as paras in the audit report. These are also called as sections in the audit report. These are also referred to as what? Sections in the audit report. Anyway, they can refer it to. So these elements can be referred in any manner. So what are they saying? Once again, the aforesaid financial statements give information required by the act in the manner so required and give true and fair view. Now, once you read what is there only in the green letter, like whatever I have highlighted in the green letter, only that you read. In our opinion, to the best of our information, according to the explanation given to us, except for the effect of the only green. In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements are prepared. I mean, the statements give information in the manner so required and give a true and fair view. Is it a positive opinion or not? But this is not a clean opinion. They gave in between, they used an exception. What exception they used? Except for the effect of the matter. There is a matter except for its effect. What is that matter? Described in basis for qualified opinion section of our report. In our report only, there is another section. What section? Basis for qualified opinion section. Inside that, there is a matter except the effect of that matter, the aforesaid financials are true and fair. Except that matter, the aforesaid financials are true and fair. Are you clear? This is what qualified opinion. Now, can they use, instead of using the word except, can they use the word subject to like that, some other alternative? No, that is not permitted. The standard, whatever the standard says, how to modify the opinion, whatever the standard says, exactly in the same wordings you have to modify. Clear? Now, suppose how a disclaimer of, how adverse opinion looks like. How adverse opinion looks like. This is another example, adverse opinion. Why are they adverse? Why are they giving adverse opinion? The consolidated financials, not this. You see, here they have given. The consolidated financial statements are materially misstated due to non-consolidation of subsidiary. Non-consolidation of subsidiary means what? It's a deviation from applicable financial reporting framework, right? As per framework, as per India's accounting standard or even as per Companies Act, every subsidiary has to be consolidated. And if you do not consolidate, it's a violation of applicable framework, right? You have an evidence that it is not consolidated, right? Is it a misleading picture of the consolidated position or not? So it's a material misstatement. The material misstatement is deemed to be pervasive to the consolidated. So for the consolidated financials, this mistake is deemed to be pervasive. So which opinion we should give? Adverse opinion we should give. And the effect of the misstatements on the consolidation has not been determined. That I will discuss later. So now how are they giving? See side heading, adverse opinion. Now you see here, in our opinion, to the best of our information and according to the explanation given to us, the accompanying consolidated financials do not give true and fair view in conformity with the gap that is accepted in India. The aforesaid financials are not giving, they do not give true and fair. We straight away said they do not give true and fair. Why? Because of significance of matter discussed in basis for adverse opinion section of our report. We have in this report there is another section, basis for adverse opinion. In that section there is a matter which is discussed. Because of the significance of that matter on the financials. Which financials in this example? Consolidated financials. Because of significance of the matter on the consolidated financials, the aforesaid financials are not true and fair. So what they discussed here, we will discuss later. Understood? Now let us see, if at all they gave a disclaimer of opinion, how it will be. Illustration 4. Illustration 4. Suppose here auditor is giving what opinion? Disclaimer. Due to inability to obtain sufficient appropriate evidence about a single element. Why we will give disclaimer about a single element? If it is single element, why we will give disclaimer? We won't give, right? That could be substantial portion. That could be substantial. Pervasive means what? In auditor's judgment, they are not confined to specific element, specific account, specific item. If so confined, that could represent a substantial portion. Now you see here, the auditor was not able to obtain sufficient appropriate evidence about single element of consolidated, single element only. That is, he is unable to obtain evidence about financial information of a joint venture which represents 90% of the net assets. Oh my God, 90% of the asset value you did not get evidence. Though it is single item, but representing substantial portion. For a substantial portion you did not get evidence. For a substantial portion you don't know what it is. Can you give opinion on the financials ignoring substantial portion? You can't. As a whole on the financials you can't. Remember, on financial statements we have to give opinion as a whole. We will not give opinion separately on balance sheet. We will not give opinion separately on P&L, separately on cash flow. No. We will give opinion as a whole. Financial statements. Are you getting it? So now you look at how the wordings are. Disclaimer of opinion. You see the first line itself they modified. We were engaged to audit. Generally you see, if it is adverse opinion, qualified opinion, unqualified opinion, we straight away start the sentence with we have audited. We start the sentence with what? We have audited. Here we are mentioning what? We were engaged to audit. Why? Because we didn't audit here. Predominant item we didn't audit. Why we didn't audit? Because we didn't get evidence. When I did not get evidence for predominant item, that is the reason why I want to give disclaimer of opinion. How can I claim I have audited? Major portion when I have not audited, how can I claim that I have audited? So we were engaged to audit. Now here you see, we do not express an opinion on consolidated financial statements of the group. Straight away we started the sentence with what? We do not express opinion on the consolidated financial statements of the group. Indirectly we don't see, can I use the word like generally adverse opinion, qualified, unqualified? What is the sentence here? In our opinion, to the best of our information, according to the explanation. If you got information, you got explanation, you got evidence, then you can use that word and talk about an opinion. Here you did not get evidence. Can I say in our opinion, we don't have opinion? No. So we do not express opinion on the aforesaid financials. Why? What happened? Because of significance of matter described in basis for disclaimer of opinion of our report. Basis for disclaimer of opinion section of our report. In that section there is a discussion on matter. We have described a matter. Because of the significance effects of that matter, we have decided not to give opinion. So because of that, we have not been able to obtain sufficient appropriate evidence to provide a basis for an audit opinion on the consolidated financial statements. Now, so this is opinion section wordings. Now you see, we understood which opinion to be given in which context. We understood definitions. We understood drafting part. Correct? So which means technically we have completed opinion section. Are you clear? We completed technically the opinion section. Title is completed, address is completed, opinion section is also completed. Now the next part is basis for opinion. The next part is what? Basis for opinion. So what is basis for opinion? You know, you gave your opinion. Especially whenever you give a modified opinion, I want to know exactly why you modified. See, you gave adverse opinion, for example. For so and so reason, you gave adverse opinion. But those reasons I may not consider. What appears material and pervasive to you may not appear material and pervasive for some investor. Agreed? For some investor, it may not appear material. Materiality and pervasiveness are relative terms. They are relative terms. For a conservative investor, qualified opinion is also a very big deal. For a very aggressive investor, with an investor with aggressive mindset, he just looks at, he reads the audit report, adverse opinion auditor gave, what is the reason he gave? He will see the basis for adverse opinion section. Array, for these reasons and all, adverse, consolidation, subsidiary, not consolidated. Okay, how does it affect my decision making? He may think like, it is not that company is misleading something, right? They have not consolidated one subsidiary, because of which some misstatement happened here. Here it is technically it is not a wrong thing. Technically company is not misleading us. They did not consolidate one major subsidiary. I agree it's a pervasive thing. Non-consolidation of subsidiary is a pervasive thing. I agree that. But that is not something that affects my decision making. So I will still invest in the company. So your adverse opinion may not affect my decision making process sometimes. Now I want to know why you gave adverse opinion. Which means you must give reasons for adverse opinion, reasons for qualified opinion, reasons for disclaimer of opinion in the basis for opinion section, right? You must give reason, right? Then only I can understand why you gave adverse opinion, why you gave qualified opinion. Just blindly you said financials are wrong. You should tell me why it is wrong also. You cannot say blindly the financials are wrong. I will not accept. Correct? So basis for opinion section. Basis for opinion section contains the information, the logic behind the opinion. Whatever opinion you give, for that there will be a reason here. Tell me, I will have a specific reason for opinion in case of qualified, in case of adverse, in case of disclaimer. I will have a specific reason. Will I have any specific reason why I gave unqualified opinion? Will I get any specific reason? Do I have any specific? Will I have any specific reason behind unqualified opinion? No. I gave unqualified opinion because everything is presented true and fair. Because wherever evidence I asked for, they gave me. All the items, accounting estimates are reasonable. Accounting policies are consistently followed. Changes in accounting policies are accounted and disclosed. Prior period items were correctly accounted. There are n number of reasons why I gave unqualified opinion. But there will be a specific reason why I will give qualified opinion, adverse opinion, disclaimer. Correct? Now tell me, suppose I gave unqualified opinion, what is the basis for unqualified opinion? You are asking me, what is the basis for unqualified? The basis is very simple. The basis is, we conducted our audit in accordance with the standards on auditing. And we are independent of the company in accordance with the code of ethics issued by ICI. And we complied. We have fulfilled our ethical responsibilities in accordance with the code of ethics. We are just telling people that you are asking me what is the basis for my opinion, right? Look, I gave unqualified opinion. For unqualified opinion, there is no specific reason. So I am telling them what? You look, I am doing audit as per standards. As per the standards, I have so many responsibilities. And we are independent of this company. We fulfilled our responsibilities. Whatever evidence we believe that the evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Whatever evidence, whatever we believe that evidence obtained by us is sufficient and appropriate. Based on the evidence, whatever we got, we assume that it is sufficient. We believe that it is sufficient. So, because of all these reasons, I give unqualified opinion. Very clear. There is no specific reason. I cannot specifically point out and say why it is good. If I say bad, why it is bad, you should tell. If it is good, why it is good, we can't tell specifically, yes or no. That's it. So, and in this, no, you see, one more. Our responsibilities under those standards are further described in auditor responsibilities for audit of financial statements section of our report. In basis for opinion, first we started with the sentence. We conducted our audit as per standards on auditing. Under those standards, we have so many responsibilities. As on each and every standard has some responsibility, right? Suppose 210 standard says we are responsible to give engagement letter. SQC standard says we are responsible to establish quality control policies. 200 standard says we are responsible to obtain reasonable assurance and give opinion. 700 format says we are responsible to prepare audit report as per so and so format. May every standard is talking about some responsibility for the auditor. What are the responsibilities of auditor? Okay, don't worry. Our responsibilities under these standards, I specifically explained in another section of the audit report. In the same audit report, there is another section. Auditor responsibilities for audit of financial statement section. Auditor responsibilities for audit of financial statement section. You see contents of audit report. Title, addressee, auditor's opinion, basis for opinion. Auditor responsibilities for audit of financial statements. Auditor's responsibilities for audit of financial statements is another section in the audit report. In that section, what are all our responsibilities under standards on auditing described? That point, where are we mentioning? Basis for opinion section, there we are mentioning it. In basis for opinion section, we are talking about responsibilities under various standards. And what are we saying? These responsibilities are further described in auditor responsibilities for audit of financial statement section of our report. We are independent of the company. We are simply telling them generally, look, I am independent of the company. I will do audit as per standards. What I will do as per standards? Look, go and see auditor responsibility section. You will understand what I will do audit as per various standards. I am independent of the company. I complied with code of ethics. Whatever evidence I obtained, I believe that it is sufficient and appropriate. Accordingly, I gave the above opinion. So this is what we tell generally. Now, suppose you give a qualified opinion. This point as it is will come. But the moment you give, whenever you give qualified opinion, side heading will be what? Basis for qualified opinion. So I will show you. Suppose I gave qualified opinion, for example, qualified opinion I gave illustration. Suppose I gave a qualified opinion. You see basis for opinion para? Basis for qualified opinion. The same para is continued, right? We conducted our audit as per standards on auditing. Our responsibilities are further described in. We believe that the evidence obtained as it is there, na. But not only that. Why you gave qualified opinion? At the beginning itself we mentioned. We gave at the beginning. In the example illustration, what we see, qualified opinion is given by auditor because of inventory misstatement. Let us assume inventory cost is 30 crore and NRV value is 28 crore. This is what the example we discussed, right? Now, 2 crore is the misstatement. Why there is a misstatement? Company is supposed to value inventory at 28, but they valued at 30. 2 crore is a misstatement. So that is the reason why we qualified, correct? Now we qualified in the opinion section. We said qualified opinion except for the effect of the matter described in basis for qualified opinion section of our report. The aforesaid financials are true and fair. What is that matter? The company's inventories are carried in balance sheet at 30 crore. Management had not stated inventories at lower of cost 30 and NRV 28 crore, but stated them solely at cost 30, which constitute a departure from accounting standard, which is a deviation from accounting standard. Not only that, see, we pointed out mistake. Not only pointing out mistake, you should also tell what if this mistake is not happened. What if this mistake is not happened? How the profit and loss account would be? How the position of the company will be? How much the tax liability will be? If this, because of this mistake, what and all items impacted? Quantification also we must do. What is it? Quantification also we must do. The company records indicate that had management stated inventories at lower of cost or NRV, an amount of 2 crore would be required to write the inventories down to their NRV. Accordingly, cost of sales will be increased by 2 crore. Income tax and net income and shareholders' pool would have been reduced by so and so amounts. See, we are not just saying that there is a mistake. We are also saying because of this mistake, what are all items affected, correct? So whenever you are giving qualified opinion, not only qualification, you should also quantify. You should also quantify the misstatement. What is its impact on the various elements of the financial statements? Understood? Now, in this way, if at all I explain the shareholder, they will get a better knowledge. Okay, if this mistake is not there, the profit would have been this much, the sales would have been this much, so and so they will understand better. Correct? But sometimes quantification is not possible. Sometimes quantification is not possible. For example, we discussed adverse opinion drafting, right? In this example, why we gave adverse opinion on consolidated financials? Because one material subsidiary they didn't consolidate. They did not consolidated one material subsidiary. Non-consolidation of subsidiary, in this case, they assumed it is not only material but also pervasive. So what they gave, they concluded adverse opinion is appropriate. Now, you see, okay, I want to give adverse opinion, and in the basis for adverse opinion, look at the basis for adverse opinion. Basis for adverse opinion, you see, there is one explanation why they exactly gave adverse opinion, correct? And another explanation is general para. What is the basis for your opinion? Generally, what basis? You do audit as per standards, you have responsibilities, you are ethical, you are independent of the company, you fulfilled ethical responsibilities, you believe that your evidence is sufficient and appropriate. You generally talk about your audit, but specifically you also talk about why you gave adverse opinion. Yes or no? As explained in note number 10, the group has not consolidated XYZ subsidiary which the group acquired in so and so year because it has not yet been able to determine fair values of material assets and liabilities as on acquisition date. So and so reason is that because of that they have not consolidated. They qualified. I mean, they gave the reason. Not only giving the reason, you should also quantify, you know, because of non-consolidation, what are all items in the balance sheet and P&L are affected? Should you, I mean, are you required to tell or not? Are you required to talk about the impact of this or not? Now tell me, if I do not consolidate the subsidiary, which item of profit and loss account, purchases or sales or expense or employee benefit expense or depreciation, which will affect? Everything will affect. Every item of P&L will affect. Every item of balance sheet will affect. Now tell me, is that quantification possible? Is that quantification? Suppose in the previous example, inventory is misstated, I can clear little what are all 4 or 5 items are there that affected. But if I do not consolidate, what? Should I sit and prepare consolidated financials and tell here? That's not my duty. Sometimes quantification is not possible, impracticable. That is what in the question they said. You see, the effect of the misstatement of consolidation have not been determined because it is not practicable to do so. In that case, what you have to do, you know? You have to do, had the company consolidated, many elements could have been affected. The effect on consolidated financials of failure has not been determined. We are openly telling that what is its impact we are not able to determine. So if you are able to determine, tell the quantification. If you are unable to quantify, say that you are unable to quantify. Are you clear? All of you? Yes. Now look at disclaimer of opinion, how basis for opinion paragraph changes. Disclaimer of opinion, illustration 4 in the ICA 705 standard. Illustration 4 in 705 standard, use a disclaimer. First disclaimer of opinion, we were engaged to audit, all that is over. Basis for disclaimer, you see there is only one para here. We just straight away discussed why we gave disclaimer of opinion. We did not discuss. We conducted our audit as per standards on auditing, that point and all we didn't. Why? Because we didn't conduct, no? If at all you are giving opinion, we want to know what is the basis of your opinion. Disclaimer of opinion means what? You are not giving opinion. When you are not giving opinion, I just want to know why you have not given opinion. Technically, see, when you give adverse opinion, when you give qualified opinion, when you give unqualified opinion, I want to know on what basis you gave this opinion. And why you gave adverse opinion, qualified opinion also I want to know. That's why qualified opinion, adverse opinion will have 2 paragraphs. Basis for qualified opinion, basis for adverse opinion will have 2 paragraphs. One paragraph is why you give qualified opinion and how you generally give opinion. In case of disclaimer, you have not given any opinion. In that case, how do you give your opinion? Do I want to know? No need. But you didn't give opinion. No, I want to know exactly why you didn't give opinion. So that's why you are just giving reason here why you did not give opinion. That para is there now. Our response, we conducted our audit as per standards on auditing. Our responsibilities under those standards are further described in auditors' responsibilities for financial statements. We are independent of the company. We comply with code of ethics. That and all not required. That and all not required. Easy. All of you. Now you see in our book there are some, there is a discussion. 705. Okay, first, what are the contents in basis for opinion? What are the contents in basis for opinion? The auditor report shall include a section directly following a opinion section. What heading? Basis for opinion. In that, what points you should state? State that audit was conducted as per standards. Refer to the section that describes auditor responsibilities. In that para, you should talk about where auditor responsibilities are clearly explained. Include a statement that you are independent of the entity and has fulfilled other ethical responsibilities. State that auditor believes the evidence obtained by him is sufficient and appropriate. These are the points you should mention right clearly whenever you are giving basis for opinion. Now, how this basis for opinion section modifies whenever we are giving modified opinion, that is explained in 705. This is the point which many don't understand. 705. Yes, description of basis for opinion para in case of modified opinion. How basis for opinion para description will change when we give modified opinion. Suppose if there is a material misstatement in financials, what we need to do? Qualify. We not only qualify, we should also, the auditor shall include in the basis for opinion a description and quantification of financial effect of the misstatement unless impracticable. You should also quantify, not only qualify, you should also quantify. Suppose, no, sir, I am unable to quantify. What should I do? If it is not practicable to quantify, state that you are unable to determine. Have you seen that or not? The effect of non-consolidation has not been determined, is not practicable to determine. State that it is not possible to determine the impact. Suppose, no, see, not only misstatements are not only in the type of this, sometimes misstatement can be in the form of disclosure, right? Misstatement in narrative disclosure. What is misstatement in narrative disclosure? In financial statements, balance sheet, P&L notes is there. Inside that notes, at the starting 3-4 pages of any company notes, will have accounting policy discussion. How company is doing revenue recognition, they will discuss some paragraphs will be there. That paragraphs company is misleading. The company is describing the paragraphs wrongly. Now here, misstatement, is it in amount? No. Is it in classification? No. It's in disclosure. Which disclosure, by the way? Quantitative disclosure or narrative disclosure? Narrative disclosure. Suppose if the misstatement is in the form of a narrative disclosure, what auditor has to do? How auditor has to do? Of course, we qualify. We qualify or give adverse opinion depending upon the pervasiveness. But how will you describe the same in basis for qualified opinion? How will you describe it? If there is a material misstatement in financials that relate to narrative disclosure, the auditor shall include in basis for opinion an explanation of how the disclosure is misstated. In nothing but so and so note number, so and so point is disclosed like this, but that is not correct. The right disclosure is this. Like that you will mention. You will disclose that sentence in your audit report. Under which section? Basis for qualified opinion or adverse opinion, whatever it is. Suppose financial statements are not disclosing something. It is not narrative disclosure. Forget about it. They are not disclosing itself. Now tell me, when the financials are not disclosing something which is material, what auditor has to do? Qualify. First, auditor has to qualify. Before qualifying, generally what we do? We discuss with the management. Sir, you forgot to disclose so and so. As per accounting standard, it is mandatory. So you didn't disclose. We'll discuss. Management did not agree to disclose. Then what I will finally do? I will give qualified opinion or adverse opinion depending upon the severity involved, depending upon the pervasiveness. Now, okay, I decided to give adverse opinion or qualified opinion, whatever it is. Basis for qualified opinion, basis for adverse opinion, I should talk about the non-disclosure, right? If practicable, whatever they omitted, no. Whatever they didn't disclose in the notes to accounts, right? Entirely you disclose it here in the audit report. Where you should disclose? Basis for qualified opinion, basis for adverse opinion. Can I disclose it under emphasis of matter paragraph? Emphasis of matter paragraph is not a substitute for disclosure in financial statements. You might have heard it. So you disclose it in the this one. Any of this itself can be asked as a 3 marks question. What is the auditor's reporting requirement in case of material misstatement by way of non-disclosure? First, if the non-disclosure is material but not pervasive, auditor will give qualified opinion. If it is material and pervasive, auditor will give adverse opinion. Further, under the basis for opinion section, the auditor shall describe nature of omitted information. What exactly omitted? Auditor shall describe. Unless prohibited, include the omitted disclosure if it is practicable to do so, and auditor got sufficient appropriate evidence regarding omitted. Suppose no segment reporting, segment reporting, accounting standard 17. Yes, sir. So company has to give segment information. They didn't disclose segment information itself. They don't know about that. They didn't discuss anything about segment information. Now what you should do, if it is practicable, you design segment information, get sufficient appropriate evidence about the accuracy of the segment information, then copy paste it in the basis for opinion section. Generally, if that is a very big item, very big disclosure which they didn't disclose, it is not possible for us to not possible for us to sit and develop that. So generally we don't mention it, we just qualify that it is not practicable, we will say. Clear? Suppose you are giving modified opinion because you are unable to obtain evidence. If modification is resulting from inability to obtain evidence, the auditor shall include in the basis for opinion the reasons for the inability. Why you didn't get the evidence? Who stopped you giving the evidence? You should discuss that further. In case of disclaimer of opinion, just now we have seen how basis for opinion section modified. In that, are we mentioning about we conducted our audit as per standards on auditing, we are ethical, we are independent of the company, we have complied with ethical complaints, we believe that the evidence is sufficient? Are we discussing this in basis for disclaimer of opinion whenever we give a disclaimer of opinion? No. The auditor shall not include the following elements. The auditor shall not include the following elements in basis for disclaimer of opinion section, because auditor gave disclaimer. What you should not include? A reference to auditor's responsibility section, a statement that you have obtained sufficient and appropriate evidence. Generally, in every basis for opinion section, we believe that the evidence obtained by us is sufficient and appropriate. We mentioned that, but that statement you should not include when you are giving basis for disclaimer of opinion. Next. Now that we completed, basis for opinion discussion is over. Easy, all of you? So now, so with this basis for opinion is also over. Basis for opinion is also over. I will come back to it later. My remaining items I'll come back to it later slowly. So basis for opinion is also over. We understood what exactly, how it works, basis for opinion, how it works, all that. Right now I will show you how an MCQ can be framed using Google Gemini or ChatGPT. I think yesterday, previous class also I thought of doing it, but I missed. Before you, I'll do right now. So what's the page number here? It is basis for opinion, page number is some 60, I think so. Yeah. So this is actually something like ChatGPT. So I pasted entire that basis for modified opinion section. How basis for opinion section, how it gets modified in different circumstances. Okay. So, I just input, I just posted that message. Now it will give some understanding. Forget about that. So I will ask it, develop a case study to test my our CA inter students writing auditing exam September 2024. Please give a case study question of 25 lines and 5 MCQs with 4 options each. Yes, case study. You are the auditor of XYZ manufacturing company engaged in production of automobile components. Is this how RTP questions look like? The company has a significant export market and operates in a highly competitive industry. During the course of your audit, you observe the following. The company has implemented a new ERP system in the current year. There has been a significant increase in inventory turnover ratio. The company has adopted a new accounting policy for revenue recognition. I think no. I think this was not completely drafted. We need to put little more detailed in this one. Okay, fine. I'll give one more question. I think the prompt is not fully clear. So we should give prompt very clearly. I want case study on basis for opinion para. When auditor gives modified opinion. Please give a detailed case study question. Sometimes no, we have to ask 2-3 times the prompt. Again, it is giving the same. Huh? Yeah. Now I think it came correctly somewhat. You are the partner in charge of XYZ Limited, a publicly listed company engaged in manufacturing and distribution of consumer electronics. The company has been operating for past 15 years and has a significant market share. Due to increasing competition and rapid technological advancement, the company has been facing challenges in maintaining a profit margin. Findings. During the course of audit for the year ended 31st March 2024, you encountered the following. The company acquired a subsidiary 5 years ago. Due to decline in subsidiary's profitability and market share, the auditor concluded that goodwill associated with the acquisition may be impaired. The management has performed an impairment test and recorded an impairment loss of 50 crore. The company has entered into related party transactions related party transaction with a newly formed entity ABC Private Limited, which is controlled by family. These transactions include sale of inventory. I think they are only pointing issues. They are not talking. I mean, in this case study, they are not talking about material misstatements. So in that case, we should type one more time, which means probably the matter which we gave is not sufficient. Assume there are material misstatements. Assume there are material misstatements in the above case study. Draft a revised case study which contain material misstatements. Material misstatements. Okay, we'll see how it will draft. Appa, now it came perfectly. The company acquired a subsidiary 5 years ago, right? The auditor concluded that goodwill is get impaired. Management, no, they did impairment test and they considered the loss as 50 crore. However, the auditor subsequent procedure revealed that impairment loss was understated by 15 crore. The related party transactions have given something. The auditor discovered that certain related party transactions were not recorded. Going concern. Furthermore, the company has not made disclosure about going concern. Inventory. Subsequent testing revealed that the company has overstated inventory by 20 crore. Perfect. So we should appreciate that also. Otherwise, it will not give right question. Perfect. Now give me 5 MCQs asking type of opinion and requirements on basis for opinion. Give me 5 MCQs asking type of opinion and requirement of basis for opinion to test my EA into students. No, otherwise, no, it won't exactly understand the context. So give me 5 MCQs with 4 options each. You know, there is a course called prompt engineering course. MCQs. Some it came, you see. An auditor concluded that there is a material uncertainty about entity's ability to continue as a going concern. I think a going concern point is what we should do is we should copy this first. This response is there, right? This response is there, right? This first we should copy. So this is a case study, right? Yeah. So now here I will copy my previous question. So they gave this case study. Now I have asked the question, right? So now give me 4 MCQs. For this case study, as a continuation, I will ask. I don't know whether now it will ask correctly or not. Now it you see. Given the material misstatement in inventory valuation and revenue recognition, what type of opinion auditor will issue? Due to pervasiveness of the effect of material misstatement, what type of opinion? Pervasiveness. In case of qualified opinion due to material misstatement in inventory valuation, what should be the basis for opinion paragraph shall include? At this point, I think we can see, no, inventory has been overstated, right? In case of qualified opinion due to MMS in inventory, what should be the basis for opinion paragraph include? What shall it include? A description on scope of limitation? No. A description of nature and the effect of the misstatement. I think this is correct. Third option, a reference to the note to the financials explaining the misstatement. Both B and C. A reference to the note of the financials explaining. Probably no. I will even refer to the note point which actually talks about misstatement. That also I can refer. When I'm qualifying, no, I can refer even to that also. So I will select D. B answer is perfectly right. I need to talk about nature of misstatement and effect also. Quantification means what? Effect. So I think if at all we study that entire case and see, we can get the correct answers here. Understood how we developed? Exactly, I guess ICS using this pattern only. But remember, now suppose if I put the same question again, the exact question may not come. Another question it will be generating. If I test 10 times, I will be getting only once or twice the repeated question. 8 to 9 times it will come a new question. So 80% of the times it will generate a new case study. You see how beautiful the case study is? Even the case study is very good. Related party transactions, they were not correctly valued, they are not correctly disclosed. Going concern, some issues there. Inventory valuation is there. Revenue recognition, the company recognized revenue on certain long-term contracts before the performance obligations were satisfied. Revenue recognition, when you can recognize, only when you satisfy the obligation you can recognize. So revenue recognition was wrong. It's a material misstatement. This premature revenue recognition has materially overstated the revenue and profits because you are recognizing the revenue in advanced stage. It is overstating the performance. This is a material misstatement, right? Now, in that context, it gives some MCQs. So you can also ask for answers. Answers, please. It will give answers also. And reason also it will give. First one, adverse opinion. Due to multiple material misstatements affecting different areas. Adverse opinion. What is the first MCQ? Given the misstatements of inventory valuation and revenue recognition, what type of opinion? Since both the cases material misstatements were there, multiple areas are affecting, the impact is going to be pervasive. That assumption it took, and which opinion it gave? Adverse opinion. Second one, due to pervasive effect of the MMS in the financial statements, what type of opinion? Obviously, pervasive effect of the MMS, adverse. In case of qualified opinion due to MMS, MCQ 3, already we solved, no? Option number D, yeah, D, both. B and C. Basis for opinion should describe nature and effect of the misstatement and reference to the note of the financials for further explanation. Understood how it is framing? In fact, this is a bit simple topic. You take a very complicated topic and ask it to develop a case study, it will give you a superb case study. Technically, auditing subject is something that you can study on your own. You don't require classes and all. Provided what is required is courage is required. So you can use ChatGPT and Gemini, all that, and then you can do self-study. But I can give you better than that. Correct? Yes. Obviously, no? Thank you. So next. So understood all of you until now, basis for opinion section? So we completed that. Now let's understand emphasis of matter paragraph. Let's understand emphasis of matter paragraph. You know, I'll show you Tata Motors. This is the financial statements, right? This is the financial statements. These are the financial statements of Tata Motors. You see, this is completely notes to accounts. Whatever I'm showing you is completely notes to accounts. So lengthy, you see. How many pages is there notes to accounts? Almost 70-80 pages. Now tell me, as an auditor, should I read entire balance sheet P&L notes fully or on a sampling basis? Hey, notes you should read fully. You should sign no. How audit verification of items of financials you can do on a sampling basis. How come I will read on notes to accounts on a sample basis? I should check presentation and disclosure requirement clearly, no? I should check whether the financial reporting framework presentation disclosure exactly followed or not, right? Hardly total entire balance sheet, P&L, notes, everything put together will be 100 pages. In that, how will you do sampling? First of all, how sampling is possible? You want to read balance sheet. Suppose you want to understand notes to accounts, some expenditure, some P&L account you want to understand, revenue from operation. Unless you come and see notes to account, revenue from operation breakup, you can't understand whether it is correct or not, right? So sampling is not possible in interpretation of financial statements. Whether financial statements are prepared as per applicable financial reporting framework, that you cannot do sampling. 100% you have to read, correct? But tell me, will a shareholder read this financial statements 100%? Can they read and understand? We only don't understand. How come shareholders will understand? You know, you may see capital management, some point is there, some random point I'm just taking. The company's capital management is intended to create value for the shareholder by facilitating the meeting of long-term and short-term goals of the company. The company determines the amount of capital required on the basis of annual operational plans and long-term product and other strategic investment. The moment you read this is not important for exams and you leave it. You don't understand, no. It's not that easy to understand the financial statements unless you have the knowledge of Ind AS, holistic understanding of the subject. Only then you will understand any company notes to accounts clearly. Otherwise you can't understand. Some note points, no. Commitments. What is this? The company has entered into various contracts with vendors and contractors for the acquisition of plant and machinery. and various civil contracts which are yet to be executed under the joint venture agreements with the so and so company, the company is committed to contribute some so and so crore as on so and so date. You see, all these points you can understand only when you exactly understand the standard implications, why this is presented, in what context it is presented, how this is useful for the people. So normal layman, normal shareholder and all cannot read notes to accounts. They won't even open financial statements. They only see in the stock market, brief summary will be there, financial summary will be there. In money control app or Zerodha app, in all these cases, some summary will be there, financial summary. That alone they'll see. This financial summary is derived by these applications from audited financial statements. So people generally knows that the summary is generally taken from audited. They just see the summary and accordingly they decide. So they definitely don't read. But as an auditor, you don't have this luxury. You have to read 100%. Now when you're reading 70-80 pages notes, somewhere definitely you would have felt, so and so note number 55 is very important point. Won't you? Generally when we are reading entire notes to accounts, we auditors generally feel, this is very important. I think every shareholder should come and read this point. Whether they read entire notes or not, ignore, forget about it. This note number 55 which talks about contingencies, this one is note number 41. Yeah, 41 only. This number is what? Note number 41, which talks about contingent liabilities discussion. What are all contingent liabilities the company is facing? I want every shareholder to read this particular point. By the way, I want everybody to read this point. I'm saying no. Does it mean, is this materially misstated? No, it is not materially misstated. Then why I want this everyone to be read? So that they can understand better about financial performance and position of the entity. For their better understanding of the financial statements, I want everyone to read this point. I want to tell this in the audit report. How can I tell? Emphasis of matter paragraph. Emphasis means what? Highlight. Emphasize means what? Highlight. These two lights are emphasizing me, yes or no? Emphasis is what? Highlight. So emphasis of matter paragraph is a paragraph in the auditor's report. Is a paragraph in the auditor's report that refers to a matter that is appropriately presented or disclosed in financial statements. You see the definition, emphasis of matter paragraph. What is emphasis of matter paragraph? Emphasis of matter paragraph is a paragraph included in auditor's report that refers to a matter. You see the word cleverly they used. Appropriately. Appropriately means what? Rightly. Which means, suppose Tata Motors note number 41. The note number 41 contains material mistakes. They are not disclosing correctly the contingencies commitments. They are using wrong amounts and all. Can I highlight that under emphasis of matter paragraph? I should not. Because that note number 41 is not appropriately presented or disclosed. Then I can highlight under emphasis of matter paragraph only those that are appropriately presented or disclosed in financial statements. In auditor's judgment is of such importance that it is fundamental for users' understanding of. If I feel they are fundamental for users' understanding of financials, I will highlight them. Otherwise, I will not highlight them. As simple as such. That too, if I have to highlight them, that must be presented appropriately. Now you see, usage of emphasis. When I can use emphasis can be used to draw attention to the matter which is important for users' understanding. And this shall be included, provided. This emphasis can be included only when the auditor would not be required to modify the opinion. On that matter, 41st point, no, I don't have any objection. Then only I can highlight it. Suppose if I feel that 41st point is materially misstated. If I feel the 41st point is materially misstated, I will not highlight it. If it is materially misstated, what shall I do? I should give qualified opinion or adverse opinion. In the opinion section I should talk. I cannot cleverly ignore there and talk in emphasis of matter paragraph. Because emphasis of matter paragraph, by definition, people think, something auditor is highlighting. Nothing wrong in that. He just highlighting it. But qualified opinion means auditor is objecting something. There is a difference between highlighting something and objecting something. Correct? Yes, sir. So, further, if at all that is determined as a key audit matter, don't discuss it under emphasis of matter. So, if at all you are communicating some point as a key audit matter, don't discuss the same under emphasis of matter paragraph. Clear? What is the manner of presentation? How emphasis of matter paragraph will be presented? I'll show you Air India audit report for your understanding. How emphasis of matter paragraph is presented. This is Air India, the old audit report, 1920 audit report. You see here they have used emphasis of matter. How they presented emphasis of matter paragraph? As a separate section, right? In a separate section they presented, right? Separate side heading they gave, separate section. They are not discussing this under opinion. They are not discussing this under basis for opinion. No, nothing. They are discussing it as a separate section with a heading emphasis of matter. Then auditor is drawing attention to so and so points. Why auditor is highlighting all these points? Because these points contain some important information. To whom it is important? Users. Who felt it is important? Auditor felt it is important. By the way, is auditor modifying on these matters? That's why at the end of the matter, our opinion is not modified in respect of the above matters. So that is a manner of presentation of emphasis of matter paragraph. You see, the manner of presentation is what? Include a paragraph within a separate section of the auditor's report. Express the matter emphasized. Give reference to such matter in the financials. State that your opinion is not modified in respect of the above. By the way, the emphasis of matter paragraph is not a substitute for disclosure in financials, not a substitute for 570 material uncertainty. This is not a substitute for various mistakes. If you don't disclose something in financials, I will give modified opinion. Are you getting it? Emphasis is not a substitute for modified opinion. Confident. So that's about emphasis of matter paragraph. Now we have other matter paragraph discussion. So, but other matter paragraph discussion takes little time. Okay, we will take a break and then come back and discuss. Confident all of you until now? That's it. Okay, we'll take a break, 20 minutes. So let's continue the discussion on 706. Emphasis of matter paragraph is completed, and now we have to discuss other matter paragraph. So what is other matter paragraph? You see the definition. There is only a slight modification between emphasis and other matter paragraph in terms of definition, but the concept is extremely different. Other matter paragraph is a paragraph included in auditor's report that refers to a matter other than those presented or disclosed in financial statements. So if at all you are referring, see, emphasis of matter paragraph definition, you see, it's a paragraph in the auditor's report that refers to a matter appropriately presented or disclosed in financial statements. So that refers to a matter appropriately presented or disclosed in financial statements. Other matter paragraph is a paragraph in the auditor's report that refers to a matter other than those presented or disclosed in financial statements, that in auditor's judgment, it is important for the users to understand audit, to understand auditor's responsibilities, to understand auditor's report. In order to make the users understand about the audit, auditor's responsibilities, auditor's report, I use other matter paragraph. If I want people to understand better about the financial statements, I will use emphasis of matter paragraph. So in both the cases, one paragraph is dealing with where I will highlight about important point in financials which I feel they're important for better understanding. Whereas in other matter paragraph, I talk about audit, I talk about auditor's responsibilities, I talk about auditor's report. Getting it? To make them understand better on these aspects, which are not presented or disclosed in financial statements. For example, a simple example I'll take, my favorite example. Suppose take State Bank of India, best example. State Bank of India Limited itself, SBI Limited itself. SBI Limited. State Bank of SBI Limited is a bank, first of all. It has so many subsidiaries. One of the subsidiaries is SBI Cards Limited. SBI Card Limited, which is dealing with credit card division, which is exactly dealing with what? Credit cards division of the entire State Bank of India is dealt by SBI Cards. Now SBI Card is a holding company, SBI Limited Bank is a holding company, whereas SBI Card is a subsidiary company. Now SBI Limited is being audited by, let us assume, Mr. H. H is the auditor. H means holding company auditor, that's what the meaning. Whereas SBI Card Limited, which is audited by S. S is the auditor of SBI Cards, H is the auditor of SBI Limited. Now SBI Limited, This has subsidiary company, right? Along with this, SBI Limited also has branches. It has branches. 25,000 branches it has. Across India, how many branches it has? 25,000 branches, approximate number I'm telling you. Out of this, 9,000 branches were audited by branch auditors. 9,000 branches were audited by branch auditors. Remaining balancing figure, remaining branches were unaudited. Remaining branches were unaudited. There is no audit requirement for them. Now, State Bank of India, you see, banks, public sector banks, they maintain accounting records at each branch. A branch related accounting records are maintained inside the branch only. Private sector banks, they don't maintain branch wise accounts. They maintain centralized accounts. That's why ICICI Bank, Kotak Mahindra Bank, HDFC Bank, these are all private sector banks, will not have branch audit concept. Whereas public sector banks have a branch audit concept, because most of the public sector banks maintain accounting at branches itself. When branch accounts are separately maintained, the branch has to be separately audited. General rule. General rule I'm telling you. Or it can be audited by same person also. No problem. But generally in banks, RBI gave a guidelines saying the branches has to be audited by separate auditors. How many? Single auditor can he do audit of 9,000 branches in State Bank of India Limited and its corporate offices, investment offices, marketing offices. So many will be there. How come a single auditor can audit all this? Further, State Bank of India, I said right, Mr. H is the auditor. H is nothing but holding company auditors. That's what the meaning. H is nothing but main company full auditors. H means nothing but was full company main auditors. We call them as principal auditors. We call them as what? Principal auditor. Let's redefine the name from H to P. They are actually what? Principal auditors of State Bank of India Limited, and they are the holding company auditors. From subsidiary company point of view, they are holding company auditors. Now, State Bank of India is having totally 12 joint auditors. How many? 12 joint auditors. They have principal auditors are close to 12. Now and these branches, these 9,000 branches are audited by approximately 9,000 branch auditors. Now, what is exactly this principal auditor, branch auditor, all that concept is about? Now, by the way, State Bank of India will prepare financial statements, right? How many sets they will prepare? 2 sets of financials they will prepare. One set of financial is standalone financials, where head office plus all branches will be consolidated. Correct? Head office plus all branches combined picture is what called as what? Standalone financials of SBI Limited. And they also prepare what? Consolidated financials. Inside this what? SBI Limited plus all subsidiary companies plus associate companies plus joint ventures. All put together we will prepare group financials. That's called consolidated financials. Now principal auditor, who are nothing but these 12 joint auditors, should give audit report on consolidated financials, should also give audit report on standalone financials. Okay. Principal auditors, we are 12 joint auditors, right? We are principal auditor, right? I am the auditor of State Bank of India. I will have to give audit report on consolidated financials. But these consolidated financials includes various subsidiaries, associates, joint ventures, which are audited by other auditors. Correct? Which are audited by subsidiary company auditors, associate company auditors, joint venture auditors. We are not auditing them. They are auditing that. Now, whatever subsidiary, joint venture, branch they are auditing, no, but that balance sheet is included in consolidated financials. On that I have to give opinion, but I didn't audit them, no. How can I give opinion on consolidated balance sheet which contains assets and liabilities belonging to subsidiaries, joint venture, all this is called as component. What are they called as? Components. From consolidated financials, holding company plus remaining components. Component means what? It can be subsidiary, it can be associate, or it can be joint venture. So holding company plus components combined put together is called consolidated financials. But I am not auditing component financials. Component financials are audited by other auditors. Now how can I give opinion on this? You have to give opinion. But you are not responsible for other auditors, right? You are not responsible for component financial statements, yes or no? Then how come you give opinion on overall consolidated financials which include financial information of components? How come you give? Because you are relying upon their reports. Components are audited by just like you chartered accountants, right? They are also COPs, chartered accountants with the COP auditors, statutory auditors, right? Your report is trusted by others, no? Same way you also trust your fellow members' reports. No problem. So you look at other auditors' reports. component auditors reports on other subsidiary companies, all that. They all said true and fair. And what is your opinion on SBI, which you audited? That is also true and fair. True and fair plus true and fair. What opinion you will give on consolidated? True and fair. But this point shareholders don't know. They will think I only audited all the subsidiaries. I should tell to the shareholders that components are not audited by me. Components are audited by other auditors, component auditors. Where should I tell that? Other matter paragraph. Where should I tell that? Other matter paragraph. In other matter paragraph, on the other matter paragraph in the audit report on consolidated financials, I will talk about components. Same way, standalone financials. Head office I have audited. Head office I am auditing. But branches are audited by branch auditors. But these branches related assets and liabilities, income and expenses are all included in standalone financials. In the standalone financials, no branch related assets and liabilities, branch incomes and expenses, they are also included. But on standalone financials, my report only should be given. My opinion only should be given. I should only give opinion. And my report only will go to the public. Branches and all were audited by other auditors. No, I don't know anything about the branches. Then how come I give opinion on standalone financials? Use branch auditors report. They said everything is true and fair, right? You also consider it as true and fair and give opinion. You also consider it as true and fair and then give opinion on the total standalone. But tell the public that you didn't audit 9,000 branches. Branches were audited by another auditor. Your opinion on these total financials, which includes branch data. Your opinion on total financial statements, which includes branch assets, liabilities, incomes and expenses. How your opinion is based upon? Your opinion is based upon branch auditors report. That fact you mention. Enough. Division of responsibility. Are you clear? From standalone financials point of view, component means branches and divisions. Consolidated financial statements point of view, component means subsidiary, associate and joint venture. In consolidated financials, component means other entities. In standalone financials, component means other branches and divisions. That is why you have a question. You have a concept called branch accounts and audit discussion. Inside that, who is a principal auditor, who is another auditor, who is a component auditor, like that there is a discussion. You see that discussion I will show you. So you have a discussion on branch accounts and audit. You see here, audit of branch office accounts is there now. Inside that you see one of the point is SES 600 related discussion. Who is the principal auditor? Principal auditor means auditor with responsibility for reporting on financial information of entity. When that financial information includes financial information of components audited by another auditor. So you are the auditor with a responsibility to report on the enterprise entity, which includes financial information of components audited by other auditor. Who is other auditor? Other auditor means an auditor other than principal auditor. What is his responsibility? He will have responsibility for reporting on information of a component which is included in financial information audited by principal auditor. What is a component? It can be a division or branch. Division or branch is a component when which financials point of view? Standalone. Subsidiary, joint venture and associates. These are components from which financials point of view? Consolidated. So whether it is a division or branch or whether it is a subsidiary, joint venture, associate, whose financial information is included in financial information audited by principal auditor. That's how the definitions are drafted. Understood? You read without understanding anything, you will never remember. So this is the definitions which are drafted, branch accounts. Now tell me, okay, fine, principal auditor, other auditor, branch, all that we understood. What is like using the work of another auditor? Using the work of another auditor. Inside that, the F point is important. This itself can be asked as a 3 marks question. What are principal auditors procedures? What are principal auditors procedures? Is actually nothing but what? What are principal auditor procedures? In the context of SA 600, actually full SA 600 we don't have in syllabus. It is there only in CA final. Here we are only discussing brief discussion of SA 600, not in depth. You know, principal auditor should advise the other auditor how he is going to use other auditor's work. Coordination. Tell me, when I am doing audit of State Bank of India, I should tell all the subsidiary company auditors, look, you only if you complete your audit and give audit report, then only I can give my audit report on consolidated financials. Same way, I should tell to all the 9,000 branch auditors, look, only when you complete branch audit and give me the audit report, then only I can give my audit report on standalone financial statement. So I should advise the other auditor how their work is going to be used by me. The principal auditor will inform the other auditor any matters that are requiring special considerations. I will tell them focus on these areas, focus on those areas. I will give them based on my understanding of the entity and the environment. I will tell the other auditors these are all important areas, please focus on that. I will tell subsidiary company auditors these are all important areas, please focus on. And I will also advise, I will also recommend, I will also explain other auditors how to identify intercomponent transactions and timetable for completion of audit. And I will advise other auditors any significant reporting requirements and representations as to compliance with them. I will tell them what are all reporting requirements applicable for this company. I should tell them because they may not know. They are only branch auditor. They don't know exactly what are all they need to report. So I should tell them, look, this is a company, CARO is applicable. So you also give a CARO report. I should tell them. Now, I will get a representation that yes, they complied with it. Whatever requirements, whatever procedures I told them to do, right? I will get a representation from them that yes, they did all that. Clear? These are called as what? Principal auditor's procedure. The principal auditor might discuss with other auditor. The procedure supplied a review of written summary of other auditors procedure. I will discuss with him what are all works he did. Or I will get a written summary of what are all works he did. Generally this we don't do. If other auditor is also a chartered accountant having COP. Suppose if other auditor is not a CA in India. Suppose the other auditor, the component, the branch is a foreign branch. And the foreign branch is audited by some external CA, not Indian CA. In that case, I will ask him what are all he did. All that. The principal auditor may also visit other auditor. The principal auditor may also visit other auditor. If I want to visit. Now you see, I might discuss with other auditor. I will perform these coordination works and all. No, all this depends upon the nature, timing, and extent of these procedures depend upon circumstances of the engagement and my knowledge of competence of other auditor. To what extent I will discuss with him, to what extent I will interact with him, to what extent I will direct him, how I will get a representation from him, the involvement with him. It depends upon circumstances. It also depends upon my knowledge of his competence. If at all he is a CA and COP, I don't discuss anything. I just simply tell him, please finish audit by so and so time and give me the report. Finally, he'll give the report, I'll use it and then give my report. This is what I do if the other auditor is also a CA and COP. If the other auditor is CA, but he is not a CA. He is not an Indian CA. I don't know how he will do the audit. I don't know what standards he is following. I don't know what reporting requirements is following. I don't know. In that case, what? I should tell him, look, this is an Indian company requiring these reportings. Okay, you have to do audit as per standards on auditing. Show me whether you did audit as per standards on auditing. Like that I will be discussing when the other auditor is not an Indian CA. Because if he is not an Indian CA, how do I know his competence? Are you getting it? So that is the logic behind this entire discussion. Now tell me, first of all, should a company maintain separate books of accounts for branches? No compulsion. It is company's option whether they want to maintain separate books of accounts for branches or not. That is their choice. 99% of the cases companies maintain centralized accounting. Reliance Industries will have centralized accounting. They don't have branch accounts. Avenue Supermart, DMart, they don't have branch accounts. Many insurance companies don't have branch accounts. Private sector banks don't have branch accounts. Branch accounts is not a popular concept in reality because today entire accounting is centralized. Business may be happening at branches. Suppose ICICI Bank, Kotak branch is there, Kotak Mahindra Bank is there. It has branches within the Chennai, some 10 branches are there. But accounts are not maintained at branch. At a branch, what is happening? Transactions are only happening, but not accounting. Accounting is centralized in private sector banks. So having a compulsory branch accounts is not a big deal. It is not compulsory. But if at all a company is maintaining separate accounts for branches, who should audit those accounts? Same auditor. Company auditor, whoever is then a principal auditor, he himself can do audit. Or a company can appoint a separate auditor for branches who shall also be a chartered accountant having a certificate of practice. Suppose what if the branch is outside India? Same company auditor only shall audit. If nobody is appointed separately, the main auditor only has to go and audit the branch accounts also. Suppose If a company decided to appoint a separate CA having COP, company can appoint a separate CA and send outside India and do audit income. Or company can appoint an auditor as per the law of the nation. As per the law in that country, whatever the country law is there, no, as per that they can appoint the branch auditor. Any of them can be appointed as a branch auditor in case if the branch is situated abroad. Getting it? So that is what, who can audit company auditor or another CA in case of foreign branch by any person duly qualified to act as a auditor as per law of that country. Now branch auditor shall prepare report on the accounts of the branches examined and send it to the auditor of the main auditor of the company, principal auditor of the company. Now with respect to branch audit, what are the responsibilities under SA 600? With respect to component audit, what are the responsibilities? That is what we covered at the beginning. Understood? I briefly discussed this point. That's enough. Whatever I have discussed is more than enough, sufficient. Now where are we actually? 706, other matter paragraph. So other matter paragraph is referring to, other matter paragraph is a paragraph in the audit report that refers to a matter other than presented or disclosed in financial statements that in auditor's judgment is important for users' understanding of the audit, auditor's responsibility, auditor's report. Auditor's responsibility we understood. Correct? Other matter paragraph is important to make the users understand audit and auditor report. These two words are pending again. Now, understood until now? Let's look at the 299 standard joint audit. Let's look at the 299 standard joint audit. What is a joint audit? Appointment of two or more than two audit firms for the same entity, for the same financial year, with the same scope of work. Correct? Scope is same. I am the auditor for full company, you are also the auditor for full company. We both are principal auditors only. When the scope of work is same, we are called as what? Joint auditors. For a particular branch also joint audit is possible. Suppose I appointed you as an auditor for branch A, which is very big. Another auditor is also appointed for branch A. You both of them are having scope same, which is branch A. Branch A financials have to be audited by both of you. You are branch auditor, first of all, you are a branch auditor only. But the branch auditor himself, branch auditors can be joint auditors also. Don't think joint auditor means only for the main company. No, wrong. Joint audit is a concept. Joint audit is not a designation. Principal auditor is a designation. Branch auditor is a designation. Joint audit is not a designation. Understand? Okay. If two or more than two auditors were appointed for same scope of work, that is called as what? Joint audit. So two or more than two auditors means what? From the same firm, two partners are coming. That is a no. Two different firms are auditing. One sole proprietor firm I appointed, another partnership firm I appointed. Both of them are appointed for the same company, for the same scope, for the same financial year, and the same statute. Then it is called as what? Joint audit. Is joint audit compulsory? No. Is there any reference to joint audit under Companies Act? Yes. Under rotation of auditors concept, 139 subsection 2, a proviso has been given. There, joint audit topic is indirectly discussed. What they said is, if shareholders decided, they can appoint joint auditors. That is what they said. So indirectly in the Companies Act, there is a legal footnote regarding joint audit. Only at rotation of auditors, and that too as a note to point it was given. It was not given as a full-fledged provision. So technically Companies Act is predominantly speaking silent on joint audit. RBI made it compulsory for banks. Banks which are having total asset size of some 15,000 crore, they must have a joint auditors of minimum some 2 or 4. Maximum number of joint audits shall not exceed 12. Okay, when joint auditors are appointed, how they will do the work? Joint auditor number 1, he will go do entire audit and come back. Again, second auditor will go do entire work and come back. Third auditor will go. No, joint auditors are appointed to reduce the work burden. All of them are for the main company, full company. They should report on the full company itself. But they will not do the full work. Joint auditors split the work between themselves. They split the work and then do. How they will split? They will split based on items of assets and liabilities. Some auditors will focus on some assets, remaining auditors will focus on remaining assets, some will focus on liability, some will focus on income and expenditure account. So items of income and expense, geographical area, some joint auditors will focus on north region, another joint auditor will focus on south region. Identified, some joint auditors will do audit of unit A, unit B, unit C, Another joint auditor will do audit of division A, division B, division C. Period. Some joint auditors will look into quarter 1, quarter 3. Another joint auditor will look into quarter 2 and quarter 4. Like this, they divide the work and then do. Now, joint auditors, they divide the work and then do, right? What is the responsibility for other joint auditors' work? Do they have responsibility even for other joint auditors' work? No. Each joint auditor is responsible only for the work allocated to him. Whatever work he took, no, he shared, no, only that he is responsible. He is not responsible for other joint auditors' affairs. But you should coordinate with, you must have a proper coordination among joint auditors. What? There should be proper coordination. If during the course of the work, a joint auditor finds any matter that affect the other joint auditor work, then he shall bring it to the notice of other joint auditor before the date of audit report. This is a requirement. Suppose you are doing work. In the course of doing the work, no, you found some issues related to purchases. Purchases is audited by another auditor, not you. Another joint auditor. You found some severe negligence, severe irregularities. You should immediately tell that you should immediately inform that matter to other joint auditor who is actually dealing with the purchases. That is a moral responsibility for you. You cannot say, since that is not my area, that is his area, I am not responsible. No, you are responsible to communicate him. That's it. If you fail to communicate, it amounts to misconduct as per Code of Ethics. Why? You didn't comply auditing standard. You clear? Same way, other joint auditors, no, if they find something relating to you, if something that is affecting you, they should also come and report. That doesn't mean you are responsible for his work. No. Is he responsible for your work? No. So this is called division of responsibility. So joint auditors will have a separate individual responsibility. But there are some works which cannot be divided. There are some works which cannot be divided. For example, reading the financial statements. Hey, you read notes to accounts 10 pages, I will read 10 pages, he will read 10 pages, he will read 10 pages. Like the 12 joint auditors divided 10 pages each. Is it possible? Financial statements, whether they are presented and disclosed properly, all the joint auditors are combinedly responsible. So there are some areas where joint and combined responsibility will be there. In the following areas, all joint auditors will have a combined responsibility, indivisible responsibility when the work is not divided. When the work is not divided, some works are there. Control evaluation is there. Suppose in a company, internal controls you need to check. Internal controls you didn't divide between yourself. So as a whole, risk assessment, internal control, all of them together they have to do. So there, all of them are fully responsible. Decisions taken by all of them together. Matters brought to the notice of all joint auditors. Some issue is going on and everybody has knowledge of it. None of them reacted on it. Everyone is responsible. And examining financials of the company, whether financial statements are prepared as per relevant statute, whether the financials are prepared as per applicable framework, all the joint auditors are responsible. For verifying presentation disclosure as per applicable framework, all of them are responsible. For ensuring audit report complies with the relevant standard. Why audit report? Do you think joint auditors give a separate audit report each of them? No. All the joint auditors shall give a common report. Generally, all joint auditors arrive common conclusion, express common opinion through a single audit report. State Bank of India audit report, you see only one audit report. Below 12 joint auditors signed it. 12 joint auditors signed means all the joint auditors will come and give only a single report. Joint auditor is not bound by majority. Does it mean all the joint auditors should only give together collectively single report? Suppose now I am one of the joint auditor. For me, area allocated was purchases and sales. And I feel purchases and sales are completely wrong. I want to give adverse opinion. But remaining joint auditors, no, they are saying no, remaining areas and all right, they want to give unqualified opinion. But I want to give adverse opinion. Should I bound by majority? No. The disagreeing. If there is a difference of opinion, the disagreeing auditor can express his own opinion by a separate report. When you are giving a separate report, shareholders should follow which report? That is their choice. When you are giving separate report, no, why you give a separate report, why you give a qualified opinion, you will give a basis for qualified opinion, basis for adverse opinion, your objections, no, they will read. If they feel yours is genuine, they will follow yours. If they feel this is nonsense, he is too much, and they will follow the other joint. That's their choice. Are you clear? But when multiple audit reports like this exist for the same company for the same year, in the other matter paragraph of each of these report, In other matter paragraph of each of these report, they should refer about other auditors report. That is what auditors report in other matter paragraph means. Understood? Now in joint audit, what are the special considerations? All the joint auditors together should develop an engagement letter and give it to the company. All of them should commonly get a management representation letter. All the joint auditors should involve in development of strategy. All the joint auditors should develop the joint audit plan. And joint auditors shall assess risk. All of them shall participate in the risk assessment process and inform to other joint auditors about the risks that they identify. All the joint auditors should discuss and document nature, timing, extent of procedures to be performed in common areas and special areas. All of them put together, they have to discuss how we should go further, at what time what work should be done, extent of audit procedure, how much sample I should cover. All of them should discuss and then document it. And joint auditors should give common engagement letter, obtain common representation letter. The allocation between joint auditors is there, a work allocation that should be documented, and that should also be communicated to those charged with governance. 12 auditors were there, each of us are doing which work? You should communicate to top management also. Tomorrow after audit is over, if at all they want to find some issue, they have some issue, they want to talk to auditor, which auditor they will call and talk. So if they know that what work each joint auditor did, if they know that, they will directly call the concerned joint auditor. Clear? With this 299 is completed, 600 that portion branch accounts audit is also completed, 706 other matter paragraph is also completed. Easy. Now look at once again the 706. What is the manner of presentation? Other matter paragraph. The auditor shall include other matter paragraph only when it is not prohibited by law. In India, there is no prohibition. And when a 701 applies, this matter is not decided as a key audit matter. The emphasis of matter paragraph, other matter paragraph can be used for any matter that is not decided as a key audit matter. If it is decided as a key audit matter, why once again discussing here? You are anyhow discussing it under key audit matter. Duplication to avoid, they put this condition. Further, other matter paragraph shall be given in a separate section of the auditor's report. Other matter paragraph shall be given in a separate section of the auditor's report. So when auditor includes another matter paragraph, it shall be included in separate section with a heading called other matter. And one more thing, whenever auditor decided to include emphasis of matter para, other matter para, whenever auditor decided to include emphasis of matter para, other matter para, directly don't include in audit report. Tell the management that you are including this. This is how you are going to draft. Give them the draft emphasis of matter paragraph, draft other matter paragraph, how you are going to include. Management will read. If they read, no, they understood. Sir, other matter paragraph emphasis is only just for highlighting and letting people know some facts. Correct? But you are writing in an objectionable language, sir. So can you modify that? So sometimes drafting mistakes might happen. Why? That's why we should communicate with top management whenever we are including emphasis of matter paragraph and other matter paragraph. Now let's discuss this 705 introduction, this table, this introduction, this diagram. I told right at the beginning of the session, audit report is two types. One is unmodified report, modified report. When we will call it as a modified report, even if you are including emphasis of matter paragraph, even if you are including other matter paragraph, but still you are giving unqualified opinion only. Your opinion is unqualified only, but the report is modified. Why report is modified? Because you are not following 700 format. If at all you are following audit report format as it is given under 700 format and giving to the client without modifying the format, that report format is called as what? Unmodified report. The moment you want to include emphasis of matter paragraph, other matter paragraph, we call it as what? You are modifying the report, right? 700 format you are modifying. Why? By including 706 content. Correct? Suppose you are modifying opinion. Then also when you are modifying opinion, 700 format you are not following, right? That is also treated as what? Modified report. They will give you this question. Under what circumstances auditor will include additional information in the auditor's report? Under what circumstances the auditor will include additional information in audit report? Additional means what? Anything that is not given in 700. Extra you are adding. That is called as what? Additional information. Indirectly, under what circumstances auditor will modify the report? Remember, it is not modifying the opinion. I am talking about modifying the report. When auditor deciding to use an emphasis of matter paragraph or other matter paragraph or material uncertainty related to going concern, even suppose if SA 570, if you are including that matter, that also modified report. Even if you are including key audit matter, that also here, that is also called as what? Modified report. Clear or not? Next. So that's about other matter paragraph. Related standards 299 and branch accounts and audit concept, all that is completed. So I'll go back to this. So emphasis of matter paragraph is completed and other matter paragraph is also completed. Then let us discuss what is a key audit matter. Just 2 minutes, I will continue. Yes. Now we'll discuss key audit matter. What is a key audit matter? If you observe the definition of key audit matter, key audit matters are those in professional judgment of the auditor were of most significant in audit of financial statements of current period. That's the definition. So key audit matters, you see, key audit matters are those that in auditor's professional judgment were of most significant in audit of financial statements of current period. These matters are selected from matters communicated with those charged with the governance. So what is a key audit matter? Like I will show you Tata Motors, just a straight example to better understand. You see here Tata Motors have presented key audit matter. The valuation of defined benefit obligation. One of the key audit matter what they selected is what? Valuation of defined benefit obligation. If you want to know more about that, note number 37 to the financials, you please refer. That is what they're giving. The company operates an exempted pension scheme for its employees. Based on management's assessment, the exemption status of the schemes calls for an automatic cancellation at the end of 3 years. Okay. The Supreme Court petition by various individuals represented so and so, all that. While the company believes that their scheme should now handed over to EPFO, since the same has not been accepted, the company has involved an actuarial expertise to evaluate the pension liability. Some employee benefit valuation, employee benefits related. Significant effort has been gone into the interpretation of the Supreme Court order, all that. The risk is that the judgment used for valuation could lead to an error resulting to an inappropriate valuation. Accordingly, this matter is designed as a, in view of the significance of the matter, we applied the following procedure in the area to obtain the evidence. Like you see, they discussed what is the issue here. Are they trying to object anything here, by the way? No. Is it materially misstated in the financials? No. They are talking about some issue that is going on. They are talking about some issue that is going on for which company has already accounted, everything disclosed honestly, nothing, everything is over. We are just discussing what is going on and how the matter was addressed in our audit. How in audit they tested it. So they tested some test of controls, then they tested some actual transactions, they verified values, computations, all that, and that's how they got sufficient appropriate evidence regarding that particular pension related program. Understood? What is key audit matter? Key audit matter. In audit, what is important matter according to you? You have done audit of Tata Motors, right? So many matters, so many issues you have verified, right? In these many issues, do you feel anything important that you want to share with us? By the way, emphasis of matter paragraph is different. Emphasis of matter paragraph is what? in financial statements, balance sheet, P&L notes, some important point is there. You want me to read that? Okay, tell me which point to read. Highlight in the audit report. I will go and read it. Here what I'm asking, you did audit, right? So many days you performed audit, right? So many matters you verified, right? Have you felt anything that is important according to you in this entire audit? That may not be highlighted in that may not be there in the financial statements. Key audit matter is not necessarily something about the matter disclosed in financials. Key audit matter can be a matter that is not even disclosed in financials. Suppose I can talk about a billing software. Company has recently implemented some billing software, and to understand that software we did so many works. I can talk about that in the key audit matter if I feel it is important in the audit. Sir, regarding that, no, accounting software, no discussion is there in the notes to account, sir. How come you talk in key audit matter? There is no such link. Discussion in the notes to accounts and financial statements is required only for emphasis of matter, because you have to highlight some. If you want to highlight, there must be something, right? Otherwise, how come you highlight? So emphasis can be used only if something is there in the financials and you want to highlight that, then only you can use emphasis. Key audit matter, no such link. If something is there in the financials, you want to talk about that in the key audit matter, good. Even if something is not there in the financials, you want to talk about some audit issue, the issue that you faced in audit, which you feel it is important, you can discuss it here. So key audit matters are nothing but those matters which caught attention of the auditor. Those matters which caught attention of the auditor. All those matters are called as what? Key audit matters. So key audit matters are those matters which caught significant attention of the auditor, and it is not necessarily something that is disclosed in financial statements. You may talk about something disclosed in financials under key audit matter, that is your choice, but that is not necessarily something that is disclosed in financial statements. So what auditor will talk, he is just explaining an example of how, what is important according to him and how he audited that. He is just explaining how he audits by taking one example. Which example he is taking? Whatever according to him he felt important in that particular year. Can I talk about previous year issues in the key audit matter? No, current period issues only I can talk in key audit matter. By the way, can I suppose company forgot to disclose something in the notes to accounts? Can I disclose the same in key audit matter? Key audit matter is not a substitute for disclosure in financials. There is a material misstatement in some notes to account. If there is a material misstatement, what should I do? Modify the opinion. Modify the opinion. Can I discuss it under key audit matter? So key audit matter is not a substitute for modified. By the way, here I'm talking about some pension, right? Defined benefit obligation, something, right? Am I giving separate opinion on this? No. Key audit matter is not a separate opinion. Is key audit matter a substitute for 570 material uncertainty related to going concern reporting? No. Then what is the purpose of key audit matter? Just to give additional information about the audit. Just I want to enhance the audit report value. Audit report is not a boring document just which contains opinion. Audit report contains key audit matter discussion, what auditor felt important in the audit, so I can share it. Are you getting it? How many you should give as a key audit matter? How many matters you should discuss there? Your choice. Either 1 or 2 or 3 or 5 or 10. State Bank of India auditors gave once upon a time 9 matters. 9 important issues they discussed. Is key audit matter useful to the shareholder? No, not at all. Just giving, that's it. Other matter paragraph is useful, emphasis of matter paragraph is useful, remaining are all useful. Technically speaking, key audit matter is not useful. What Tata Motors auditor doing? What is key audit matter? He told so and so pension related Supreme Court issue, something is going on. How he verified, he is telling. Why do I know? Why should I? How it is useful to me? What you did all that? Correct? Huh? Suppose you went to a restaurant and ordered some food. Chef is coming and explaining, sir, this is how I cooked. This is important dish for the day. This is how I cooked, sir. Please listen. Sit and listen. Before you have, sit and listen. Tell me how it is useful to you. Exactly. Key audit matter is exactly demonstrating that. Key audit matter is exactly demonstrating what according to auditor important for him in the current period audit. He selected that is important item. And right side, what is he explaining? How he audited that is explaining. Why I need that? Are you getting this? In order to give more transparency about audit, you are confusing me. Through key audit matter, auditors are confusing us, in fact, because they are giving unnecessarily extra information. As a shareholder, I will not have knowledge of key audit matter. CA inter audit students itself don't understand what is it. How a normal shareholder understand what is key audit matter? What he will think, something is going on, note number 57, what went wrong, he will think immediately. The moment he see key audit matter so and so issue, something is going on, he will think, correct? The possibility of misunderstanding is extremely high here. Then what to do? We want it to be more transparent. So key audit matter is compulsory for listed entities. Key audit matters are compulsory for listed entities, or if there is a requirement in law or regulation, then also you must give key audit matter. If at all auditor felt, okay, it is not compulsory, I am also not a listed entity, but I want to give something, I want to communicate in public interest, then also you can communicate key audit matter. Understood? Now, what is the purpose of key audit matter? To enhance communicative value of audit report by providing greater transparency about what audit that was performed, how you audit, why you are discussing all that. That's unnecessary for the shareholders. Key audit matter provide additional information to the users to help them in understanding the entity and areas of significant management. Tell me, when I'm communicating key audit matter, no, can I randomly pick any audit issue and then discuss? No. Which issues I will pick up? Those matters in the audit where I felt high risk is there, where I felt high judgment is involved, or the matter is related to a big transaction that is happened during the year, big event that is happened, significant transaction and event. These issues only I will discuss. No, key audit matter. Tell me, in audit of current period, no, generally what I will feel important? What I will feel important in audit? Either it is a significant transaction, or it involves significant judgment, or it involves significant risk. If something significant is there, that is why it is an important issue. If nothing is significant, immaterial, will I select it under key audit matter? Key audit matters. Determining key audit matters. How selection of key audit matter happen? How auditor can select? Auditor can select key audit matter from the following: areas of high risk or significant risk, significant auditor's judgment related to financials, or significant events or transactions. So any of these can be the reason why we are selecting key audit matter. Tata Motors selected defined benefit plan because significant judgment is involved in calculation of pension provision amount, where they used the help of actuaries and all. Significant judgment is involved. That's why they selected it as key audit matter. How should you communicate key audit matter? The auditor shall describe each key audit matter using appropriate subheading. Key audit matter you should communicate. Each key audit matter should be described with a subheading. Tata Motors did that, no? They directly didn't discuss matter. First they used a subheading, correct? Valuation of defined benefit obligation. In a separate section of the audit report under the heading key audit matters, Tata Motors used side heading key audit matters. Inside that section, subheading of each and every matter is given. So key audit matters are those in professional judgment were of most significant. This is how introduction you should give. And these matters were addressed in the context of audit as a whole. These matters were addressed in the context of audit of financial statements as a whole and in forming opinion, and auditors does not provide separate opinion. This is introduction language in the audit report. In audit report, this should be the introduction to the key audit matter. See, Tata Motors, they gave that introduction. You see. Key audit matters are those in our judgment were of most significant in audit of standalone financials of current period. These matters were addressed in the context of audit of SFS as a whole and in forming opinion on the financials, and we are not providing a separate opinion on these matters. This is the introduction language to key audit matter. Then you talk about each and every key audit matter with a subheading. You see, they have given subheading. One is relating to key audit matter. One key audit matter is relating to some deferred tax. Another key audit matter is relating to some pension, defined benefit plan. And some other key audit matter, only 2 key audit matters have selected. That's it. They have selected only 2 key audit matters. Easy. What they reported, what is the matter, how they audited. That's it. They are just discussing that. So that's about key audit matter. Now tell me, obviously, whatever matter you determined as a key audit matter, you must communicate it to the top management, right? You must communicate it to the top management. And if at all you decided, if applicable, if the auditor decided that there are no key audit matters, then Communicate the same to the management that there are no key audit matters, and also in the auditor report that there are no key audit matters. So key audit matters citing you will put, you will use the introduction language, all that. Below you will mention that in this year we determined that there are no key audit matters. This disclosure is required for which companies? Listed entities. Like for listed entities, compulsory key audit matter. Suppose you felt nothing is nothing is important in this audit, then say that it is nothing is important. Understood? So that's it. This is what 701 standard is about. Key audit matter is over. Next, so key audit matter is over. Now we are still left with material uncertainty related to going concern. Then if at all we discuss report on legal and regulatory requirements, majority this chapter will be over. Report on legal and regulatory requirement means what? CARO discussion, all that will come. Okay, so with that the chapter will be over. So 2 minutes, I'll continue. Let's discuss the continuation, material uncertainty related to going concern. This section of the audit report we should discuss nothing but we should now discuss 570 standard, which is there in the 4th chapter, completion and review. Which is there in the 4th chapter, completion and review. I will simply give you a diagram on that. So first, then I will show you the questions. Simple. See, going concern means what? Very simple. It's a fundamental accounting assumption is what we all know. So going concern is nothing but a fundamental accounting assumption. We think it is like fundamental accounting assumption. When this assumption can be used, we need to check whether company financial statements are true and fair. We need to check. When I saw the balance sheet P&L notes, the financial statements are prepared using going concern basis. Now my question is whether the company can use going concern basis or not is the question. What is going concern basis? Indirectly we are telling, don't worry, we are not closing the business, we are continuing the business. That is what the meaning of going concern. We are continuing the business. Now, okay, you want to continue, but can you continue? Is it possible for you to continue? Suppose no, company is continuously defaulting. Company is defaulting. They don't have money at all. They don't have money to pay salaries. They don't have money to run factory. Electricity connections and all were also removed already. No money, no power supply, nothing. Tell me, company is still saying going concern. Will you agree? No. We need to check whether the use of going concern assumption by the management, is it appropriate or not? We should check. That is what 570 standard is asking. So 570 standard is asking you whether, please check whether company can use going concern. I agree, the financial statements are prepared using going concern basis. Because company is preparing on going concern basis, fixed assets and all were shown at historical cost. Actually, the balance sheet fixed assets, if you see 100 crore value is there. Today, if you go and sell them, you don't even get 5 crore. You will not even get 5 crore if you go and sell. Then why are they showing 100 crore? Because I don't have intention to sell now. If I have intention to sell the fixed assets immediately as on today, then okay, 5 crore I agree. But I don't have intention to sell. I want to use these assets for next 5-10 years. By using these assets for next 5-10 years, I will generate more than 100 crore profits. More than 100 crore revenue I will generate by using these assets. That's why I am showing them under historical cost. Impairment loss concept, Impairment loss concept is this only. When impairment loss will be there? If at all recoverable value is less than carrying value, then there is a impairment loss. Recoverable value, how it is calculated? Higher of net realizable value or present value of discounted cash flow. Correct? Higher of NRV or discounted cash flow, that is recoverable value. If even this recoverable value is less than carrying value, then there is a impairment loss. I will not go in depth once again into it because you are supposed to know all this by this time. So I am showing at historical cost because I am not selling it right now. I don't have intention to sell. Okay, you don't have intention to sell. Can you hold the asset for another 1.5 years? Is it possible for you? Right now, when I see the bank statement, no, zero balance. Loans and all outstanding. Every day bank recovery people and all coming and asking. Employees are striking. How come you maintain these assets? You have to liquidate the company. You have to liquidate and then leave the assets. But the company prepared financial statements using going concern basis. That is inappropriate, right? That is inappropriate. Use of going concern basis is inappropriate in this case. So like this, I need to do evaluation. First of all, tell me who should do this going concern evaluation primarily? Management has to do. So management has to do a preliminary assessment of going concern. Management has to do a preliminary assessment of going concern. Whether going concern assumption used by the management is correct or not, preliminarily they should do this assessment. In this, no, auditor has to check whether any events or conditions identified. Any events or conditions identified. What do you mean by events or conditions? Nothing but symptoms. Nothing but symptoms of going concern is affected. Symptoms that going concern is affected. First, management will do preliminary assessment. They will do assessment. Every year they have to do this assessment. They will have a risk management committee. They'll have a committees and all. They will be continuously doing business risk assessment, financial risk assessment, credit risk assessment. So many ways they'll be doing. Now they will, in that assessment, no, sometimes they will identify some conditions, symptoms that affect going concern. What are these symptoms? These symptoms are further classified into three categories: financial indicators, operating indicators, other indicators. Financial indicators, operating indicators, other indicators. The going concern, the company's going concern, events and conditions that cast a significant doubt on the entity's ability to continue as a going concern. These events and conditions are called as indicators. There are indicators that going concern is affected. These indicators are classified into operating indicator, financial indicator, and other indicator. For example, negative working capital. It's a financial indicator. How come negative working capital? Can a bank balance be negative? In my pocket, either money will not be there or will be there. That's it. Either zero or something will be there. Negative money will be there. Obviously, no. Negative net worth means what? Negative working capital means what? All the liabilities you are paying by borrowing monies. Now, you are not having any assets. Only liability, net liability is there. How will you pay the liability tomorrow? Don't worry, sir. I have another loan. I will bring another loan, and business I am expanding now. Next year I will have profits. See, this is a picture. This is the trade analyst report, all that. I am showing the auditor that, see, my position, no. Right now the company position is negative. And auditor asked, sir, with a negative position, how come you run the company? Okay, right now you are having loan, you are running. Tomorrow in the next 6 months, you have to pay debenture holders money. This much amount is there, already negative, and 100 crore you have to pay now. Moreover, where will you bring? The managing directors, no, they replied, sir, don't worry, sir, we have this loan. We will bring that and then repay. How will you repay that loan, sir? That is repayable after 3 months again. Don't worry, sir, we will have another loan. I will repay that. What about business? What about profits? I am asking them. I concluded that these events and conditions, whatever is there, no, they are bringing into account, they are bringing a situation of material uncertainty. They are bringing a situation of material uncertainty about going concern. Okay, right now you defaulted, negative position is there, but still somehow you are running. Somehow you are running the company. Events and conditions are there. When I investigate further, I found there is a material uncertainty. Or I may even find there is no material uncertainty, but events and conditions exist. Some symptoms exist. Symptoms exist. What are the symptoms, by the way? What are the symptoms? Just a minute. So look at this. There are some symptoms. What are the symptoms? Symptoms are classified into financial indicators, financial events or conditions, operating events or conditions, other events or conditions. These are also called as what? Indicators. What indicators? That going concern is affected. The following are the examples of events and conditions that may create a doubt on entity's ability to continue as a going concern. For example, net liability position. Borrowings are approaching maturity without any renewal. Withdrawal of support by creditors. Negative operating cash flows. Unable to pay creditors on due dates. Inability to comply with term loan agreements, means I am defaulting installments and all. Operating, management itself want to close the business. Loss of key management, top management vacated, they left the office, nobody is there to run the company. Loss of market, loss of customer, loss of franchisee, labor difficulties, shortage of supplies. All these factors are what? Operating indicators. All these factors are called as what? Operating. Other indicators. Non-compliance with capital and statutory regulatory requirements. Sometimes, no, your financial position is good, operations and management, everybody is good, but you are not complying with the regulatory requirements. For example, Paytm Bank is there na, its license was cancelled by RBI because they are not following KYC norms. Regulatory norms they are not following. That's why suddenly one day RBI strictly passed an order, your banking license is suspended. You see, now Paytm is not being used anywhere. Earlier Paytm is having so much market, so much share. Now Paytm lost its credibility because of bank license suspension. Of course, Paytm wallet and all is functioning, but still, since bank license got cancelled, that news spread like Paytm is not working anything anymore. Entire credibility is lost, entire business is lost. How difficult it is to revive? Are you getting it? Auditors have to check whether any of these events and conditions exist. If so, are they resulting into a material uncertainty? Check out. Are they questioning going concern existence? Check out. Suppose no material uncertainty, once in a while companies will have a negative net working capital. That is common. So once in a while working capital can be negative. Why working capital negative? Because this year the company purchased huge raw material which are came in discount. So they purchased huge raw materials in bulk. Getting it? So that's why cash deficit is there. Technically assets wise and all positive, but cash deficit is there. So just because cash deficit is there, can I say working company is no more, company cannot continue? No. So even though sometimes some events and conditions they may present, but they may not bring into question material uncertainty. Whereas sometimes it will bring into question material uncertainty is there. Okay, material uncertainty is there. Now next evaluation. Is this material uncertainty turning into inappropriate? Is this material uncertainty turning into going concern inappropriate? When I further investigate, no, I understood that company future plan and all, nothing is there. No future plan, no alternative. Nobody is ready to provide finance to the company. Customers are not ready to buy goods and services from the company. Though initially I felt it is just an uncertainty, after further investigation I concluded that going concern is inappropriate. Now tell me, when going concern is inappropriate but financial statements are prepared using going concern assumption, is it misleading or not? Which opinion I'll give? Adverse opinion. If the financial statements are prepared using going concern basis, but in auditor's judgment going concern basis is inappropriate, the auditor shall give which opinion? Adverse. Suppose material uncertainty is there. You investigated further, company is showing you alternative plans, business plans and all they're showing you, they're explaining you. Sir, this is how we are going to revive, sir. Don't worry, next 1 year we will change everything. But all these are future plans and actions, no? How far they will be successful, I don't know. Right now going concern is okay. Right now you are fine. Somehow you are managing. But material uncertainty exists. But I cannot say you cannot revive. I cannot say that you know, sir, it is not possible for your company to overcome. It is not like that. I feel 50-50 chances. The company can overcome or may not overcome. That is a kind of possibility. Now tell me, material uncertainty is existing. Going concern is appropriate. But uncertainty is existing now. Air India situation, no? In 1920, exactly same. What happened is, Air India is having accumulated losses of 77,000 crore. They have 77,000 crore accumulated losses. More than 7 lakh crore. It was 7 lakh crore approximately. 77,000 or 7 lakh crore. Some amount is there, big amount. So much of accumulated losses. It is 77,000 crore. Accumulated loss of 77,000 crore. Net liability position, loss already. But Air India still chosen going concern, you know. How come with so many losses, how come you run? Already cash and all, reserves and all gone. No reserves, no cash. But still how come you choose? Because government of India is supporting. Every time Air India has to pay salary, government of India will release funds. So Air India is paying salary. Every time Air India has to pay creditors, government will release funds. Air India will pay. As long as government support is there, even though there are losses, Air India can continue, right? So what they said, you know, in continued support of government of India, we have chosen going concern is appropriate. But there is a material uncertainty. What is the uncertainty Air India is having? Until when government will support? One day suddenly government may withdraw the support and say, let us close the business. Yes or no? This is material uncertainty. So Air India disclosed that honestly in the financial statements. Air India honestly disclosed that in the financial statement. So Air India is facing material uncertainty that is honestly disclosed in financial statements. Now going concern is appropriate, but material uncertainty exists. What auditor has to do? Material uncertainty exists. What auditor has to do in this case? Check whether financial statement discloses this honestly. Check whether financial statements discloses this situation honestly. Suppose the answer is yes. Yes, company is very honestly disclosing everything clearly, what issues they are facing, what problems they are facing, and how they want to recover from this. All this feasible plans, plans and all, future plan of action and all, they're disclosing everything honestly, and they also admit it. These are all uncertain. Right now we are running, but these are all uncertainties that like that they honestly disclose. Tell me, then I should give which opinion? Unqualified opinion. But when I give unqualified opinion as it is directly without, no, by the way, tell me, financial statements are disclosing this, right? Uncertainty situation and all. Is this important for shareholders to read this? What should I do? We should emphasize that material uncertainty. What we should do? We should highlight it under emphasis. But this is not a regular matter to emphasize. This is something related to business life or death situation, going concern issue. I will not highlight under emphasis. I will put a separate side heading for this. What side heading? Material uncertainty related to going concern. I will put a separate side heading. Here I will highlight that. Material uncertainty related to going concern is also an emphasis of matter paragraph only. But we are not using emphasis word. We are using straight away the situation itself we are describing. What situation? Material uncertainty related to company's future. Material uncertainty related to going concern. I am using it directly that word. Understood. So I will highlight the situation under material uncertainty. By the way, by highlighting this like this, am I trying to say financials are misleading? Am I trying to tell people that financials are misleading? Am I giving any modified opinion? That's why under material uncertainty related to going concern side heading, I will draw attention to the note point. Look, in the notes to account, company honestly disclose, please go and read. At the end of that, I will also mention one more line. Our opinion is not modified on the above matter. You see here. So, you see Air India, material uncertainty related to going concern side heading. What are they saying? The company incurred so and so loss. Some 7,000 crore current year, 70,000 crore accumulated losses. Accumulated losses are 70,000 crore. Current year it is a loss of 7,000 crore, 7,700 crore. In spite of these events, in spite of this much loss, which is actually questioning going concern, the management is of the opinion that going concern is still appropriate. Why? Continued support of Government of India. And please refer note number 53. They are asking. If you want, you can go and refer. By the way, is auditor modifying anything? Is auditor objecting anything? No. Our opinion is not modified in respect of the above matter. Suppose events or conditions identified. I found some symptoms. And when I inquire further, it's a material uncertainty related to going concern. Right now it is okay. But there is an uncertainty. And company is not disclosing anything in the financials. I asked them, please disclose. No, sir. If at all we disclose all this, it will create a big mess. We will resolve it internally within next 1 year. No, not possible. You must disclose. Still, company is not disclosing. What should I do? Either qualified or adverse. Generally, since it is a disclosure fundamental to users, right? I will straight away give which opinion? Adverse opinion. Are you clear? Suppose I am the auditor of Reliance company. No events and conditions present. Everything is profit, cash flow is positive, management is super, operating indicator 0, financial indicator 0, other indicators, nothing is there. Events or conditions are not there. Now tell me, is there any question about going concern here? Going concern is appropriate. And already company prepared financial statements using going concern basis. Which opinion I should give? That is the standard. Are you clear? All of you? Now, suppose events and conditions are there. It is not resulting in material uncertainty. It is just sometimes some companies, they'll have negative situation. That's common. Once in a while, they'll have a negative net worth. Some symptom will be there. Suddenly CEO resigned from the company. But nothing wrong here. With the company management, nothing wrong. That CEO has some problem, he resigned. Loss of key management is operating indicator. So indicator is there. But when I further inquire, there is no effect on going concern. Should the company disclose those indicators in the financials? If there is a requirement under law, if there is a requirement in the framework, the company has to disclose. If accounting standards or some gap and all says that has to be disclosed, then they have to disclose. If they didn't disclose, no, even though there is a requirement, then I will give qualified opinion. If they disclose that even some conditions are there, but no going concern issue, but even some conditions they should disclose in the financials, they disclose, I will give which opinion? Unqualified opinion. As simple as such. That is what entire 570 is all about. So whatever I have covered, no, that is what here completely discussed. You see here. The first question, no, they are talking about why, what is going concern and how it is significant in financial reporting. This is not that important in exam. Write about responsibility for assessment of entity's ability to continue as a going concern. Whose responsibility to assess about going concern? Management. The preparation of financial statements require management to assess going concern. Even if the framework does not have explicit requirement, even if the accounting standard does not say you should check about going concern, every company should check on its own. That is compulsory. That's an implied requirement. Standard sometimes will not explicitly tell you that you should do this, you should do that. The moment you are using going concern assumption, before you take up that assumption, check can you use that assumption or not. Management assessment of entity's ability to continue going concern involves making a judgment about inherently uncertain future outcomes or events. Correctly, judgments about going concern is about what? Future events and conditions. Future events and conditions I have to check. Future events and conditions are uncertain, right? Are they inherently uncertain or not? Yes. Inherently means what? Can for somebody, will it be certain about the future? Who knows? Suddenly a big disaster happened in one's locality, that entire factory got demolished. Who knows? So management's assessments of going concern involves making a judgment about future which is inherently uncertain. The following factors are relevant to the judgment. So whenever management is thinking of going concern, they should consider the following. Future is uncertain. What is the degree of uncertainty? What is the size of the entity and complexity of the entity? What is the nature and condition of the business right now? Are there any external factors that affect my decision about these events and conditions? Any judgment about future is generally based on information available at the time when the judgment is made. See, today when I am saying that next year, next attempt, that so and so batch, all that, it is generally based on the information available right now. But my plans and all will affect later, no? That's it. What is the objective of the auditor? You should obtain sufficient appropriate evidence regarding appropriateness of management's use of going concern of accounting for financials. So management is using going concern basis, no, for financial statements. Whether that usage is appropriate or not, you should get evidence. When you are verifying like this, no, you may conclude whether a material uncertainty exists. If at all you conclude that material uncertainty exists, report as per this standard. That is what the standard objective. Write about responsibilities of auditor under 570. Of course, the original standard responsibility, all that is there. This is not that required, that much important. Yeah, first, this one is important. Question number 5 is very important. Write about risk assessment procedure and related activities related to going concern. Write about risk assessment procedure and related activities related to going concern. When performing risk assessment procedure as required by 315, the auditor shall consider whether any events or conditions exist that may cast a doubt on going concern. See whether management has already performed this assessment. If assessment is performed, discuss the assessment with management and see whether they have identified any events and conditions. Suppose management performed the going concern assessment. Ask them, do you found any symptoms? If so, check whether those symptoms are resulting in going concern issue. Suppose management is not performed. It is compulsory for the management to perform going concern assessment every year. If at all they didn't perform, how come you choose going concern assumption without performing any assessment? Ask them. That is what this point entirely says. And remember, you have to be skeptical throughout the audit regarding going concern. Now these are the examples. Now period of assessment. For what period company has to think about future? For how many months in the future they should plan about? Whatever company uses, no. Suppose company, this company, after 31st March, 2 years they're estimating. You should also estimate for 2 years. You should also check for 2 years. Suppose if the company is checking for me only 6 months, from balance sheet date. You should not agree. Minimum checking about going concern should be minimum for 12 months from reporting date. If company did assessment of going concern for less than 12 months from reporting date, ask the company to increase it to 12 months. Clear? Actually, on going concern, I have uploaded a video on the YouTube. Full in-depth video on the YouTube is there in 570, because there's a very lengthy concept. You can watch that and then understand from it. Like I will show you this, you can go with this. SA 570. 2 years ago itself I've uploaded 1.5 hour video is there on that. Okay, this you can see Air India, Ford, that situation in depth I have explained in that. Getting it? So you can watch that if you want to have a very good command on going concern. But this is one of the lengthy standard. Next. Suppose if auditor identified any events and conditions, who will identify these events and conditions? Primarily management. And when you are checking management workings, you will also identify these events and conditions. What you should do? You should do further audit procedure. What is the management's plans for future action? What is the cash flow forecast which the entity prepared? Any additional information available from the last assessment to today assessment? And or whether management is believing that these plans and all will work. Get a representation from them. Like by doing this further work, you will understand whether these events and conditions result into material uncertainty. If at all material uncertainty is there, if at all these events and conditions are resulting into material uncertainty. By the way, they'll give you this question. Write about audit procedure when events and conditions were identified that may cast a doubt on going concern. If you identify any events and conditions that may cast a doubt on going concern, what extra procedure you should do? Give some examples, they'll give you. 4 marks question they'll give you. You should analyze cash flow, all that. You should check latest financials. You should read the loan agreements and all. You should read the minutes of the shareholders meeting and top management meeting. You should talk to lawyers and all. You should see whether company has any borrowing facilities and all available, readily available. Why all these points I should check? If at all any symptoms were there, if any of these options were there, they can resolve it. They can get back into their original form, and somehow they can revive themselves. So that, see, when I identify some symptoms related to going concern, what I should check is there any possibility for the company to revive it? If at all there is no possibility, then I will classify that situation as a material uncertainty related to going concern. And that again may come into going concern is completely nil, inappropriate. Or going concern is okay, but uncertainty is there. If that is disclosed in financial statements, honestly, unqualified opinion, and I will highlight that situation in the uncertainty paragraph in the auditor's report. That's it. That is about auditor's conclusion and all that. This and all you have to read on your own. Getting it? If possible, in the next session I will tell you. So let's begin the discussion on this going concern, reading that matter, whatever. So, like once again, I just want to give you, the diagram also I discontinued in between, so I'll continue that. Auditor has to assess whether going concern assumption followed by the entity is appropriate or not. We need to. For that, the first thing that we need to check is management preliminary assessment. Whether management has conducted preliminary assessment related to going concern. Yes, of course they will conduct, they have to conduct. Check whether any events or conditions are identified. Whether any events or conditions that cast a doubt on going concern, are they identified or not, you have to check. Now these events and conditions, if at all these events and conditions are not identified, there is no such events and conditions, then we generally assume that going concern is appropriate, and we generally, in that context, we give unqualified opinion and proceed further. In that context, going concern context. Suppose if events and conditions are identified, then what I need to do? I need to perform further audit procedures. I need to perform what? Further audit procedures. Now if you look at this, the second question, not the second one, the fifth question is what? This is what exactly talking about risk assessment procedure related to going concern. So what is risk assessment procedure related to going concern? Question number 5 is actually talking about this. Auditor has to check whether management has conducted preliminary assessment related to going concern. In that, you see, whether when performing risk assessment procedure, the auditor shall consider whether events and conditions exist that may cast Doubt on entity's ability to continue as a going concern. How we will do this risk assessment? We will not sit and do this. Management would have already performed preliminary assessment of going concern. So that workings we will be checking. Suppose in doing so, auditor will determine whether management had already performed assessment. So the auditor shall be skeptical. So that is what preliminary assessment discussion is about. Now events and conditions means what? How events and conditions will be? These events and conditions are broadly classified into financial events and conditions, operating events and conditions, and others. Correct? And what is the period of assessment for this particular preliminary assessment? Management should minimum do assessment for how many months? 12 months from reporting. For that period you should also do risk assessment. In your risk assessment process, in your understanding of the entity and its environment and going concern understanding, first we will say management's assessments, workings, all that. For whatever period management conducted, for that period you will also check. If management conducted this assessment for less than 12 months, then we will ask them to increase it at least to 12 months. This is a primary responsibility. Then suppose we did management did assessment. We also looked into their workings, all that. Events and conditions are identified. Events and conditions are identified. Then I have to do further audit procedure. That is what question number 7 is about. Then we have to do what? Further audit procedures. That is what question number 7. What is further audit? When I will do further audit procedures in going concern? When events and conditions are identified that cast a significant doubt on going concern ability. How we identified these events and conditions? In our risk assessment process. What we did in our risk assessment process? When we are doing risk assessment about going concern, we evaluated management's preliminary assessment related workings, all that. In that context, we identified some events and conditions. Okay, you identified. What you have to do now? I need to do further investigation. Whether these events and conditions, are they resulting into, whether these events and conditions are they resulting into going concern inappropriate? Are they resulting into going concern inappropriate? We will investigate. After doing further audit procedure, we will get clarity. After evaluating further management plans, cash flow forecast, so many things, whether they have alternative financial arrangements or not, creditors are they ready to support the company, based on further factors, all that, I will see whether company can revive itself or not. If I conclude based on the management's future plan of action, all that, it is impossible for the company to revive, I will straight away classify the going concern as what? Inappropriate. Suppose if financials do not disclose this, if financials do not disclose the inappropriateness of going concern, what opinion I'll give? Straight away adverse, and in the basis for adverse opinion, I will give reasons. Now tell me, in this case, will that material uncertainty related to going concern paragraph comes? No, it will not. Why again? I gave adverse opinion directly, and in basis for adverse opinion, I will describe very clearly that going concern is not correct. It is not there. Financials are misleading. I will straight away say in basis for adverse opinion. Correct? Suppose I did further audit procedure. Management is trying to convince me, sir, we are having, these are the future plan of actions, this is a cash flow forecast, these are the assumptions behind the forecast, we are having some some financer is ready to help, some further funding, there are some people who are ready to fund us in private equity, private placement, like that. So somehow we will revive the company. But based upon that, what I understood is going concern is appropriate. I understood. What I understood? Going concern is appropriate. I understood. But there is a material uncertainty. Sometimes events and conditions will be there. Yes. Further audit procedure I will do. After doing further audit procedure, I will assume that going concern is appropriate and no material uncertainty. I will assume that there is no material uncertainty because I felt very feasible. The plans are very much feasible. The event and condition, the symptom, negative working capital, that and all is temporary in nature. In fact, as on before 31st March, there is a negative working capital. By the time I am doing audit and finishing, June, July month, it was already positive again. So it was a temporary deficit. So originally, in preliminary assessment, I found some events and symptoms. Then I investigated further audit. Then I investigated by performing further audit procedure. After that, I concluded that there is no material uncertainty. what we should do in this case? That is one question. Suppose what if I decided there is a material uncertainty? What if there is a material uncertainty? If at all there is a material uncertainty, I need to check whether the fact is adequately disclosed in financial statements. If at all the material uncertainty is adequately disclosed in financial statements, if it is adequately disclosed in financial statements, I will once again give which opinion? Unqualified opinion. But then, since there is a going concern issue which is disclosed in the financial statements where company is talking about uncertainty, whether the company can overcome or not, since there is a big uncertainty, I will give which opinion? So I'll give unqualified opinion. Since that point is very important, I will highlight that point. Yes or no? I will highlight. Under what paragraph? Material uncertainty related to going concern. Under this paragraph, I will highlight. Yes or no? Material uncertainty related to going concern is also an emphasis of matter para only. But instead of using the word emphasis, we are using specifically directly that situation heading itself. This is actually emphasis of para only. Now, like this you can highlight only when which opinion you give on the going concern? Unqualified. Suppose on the going concern, suppose financial statements are not adequately disclosing. Financial statements are not adequately disclosing. Financials are not at all disclosing. Tell me, can you highlight if at all they are not properly disclosing? If they are not properly disclosing, how can you highlight? First of all, you need to give which opinion? Adverse opinion, qualified opinion, and in the basis for qualified opinion, basis for adverse opinion, you should discuss what exactly happened. Now, in this case, will material uncertainty para will come again? No. Material uncertainty related to going concern is a paragraph in the audit report that is to highlight material uncertainty which is adequately presented and disclosed in the financials. This is just for highlighting something which is rightly presented. Are you getting it? Suppose if at all it is not presented properly, I will give modified opinion. When I am giving modified opinion, I will explain that in the basis for qualified and adverse. Once again, why should I highlight like this? Understood the logic? That's the logic. Now, and suppose going concern is appropriate, no material uncertainty, but events and conditions are identified. And when you performed further audit procedures, you concluded there is no material uncertainty, everything is fine. You need to check whether those events and conditions are disclosed. Those events and conditions are disclosed in financial statements as per applicable financial reporting framework. That's it. If the company discloses that events as per framework, that's enough. Otherwise, it's not required. For example, in Schedule 3, we need to disclose important ratios. At the end of the notes to accounts, the company has to disclose key ratios. And not only disclosing key ratios, what is the percentage of change in the ratio compared to last year? If the percentage of change is more than 25% from last year, why there is a change like that also, company should give explanation. Indirectly, by showing key ratios and all, company is indirectly disclosing the events and conditions, correct? By disclosing those key ratios, indirectly company is talking about financial events and conditions. Of course, we concluded what? No material uncertainty. This is what given in this next question. Question number 9. If at all, if the auditor concluded that management's use of going concern basis is appropriate, but a material uncertainty exists, what auditor shall do? You should first determine whether the financial statements adequately disclose these events and conditions, and clearly that there is a material uncertainty that the company may be unable to realize its assets and discharge its liabilities in normal course of business. They need to disclose what are all events and conditions that resulted in material uncertainty. Further, they should also tell openly that this uncertainty will result in a situation that I may not realize my assets and liabilities in ordinary course of business. If at all this uncertainty is not resolved, I cannot realize these assets and liabilities in ordinary course of business. That fact also you should discuss. Company should openly tell there is an uncertainty. If we revive, okay. If at all we are unable to revive, we have to close down the business. That hint should be disclosed clearly. Suppose events and conditions you found, further audit procedure you performed, but you concluded there is no material uncertainty. Okay, it is like a temporary deficit in working capital kind of. So originally I thought negative working capital means, oh yeah, what happened related to going concern. When I further investigated, it is nothing, not a big serious issue. In that case, no. But even some conditions are identified that cast doubt on going concern. But based on audit evidence obtained, auditor concludes no material uncertainty exists. The auditor shall evaluate whether the requirements of applicable framework, are they providing adequate disclosure? Is there any requirement under the framework to disclose these events and conditions? Check out. If there is a requirement and the company is disclosing them, very good. Suppose no, some symptoms are there. Of course, it is not affecting going concern. No material uncertainty, nothing. Going concern is not affected. I thought originally it is affected, but when I further investigated, nothing, no effect is there. And in the accounting standard or some schedule 3, it says any of these events were there, you should disclose. But company is not disclosing. What should I do? Qualified opinion I'll give. Not even adverse. Straight away I'll give qualified. Here, why I am giving qualified opinion? Because company going concern is not proper, but they are using proper going concern assumption. For that, no. Here, company is facing some situations that affect going concern, but when we further investigated, going concern is not affected at all. That and all is fine. But as per framework, they need to disclose these symptoms. Since they did not disclose the symptoms as per the framework, I am giving qualified opinion. That is the logic. Next, before. So, indirectly, suppose if events and conditions are identified. If events and conditions are identified, what is the next step I should do? Generally, management is doing preliminary assessment. When I am doing risk assessment about going concern, when I am trying to analyze about going concern, I will take management workings. And when I observe management workings and interpret, finally I concluded some events were identified. The moment when I see some symptoms, what I assume, they may cast a doubt on going concern. That is what I assume, right? What auditor has to do? You shall obtain evidence to determine whether or not material uncertainty exists. When events and conditions are identified, you should obtain evidence whether is there any uncertainty or not. For that, how will you get that evidence? You will do further audit procedure. So the auditor shall perform additional audit procedure, including the following procedures. What are they? Management's plans for future action. This point I will do. Management's plan for future action. Sir, you are facing this trouble. No. So what is your future plan to mitigate this issue? And whether entity has prepared a cash flow forecast. So what is the cash flow forecast? I will ask them, show me how are you going to mitigate this situation. And when I'm verifying cash flow forecast, I will see how the forecast is prepared. Is it prepared based on reliable data? And I will also see what assumptions they used for the forecast. Forecast means what? Future related. Anything future related is based on assumptions. I will see whether the assumptions are reasonable or not, whether there is a support or not. And management did this forecast and all 2 months ago. Now I am verifying these workings. Within this 2 months, is there any update? Whether any additional facts or information have been available since the date on which management made its assessment? And finally, I will also take a written declaration that whatever plans you showed me, whatever plan of action that you're going to implement that you told me, give me a declaration that you're going to implement it exactly. Give me a declaration that you showed me everything honestly about future plan of action. You are not dodging me. Like I will ask a declaration like this. So get a written representation that regarding their plans and the feasibility of these plans. Now, what are the examples of audit procedure when auditor identified events that may cast a doubt on going concern? They'll ask you a question like this. This is important in this. What are the examples of audit procedures if auditor identifies any events or conditions that may cast a significant doubt on going concern? Only after verifying this, I will get a conclusion whether going concern is appropriate or inappropriate, appropriate but material uncertainty exists, all that. Then only I will discuss about the reporting part. Then only we will think about the reporting. So what I will do, generally if symptoms are identified, I will analyze, I will analyze cash flow, profit and other forecast by discussing with the management. I will look at latest interim financials if at all available. Latest interim means what? Suppose I am doing audit of 23-24 financial year and I am finalizing this audit in August 2024. By the time I am finalizing this in August 2024, quarter 1 results are ready of the next year. So that is what latest interim financial statements. If at all they are available, that also I will check. I will read the minutes of the shareholders, top management meetings, committees meetings, financial officials meetings. I will see what they are discussing exactly. I will inquire lawyers regarding any litigations and claims that affect going concern. I will look at the confirmation about existence, legality and enforceability of financial support. I will see whether the company has adequate support from bankers, financial institutions. All these points I will check. By checking all these points, I will understand, okay, company can revive itself, no problem. Though some symptoms were there, the company can revive. It is of temporary nature, means no material uncertainty. Or I may conclude, what I can conclude is, alternatively, what I can conclude is, no, company cannot revive itself. All these plans and all will not work. No doubt about it. Forget about next 12 months. Right now itself, company is unable to honor. Already so many disturbances are going on. I will classify inappropriate, or I will classify mediocre situation. Right now it is okay. But what happens in the next 12 months, we also don't know. Material uncertainty is existing. So if you decide that there is a material uncertainty, what you have to do? If use of going concern base is appropriate, but a material uncertainty exists, if at all it is adequately disclosed in financials, what you will do? The auditor shall, if there is an adequate disclosure, the auditor shall express unmodified opinion. The report shall include a separate section called material uncertainty and draw attention to the note in the financials, state that these events create material uncertainty, but our opinion is not modified. Because why are we not modifying? Because everything is honestly disclosed. Suppose if the material uncertainty is not disclosed in financials, straight away I will give qualified opinion or adverse opinion, and the reasons I will explain in basis for qualified or adverse. Suppose who has to do this assessment primarily? Management. For minimum how many months? 12 months from reporting date. Suppose they didn't do this assessment, or they did the assessment for less than 12 months. When I asked them to extend it to 12 months, they are not extending. Management is unwilling for the assessment, or unwilling to extend the assessment as requested by the auditor. When management is unwilling to do, I will straight away give which opinion? Qualified or disclaimer. Why disclaimer? Management is not doing going concern assessment, so which means there is no information about going concern. If there is no information about going concern, which opinion we will give? Worst case, disclaimer. Easy now? So all these points, this is how they are connected completely. So whatever I have showed right now, that alone if you read, that's enough in this standard. So adequacy of the disclosure in the, this adequacy of the disclosure or not, whether the disclosure is adequate or not. So that is nothing but question number 7, I guess. Not 7, 9. That is actually what? Question number 9. You need to check whether material uncertainty is adequately disclosed or not. So regarding that, question number 9. Conclusions and reporting is there in the next question. Question number 10. Conclusions and reporting is there in question number 10. Clear? Even this one is also in the 9 only. This one is also in the 9. So question number 9, question number 10, question number 5, and even risk assessment procedure is 7, right? 7th question is what? Further audit procedure. Yeah, exactly. Additional audit procedure. I think that reference I gave now. Here I gave 7. That's it. In this particular standard, main important questions are 5, 7, 9, 10. But one more question I want you to study for sure is second question. So in this particular standard, 2, 5, 7, 9, 10. These 5 questions you need to compulsorily read. You can download, if at all any of you are not using this book, don't need to worry. Download the PDF and make a note of these questions. Correlate this with your study material, whatever you're following alternatively. That alone you read later. Enough. That's it. With this, going concern discussion is over. So now let's again go back to our audit report topic. So where are we? So material uncertainty related to going concern is also completed. Now let's discuss the further responsibilities. Another section in the audit report is responsibilities for financial statements, responsibilities of management for financials. In this, what we tell, management is responsible for design and implementation of internal controls so that the financials are free from MMS. Management is responsible to prepare financial statements as per applicable financial reporting framework. Management is responsible to provide us with access to information, additional information, unrestricted access to people, nothing but preconditions to audit is there, na? That entirely will be what? Once again reproduced in the audit report. In engagement letter, we'll tell what are the responsibilities. In audit report also, we tell what are management responsibilities to shareholders. Then I will explain to the shareholders what are my responsibilities. Then we will tell to shareholders what are our responsibilities. So auditors' responsibilities, what are they? Auditor responsibilities are broadly divided into three categories. In audit report, we communicate our responsibilities, right? These responsibilities we categorize into three categories. Primary responsibilities. What are the primary responsibilities? We explain them. Our objective is to obtain reasonable assurance whether financials are free from material misstatement and to issue report. And we tell them that reasonable assurance is a high level of assurance but not guarantee. And we also tell them that misstatements can arise from fraud or error. We also explain them materiality concept. Misstatements are treated as material if it influences decision making of the user. Like this we will tell. This is primary responsibility. Further we will tell them what are the responsibilities under various standards we have. We tell to the shareholders in the audit report under auditor responsibility section what are the responsibilities we have under various standards. Look, we have to do risk assessment. We tell them this. We will tell them that we have to do risk assessment, and we tell them that, just a minute. So yeah, by the way, sorry for the interruption. Yes. So in the auditor responsibility section, we have we need to talk about three categories of responsibilities. One is primary responsibility. Primary responsibility is what? To give opinion whether they're free from MMS, reasonable assurance. Reasonable assurance is a high level of assurance. Anything, any misstatement that affect decision making process, we consider it as material, yes or no. That point we will mention. Additional responsibilities under SAS. What are all the responsibilities that we have under various standards on auditing? What are the responsibilities we have under various standards on auditing? That also we will explain. So what are the responsibilities we have? One is to conduct risk assessment. And we just tell them we are responsible to identify and assess risk assessment, all that. Then we explain them about we understand internal controls. Then we explain them about we verify accounting policy. Then we explain them that we will verify going concern. Then we also tell them that we are responsible to check overall presentation structure in case of fair presentation framework. This fifth point comes when the financials are prepared using fair presentation framework. We are responsible to check whether financial statements, overall presentation structure and content, including various disclosures, are they representing underlying transactions and events so as to achieve fair presentation or not? That also we will have to tell. Then finally, communication responsibilities. One more responsibility what we have? Communication responsibilities. Here what we will tell, auditors are responsible to communicate with top management any matters, especially planned scope and timing of the audit, significant audit findings, significant deficiencies in internal control. This is what we are going to learn in 260 and 265. What are all auditor has to communicate? That's a responsibility of auditor, right? So one is responsibilities under various standards. One is communication responsibilities. One is primary responsibilities. So three parts we will communicate. In exam, they'll ask you very clearly, write about communication responsibilities of the auditor that are included in auditor's report. So that means you just have to write only this answer. Further in case of listed entities, auditor has to provide top management with a statement that auditor has complied with the ethical requirements. What auditor has to communicate here, we will discuss in the SEA 260. In case of listed entities, we have to communicate independence to the top management. Further, key audit matters that are communicated, whatever key audit matters you determine, that generally key audit matters will be selected by you from matters that are communicated with top management. See, only if it is important you discuss with top management. Whatever you discuss with the top management, from those discussions only key audit matters are selected. The logic is what? Important audit issues are something you always discuss with the top management. That is why from there only you will be selecting it. So both are same. The moment you call it as key audit matter, it means you already discussed with the top management. So that is why they say key audit matters are to be selected from those matters which are communicated with those charged with governance. So that is regarding responsibilities discussion. Understood? Now another important question in this, location of responsibilities. Location. Where the description of auditor responsibility section, where location, description Auditor responsibility section is there, right? Where it should be? Obviously, it should be within the body of the audit report, correct? Within the body of the audit report. Suppose you see Tata Motors, after key audit matter, after management responsibilities, they have given here itself. Within the body of audit report only they discussed. Or as an appendix to the audit report, in which case auditor report shall include a reference to the location of the appendix. To the audit report, you can give it as an appendix or annexure. Suppose you see CARO, no? We will not give in the audit report directly. Of course, we give in the audit report, but we tell them that refer annexure 1. I will show you. CARO and all, we tell them that refer annexure 1. For example, you see this. This is audit responsibility section, right? You see here. Report on other legal and regulatory requirements. Below that, CARO points has to be added. But what are they doing? Refer annexure A. Refer annexure A. Like this, responsibilities of auditor can also be given as an annexure. How CARO annexure we are giving, same way auditor responsibility can be given like that also. One, where auditor responsibilities should be placed. For first point, within the audit report you can include, as an annexure you can include, or by a reference in the auditor report to the location of that description on a website of an authority where law explicitly permitted. Suppose if the law specifically says why to discuss responsibilities of auditor and all, anyhow people won't read, but it is important point, I understand. Put a side heading responsibilities, refer website link. So that to people, no, they just type that website in their phones and they want to see, they will read the responsibilities by opening the website. This kind of option can be done when only when law explicitly permit this. If law is silent on this, we should not do that. We should include responsibilities of auditor within the audit report only. In India, we present it within the body of audit report. Even in many countries also, we present auditor responsibilities within the body of audit report. Understood? Now, when you give disclaimer of opinion, no? Now you see auditor responsibilities, so many we are discussing, right? But this discussion and all is not required when you are giving disclaimer of opinion. If auditor is giving, like if the auditor has expressed a disclaimer of opinion, if auditor has expressed a disclaimer of opinion, you see, description of auditor's responsibilities for audit, when the auditor disclaims opinion, when auditor is disclaiming opinion, how responsibility section will be? This much length and all is not required. What is the use of knowing your responsibilities? Because you have not given opinion itself. When you have not given opinion, we are not bothered about your responsibilities, all that. You just talk about primary responsibility and the fact that you didn't give opinion. Enough. If at all auditor gave a disclaimer of opinion, how responsibilities description will be like? The responsibility description will be, when auditor disclaims an opinion due to inability to obtain evidence, the auditor shall amend description of auditor responsibilities to include only the following. Means whatever 700 says, no, all the points that you have to talk, primary responsibility, other responsibilities and standard like risk assessment, internal control, accounting policy, going concern, fair presentation, communication responsibility, all that is not required. When you gave disclaimer. So when you gave disclaimer of opinion, only the following points you include in responsibility section. What you will include? A statement that your responsibility is to conduct audit. A statement that because of matter described in basis for disclaimer of opinion, we were not able to obtain evidence to provide an opinion. But also mention that you are independent of the company. Also mention that you are independent of the company. You see, when you gave a disclaimer of opinion, basis for disclaimer section will not contain general responsibility discussion. You only talk why you didn't. Basis for disclaimer opinion, you just talk about why you are disclaiming the opinion. And below auditor responsibility section also, you will not talk about primary responsibility, additional responsibility. Yeah, nothing to worry. Just a minute. Yes. So like so when auditor gave disclaimer of opinion, you just mention the following. You will not be discussing like your primary responsibility, additional responsibility, communication responsibility, all that you will not be discussing. You will be straight away explaining that you are responsible to do audit. Because of so and so issues, I am unable to do audit, and you just mention that I am independent of the company and I have complied with code of ethics. That's it. Only these 3 points you will mention, nothing else. Further, we all know that whenever we are disclaiming an opinion, we are prohibited to include key audit matter. We are prohibited to include key audit matter when we gave disclaimer of opinion. And that's it. So with this 705 major discussion is completed. Yes. So that's it regarding description of auditor responsibilities when auditor has explained disclaimer of opinion. One more important thing, if key audit, if at all you are giving disclaimer of opinion, key audit matter is prohibited. I think I didn't cover that point. When auditor has given disclaimer of opinion, there is no question of key audit matter. The logic is very simple. When you have not covered predominant audit, the reason why you are giving disclaimer of opinion, where is the question of key audit matter? How come an important audit discussion and all will come? First of all, you didn't give opinion. You see, key audit matter in introduction language. Key audit matters are those which are selected from matters that are communicated with those charged with governance. These matters were addressed in the context of our audit while forming an opinion on the financials. That is introduction, right? You didn't form opinion, no? Why key audit matter will come? It will not come because it is prohibited. You are not giving opinion, which indicates that you did not get evidence, which indicates that you did not do audit of major items. Then where is the question of key audit matter within the minor items you did? Understood the logic? You did only little coverage. Within that, how key audit matter you can select? Only when you do audited entirely, then you can select on the basis of entirety what are key audit matters you can select. By doing little audit and not doing major portion audit, where you give disclaimer of opinion, obviously how come you select key audit matter in a right way? Correct? That is why communicating key audit matter is prohibited when auditor expresses disclaimer of opinion. Everything is quite logical. Then we have another one. Suppose management imposed a limitation after auditor has accepted the engagement. Suppose if at all management imposed a limitation before you accepted the engagement, you will not accept it. Before you accept the engagement, if at all there is a limitation on scope, you will not accept. That's what we have seen in 210. After accepting it, if they put a limitation, first I will request them. If after accepting management has imposed a limitation, we request management to remove the limitation. Suppose if management refuses to remove, means they are not ready to cooperate. I will see I will try to get evidence in an alternative way. Management is not giving me information that I want. They are not letting me to speak some people. I want to meet external legal counsel, but they are not letting me to talk. I will try to gather evidence through alternative procedures if available. Suppose if at all auditor is unable to obtain evidence, ultimately management is refusing, alternatively also I am not able to get evidence. I will see what is the possible effect. What is the possible effect of undetected misstatements? If the possible effect of undetected misstatement is material but not pervasive, which opinion I'll give? Qualified. Suppose if the possible effect is going to be both material and pervasive, I will never give disclaimer straight away. I will withdraw from the audit where it is possible. Wherever it is practical, I will withdraw from the audit. When a situation comes that I have to give a disclaimer of opinion, I will not disclaim the opinion. I will resign from the audit. If withdrawal from audit is not permitted, not practicable, then I will disclaim the opinion. Like when it is not practicable, sir, disclaimer of opinion, issuing of disclaimer, withdrawal from audit is not practicable when in SEBI listed entities, if at all you gave 3 quarters review report, you have to compulsorily give audit report of the full year. You can't resign within that. These regulations are called as LODR regulations, listing obligation and disclosure requirements. SEBI listing obligation disclosure requirement, there they have given rules for resignation of auditor. Inside that they will tell you timelines. If at all you want to resign within 45 days from the end of the quarter, what is the procedure? If you want to resign after 45 days from the end of a particular quarter, what is the procedure? If at all you are giving review reports of 3 quarters, what is the procedure? They gave some limits, rules and all. So as per that, if at all you are doing audit of listed entity, just like that you can't resign. You have some obligation there. If withdrawal is not possible, for example like this, and I have to give audit report, but I'm not getting evidence, and the evidence nature is material and pervasive, what should I do? Disclaimer. Disclaimer of opinion I'll give at the last moment. But the moment you decided to withdraw and you're withdrawing, until the date of withdrawal, whatever misstatements you identified, some mistakes you would have identified, communicate it to the management. If auditor decided to withdraw, before the withdrawal, communicate to those charged with governance any matters regarding misstatements identified during the audit that would have given rise to modification of the opinion. Whatever mistakes that you identified, because of which you may require to modify the opinion, all those mistakes, nothing but material misstatements. Whatever material misstatements you identified, communicate it with the top management and then resign. That's it. So at least you performed some audit, no, give the result of that, show it to the management and then resign. So with this 705 is majorly discussed. 705, that itself is given as a diagram here. So now I'll go back to this. Next, auditor responsibilities over. Other information which is 720 standard, which is not there in CA Inter. Then signature of the auditor, how auditor has to, like what auditor has to do with regard to signature. Signature of the auditor, below we have given some issue, you see. The audit report shall be signed. The report is signed by auditor in his personal name. In case of firm appointed as an auditor, it may be sole proprietary firm, partnership firm, LLP. Where firm is appointed as an auditor, the report is signed in personal name of the auditor and in the name of the firm. And not only that, you should also put MR and membership number and firm registration number wherever applicable. And not only below signature, after I'm mentioning MR and FR and all that, you should also mention the place where you signed. The auditor's report shall name specific location which is ordinarily the city where ordinarily auditor signed. Then you should also date the report. Auditor should also date on which date you signed. That can the date of audit report be earlier than the date on which you got the evidence? Obviously not. Only after getting sufficient appropriate evidence only you can do. Once you signed, do you have any responsibility to do any audit procedure? Is there any responsibility for you generally to do audit procedures after you sign the audit report? Nothing. You will not have any audit procedure. Audit procedure means what? Verification procedure. Why you do audit procedure? To get evidence. Evidence means what? Information. I must do entire evidence collection before signing the report, correct? Which means I must have done entire verification procedure before I must have signed. All the audit procedures, evidence collection must be completed before signing the report. Further, can I sign the audit report before the date of approval of the financials by the management? What do you mean by approval of financials? Board of directors are signing ultimately the financials, saying that this will be issued to the public. Correct? These financial statements are what ultimately issued to the public. That is why we are attesting. We are signing it. Board of directors are signing it. Authentication. Authentication of financials. That authentication signifies, that authentication explains these financials, balance sheet, P&L, finalized balance sheet, finalized P&L. This is what we are going to issue to the public. On that financial statements only you should give audit report, right? Suppose a company prepare draft financials one, final financials are another. Will you give audit report and draft a final? Final financials means what? How do you know this is final? They signed already. Which means only after they sign the financial statements you can date the audit report, correct? Date of audit report means the date on which you gave the audit report. So you can give audit report only on or after the date on which financials are approved. You see, the date of audit report shall be dated no earlier than the date on which you obtain sufficient appropriate evidence and the statements that comprise financial statements and those with recognized authority have asserted that they have taken the responsibilities. That is what actually called as what? Approval. The date of audit report cannot be earlier than date of obtaining sufficient appropriate evidence, cannot be earlier than date of approval of the financial statements. Logical or not? That's it. The date of audit report informs the user that the auditor has considered all the events and transactions which auditor became aware of up to that date. 31st March is the closing date, but I am signing audit report on 10th June. Indirectly, what am I telling to the people? Up to 10th June, whatever subsequent events were there, they are also considered by me, don't worry. That is what the date of audit report implies. So that's about date. And finally, we should also attach what? UDIN number. UDIN number is nothing but a 16-digit alphanumeric, 16-character alphanumeric number. This is like a digital signature. This is like a what? Digital signature. Suppose you see my signature is this. Very simple. Anybody can forge. Yes or no? Strike you will not get. So this is my signature. I chosen it consciously because I want to make my signature very simple because I have to send so many papers. In my articles itself I decided the signature. So easy. Getting it? Even if you copy also, I don't mind. I'll give my membership number also. You can take 239714. This is my membership number. Go to any stamp vendor, 30 rupees stamp. You'll get my stamp also. Getting it? But the document is not valid because you will have to put UDIN number. Without UDIN, document is not valid. Any document that I sign is not valid in the capacity of CA. In the capacity of CA, if I sign any document, that is not valid. On my checkbook, membership number will not required, right? But today, when you, even if a check went to a bank, more than 50,000 rupees any check, they call and ask, sir, is it the one you signed? Correct? They'll ask. So everywhere controls were there. But any document, if you go with my sign and stamp, that will not work because UDIN number is not there. UDIN number can be generated just like a SSP portal. I will have a UDIN portal. So only with my membership number I can log in. Then what document I am signing, that information I should enter into the portal. Then it will generate one number. That number I need to put on the paper. Only then the paper will be valid. Getting the point? So suppose you see Tata Motors, at the end of the audit report of Tata Motors, you see the auditor signed, so and so person, so and so partner, membership number, firm name, firm registration number, all that. You see here there is a UDIN number. You take this number and go to UDIN portal. Go to UDIN portal. ICI space UDIN. The moment you open it, it will show some phone number like that. Verify UDIN button is there. Verify button you click. It will ask your phone number, all that. Anybody can enter. You take this number and go and verify. Whether this fellow only signed or not, you will get their information. This portal is maintained by ICI. In that portal, UDINs are generated by members only. Others cannot generate. Understood? So that is UDIN number. UDIN is like a powerful signature now. So nobody, even if somebody forged our signature, nothing to worry. Because where is UDIN number? I can ask simply. This UDIN is mandatory with effect from 1st July 2019. It is mandatory for all reports and certificates that are issued by auditors. For all certificates and reports. For all the certificates and reports, UDIN is mandatory. Whatever certification you are doing, whatever reports that you are giving, UDIN is mandatory. Next. Then we have one segment in the audit report. So place of signature we completed. Place of signature we completed. Date of audit report is completed. UDIN is also completed. So the one and only which is pending is report on other legal and regulatory requirements. Report on other legal and regulatory requirements. So let's discuss the last section in the audit report, that is report on legal and regulatory requirements. You may, within the audit report, see today audit report is not just containing opinion. We are talking about important points in the financials. We are highlighting. We are explaining them, what are all I am responsible for, what are all I am not responsible for, other matter paragraph. We are explaining what are the important issues in our audit and how we resolved it. We are explaining. We are explaining uncertainty related to going concern issues, all that. And whenever we are modifying, we are explaining why we are modifying, all that reasons. We are explaining them, what are all our responsibilities, all that, what are management responsibilities, all that. So much informative. Not only that, public want to know your opinion on various matters. For that, central government through law or through regulatory. Regulatory means what? For example, SEBI is a regulatory, RBI is a regulatory, IRDA is a regulatory. Regulatory may have some reporting requirement for you. Regulator would have told you, under regulatory, there is a reporting requirement for you. What does it mean? In the audit report, as per the regulatory requirement, they have given some issues. You need to verify those issues and specifically report on those matters. Where you should report to the regulatory? No, you should report them in auditor's report. Right now, we don't have any regulatory requirements, but we have a legal requirement. What is the legal requirement? Under Companies Act, section 143, we have these sections. Subsection 1, subsection 3, subsection 11. Under these three sections, company law is asking you to report on various matters. Subsection 3 has approximately 16 matters. Approximately 16 matters were there, where you should specifically comment, where you should specifically tell whether it is rightly done or not rightly done, all that you should tell specifically. 143.1 has some 6 inquiries. You need to inquire on 6 issues and come back and report in the audit report. And under subsection 11, through central government, there is an order which is released that's called Companies Auditors Report Order 2020. Under this order, 21 clauses were there. On all these 21 clauses, you should report. Now, what is the reporting requirement? The reporting requirement is under 143 subsection 3, 143 subsection level CARO, whether you got a positive answer or negative answer, both you must report. Whereas 143 subsection 1, if it is negative, you report enough. Positive, no need to. Positive, no need to report. It is not that compulsorily don't report. If you want to report positive also, you can report positive, no problem. But generally, under 143 subsection 1, what is the reporting requirement as per the guidance note? Only if it is negative, if you report, that's enough. If at all, 143 1 subsection 1, 6 inquiries were there, you inquired. You got a positive answer everywhere. Positive evidence you got everywhere. No need to talk about it. But 143 subsection 3, 16 matters. You should talk about it. 143 subsection 11, 21 matters. You should specifically talk about whether you have a positive evidence or negative. Whether your opinion is positive or negative on that, you should specifically talk. So totally how many were there? 21, 16 plus 6. 21 plus 16, 37 plus 6, 43 matters approximately. How many? 43 matters were there. Approximately 43 matters you need to talk. It's not just opinion. Today audit report, we are giving shareholders our perception on 43 variety of issues. On 43 issues, we are giving our opinions to shareholder. Financials are driven well, that's okay. But we are giving them various insights into the company. We are giving them various insights into the company through these 43 variety of matters. Now in that, let us discuss first one, CARO. Let us discuss CARO 2020. So what is CARO 2020? So this is CARO 2020. So first of all, to which companies CARO 2020 is applicable? It is applicable for all companies, which means the auditors of every company, including foreign company, when he is giving audit report, must and should inside the audit report, under the section report on legal and other regulatory requirements, must talk about these 21 clauses. He must talk about these 21 matters. Whether he has a positive answer or negative answer or non-applicability of that clause. All the three auditor has to specifically mention. However, CARO does not apply to banking companies. It does not apply to insurance company. It does not apply to company licensed under Section 8. Nothing but Section 8 company, 1-person company, small company. What is a small company? Small company is a company where paid up capital is less than 4 crore, turnover is not exceeding. So then if these two conditions are satisfied, that company is called as straight away what? Small company. If at all you are the auditor of a small company, you need not talk about CARO. You need not specifically give any opinion on CARO points. Or suppose yours is a private limited company. Yours is a private limited company where there are 4 conditions given. If these 4 conditions are satisfied by the private limited company, they also not required to report on CARO. What are they? Private limited company, not a subsidiary, not a holding company of a public company. Private limited company which is not a holding company, which is not a subsidiary company of a public company. Paid up capital and reserves and surplus shall not exceed 1 crore as on balance sheet date. Which balance sheet date? Previous year or current year? Current year. Whatever the financial statements you are auditing, no, that balance sheet date. As on the balance sheet date, paid up capital plus reserves and surplus, if you total it, it shall not exceed 1 crore. Paid up capital includes equity, preference, everything. Reserves and surplus includes all types of reserves, even revaluation reserve is included. Total borrowings from banks and FIs only. Borrowings from related parties, that and all not covered. Only banks and FIs. Financial institution includes what? NBFCs and all will come under FIs, financial institutions. Total borrowings from banks and financial institutions shall not exceed 1 crore. When? As on balance sheet data? No. Throughout the year, at any point of time during the financial year, in the entire 365 days, on any day, if I total my borrowings amount, it will not cross 1 crore. That is the condition. Or my turnover as per schedule 3 shall not exceed 10 crore. If a private limited company whose turnover is not exceeding 10 crore, whose borrowings are not exceeding 1 crore throughout the year, whose paid up capital and reserves shall not exceed 1 crore as on balance sheet date, who is not a subsidiary or holding of a public limited company. That private limited company is exempt from CARO. But you need not even check this. Most of the private limited companies by default comes under small company. Forget about here, paid up capital is 1 crore, turnover 10, but small company has 4 and 40. If at all a private limited company, suppose the moment you are doing audit of it's a private limited, small company is a private limited company, right? By the way, can a public limited company get the status of small company? Only a private limited company get the status of small company, correct? Like, will the company register as a small company? No. Small company is a classification given. If your turnover is less than 40, paid up capital less than 4 crore, directly you're small company, that's it. Are you clear? Now tell me, what is the relevance of this 1 crore and 10 crore? Tell me. Why this relevance? Useless. Now you may tell, like, how come they drafted like this, sir? No, when CARO originally drafted, this was drafted in 2011. These limits were drafted when? 2011. At that time, small company concept itself is not there. Moreover, original small company definition is what, paid up capital 25 lakhs. Getting it? Not even 25 lakhs. Yeah, paid up capital, some less than 5 lakhs or 20 lakhs, something is there. Originally, when small company is defined. Then turnover is something less than 10 crore. Some 2 crore or 3 crore is there. Paid up capital 25 lakhs, turnover is 2 crore. That is the original limit of small company. So that time we apply small company limit. If it is not a small company, then we will come to the last category and we will see if this is also not satisfied, then CARO is applicable. But later small company limits were increased. How they were increased? They were increased to 4 crore and 40 crore. Because of that increase in the limits, this increase happened in 2021. This increase happened in which year? 2021. From that year, this last one is the right private company, this lost importance. Right now, practically, this point you need not even read. Why? By default, every private limited company comes within the definition of small company. The moment it comes within the definition of small company, CARO do not apply. However, if at all that private limited company has a subsidiary which is government company, public limited company, or if the private limited company is a subsidiary of a public limited company, for them alone we apply CARO. Whether it is a small company or not, we apply CARO because it has a link with the public limited company. By default, government companies, public limited companies, all of them CARO is applicable. Understood the logic? So if turnover, paid up capital, this information completely given, you should not confuse. It is classified as a small company and CARO is not applicable. Now in exam, if MCQ comes on this, they gave options like small company, private limited company, which option you have to select? Small company you select directly, by the way. Blindly you select small company, CARO is not applicable. But if the paper is set by senior citizen, there is a 5% risk. That fellow will cover like this. That fellow will consider this answer. He will ignore small company point and he will consider this answer. So there is a possibility like that. But generally, whenever multiple answer possibility is there, both the answers will be given marks. Whether you write this answer or this answer, for both marks will be given. Understood or not? If a descriptive question comes, you can give a reason below. Private limited company provisions we need not apply because the company is already classified as a small company and hence accordingly CARO will not apply. That's it. Now, by the way, now these limits were given, no? Turnover limits, paid up capital limits, all that is given for private company, right? If at all that limits we have to check, for example. How we will check that limit? Branch wise or total company wise? Obviously total entity, company wise we have to check these limits. So we will not check branch wise. Now we have 21 clauses, right? 21st clause is applicable only for consolidated financial statements. 21st clause is applicable only for consolidated financial statements. 21 clauses is there, right? 21st clause is applicable only for consolidated financials. Actually, CARO do not apply on consolidated financials audit report. You need not give CARO report in the audit report which is dealing with consolidated financials. CARO is applicable only for those audit reports which are given on standalone financials, not on consolidated. But for consolidated financials, only one clause is applicable, that is 21. 21st clause is not applicable for, 21st clause is not applicable for standalone financials. When you are giving audit report on standalone financials, 21st clause is not applicable. If the 21st clause is applicable for consolidated financials. Actually, 21st clause is only dealing with consolidation aspect. Suppose if the company does not have any consolidated financials, all that, you need not cover 21st clause also, because that is not applicable. Understood? Confident? We'll discuss. Now, what are the matters to be included in auditor's report? What are the matters to be included in auditor's report? There is a video in the YouTube where I revised all the 21 clauses in 8 minutes. I explained. Just that I don't read. I explained 8 minutes. It's like in my CA final recent session, I do cumulative revision. In the class itself, I do cumulative revision. First, I explain the concept. Then once the chapter is over, before going to the next chapter, I will revise the entire chapter. Entire audit report, I hardly revised in 1 or 10 minutes. That too, they have more than, like these number of standards. They have 12 standards in audit report in CA final. 12 standards plus entire discussion plus CARO, all that put together, I revised in 1 or 10 minutes. In that CARO portion alone takes 8 minutes. I gave that, you can find that in YouTube, in my channel, you can find that. So even in the upcoming my CA inter audit also, I am implementing that structure, where we will have a concept book, one question bank and one MCQ book, where we will discuss one chapter, and when we are going to the next chapter, we will revise that chapter and then go to the next chapter. When we are going to the third chapter, we'll revise these 2 chapters and then go to the third chapter. When we are going to the fourth chapter, 2 and 3 will revise and then go to the fourth chapter. When we are going to fifth chapter, 3 and 4 will revise and then go to the fifth chapter. Like that, within the class itself, we will be doing 2 times revision. Along with the discussion, 2 times revision. And we will also solve, next edition onwards, we will also solve ICA illustrations, test your knowledge. Anyhow, that we solve every time. Now onwards, we are also solving past examination questions, 6 attempts of questions in the class itself. The moment the concept is discussed, the chapter is over. The chapter related all past examination questions, RTP, MTP questions also we are solving. So that we implemented at CA final audit this year only. CA inter audit also I'm going to implement from next month. So like very simple, we just want to have a one-stop solution for whatever the subject they're joining with us. In all our subjects in Sreshta, we are going to do the same. Just that we want to make sure the student will not look for any other resource. He should not have confusion. Why I didn't cover this, I didn't cover question bank, I didn't cover past examination. No, we are only discussing that too in the class itself. One-stop solution. So in that process, I revised. Now for you see, almost I'm spending more than 5 hours on audit report chapter. Almost close to 5 hours we spent on audit report in this revision. But if it is as a part of class, no, it will be hardly 1.5 hours. Because immediately, just now we discussed regular, immediately revision means 1.5 hours. This is a separate revision apart from regular. So here the timelines are different. So fixed assets. What are the points that you need to check in fixed assets? You see, what are the points that you need to comment in fixed asset? You need to talk about fixed asset register. You need to talk about physical verification. You need to talk about immovable property, revaluation, and disclosure of Binami. What you need to talk with respect to register? No. Auditor has to verify. You have to verify whether the company is maintaining records showing full particulars, including quantitative details and situation of PPE. Fixed asset register means nothing but whenever a company purchases asset, no, they record it, when it is purchased, where it is installed, date of purchase, amount of purchase, all the details. Like big companies, so they'll have thousands of assets. So they will maintain a asset register. Whether the company is maintaining asset register or not, they're asking you. Asset register must contain what? It must contain full particulars. It must contain full particulars, including quantity, how many assets were there, situation, where the asset is installed, the details must be there inside that. So whether the companies that you are doing audit, is it maintaining that register? They are asking you. If the asset register is maintained, say that it is maintained. Tata Motors, you see, they give a positive opinion. Yes, the Tata Motors is maintaining fixed asset register which contain full particulars, all that. Second one, what they are asking, not just purchasing and maintaining register. Periodically, the company should check whether assets are really existing or any assets were lost. Yes or no? They should check. So whether these fixed assets are physically verified by management at reasonable interval. Whether any discrepancy were noticed on the verification. If so, whether the same were properly dealt in Books of accounts. Second question they're asking, dear auditor, we don't know what is happening inside the company. You ask management, you check the workings, whether management is physically verifying these assets whenever, periodically, reasonable interval, check out. If they don't verify physical assets, if they don't verify fixed assets physically, there is a chance that employees may take it as an advantage and steal those assets. So see whether company has a program of physical verification. You see Tata Motors, they clearly mention the company has a regular program of physical verification of fixed asset once in a 3 years. Entire fixed assets will be verified over a period of 3 years. By the time one laptop they see, again by the time they come back and see this physically after 3 years. Within this 3 years, what they will be doing? They will be verifying all the factories, all the godowns, everything. They will be going and verifying the fixed assets. It takes 3 years for Tata Motors management to physically verify all of their assets. And 3 years, considering the size of Tata Motors, considering the controls they implemented, it is proper. Generally in big corporates and all, you can't do anything. You can't take the fixed asset outside the campus. It's impossible because everywhere security screening will be there. 9 feet, 9 feet, 11 feet compound walls will be there. Electric fencing will be there. Everywhere gate, biometric authentications will be there. Sensors will be there. Radars will be there. How can you take any asset out of the company? It's not possible. You can't take anything out of the company. You can't take anything inside the company also. So the pakka proofreading will be there. Everywhere pakka like foolproof controls were there. In such an environment, once in 3 years if they verify, that's enough, right? Next. Immovable property. What they're asking, you should check whether the title of immovable properties are held in the name of the company. If not, provide the following details. Title of immovable companies having in the fixed assets, they showed some land and building, immovable property. Are they in the name of the company? They're asking. If not, suppose if the immovable property is shown in the balance sheet, but that is not registered in the name of the company. Why? What is the property? Description of the property. What is its carrying value? It is held in the name of whom? Why it is not held in the name of the company? Like Tata Motors and Reliance, they gave one disclosure, 70 crore worth of some land and building which was acquired in the amalgamation was not yet registered in the name of the company. The process of registration is going to take very soon. Except that rest of the immovable properties are in the name of the company. They gave that reason. Now next question they're asking, whether the company's fixed assets, whether the company's fixed assets are revalued, whether the company has revalued its property, plant and equipment. Are they revalued? Okay, revalued. What I need to check? Is it done by a registered valuer? We need to check what? Is it done by a registered valuer? VCS can do registered valuer case, registered valuer course. These chartered accountants can do registered valuer course. We can be registered valuers only for financial assets. We can be registered valuers only for financial assets. Property, plant and equipment. Can a CA do registered evaluation of these property, plant and equipment? You can't. How can you verify property, plant and equipment? Can I value this building? I don't have that competence. Can I value machineries? I don't have that competence. Equipment and all I can't. If you want me to value shares and securities, I can value because I can see financial position, performance, all that. Based on that I can value what is the price of the share. Financial assets only we are permitted to value, being a registered valuer from ICA. Plant and machinery valuation, property and equipment valuation, VCS cannot do. So when property, plant and equipment is revalued, they are asking you, who did this revaluation? Company just like that did, or registered valuer was appointed and then conducted? So that they are asking. 2. Okay, registered valuer is appointed. If the change is 10% or more, if the change is 10% or more in the aggregate of net carrying value of each class of plant and machinery, net carrying value of identify. What is the net carrying value? Gross carrying value minus accumulated depreciation is equal to net carrying value. Yes or no? Impairment, all that. Net carrying value you will get. For each class of machinery, for example, in balance sheet, fixed assets total is there. 100 crore is there last year. This year 120 crore is there. And the reason is because of revaluation. Don't directly report that. That is not how you should check. Fixed assets breakup you see. Plant and machinery how much? Furniture how much? Equipment how much? Vehicles how much? Each class wise you should see net carrying value difference. If the revaluation, because of revaluation, if the percentage of change is 10% or more in the aggregate of net carrying value of each class of machinery, each class of asset. So if for a particular class, suppose furniture is there, 10,000 items are there in the furniture. aggregate of all 10,000 items, but furnitures only. Because furniture put together is one class of asset. Within the furniture, total class of furnitures, net carrying value, how much you see? This year, how much revaluation amount happened? If it is more than 10%, it may be upward or downward, doesn't matter. If it is more than 10%, you should report it. You should report it. Tata Motors said revaluation is not done. And now last one, they are asking about disclosures relating to Binami property transaction. They are asking disclosures related to Binami property. Like what is it? Whether any Binami transactions proceedings are initiated against the company. Whether any Binami proceedings are initiated against the company or pending against the company. If so, disclose the details. Whether if so, we don't disclose. We will have to check whether the same has been disclosed in the financial statements. Whether the same has been disclosed in the financial statements. You know, all this revaluation point, disclosure of Binami, immovable property, these 3 points were there, right? These 3 points, every company must disclose in Schedule 3 also. The company must disclose all these 3 points in Schedule 3. You will have this point in items of financial statements chapter. When you are doing PPE, verification of PPE point is in a property, plant and equipment. There below it, they have given additional regulatory disclosures. These points every company has to disclose. Company will disclose. You should also check and comment in the CARO. Clear? The next one is inventory. Second clause in CARO is what? Inventory. What I need to check in inventory? 2 points you should check. 1, physical relation point you should check. Physical verification point you should check. 2, working capital loan point you should check. What is physical verification? Very simple. Check whether the company is conducting physical verification of inventory at a reasonable interval. Tell me, physical verification of inventory reasonable interval is much shorter than fixed assets, right? Fixed assets can be verified once in 3 years, 4 years, no problem. But inventory must be verified at least once in a year. There is a guidance note on CARO. The CARO guidance note says, auditor shall not give a positive opinion if company has not conducted physical verification of inventory at least once in a year. Means minimum yearly once. See, closing stock valuation you have to do, right? How will you do closing stock valuation? Only by physically verifying the inventory, physically counting the inventory, condition and all you assess it. Then you will value NRV, all that. Then you will arrive with the closing stock value, correct? Even for valuation of closing stock, you must physically see the inventory, you know. So once in a year, physical verification of inventory must be done. So auditor has to check whether inventory has been physically verified. If at all there is a differences on physical verification. If there is a difference on physical verification. How much a difference? Whether any discrepancy of 10% or more in aggregate for each class of inventory. What do you mean by each class of inventory? Raw material, work in progress, finished good. These are 3 class of inventories. Each class of inventory means not item number A, item number B, item number C. No, not like that. There are only 3 classes of inventories as per Schedule 3. Raw material, work in progress, or it may be finished goods. The company may be dealing with hundreds of products. That doesn't matter. These products are classified under either raw material, work in progress, or finished goods. If finished goods are physically verified, if we find differences, shortage or excess, if the shortage or excess is 10% or more in the each class, I should report it. Tata Motors replied, there are no material discrepancies found. Second one, with respect to inventory, working capital loan point. What is it? Working capital loan. What is it here? They are asking whether at any point of time means even on one day, whether the company was sanctioned working capital limit in excess of 5 crore. Is the company sanctioned with working capital loan of more than 5 crore? If yes, in aggregate, the company was sanctioned with the working capital loan of exceeding 5 crore from banks and FIs on the basis of security of current assets. Of course, without giving security, banker will not give any loan. So by keeping current assets as security, banker gave you a working capital limit. How much limit? More than 5 lakhs. What limit they are asking you? Sanctioned limit they are asking you, not drawing power. Drawing power means what, you know? Very simple. Sanction limit versus drawing power. Suppose I have the capacity to repay every year 10 crore. But banker will not give you that 10 crore loan directly. They will give you sanction. Yeah, since you have repayment capacity of 10 crore, I will give you 10 crore limit. But give me security. Only then you can withdraw the loan. I gave you. Sanction limit is 10 crore. I sanctioned you 10 crore. But if you want to use that loan, give me security. I gave 7 crore worth of security. Suppose I gave to the banker 7 crore worth of security. How much he will allow me to draw? No. Out of 7, 30% margin they'll keep aside. Security margin. Asset values will be fluctuating, na? 5 crore only he will allow me to draw. How much he will allow me to draw? 5 crore only he will allow me to draw. So now tell me, though I was given 10 crore sanction limit, how much I am allowed to draw? Now here, are we seeing drawing power or are we seeing sanction limit? Sanctioned limit only we are seeing. Drawing power company might have got 2 crore only. That doesn't matter. The moment the company got a sanctioned limit of exceeding 5 crore, this clause is applicable. Okay, company has got sanction limit more than 5 crore. Tata Motors have got. What I should check? You should check whether, whenever you were given any sanction limit for more than 5 crore, no. Whenever you are having working capital loan, no. This working capital loan sanctioned limit drawing power will be varying every quarterly basis. So every company, whoever have got this loan, no, they should quarterly submit quarterly current asset statement. Quarterly working capital statements they need to submit. In that statements, what many companies do, they inflate. What they do? They inflate. Whatever normally there in the books of accounts, in books of accounts stock value is 2 crore. But when they are submitting to the bank current asset statement, no, they will show 3 crore. So that they will get a higher drawing power, higher withdrawal power. Like that companies are doing. Now, regulatory has specifically told in company schedule 3, every company shall disclose the following fact. How much is the current asset as per books of accounts as on for every quarter? For every quarter you filed a statement with banker, right? In that how much you showed. Company has to show in schedule 3. Notes to accounts they need to disclose. And auditor has to check whether company did this kind of manipulation in the statement while filing with the banker. So whether the company did any manipulation like this while filing statements with the banker, auditor has to check. You see, whether quarterly returns and statements filed by the company, are they in agreement with the books of accounts? This point came applicable from 2021. This entire CARO 2020 was applicable from which year, for the first time? 21-22 onwards. In 21-22 financial year, what Tata Motors auditor replied here? The statements filed by the company with the bankers are in agreement, except they listed all the banks in India. Except all the quarters they listed. Instead of saying the statements are not matching with books of accounts, what they said cleverly? Everything is matching except statement filed with the State Bank of India, except statement filed with ICICI Bank, except HDFC Bank, except Yes Bank, except Axis Bank, except Central Bank, except for Q1, Q2, Q3. All other statements filed by the banker or all other statements filed by the company with the bankers or agreement with the books of what else is there? If you negatively give, companies will not agree. That's why they gave like this the report. Later, 22-23 audit report, 23-24 audit report, it was rectified. The company itself is not doing because now they need to disclose. They need to disclose. 2021 year only onwards this requirement came. First year all the auditors have qualified on this in every company, CARO report. Because what is their balance, what is the value of current assets in books of accounts, that is different. What information they are showing to bankers, that is different. Understood? Next. Investments, guarantee, security, loans or advances. What is this point? This is very simple. Whether during the year the company has provided any loans or advances in the nature of loan or stood guarantee or security to any entity. Means whether the company gave any loans and advances to third parties. Whether the company gave any loans and advances means asset. Loan given is asset for the company, right? Whether the company gave any loans and advances. If so, how much amount of loan? What is the total amount of the loan given during the year to subsidiary, joint venture and associates? To subsidiary, joint venture and associate, how much amount of loan given? What is the balance outstanding at balance sheet to them? Auditor has to report it here. And how much amount of aggregate amount given to other than subsidiary, joint venture means others. How much you gave to subsidiary, joint venture, associate? How much you gave to others? What is balance outstanding of the loans and advances given with the subsidiary, associate, joint venture, and what is balance outstanding with others? That's it. That's the first sub point. Second, okay, company gave loans, fine. Are the terms and conditions reasonable? Are they not prejudicial? Are they not unreasonable? Are they reasonable or not? They're asking. Terms and conditions means what? Interest repayment, all that. Are they reasonable terms and conditions or not? They're asking. Okay, in terms and conditions, company gave loans to so many people, and terms and conditions are also reasonable. Are they repaying regularly? The third question they're asking is what? Are they repaying regularly? Whether the principal and payment has been stipulated and the receipts are regular. Suppose no, if the amount is overdue, like somebody is not paying, if at all the amount to overdue is for more than 90 days, what steps a company has taken to recover them? You need to check and report all this. Further, during the year, did the company give any extension in the loan repayment period to any party? Because company, I gave a loan to somebody and I gave them extension, or I gave them a fresh loan so that the existing loan they'll repay, or I rescheduled the loan. What I did? I rescheduled. So whether any loans were rescheduled, or term is extended, or fresh loan is granted, renewed, extended, fresh loan to meet the existing, any such kind of loans given to anybody? If so, what is the total amount of such loans that are renewed, extended? What is their percentage to the total loans given during the year? During the year, company gave 100 crore worth of loan, out of which 20 crore were like this only. They are not fresh loan. They are not altogether a new loan. They are loans to repay existing loans. They are rescheduling, or they are for extension purpose. 20% of the total loans given are something like default state loans. These are all called as doubtful loans, we call them as. So they are asking us to report this. Next, whether the company has given any loans, they are asking whether company gave any loans which are repayable on demand, means demand loans. Is the company gave any demand loan? They are asking. Or did the company give any loan without any repayment period? If so, how much amount the company gave? What is its percentage of total loans given during the year? This year company gave 100 crore total loan, and to my subsidiary company I gave a demand loan 20 crore. 20% of the total loans given during the year are demand loans. Tata Motors have given this discussion. Tata Motors have given this discussion. You see third point inside this. According to the information explanation given to us, in our opinion, the company has not granted any loans which are repayable on demand without specifying terms, except loans and advances given to promoters and related parties. Except loans and advances given to promoters and related parties, there is no other loan which is given to outsiders. That's it. Then fourth clause is not that important. Fifth one, deposits. Whether the company has accepted any public deposits, you need to check whether company has accepted any public deposits. If so, okay, many companies go for public deposits, whether they complied with Companies Act provision, whether they complied with RBI provisions, whether they complied with company law guidelines. If there is any non-compliance, what is the nature of non-compliance, you should tell. Tata Motors said they didn't go for any deposit, so this clause is not applicable. Cost records point, sixth clause. Whether the company is maintaining cost records, you need to check and report it here. If the company is maintaining the records, no, you need not do detailed verification. Are they maintaining or not? Check out. If they are maintaining, come and report positively here. Next, statutory dues. The next one is what? Statutory dues. Just 1 minute. Yes. Statutory dues. What auditor has to report here? Statutory dues are broadly divided into two types. Under CARO, reporting requirement for statutory dues, it is broadly divided into two categories. Undisputed due, disputed due. Disputed due means very simple. Department sent you a notice that you have to pay extra tax. You didn't agree. You went to the next higher level authority that I will not pay. Why should I pay? Now the case is under forum, pending. The case is pending at a particular forum. Now, whatever pending cases like this is there, not disputed dues. We call them as what? Disputed due. That list you have to give. You just have to give what? List of disputed statutory due. What is a statutory due? Any tax and duty that you have to pay to governmental authorities. That is called as what? Statutory due. Is electricity bill statutory due? No. Electricity is not a tax, no. It is a goods. You can touch and feel. Correctly? Electricity is a goods. So stored, moved from one place to another place. It's a consumer product. If you don't want electricity, you can disconnect the meter. Happily, you can stay without electricity. It is not compulsory, no. But can I pay income? Can I not pay income tax like optionally? Like if you're earning income tax, you have to pay for sure. And here in income tax, are you buying any goods and services? Are you getting any benefit by paying income tax? Except rental satisfaction? No, that also we will not get. We get satisfaction that others are not paying, I am paying. That's it. Fine. So that is disputed. What is disputed? In case dues have not deposited. In case dues have not been deposited on account of any dispute, the auditor shall indicate what is the dispute, what is the amount involved in the dispute, where the forum, where the dispute is pending. You see Tata Motors, how they will disclose. They will disclose like this. So and so income tax, some amount relating to 1992, 1996, 97, before you were born. The case is pending in where? The amount is pending at High Court. Some central excise, 1991, 92, before I was born. High Court, some 13 crore amount is pending. Finance tax, service tax, something related to this. They just give information. That's it. You just have to give what? Information. What are all the taxes and duties that are pending in various forum? Forum means it may be court, High Court, Supreme Court, it may be income tax appellate tribunal, it may be central excise appellate tribunal, customs tribunal, whatever it is. Next. What is the next point, by the way? Undisputed. Undisputed dues are nothing but every entity has to pay every month some taxes and duties. Provident fund every month they have to pay. TDS, whatever they collect from employees, no, whatever they deduct, no, that they have to pay every month. GST has to be paid every month by next month 20th. Like that, every month the company voluntarily has to pay, right? Correct? Those taxes and duties which company has to periodically pay are called as what? Undisputed dues. Those are called as what? Undisputed statutory. Okay, what auditor has to check here? Is the company regular? Is the company regular in depositing undisputed statutory dues with various authorities? Is the company regular in depositing undisputed statutory dues with various authorities? Regular means what? Every month they are paying. That one, huh? Regular means within due date. Regular means what? Within due date. Is the company regular? Means what? Within due date. If not, means some amounts are not paid within due date. You should report. No need to report each and every delayed payment. You should report if the amount is outstanding as on 31st March. What is the arrears of outstanding due as at last day? Last day of the financial year means what? 31st March. As on 31st March, some tax is outstanding. That was outstanding from when, you know? More than 6 months from the original due date it was. I am doing audit of 23-24. 31st March 2024, if I see the balance sheet liability side, other liability, GST payable is there. I thought it is February month. When I open and saw, it is August related month. It was originally payable by September 20, but the company did not pay. And even on March 31st also, it is not paid. How many days from September 20 to March 31st? More than 6 months. That amount I should mention in the audit report in CARO. That this much amount of tax and duty belonging to more than 6 months outstanding even as on 31st March company. Suppose before 31st March they repaid. As on 31st March is it outstanding? No. As on 31st March if there is no outstanding, no need to report. As on 31st March taxes are outstanding. Some employee provident fund amount is outstanding. ESI amount is outstanding. Advance tax is outstanding. And it was originally due for more than 6 months. Then only you should report. You will have an MCQ questions on this. Are you getting it? Every topic wherever I'm telling you, either it can be tested as an MCQ or it can be tested as a descriptive. Don't believe in important questions concept. That is lottery method. It may work, it may not work. Next. So that's about, you know, statutory dues. Are you confident? Next. Discovery of undisclosed income. Whether any transaction not recorded in books. Have they been surrendered or disclosed as income during the year under tax assessment? If so, whether the previously recorded income has been recorded in the books of accounts. Nothing but during the year company income tax assessment went on. When they further investigated, they discovered so many undisclosed incomes which are not disclosed by me belonging to earlier years. Now the income was disclosed and I also agreed and I paid tax also. Now I surrendered extra income which I did not disclose earlier, right? Any item of income or expenditure that is omitted earlier but now discovered, what is it? Prior period item. It should be recorded in current year, na? They are asking that only. If any income is disclosed to the department in the current year belonging to prior periods. If so, is it recorded in the current period at least as income? Not as a current year income. We will record it as a prior period item. So whether it is done or not, they are asking. Next. I will come to 9th clause later. It is there, it is important. Related party transaction. Whether clause number 13, whether all the transactions with related parties, companies transacting with related parties, so many, whether these transactions are compliance with section 177, 188 of the Companies Act, they're asking. Are they complied with 177 audit committee provision, 188 powers of the directors? So whether they are complying with related party provisions or not, they're asking. Whether the details that were disclosed, are they in compliance with the accounting standards? Related parties, they're asking two questions. Are the related party transactions conducted as per Companies Act? Okay. 2. Whatever related party transactions company did know, they all have to be disclosed as per accounting standard in notes, right? At one place, whether it is disclosed or not, they're asking. So you should check and comment here. If it is positive, positive, negative, negative. Then internal audit system. Whether the company has internal audit system commensurate with the size and nature of the business. For some companies, no, internal audit is compulsory. 138 section is there. There is a section called 138. What that section says, internal audit is compulsory for various entities. So if internal audit is compulsory for various companies, whether the company established internal audit department, they need to check. You need to check. For namesake they established. There is no number of persons, sufficient number of people are not there. You should qualify. Clear? What happened? Able to follow? You have not studied all this? And internal auditors will do audits, right? They will prepare reports. You as a statutory auditor read those reports. You must read those reports. They are asking in CARO whether the reports of internal auditors were considered by statutory auditors. Have you considered internal audit reports? They are asking. Is internal audit department there? Is it sufficient? And have you read those reports? They are asking you. See how many questions they are asking. They are not just leaving you by giving opinion. You gave opinion, financial statements, right or wrong, or something you gave. But what is happening in the company, we don't know. As an outside shareholder, I don't know anything about the company. Is the company maintaining internal audit properly? Are they physically verifying the assets regularly? Are they maintaining proper books of accounts and all? We don't know all this. Is fixed asset register maintained or not? Revaluation done right? Who did this revaluation? See how many questions they are asking. Company gave loans. Are they collecting regularly? On what basis they are giving loan? On what terms and conditions? If at all somebody is not paying, what action company is taking? See how they are asking. So they are knowing affairs of the company through auditor. Public getting to know affairs of the company through auditor's report. Audit report is a much more valuable document today. Clear? We'll take a break and then continue. We'll take a break and hardly another 15 minutes, probably another 15 minutes, CARO will be over. Then we will start documentation chapter. Okay, we will finish documentation also in this session only. So let's continue the pending clauses in the CARO. So let's come back to the 9th clause. 9th clause is dealing with default in repayment of dues. Default in repayment of dues. Nothing but it is dealing with borrowings. Which borrowings? Any borrowing. Whether you borrowed it from banks, financial institutions, debenture holders or government or anybody. Whatever borrowings that you borrowed, have you defaulted? So they are asking you whether it is defaulted. See, balance sheet shows outstanding amount very clearly. They happily show balance sheet, outstanding amount. Now today, parallel disclosure requirement is there in Schedule 3 also. Whether the company has defaulted anybody, there is a requirement also in the Schedule 3 itself. And auditor also check whether the company has defaulted anybody. and report under CARO. Whether the company has defaulted in repayment of borrowings to banks, FIs, debenture holders or government. If so, the period and amount of default has to be reported lender wise. Lender wise, to whom you have defaulted, you should give details. What are they? What kind of borrowing? Working capital loan, fixed loan, term loan, building loan, what? Name of the lender. Amount not paid on due date. How much is defaulted? Is it principal, interest or both? How many days it was a delay? If at all rectified by the company, no, sir, they paid late, belatedly they paid. That point you mentioned, remark. Under remarks you mention something else. Whatever, anything else you want to mention, you mention that. Whether the company is declared as a willful defaulter by any lender, bank, FI or any other lender. Is the company declared as a willful defaulter? They're asking. Is the company declared as a willful defaulter? For what purpose? Purpose of term loan, nothing but some entities, no. We borrow loans and loans from banks or FIs based on some purpose, specific purpose. For what purpose you borrowed? For what purpose you are utilizing? Whether the term loans were applied for the purpose they were obtained. Suppose if at all not, the amount so diverted and the purpose for which it is used may be reported. If the loans were not applied for the same purpose for which they were brought, you have to report it. Whether funds raised on short-term basis have been used for long-term purpose. Whether funds raised on short-term basis, are they used for long-term purpose? If so, the nature and amount. What is the nature of for what purpose you have used? For what purpose you brought? For what purpose you used? That nature has to be indicated and amount has to be indicated. Because if you are borrowing short-term loans and using for long-term purpose, it will create a liquidity crisis. How can you repay them? And have you taken any loan? Whether the company has taken any loan, for what purpose? Not for the company needs, but for subsidiary company needs. Whether the company has taken any funds from any entity on account of to meet the obligation of the subsidiary, associate and joint venture. If so, details thereof with the nature of the transaction and amount in each case has to be reported. So from whom you have taken any loan and for what purpose, for which subsidiary company, joint venture, associate you have given it. How much amount you have given it. Have you taken any loan by keeping securities under pledge and got the loan? What securities? You have securities in subsidiary companies, right? You having shares in the company, right? Because of which you are become a holding company. Those shares you kept as a security with the banker and got a loan. By keeping pledge of securities held in subsidiary, associate, joint venture, you got a loan. Is there any such incident? Is there any default in that loan? If you default any loan where you pledged securities of various companies, if you default, banker will assume the ownership. When banker assumes the ownership, you will lose the status of holding company for them. That is the impact. So whether the company has raised any loan during the year on pledge of securities held in subsidiary, associate, joint venture, if so, give the details. Also report whether the company defaulted in repayment of those loans. Next. Now you see borrowings, loans and advance, loans and borrowings we saw. What about I am raising money through share capital? What about that? That is covered under clause number 10. So what clause number 10 speaks about? Clause number 10 talks about whether the company raised any IPO, FPO. Are they utilized for the purpose for which they were raised? Whether the company raised any money by way of initial public offer, further public offer, have they been utilized for the same purpose for which they were raised? One question they are asking, loans and borrowings used for the same purpose. Here they are asking share capital you raised no money, IPO, FPO, whether it may be through debentures, preference shares, equity shares, whatever, for what purpose you raised and are you utilizing it for the same purpose? Suppose you did not go for IPO, but you went for private placement. Even in private placement also, you are raising it for some purpose. For what purpose they were raised? Are they used for the same purpose they are asking? They are testing, they are asking us to test. And if it is private placement, see section 42 has been complied or not. That also you have to check. Suppose if at all you raised money in IPO or FPO, getting it, and you are not using for the same purpose for which it was raised, what is the default? For what purpose you use default? Delay means suppose you told shareholders that I am going to use that money within 3 months, but you are not using it. That's called delay. or you used it for some other purpose, later you rectified it. You got some money, 10 crore for construction of building, but you didn't use, paid salary. Later, upon collection from debtors, again you constructed the building, means subsequently you rectified. Ultimately you constructed a building. Getting the point? So that's called subsequent rectification. Even if you rectify also, you should report. Next, reporting of frauds. What is it? Reporting of frauds. Here, 3 issues that we need to discuss. One is regarding frauds identified by management itself. One's fraud identified by management. Another one, fraud identified by auditor. Second point is dealing with what? Frauds identified by auditor. First one is what? Frauds identified by the management. Whether any fraud by the company or any fraud on the company. By the company means what? Company management doing fraud on third parties or internally, whatever it is. Whether any fraud on the company. On the company means what? Third parties might be doing fraud, employees might be doing the fraud. So whether any fraud by the company or on the company, are they noticed or reported during the year? If yes, nature and amount involved has to be indicated. 20 to 23 financial year Tata Motors, if you see CARO report, the auditors clearly mentioned that there is a fraud noticed for an amount of 15 crore rupee, which is committed against the company by employees, 3 employees, collusion. And the fraud is committed in vendors. Vendor fraud means purchases related fraud. They mention. So if yes, nature of the fraud, purchase related fraud, amount 15 crore, that has to be indicated. Suppose 143 subsection 12. What is 143 subsection 12? Reporting of fraud to central government when the amount is exceeding 1 crore. When the amount is 1 crore or more than 1 crore, if auditor identifies any fraud for an amount of 1 crore or more than 1 crore, he shall inform the same to central government within 60 days by filing ADT 4 form. If the fraud is less than 1 crore, you just have to inform it to audit committee or board of directors, as the case may be. What you need to report? Nature of the fraud, amount involved, parties involved. Now board of directors, in the board of directors report, they need to give these details along with what action they have taken. This is completely. Now under 143.12, have you filed the ADT 4 form? Like have you reported it to central government, any fraud like this? That you need to report. In CARO you need to report, dear auditor, have you filed any form with central government where the amount is 1 crore or more? If so, please report in the CARO also. Let people know that you complain to central government. Whistleblower complaints. Every company will maintain something called whistleblower policy. They'll have something called whistleblower policy, whistleblower mechanism. Means if something suspicious is happening in the company, the employees of the company will be aware of that they can file a complaint to the top management through whistleblower policy. Like that every year, many listed companies, they will be receiving complaints through whistleblower mechanism. You as an auditor should consider those complaints. You read those complaints when designing and performing your audit. As under risk assessment, we read these complaints. So through these complaints, we will understand where and all possible frauds are happening. So whether auditor has considered whistleblower complaints received during the year by the company. They are just asking one thing. Have you considered this complaint when you're doing the audit? That's it. If so, okay, happily mention that you considered. Nidhi company, in the last attempt, I think it was asked. Nidhi company. See, don't think like if last attempt it was asked, it means September it won't be asked. Never. Examiner is not loose like us. He will not think like that. Do you think examiner will keep a paper aside, may attempt a paper, that should not be tested? No. He will see the question, he will see the concept, book. Whatever he feels that is sensitive and important, he will test that. That is the discretion given to the examiner. Within the book, anything he can test. So he will not see whether it is coming in the last time or this time or no, all that. I have a proof that in 2024 May attempt, CA final, FR and SFM has same question, CA final 2 papers were there, FR and SFM. In both of these papers, there is a chapter called Economic Value Added Statement. In CA final FR it is there, CA final SFM also the chapter is there. Same question came in that attempt, 8 marks here, 8 marks here. Think of it, those who studied Economic Value Added, that chapter perfectly. Simple chapter. I answered in both the cases and I qualified that attempt. So don't think. And before attempt only they asked that question with different numbers. So there is no guarantee that if a question is came in the last attempt, this time it will not be repeated. That kind of analysis and all don't apply. Trend analysis is bogus. Only people who don't have common sense will think trend analysis works. Audit report chapter pakka 15 marks. Obviously 100 pages chapter. For not 100, 60 pages chapter. Syllabus itself is 350 pages. 60 pages out of 360, 20%. Correct? 15 to 20% means out of 120 marks, 15 to 20% is 15 to 20 marks. Logically. Yes or no? So, don't look at trend analysis. Every chapter will be tested. Last May attempt itself, you see, show me one chapter which is not tested. Every chapter will be tested. That is why I always tell, don't go behind trend analysis, ABC category, all that. You can't study this much syllabus. Okay, I understand. Select 4-5 chapters and leave it. Select some chapters, 3 to 4 topics, 3 to 4 chapters. Leave it, don't touch. Remaining and all, you should be 100% perfect. If you are perfect in remaining chapters 100%, damn sure you can attempt for 75 to 80 marks perfectly. You can score easily 50 plus. It depends upon the perfection. I agree. There are some valuation loopholes are there, but that is 2 to 3% probability. Like 2 to 3% cases, even though you wrote a right answer, it is correct. Logically, the answer is correct. Even the meaning, everything is matching. Sometimes examiner, because his wife is scolding him that day, he would have not valued properly. Then second level verification is there. His wife would have slapped him. So that's why he also did not verify properly. So except in those cases, you will generally have proper valuation. 2% risk is there. Not just in CA profession, every profession this risk is there. Even in UPSC exams also this risk is there. Judgmental risk we call it as. Through 2 to 3% that risk is there. Don't say every student who ever failed, I am under the 2%. 90% of the cases, your answer will match. I mean, whatever suggested answer is there, if at all your answer is matching in the sense meaning is matching, complete points are covered, you will get generally the marks. 2 to 3% only will not get that marks. And there is another 2 to 3% who wrote waste answer, but they got full marks. That time he was very happy, examiner was. So he awarded marks. So your result not only depends on your answering level, it also depends upon the mood of the valuationer. What to do? So don't be in that perception. The story is very simple. So last exam, that before some students, what I see, last 3 attempts, whatever questions came, they will strike it off in their book. Hey, so idiot, so arrogant. Like exactly from those, whatever he striked off, that only will come in exam. Next one is Nidhi company. What is the reporting requirement for Nidhi company? Whether Nidhi company has complied with the net owned funds to deposits in the ratio of 1:20 to meet out liability. Nidhi company is something like a chit fund, but not chit fund exactly. Nidhi company is something like a chit fund, but not exactly chit fund. For every 1 rupee of owned funds, Nidhi company cannot accept more than 20 rupees of liability. If I invest 1 rupee in the business, the maximum liability cannot exceed 20 rupees. Liability for Nidhi company is in what form? Deposit only. They will not have trade payable, creditors and all. Nidhi company, it's an NBFC. Nidhi company is what? Actually an NBFC. But Nidhi companies are monitored by Nidhi rules under Companies Act. That is why RBI guidelines will not apply on Nidhi companies. Directly company, MCA itself is monitoring them. Yes. Apadiya, just 1 minute, power has come, power is back, we'll just, they just want to change it. Yeah. So Nidhi company is basically an NBFC, but it is monitored by Ministry of Corporate Affairs. Okay, it is not directly monitored by NBFC because Nidhi is exempted to register as an NBFC. It is exempted NBFC. Nidhi is exempted NBFC. We have a topic called NBFC audit in CA final. There we'll be discussing. So what they need to do, for every 1 rupee of own funds, they cannot accept 20 rupees of deposit from members. Now, Nidhi company will accept deposits from members, right? Out of the total deposits they have, 10% of the deposits should not be given as loans. Like what they do is, Nidhi companies, they gather loans from members, deposits from members, that will be given as loan to members. Out of total deposits, 10% whatever deposit you are gathering, right, you should always maintain as a reserve. You should not give it as a loan to members. 10% means nothing but what you know, 2 members related loan. 2 members related loan. Like in Nidhi company, it's like a rotation of funds between the members. Nidhi company, what is it? It's exactly like a rotation of funds. I collect funds from members, they can save it with me, and I will give a rate of interest to them. And this loan, whatever I've collected from members as a deposit, that I will give as a loan to my members only. Again, one of the member wants some huge loan, I will give it to them. But I cannot give whatever deposit I collected total, I cannot give it to a member. Total amount, 10% I should maintain unencumbered deposits, either in a time deposit or whatever the way. So whether Nidhi company is maintaining 10% unencumbered time deposits, term deposits, as given in the Nidhi rules to meet out the liabilities. Whether there has been any delay in repayment of interest on deposits or repayment thereof for any period, if so, the details thereof. Whether Nidhi company has defaulted in payment of interest on deposits, or whether they defaulted in repayment of deposit. Either you defaulted in interest or you defaulted in repayment of the original principal. If so, the details has to be reported. 1. Whether the Nidhi company is maintaining that 1:20 net owned funds to deposit ratio. 2. Whether the Nidhi company is maintaining this emergency fund called 10% of unencumbered deposits. 3. Whether the Nidhi company is defaulted in terms of repayment of interest on deposits or the deposit principal amount. If so, the amount. If so, the details has to be reported. Easy. Next. Sometimes you feel like biting nails. Non-cash transactions. Non-cash transaction, actually not nail. It's like a side skin will be there, na? That if it comes, no, that will be irritating. Until you bite and remove, it will be irritating. Non-cash transaction. What is non-cash transaction? Whether company has entered into any non-cash transactions with directors, and if so, 190 to 192 provisions, are they complied or not? Every company will enter into some non-cash transactions with directors. Whether provisions of Companies Act is complied or not, they are asking. Next, NBFC, 16th point. What is this here? Is the company required to be registered under RBI Act as an NBFC? You know, a company has to register as NBFC if it satisfies principal business criteria. What is a non-banking finance company? It is not doing any banking operations. What is a banking operation? You are accepting savings deposit. Savings deposit is what banking operation is called as. Fixed deposit is not a banking operation. Even NBFC can accept fixed deposits. Savings deposit means what? Demand deposits. They are called as what? Demand deposits. Now you can, whatever money there in your bank, you can withdraw whenever you want, right? Nothing but you can withdraw on demand. So that's called demand deposits. Demand deposits NBFC cannot accept. That's the main rule. Now when you are called as a finance company, if predominant operations are finance, if more than 50% of the assets are finance assets, more than 50% of your income is from financial activities, then you are treated as NBFC. You must register with RBI as an NBFC. Tata Motors auditor said the company is not liable for NBFC registration because the finance activities are less than not even 2%. What is the criteria? 50%. That's it. Do you have NBFC accounts in accounting? Advanced accounting, it's removed now. Bank accounts, NBFC. Old syllabus. Okay, fine. So NBFC Act, so they are asking, is the company required to register as an NBFC under RBI Act under section 45 IA? Whether the registration has been obtained, if at all applicable, they are asking. Now some companies know whether they conducted any NBFC activities without a certificate of registration. Is the company doing any NBFC activity without registration certificate? They are asking. Third one, is the company called as a core investment company? Core investment company is also an NBFC. Core investment company is also NBFC. NBFC discussion is very lengthy. Don't think too much about what is a core investment company, all that. Core investment company means it's an NBFC whose 90% of the assets are represented by investments. If an NBFC, suppose if a company is there, its total assets you see, 90% of the assets are represented by investments in other entities. Then that company is called as what? Core investment company. Since more than 50% is represented by financial asset, it's an NBFC. Core investment companies are NBFCs basically. Financial assets means what? Loans, advances, investments. These are called as what? Financial assets. If out of total assets more than 50% are financial assets, then that's actually called as what? NBFC activity. So whether the company is a core investment company as defined by RBI, is the company core investment company? Tata Motors said this is not a core investment company. Whether it suppose if the company is a core investment company, is it fulfilling the criteria of a core investment company? Is it still fulfilling the criteria of a core investment company, or is it an exempted core investment company or unregistered core investment company? There are some core investment companies whose asset size is less than 100 crore. Whose asset size is less than 100 crore, they are exempted from registration with RBI. If the core investment company asset size is more than 100 crore, they are liable for registration with RBI. They are liable but not registered. They are called as unregistered core investment companies. Suppose they are not at all liable for registration, they are called as exempted core investment company. First of all, is it a core investment company? Is it continue to fulfill the criteria for core investment company? The first question, is the company liable for registration as a core investment company? Check out. Second one, is it fulfilling the core investment company criteria even this year also? Or is it exempted core investment company? Or is it unregistered core investment? Means it's liable for registration but not registered. They're asking you the details. Whether the group, means this group, Tata Motors is belonging to Tata Group. Whether the group has more than one core investment company, Tata Motors has 5 group companies. They're having 5 core investment companies. Tata Sons Private Limited is one of the core investment company, main ultimate holding company of Tata Motors. Tata Sons Private Limited is a private limited company. It's an NBFC. It's a core investment company. They have a core investment company registration. Tata Sons Private Limited has more than 35 listed subsidiary companies. Entire Tata Group value is close to 35 lakh crore. Entire Tata Group market capitalization is more than 35 lakh crore. 35 lakh crore is more or less equal to India's GDP in a year. Understood? It's not equal, it's 30% of the GDP. Our GDP is how much? $5 trillion. Right now, what is it? $3 trillion, I think. As per recent statistics, it was $3 trillion, 3 crores. Out of it, 10% means 30 lakh crore. So Tata Motors size is almost close to 10% of the India's GDP. Next. So whether group has more than one CIC as a part of it. If yes, indicate the number of CICs. Tata Motors, if you see, the auditors reply that ours is not a core investment company. We are not liable for registration. And the group has more than one core investment company. That is 6 or 5, some number they'll give. Cash losses. Whether the company has incurred cash losses in financial year and in the immediately preceding financial year. If so, state the amount of cash loss. Whether the company has incurred any cash loss during the current financial year as well as in the immediate financial year. If so, indicate the amount of cash loss. Maybe profit and loss account shows profit. Sorry, cash loss cannot be, yeah. So maybe profit and loss account is showing loss. P&L account loss is not a cash loss. Straight away you cannot say that's a cash loss. Now suppose profit after tax is negative. For that, add back depreciation, non-cash expenditure. Add back provisions, which are also non-cash expenditure. Still is the figure is loss, check out. If the figure is still loss, then that is actually called as what? Cash loss. Means really company suffered loss in terms of cash. Means there is out of total outflows for expenses are higher than total inflows. That is what cash loss meaning. Getting it? Cash loss means what? Some financial crunch is going on. Some financial issues are going on. It's a financial indicator in going concern. It's an event or condition. You should investigate in that angle also. Next. During the year, whether any resignation of auditors happened? If so, whether the auditor, means current auditor, right now I am the auditor, previously another auditor is there, he resigned. Whether this current auditor taken into consideration issues, objections, concerns by resigned auditor, outgoing auditor. Existing auditor resigned, na? He would have mentioned the reasons for resignation, right? Have you considered those reasons? So they are asking. Next, 19th one. Material uncertainty related to going concern. What are they asking? On the basis of ratios, aging, expected, this entire sentence I'll not tell. I'll tell you simply. On the date of audit report, you should think of one point. On the date of audit report is the date on which you're signing the audit report. Before you sign, for a moment, you should once again check. As on 31st March, the balance sheet which you're signing, it has so many current liabilities. It has so many assets, right? And these liabilities are falling in due within next 12 months, right? All the current liabilities are falling due within next 12 months, right? Do you still think company can honor them? Do you still think company will honor all the liabilities that are there as on balance sheet date that are becoming due within 12 months. Do you think company still honor them? On which date you should think of this? Date of audit report you should think. Are you getting it? Suppose today, August 22nd, so 21st, 20, I'm just testing you. Okay? Yeah, today, August 20. Today, I'm signing one company audit report. Of which year? 23-24 financial year. 31st March 2024. As on 31st March 2024, current liabilities are so many were there. There are so many liabilities that are falling due within 31st March 2025. As on today, in the past 4 months, I know what are all happened in the company. Do you still believe today, whatever liabilities that are there on balance sheet date, company can honor? For Tata Motors, when I see, all of them are repaid already. So I know I don't have any issue. But for some other companies, even today, those liabilities which are outstanding as on 31st March, of course, their due dates are there. Maybe the due dates are in October, November, December, maybe January, February, March, some due dates were there. Company has time, funds and all also there. As on today, if I see the company financial position, company liquidity, all that, even if today, if I analyze also, company can happily pay, no problem. In that case, I'll give positive opinion here. Suppose today, August 20, when I am checking the company financial liquidity and all, about 31st March liabilities. So many liabilities that became due, last month, that before month, they're already defaulted. The company has already defaulted last month, that before last month, dues and all. Which means as on the date of signing audit report, whatever liabilities the company showed on 31st March, they already defaulted. I will give negative opinion here. Are you getting it? Company defaulted means what? Going concern assumption is affected. So you need to once again think in going concern angle. That's why the side heading is what? Material uncertainty related to going concern. So on the basis of ratios, aging, dates of realization of assets and liabilities, other information, and the auditor's knowledge of board of directors and management plans, whether auditor is of the opinion that no uncertainty exists on the date of audit report. As on the date of audit report, do you still think there is no uncertainty? Regarding what? Liabilities existing on balance sheet date that the company will honor within the next 12 months whenever they become due. Do you still think that? If so, give positive opinion. Understood? CSR, corporate social responsibility. In CSR, I'll give you in 1 minute the explanation. CSR, I hope every one of you know CSR provision. Yes, every company has to spend 2% of the average net profits for CSR activities. By what time they should spend? By 31st March they should spend. If they are unable to spend by 31st March, what they should do? Within next 6 months, they should transfer that entire fund to government. Schedule 7 fund, they call it as National Defense Fund, all that, so Prime Minister National Relief Fund, so many were there in that. You should directly transfer to Schedule 7 fund. Your responsibility is over. Sometimes, companies, they want to spend it on a project. They want to use that whatever money is there, they want to spend. Suppose Reliance Industries is having 60,000 crore. 2% means 1,200 crore is the money that is available for spending for CSR activity. Now they want to spend it for some rural development program. The rural development cannot happen within 1 year. Correct? So what they did, they developed, that project is for 2 to 3 years. That project is for 2 to 3 years. So that 1,200 crore they kept in a separate bank account to use it for this project. Now they're asking, whether in respect of other than ongoing project, means any fund you, whatever CSR liability is an amount, expenditure, you did not set for any project, means normal amount that should be spent by 31st March itself. Is it transferred within 6 months to Schedule 7 fund or not? They're asking. Suppose you kept that money aside for ongoing project, amount remaining unspent because of ongoing project. That money has to be transferred to special account. Is it transferred to special account or not? They're asking. If at all you that CSR money, you allocated it for some project which is more than 1 year duration, gestation period, that amount you have to transfer to special account. If it is not for a project, you didn't allocate it to any project, you must spend within 31st March. If not, within 6 months you need to transfer it to Schedule 7 fund. Whether you did that or not, they are asking. Finally, here 21st clause, this is applicable, this is to be reported in audit report on consolidated financials. So this will not apply on standalone financials. You see Tata Motors audit report on standalone financials, inside that CARO 21st clause will not appear. Directly you will find this 21st clause in audit report on consolidated financials. What here we need to, very simple. Whether whether there have been any qualifications or adverse remarks by respective auditors in CARO reports of companies included in CFS? If yes, indicates the details of companies and paragraph numbers containing these remarks. Nothing but Tata Motors consolidated financials is there. No? Inside that, no, some 10 subsidiary companies were included. Inside that consolidated financials, some 5 associate companies were included. Some 2 joint ventures are included. These subsidiaries, associate, joint ventures are not audited by me. These were all audited by some other auditors. Now, summary of all these auditors' CARO qualifications. Summary of all these auditors report in, a summary of all the qualifications in CARO in audit reports of all these companies. You should give it one place. You should give it what? One place. Clear? Means if a shareholder who opened audit report on consolidated financials, he will understand, oh, Tata Motors, one subsidiary company is there. That subsidiary company, clause number 2, clause number 9, clause number 13, auditors have qualified. So it's another company, so subsidiary number 2, clause number 14, clause number 16, some auditors have qualified. Like that, you will get at one place the information. This is just a disclosure requirement. Understood? That's it. What about the holding company? I am already qualifying in 20 clauses. No, there they can see. There they can see. CARO report on holding company, there they can see. But in 21st clause, in consolidated financials, 21st, the 21st clause on the audit report, in the audit report on consolidated financials, inside that, all the companies that are included in CFS. And auditors have given audit reports on these companies, on all these companies, respective auditors give audit reports, right? In those audit reports, CARO is there, right? In that CARO, some clauses, qualifications would have been there, right? Just to put a summary here. Like Tata Motors, you see. So I'll show you directly the last one. So this is the auditor's report. This financial statements consolidated. போயிட்டே இருக்குல. Consolidated, okay, it's it over. God, this is notice. So inside that, what is this? Consolidated 262. Okay. This is the audit report on consolidated financials. You see inside this. You see inside this. You see, as required by CARO. How many points will be applicable on consolidated financials? Only 1 point. You see here. You see here. Directly only which clause is included? 21 clause is included. So Tata Motors Limited, that is a parent company in the consolidated financials, which is consolidated. These clauses contains qualification or unfavorable answers. Tata Motors Body Solution Limited, it is subsidiary of the Tata companies. Tata Motors Limited. Okay. In these clauses, they have qualifications. So by giving this at one place, we are telling people that these companies, which are all included in consolidated financials, in the CARO, prospective auditors give qualifications in so and so clauses. If you want to go and see that. We are giving a summary here. Is it a disclosure requirement or not? So that's the only, that's it. CARO is also over. Now in CARO, whether the answer is positive or negative, both has to be reported. Correct? Next. So in 143 subsection 3, 21 clauses is over. Now in 143 subsection 3, 16 matters were there which we need to report. Inside that I point I will cover, J point I will cover. I and J. Only these two clauses I will cover. J has 6 subclauses. Inside that, the 4th subclause has 3 subclauses. Getting it? So 143 subsection 3 clause I will cover. 143 subsection 3 clause J, subclause 4 I will cover. Subclause 4. This subclause 4 has ABC again, once again. Funding party, intermediary, ultimate beneficiary. Remember that? No idea? Okay. So 143 subsection 3 clause I, what is it exactly dealing with? Whether the company has adequate internal financial controls related to financial statements. Whether the company, whether in your opinion, whether the internal financial controls related to financial statements are operating effectively. They are asking that question. Whether the internal financial controls are operating effectively. That is a question. So for that you need to verify internal financial controls and give a report here. Are they operating effectively or not? You have to report. This reporting, this clause I reporting does not apply to private limited company whose borrowings are less than 25 crore, whose turnover is less than 50 crore. If a private limited company whose borrowings are not exceeding 25 crore, whose turnover is not exceeding 50 crore, for them IFC reporting clause is not applicable. Further, this reporting is applicable only for annual financial statements audit, correct? Entire 143 subsection 3, CARO, all these points are applicable for quarterly financials also, or only for annual financials? Annual financials only. Only in audit reports it is applicable. Quarterly we will not give audit report. Quarterly we will give review reports. Understood? Now what is 143 subsection 3 clause J? Inside that subclause 4, once they asked in CA inter, in the past 3 attempts only, in one of the attempts they asked this question, 4 or 5 marks question. What no? Some companies, they act as funding party. Some companies act as funding parties, means they transfer funds. How they transfer funds? They transfer funds in the form of loans, or they transfer funds in the form of investment. They transfer funds either in the form of loans or advances or investments. To whom they will transfer? To another entity. What is it? To some entity, to another entity. This may be domestic entity or foreign entity. This may be a domestic entity or foreign entity. What this company tell to them, please transfer these funds either as a loan or advance or investment, or even you provide guarantee. To, like, first this company transfer funds to this entity. This entity has to loan or advance or invest or give guarantee to some third party. What is it? Some third party. Who will decide this third party? Who will decide this third party? This funding party will decide. Who will decide? Funding party will decide this third party. This third party is called as ultimate beneficiary. This third party is called as what? Ultimate beneficiary. The statement is whether the company has transferred any loans, advances, investments to an entity, including a foreign entity, with an understanding in writing or otherwise that the intermediary shall further transfer by way of loan or advance or give guarantee to another entity identified by funding party. Understood? No? You are doing audit of one entity. Is that entity transferred any amount to another entity? How they transfer? Either as loan or as a capital investment or as an advance. Is there any other way that I can transfer? No. To another entity. What other entity has to do? They should not keep that money with them. They should transfer to another entity. That entity is called as ultimate beneficiary. This company directly they are not transferring. They are not directly transferring the money. They are transferring money to them through intermediary. Why are they doing through intermediary? In order to silently acquire big companies. In order to silently acquire these companies. Getting it? If they directly they can't acquire because of some reason, some issues, tax issues, whatever it is, in order to do a tax planning, what they do is they transfer funds to them. They will buy these entities. So I transferred to them. So either as a loan or investment, whatever. And I told them that you have to give as a loan or investment or something to this ultimate beneficiary. Or you don't give, this company, they will transfer to this, right? Sometimes they don't transfer directly. They will give guarantee. They will give guarantee to some third party on behalf of this entity. Means this third party will give some benefit to them. To this third party, who is giving guarantee? This company is giving guarantee. Why this intermediary is giving guarantee? Because they got funds from funding party, and we are the auditors of funding party. Okay, it happened, fine. Whether all these are disclosed in the financial statements? Yes, they are all disclosed. Is there any other transaction like this which is not disclosed? Directors are saying no. Give me representation. That is what that point is. auditor has to obtain a representation that other than those disclosed in financial statement, no funds were transferred, invested in, to any other entity, including foreign entity, with an understanding that the intermediary shall transfer or invest or give guarantee on behalf of the ultimate beneficiary identified by the funding party. Are you getting it? That is one representation you should give. First representation, other than shown in the notes to accounts, you should not have done anything else. You do anything like this, no problem, disclose it in the financials. Whatever you disclosed, only that should be there. Other than that, nothing is there. You give me a declaration. 2, you are the auditor of intermediary. Second case is what? Have you received any money from somebody with an understanding that this money has to be transferred to somebody? Who is that somebody? Identified by the funding party. Have you received anything like that? If so, you please, you have to, auditor has to get a declaration that everything is honestly disclosed in financials. If nothing is disclosed, suppose they disclosed already, get a declaration that apart from whatever disclosed, there is no other transactions like that. Get a declaration. More about this I will discuss once again in items of financial statement, because in items of financial statements, these points will come at 2 places: share capital, loans and advances, borrowings. 3 places it will come. We will discuss there. Are you all clear? What, mind clear? Huh? So that's it. So with that 143.3 critical point we completed. 143 subsection 3 critical point we completed. 143 I am not covering. You please do it on your own. Okay. So that's it. With this, audit report topic is also completed. Now what I will do is, immediately after this, I will give you a brief introduction to one example, comprehensive example, which will be useful for us in documentation chapter, evidence chapter, all that. So that example we will discuss, then we'll wind up this session. In the next session, once again, we'll discuss the documentation topic. Confident until now? That's it. So let's begin the discussion on comparative information, corresponding figures and comparative financial statements. Have you read this standard? How many of you? How many of you have not read, not even listened to the class also earlier? No? Whether is there any of my regular students here? Okay, fine. Close to 30 plus were there. So 710, comparative information, corresponding figures and comparative financial statements. What is comparative information? Very simple. You take any company financial statements. You will find in the balance sheet P&L current year figures as well as previous year figures. Previous year's figures that we are presenting, no, that is for comparison purpose. That information is called as what? Comparative information. That information is called as what? Comparative information. Now, this comparative information can be presented in 2 approaches. One approach is corresponding figures. Another approach is comparative financial statements. One approach is corresponding figures. Another approach is comparative financial statements. Now, we saw Tata Motors audit report, right? Now, Tata Motors auditors have given opinion, right? That opinion is on current period figures or previous year figures or both? Only current year figures. Means the opinion given by the Tata Motors auditor on the financial statements of Tata Motor for 23-24, they are only dealing with 31st March 2024, 23-24 figures. They are not dealing with corresponding figures, correct? That is what corresponding figure approach. If comparative information is presented, just to read that in line with current period figures. But auditor's opinion is not covering the previous year figures. Comparative information is not covered in the auditor's opinion. Then that approach of comparative information is called as what? Corresponding figures. The approach of comparative information. If auditor is not giving opinion on that, then the approach is called as what? Corresponding figures. Suppose if comparative information is also covered within the auditor's opinion, if at all we are giving opinion on both current period figures as well as comparative information, both on the both year figures, if at all we are giving opinion, then the approach of comparative information is called as comparative financial statements. Remember, Previous year figures means itself means comparative information. The approaches are corresponding figures and comparative financial statements. These two are two different approaches. Corresponding figures is one approach, comparative financial statements is another approach. But in both the cases, what are we actually doing? What the company is doing? They are preparing financial statements that includes current period figures, prior period figures. If auditor is not giving opinion on prior period but only on current period, that approach is called as what? Corresponding figures. If auditor's opinion covers comparative information, nothing but prior period information also, then the approach name is called as what? Comparative financial statements. Now, across the world, all general purpose frameworks, general purpose financial statements across the world, they follow corresponding figure approach only. They do not follow comparative financial statements approach. Many, first of all, don't know this point. They read this entire standard. They think they understand, but they don't understand the fact that this approach is not there anywhere in the world. This is the first point. You're able to understand now what is context-based learning? When you read, no, like entire this standard, if you read, it appears like as if corresponding figures compared to both matters looks similar. In both the cases, the matters looks very similar, very same. But they don't understand the fact that comparative financial statements were not there in India. The financial statements that are prepared in India were using corresponding figures. They were not prepared using comparative financial statements. Comparative financial statements approach is not there. Show me one company where auditor is giving opinion on both current year figures and prior period figures. Comparative financial statements probably arises in case of special purpose financial statements. Probably that arise when special purpose. Suppose my creditor or some purchasing company asked me to prepare financial statements on cash method. I prepared. Last 3 years I prepared. And he asked the purchase company, no, they told me, don't prepare separately as a 3 balance sheets. Prepare in a single balance sheet 3 years figures and get them audited. Auditor has to give opinion on all the 3 years figures. Then what is that approach? Comparative financial statement. If that approach is followed, what is the auditor responsibility? If corresponding figures approach is followed, what is the auditor responsibility? Very simple. What is the auditor responsibility for comparative information? For comparative information, if it is correspondence figures, what is my approach? If it is comparative FS, what is my approach? That is what standard is answering. What is important for us in exam? Corresponding figures is only important. But sometimes the paper setter don't know the difference between these two. Not sometimes, most of the times. To best of my knowledge, with a due respect I'm talking, many auditing faculties also, they don't know the difference between these two. The point is, whatever is there here only they'll read. Whatever is given in the IC book only they'll read. They will not read the original standards. Like for example, I'll show you. SA 710. This is one more example how you have to read later on. This is 710 standard, original standard. You see in the very first page, at the last as a footnote they give. What they gave? Typically, financial reporting frameworks in India use corresponding figure approach for general purpose financial. The standard heading itself, at the beginning in the first page itself, they are saying compared to financial statements approach, we will not follow. Correct? If with this understanding you read this standard, then only you will understand this standard. Otherwise, you will feel like A is equal to B is equal to A. What's the difference between A and B? You won't understand that. So, what is the objective of the auditor? Very simple. Our objective is whether we should obtain evidence, whether the comparative information presented in all material respects as per the framework or not. So, every financial statements will contain some comparative information. Whether that comparative information is presented true and fair, whether the comparative information is presented not even true and fair, is it as per the framework or not? That is our objective. And report accordingly as per this particular standard. What is a comparative information? Comparative information means it is amounts and disclosures included in financial statements of prior periods. How are they? How are we including that? In what format we are including? As per applicable framework. Correct? Whereas, you know, by the way, for corresponding figures, audit opinion is only on current period. Whereas for comparative financial statements, auditor's opinion refers to each period on which financial statements are presented. So corresponding figures are those pertaining to prior period which are intended to be read only along with the current year figures, but are not covered in the auditor's opinion. That is called what? Corresponding figure. Comparative information of one or more prior period which are to be read in relation to current period, but if audited, were covered in the auditor's opinion. What is that? Comparative FS, financial statements. They are the definitions for corresponding figures and comparative financial statements. What is the audit procedure? What we will do for comparative information, whether it is corresponding figure, comparative financial, whatever it is, what generally we do? We will ensure, we will determine whether financials include comparative information. Are they properly classified? And auditor shall evaluate whether comparative information, whatever we shown in current period balance sheet, no, is it agreeing with the prior period balance sheet current year figure? Current year, last year figure should match with the previous year current year figures, correct? The accounting policies that are reflected in comparative information, are they consistently applied in current year? That also we should check. Whether the accounting policies are consistently followed or not also we should check. If auditor becomes aware that some misstatement is there in comparative information, audit in the current period, the auditor shall perform such procedures to determine whether really a material misstatement exists. If at all, this point is not required. Auditor shall request a written representation for all the periods referred in auditor's opinion. Audit reporting regarding corresponding figures. Reporting is what? We will report only on the current period figures. Now tell me, last year figures be present, no? What is the level of detail? Like in what, I mean, how detailed? Should we present detailedly the last year figures more than current year figures? Whatever the level of detail you are giving for current period figures, same level of detail will apply to last year figures. For example, current year trade receivable is there. You are showing in the notes to account breakup more than 6 months, less than 6 months, like that. Same breakup will also apply for previous year figures. What the level of detail, you see here the wordings, the level of detail presented in corresponding amounts and disclosure is primarily dictated by its relevance to current period figures. So the detailedness, the level of detailedness is primarily detected by current year figures. How much detail you are giving current period figures, last year figures, so you will give the same detail. Clear? Now, this is very important. This is asked many times in exam. When corresponding figures are presented, auditor's opinion shall not refer to corresponding figures except in the following. In the following cases, no, our audit report also talks about corresponding figures. When we will talk about our corresponding figures, suppose if the prior period audit report which is previously issued included a qualified opinion or disclaimer or adverse opinion, and the reason and the matter which gave rise to modification is not resolved in the current year also, the auditor shall modify the current period financials. In the basis for modified opinion para, the auditor shall specifically refer to both the current year figure and corresponding figures, and what is the reason? Like refer to both current period figure and corresponding figure in the description of the matter giving rise to modification when the effect or possible effect are material. In other cases, explain the opinion is modified because the effect of unresolved matter is on current period, it is there. Very simple. Last year auditor gave a modified opinion. Last year auditor, somebody or either me, whatever, somebody gave modified opinion. We would have given modified opinion for some reason, right? If that reason is present in this year, and in this year also that is material, we will modify even in the current period. In the basis for opinion para, we should tell that since the matter is unresolved, since the matter is material in the current year also, we have modified the opinion. That's it. If the auditor obtains audit evidence that a material misstatement exists in prior period financials on which unmodified opinion was issued earlier, like prior period financials are containing MMS, but previous auditor gave unmodified opinion, the auditor shall verify whether the misstatements were dealt as per applicable framework. If that is not, auditor shall express qualified opinion in the current period, nothing but prior period item. If prior period financials are containing MMS, but prior period auditor has given unqualified opinion, now you found that MMS, any mistake that you find belonging to past period is a prior period item. Check whether it is as per the framework did or not. If at all it is not shown as a prior period item, what we will do? We will modify our opinion. That's it. Further, when prior period financials were not audited, suppose if the prior period financials were not at all audited, you mention in other matter paragraph that prior period financial statements were not audited. By the way, just because they were not audited, are you exempted from getting evidence on opening balances whether they are free from MMS? You must get evidence that opening balances are free from material misstatement. That is 510 requirement. 510 plus 710 standard has to be read together. 510 and 710 standard has to be read together. So you see, if prior period financials are not audited, the auditor shall state in OMP that corresponding figures are unaudited. However, such a statement does not relieve you to obtain evidence regarding opening balance. You must get evidence regarding opening balance whether they are true and fair or not. Suppose if prior period financials were audited by some other auditor, if prior period financials were audited by some other auditor, are you liable to report that in the current audit report? One reason I will refer in opinion is, if prior period financial statements contain MMS and our other auditor gave a modified opinion, and the reason why he gave a modified opinion is exactly existing even now also, then I will also give modified opinion in the current year. This is one of the reasons why I refer previous year figures in current year audit report in the opinion paragraph, even though that is belonging to corresponding figures. Another situation I will refer about previous year figures in audit report is other matter paragraph. If prior period financial statements are audited by previous auditor, say that they were audited by so and so auditor, what is the date of audit report, what opinion he gave, just information you should give. Where you will give? Other matter paragraph. So these are the circumstances where even though approach is corresponding figures, we still refer about prior period figures in the current year audit report. Understood? That's it. This comparative financial statements is not required, not relevant, not that important, not important for you. That's it. Clear? Entire this point you will understand only when you understand the initial context. Otherwise it is difficult for you to understand this. So they gave here definition of comparative financial statements. Here also they gave the definition of corresponding figures. So only corresponding figures related reporting, that is enough. The second point is very important. 4 marks question possibility. 710 is completed. Yeah. So we'll take a break and get back. So let's begin audit documentation chapter. Before I go into audit documentation chapter, I just want to give some brief example on like how generally we do audit. You know, like if you recollect, if you recollect like how we do audit, you know, like generally how we plan the audits, you know. Now until now what we understood is what is audit, what is the objective of audit, what is the scope of audit, why establishing terms of engagement is necessary, what are the ethical principles I should comply, what ultimately I should do in audit, we understood. Now how to do this audit is what we are going to discuss from now on. Procedural aspects we are going to discuss. Whatever we do in audit, we call that as what? Audit procedures. What is it called as? Audit procedures. These procedures are conceptually classified into 2 types. What are they? Risk assessment procedure, further audit procedures. Further audit procedures are again classified into 2 types. Compliance procedure, substantive procedures. Substantive procedures are again 2 types. Test of details, analytical procedures. Test of details and analytical procedures. How will I test details? By inquiry, by inspection, by external confirmation, by analytical procedure. Again here also it will come analytical procedure. This is substantive analytical procedure. We'll discuss that later, don't worry. Analytical procedure, recalculation, reconfirmation, all that. Reperformance, getting it? Generally reperformance is a technique which we use for compliance procedure. Reperformance is generally used for compliance procedure, reperformance. How we do risk assessment? We do risk assessment by inquiry, observation and analytical procedure. 3 methods were there. Here also observation will come, by the way. Here also observation will come. See, it is not something because they named it we are doing. Whatever we do, they named it. Suppose no purchases, how will I verify? How purchases I will verify? I will look at the purchase bill. When you're looking at the purchase bill, it is called as a document. Inspection. You are looking at the document, right? It is called as what? Inspection. You got a doubt. You are asking the accountant or production manager. What is it called as? Enquiry. Now you asked him to take it to the go down also. To go down, you show me this is the latest purchase, show me where it is. And he's showing you. Observation. You are calculating the total amounts, whether the amounts mentioned in the purchase bill is correct or not. Recalculation. Understood? You are, in the go down, no, some inventory counting is going on. They said in one slot, no, after counting 1, 2, 3, 4, 5, 6, all that, they said some 29 items are there. You went and you're recounting it. Re-performance. What is it called as? Re-performance. You getting it? Logically, analytical procedure. What is analytical procedure? Suppose, no, this year, company has ordered totally 1500 orders. But in accounts, no, in purchase register, only 1450 bills were there. 50 bills were missing. Analytically, you are analyzing and understanding. Further, repairs and maintenance expenditure is there. Suppose, best example you take, repairs and maintenance expenditure is there. Last year it is 1 crore. This year it is 3.5 crore. Why 3 times increased repairs and maintenance expenditure? But purchases have increased 10% only. Sales have increased 10% only. Every expenditure is just 10 to 20%. But repairs is increased by 250%. What happened? Suddenly, you investigated into it. You went to month-wise breakup. Suddenly in 1 month 2 crore is there. What, in 1 month 2 crore for repairs? You opened. Suddenly in 1 day 1.9 crore is there. In 1 day, how come 1.9 crore worth of repair will be there? You opened. One transaction is there. 1.9 crore worth of debit they made. When you look at the narration, it is a spare part purchase. It is what? Spare part which is purchased. When you apply recognition criteria under PP, it amounts to a capital expenditure. Company debited to P&L. Are you getting it? Now you see, how did you identify this? Is it through sampling? No. How did you identify this mistake? Analytical procedure. How did you found that there's something is wrong in this? You observed the trend analysis. You saw the trend. This trend is unusual. Analytical procedure is nothing but what? Identifying unusual relationship. Analysis of ratios, analysis of analysis of relationship between financial and non-financial information, plausible relationships, identifying unusual circumstances. That is what analytical procedure. Okay? So first we will do risk assessment. Risk assessment, what we will do? We were appointed as an auditor. First day we went to the office. We went to the factory or the particular client place. Accountant, finance manager, they all visited. They are just explaining me what business they do, what products they deal with. And they took me to go down visit, factory visit, where finance department, they are just giving me a tour about the company. They are just giving me a company tour, complete tour about the company. And I'm understanding what they're doing, what this doing, what that employee is doing, what are all the processes company has, how the production happens, when the production gets completed, how long it will take for the production of raw material to finished good, how much company is maintaining in the inventory, where and all company has go downs, where and all company has factories. I am just understanding about the company fully. Almost 1 week I spend on understanding. Why am I understanding? In order to identify where things can go wrong. Where things can go wrong. What can go wrong? I am identifying what can go wrong in production, what can go wrong in inventory, what can go wrong in purchases, what can go wrong in sales. And they are explaining me how they purchase, what process they follow for purchase, what process they follow for sales. Just like that, a company cannot purchase. No, suppose in DMart, no, some suddenly stock is out. Can DMart, that store, whoever employs that, can take the money in the cashier, go to Big Bazaar and buy sugar and come and bring in the DMart? They can't. For every purchases, there is a process lead. Everyone has to follow that process. That entire processes are called as internal controls. What are they? Processes are called as what? Internal controls. Once our class is over, every door will be locked. That's the control. Why? Safeguarding of assets. What is the control purpose? Safeguarding of assets. Taking attendance, efficiency and effectiveness of operations, compliance with laws and regulations, prevention and detection of fraud and error, reliability in financial reporting. These are the 5 objectives of internal control, risk assessment chapter. Any process company follow, any procedure whatever the company follow, we call them as what? Internal controls. Now, these internal controls I will observe. These internal controls I will inquire. These internal controls I will see analytically, are they working, are they proper or not, is it a proper process or not. So by inquiring management, by discussing with various employees, by discussing with internal auditors, by observing what they are doing, by analytically thinking what they are doing, I will do risk assessment, I will do risk analysis. Then I will understand where and all high risk is there, where and all low risk is there. Accordingly, I will design my further audit procedure. Further audit procedure is nothing but nature, timing and extent of audit procedures. Nature, timing and extent of audit procedures is nothing but further audit procedure most of the times. Audit procedures, nature, either risk assessment, again either further audit. Again within that further audit, there are two nature of audit procedures within further audit: compliance procedure, substantive procedure. Before I verify purchase invoice, all that, no, first I will see purchase process. First I will see purchase process. Exactly what process is the company established? Whether real purchases transactions are the following as per the established process or not, I will cross check. Now, when I'm verifying purchase process, no, I may find weaknesses in that. That weakness is called as deficiency in internal control. That weakness is called as what? Deficiency in internal control. So if at all I find any deficiency, if it is a significant deficiency, I will communicate it to top management. That is what 265 standard says. So like this, I will do analysis, then I will plan the audit. So once I completed risk assessment, I have to plan, no? First I will do risk assessment, then only I will develop my strategy, then only I will develop my audit plan, then only I will develop my audit program. So yes, I completed risk assessment now. Now I have to plan the audit. So and so company is there. So the company is there. So and so financial year. This is the date on which we are starting the audit. And expected closing date, so and so date we targeted originally. Actual completion date we will put. Now who are all doing? Myself, my manager, my senior articles, my junior articles, and some paid assistants I'm taking. This entire team is called as what? Engagement team. What is the nature of assignment? Statutory audit. Now first we have to do risk assessment procedure. Myself and my manager, we both will go for 7 days and understand the business. Once risk assessment is completed, first that we will do is opening balance verification, because 510 we should get evidence about opening balances. Who will do? My manager will do. 1 day is the time which is enough. He has to compare with the previous year balance sheet. Then transactions will verify for purchases, sales, payments, receipts, others. So who will verify? We have allocated work. How much time we have given the work? The status have to be updated here. As and when the work is completed, they have to once the work is started, in progress they should select. If nothing is selected here, the work is not yet started. If work is started, in progress. Work is completed, they should select completed. Likewise, assets, fixed assets, they should verify. Inventory. In fixed assets, what they should verify? See whether physical verification is going on, whether invoices and all are there, and CARO fixed asset register and all, you see that and all I told my team. So they will go and check all those points. Receivables, inventory, cash, payables, like that I have allocated team. Then statutory areas. GST complaints I will see, TDS complaints I will see, EPF, ESI, profession tax, customs duty. Then I will go and do analytical review of all the ledgers. Repairs and maintenance, is there any unusual transaction? Is there any unusual amounts of fines and penalties paid? Is there any unusual amount of purchases made during the year? Like that I analyze each and every transaction. Is there any big amounts, exceptional transactions? That's called ledger review. Then overall audit review I will do. Once I do an overall audit review, once I see all my teams, they worked on so many things, no, they verified so many things, no, they gathered so many evidences and all, no, I will verify all of them. Where I will verify? In a summary meeting, audit summary meeting. There I will prepare audit summary memorandum. What I will prepare? I will prepare audit summary memorandum. In documentation chapter, you have a question, what is audit summary memorandum? There I will discuss. Then finally, once audit summary memorandum is over, management will discuss. I will sit, my senior manager, my senior articles, important team members and all will sit. Company team people also will sit. Sir, these are the issues we identified in the past 40 days. These are the issues. What is your answer? They will come back with resolution. They will resolve some items, they will not resolve some items. Finally, after that meeting is over, after some 1 or 2 meetings, then I will decide which opinion I will give. Then I will prepare a draft audit report. I will give it to the company. Draft audit report, not final audit report. Company will once again come back. Sir, you are qualifying, sir, you are giving adverse opinion. No. What mistake happened? You tell me. Okay, I will rectify in the financials. They went and rectified and back. Then I will give unqualified opinion if they rectified. Suppose if they don't rectify, I will give as it is final audit report. Clear? This is what exactly happens in audit. So this is what an audit plan. Once entire audit is over, this plan has to be signed. This plan has to be signed. Getting it? This plan has to be signed by entire team members. This plan we will document it. Whatever work we did, no, we will document it. This documentation will be in 2 ways. Hard copy documentation, soft copy documentation. What is it? Hard copy documentation, soft copy documentation. Some evidences, no, you get in hard copy, physical copies. What you should do, you should copy, you should keep it. You should also scan it and convert it into soft copy. This is compulsory now. Image processing we call it as, or scanning we call it as. All the hard copy documentation you should scan it and then convert it into a soft copy. Understood? This process is called as documentation. This process is nothing but we call it as what? Documentation. Now, if you go to any audit office, if you open their system server, client files will be there, soft copies. How the files will be there, how the client files and all will be there. Like suppose if you opened a server in audit office, the moment you click on the server, like system server, it will open clients folder. Inside the clients folder, if you open, it will have companies folder, sole proprietors folder, firms folder, LLPs, trust, like that. Suppose you opened the company folder. Suppose you opened company folders. Inside that A limited, B limited, C limited, D limited, like that various company clients were there. Now B limited I open. Stat audit folder is there, tax audit folder is there. Means for B limited we are doing two types of works. Stat audit and tax audit. You open stat audit. 2009-10 onwards the folders were there. 10-11, 11-12, like this. 20-23 up to this folder is there. Okay, I open 20-23 folder. I open 20-23 folder. Inside that risk assessment folder is there. Transaction audit folder is there. Assets and liabilities audit folder is there. Again, there is another folder. Folder means you're able to imagine, right? Computer files folders. So again, ledger scrutiny folder is there. Then analytical procedures folder is there. Then summary meetings folder is there. Then deliverables folder is there. Finalization, some folder is there. Finalization. Okay. Risk assessment procedure folder you open. There are subfolders. Enquiries. How they inquired, through WhatsApp conversations, through mails and all they inquired. Some inquiries are orally they made. So whatever oral inquiries they made, they drafted it and then documented. Then they had observations, photo marks, photos in WhatsApp, in phone itself, they took photos of various issues and they documented here. Then analytical process, logically whatever idea they got initially, that workings and all were there. Transaction audit. Inside that, again, purchases folder is there, sales folder is there, expense folder is there, receipt folder is there, some other expenses, outstanding expenses folder is there. Purchases folder we open. Purchases folder again has purchase register is there, means original purchase register as per the company. Purchase order folder is there. Purchase order file is there. Purchase register file, purchase order file. Then I will do sampling basis, that sample selection folder is there. What are all the items I selected as a sample? What methodology I followed for sample selection? That and all workings are there inside this. Inside this is Excel sheet. If I open that sample workings sheet, like so and so date, so and so purchase voucher, so and so amount, so and so party. Now right side my remark is there. My article assistant remarks what remarks he found in that particular transaction, because on a sample basis only they do, right? Yes or no? Like that sales, expenses, receipts, like that so many were there. Now corresponding to these soft copies, various hard copy evidences are also there. Xerox copies, PAN copy, GST returns, TDS returns, hard copies and all were also there. That and all were there in hard copy folder. Now tell me, you see how I arranged this entire working paper neatly, yes or no? This process of arrangement is called as assembly. What is this called as? Assembly of audit file. Documentation is nothing but what? Audit file. Here audit file I am maintaining in soft copy and I am also maintaining in hard copy. Even the hard copy working capital box file will be there. Box kind of file will be there for files, folders. So you open, there will be arranged in a particular order. Sequence will be there. Sequence, in a particular sequence they arrange all the papers. They just like that zigzag manner they won't arrange. In a sequence they will arrange. So this process is called as what? Assembly of audit file. Are you getting it? Now this assembly has to be completed within how many days? 60 days from the date of audit report. Once audit report is given, within 60 days assemble the files, assemble the audit file. Which file? Hard copy as well as soft copy. Tomorrow you completed articles, you did this audit, you left, somebody else will come. 7 years they should retain. 8 years under Companies Act should be retained. 6 years it should be retained as per income tax. Tomorrow some client case is going on. Like this auditor was asked to give some information. If you arrange it in zigzag manner, how will somebody trace? That's why assembly is important. Understood? Now what is the purpose of documentation here? Why are we documenting all this? To prove that we do audit as per standards on auditing. To prove that I have acted diligently, carefully, skillfully. Sir, no. This is what objective of documentation. You see the question. What is the purpose of documentation? It will be helpful for next years. Okay. So all that we will be discussing in the next session. Until now, understood? Got some idea on documentation? That's it. So in the next session, we will discuss audit documentation. In the next session, I will cover in the next session documentation and the evidence chapter. That will also be completed. That's it. Okay. Yeah, carry on. So in the previous session, we have started this concept called audit documentation, and we understood how auditors maintain documentation, how we maintain documentation in in our auditor's office generally. And we maintain documentation in two formats. One is in soft copy format and hard copy format. Is the output clear for you? No disturbance? Yeah. So we maintain it in hard copy as well as soft copy, both the formats. And we have seen, I have explained you briefly how we generally plan the audit and conduct the audit, and how the documentation we will maintain briefly. Now let's understand the standard 230, what it exactly talks about documentation related requirements. Now, what is audit documentation? Audit documentation refers to record of audit procedures performed. Whatever verification procedures you perform, that we are recording, that we are storing. Nothing but what you document, evidences you document. Whatever information you are collecting, that you document. I verified the TDS payments, TDS payments every month. Challans, whatever I verify, or document. My workings I will document. GST workings I will document. GST challans, whatever is paid, I will document. Purchases I will document. Everything, whatever I verify, I document. It may be hard copy or soft copy, but most of the hard copy documentation we convert it into soft copy also. So audit documentation refers to record of audit procedures performed, evidence obtained, conclusions auditor has reached. Correct? So whatever evidence you obtain, whatever conclusions you reached, everything will be documented. And you know, this documentation is also called as working papers, work papers. So anyway it can be referred as. Documentation is also called as what? Working papers. Actually, the process of recording the evidence gathered, the process of recording, evidences collected, conclusions, is that process name is called as documentation. Once you document, you will have this file, right? Soft copy, all that. That is called as audit file. Audit file is a result of documentation. Understood? Audit file is a result of documentation. Yes. Just a minute. So audit documentation is nothing but process of recording evidences collected, whatever procedures that we perform, that is what documentation. And the result of documentation is what? Audit file. This audit file may be in electronic form or in digital form. So let us see simultaneously the definition of audit file also. What is audit file? It is nothing but one or more folders or some other storage media in physical or electronic form that comprises documentation. Records that comprise the documentation of whatever we collected, that is called as what? Audit documentation. Correct? So there, that is audit file. This is process is called as documentation. What is the objective of documentation? Tell me, what is the objective? It is a sufficient and appropriate record for the basis of auditor's report. It's a basis for auditor's report. Whatever auditor's opinion is there, further the basis is what? Documentation. Tomorrow, how you performed the audit? What is the proof that you executed the audit correctly? The only proof is this documentation, and it's an evidence that audit was planned and performed in accordance with the standards and legal and regulatory requirements. Audit documentation serves as an evidence that the audit was properly planned and performed. What is the nature of documentation? Nature of documentation is nothing but, again, once again, objective. Like, why documentation? What is its nature? What is its characteristic? Its characteristics very simple. It's a basis for conclusion about overall objectives of the auditor, and it is an evidence that audit was planned and performed as per the auditing standards. Yeah. So that's the nature of documentation. What is the purpose of documentation? Why? What are the benefits of documentation? It will help the team member to plan and perform the audit. Audit documentation, because whatever we do, whatever procedure we do, we document it. Our discussions about the audit, planning about the audit, strategies about the audit, everything we document. So the documentation helps the team to better perform the audit. And it helps the team to direct and supervise work. Whatever, how the team is working, who is doing which work, which team member is doing what work they completed. So reviewing that work, supervising them, documentation helps. And it of course makes the team members accountable for the work performed. Documentation makes the team accountable, because once they completed the work, they have to save all their workings. Automatically, since the workings are saved, they will have a fear that, okay, since they are saved, even if at all I did something wrong, it will be accountable. I need to answer them. So that's why they will do carefully. If at all there is no documentation process of work performed, people will do carelessly. And it will also provide a significance to future audits, especially when we are doing multiple years audits. What exactly in this company we did, what exactly in this company we have to do. New team members came. How do they know? They will see previous year documentation. So documentation of current year helps in the future. Documentation helps for conducting quality reviews. Documentation helps in conducting quality reviews. We have a concept called engagement quality control review in quality control standard. What is a quality control review? Somebody will sit and verify whether you performed audit as per standards, whether you properly planned and performed the audit, all the requirements of standards complied or not. So they will have to check it. They want to check that. So how they will be checking it? By verifying your documentation. And even for external inspections, for example, peer review, quality review, NFRA audit quality review, these are all external inspections. Some outside regulatory authorities, when they want to verify whether you did audit properly or not, which will help? Only documentation will help. Correct? So this is the purpose of documentation. What is the form of documentation? Like in which format? What is the form, content and extent of documentation? Like what should be the format of documentation? It depends upon the evidences collected by us. It depends upon the client also. The form, content and extent of documentation is not something predetermined. It depends upon the client we are working, because some clients maintain completely electronic data. Some clients maintain completely physical records. So the form of documentation, whatever that we are maintaining, it is not predetermined. It depends on so many factors. So what is the manner of documentation? Ultimately, see, what is the form, content and extent of documentation? Nothing but what should be the manner of documentation. Ultimately, you should document in such a way that after, see, obviously articles and all, they'll leave. Once they completed the work, they will obviously leave to another firm, or probably they'll go for industry something. But within next 7 years, if somebody want to verify your documentation to see whether you're working properly or not, whether you have worked on the audit properly or not, they must understand how you planned the audit, how you performed the audit, what conclusions you reached, what opinion you gave. Entire that other person should understand just by looking at your documentation. Your documentation shall be in such a way that it is self-explanatory. Correctly? You cannot maintain documentation in a zigzag manner. Your documentation should be in such a way that it is self-explanatory. An independent, experienced auditor, somebody who is an experienced auditor, by looking at your documentation, he should tell, without you explaining, he should tell how you planned the audit, how you performed the audit, what evidences you collected, what conclusions you have taken, what decisions you have reached, what opinion you have expressed. Just by looking at your documentation, somebody should be able to tell this. So, manner of documentation, the auditor shall prepare documentation that is enabling an experienced auditor having no previous connection with audit. A third party who has audit knowledge, but he didn't work in this audit, who has no connection with this audit, shall understand nature, timing and extent of audit procedures performed, result of audit procedures performed and evidence obtained. So how you performed the audit, what are the results that you obtained, what conclusions you reached, all that he should understand. In such a way you should maintain documentation. And he should also understand significant matters arising during the audit, conclusions reached and professional judgments made in reaching those conclusions. So an experienced auditor should understand how you planned the audit, what procedures you perform, what are the significant issues that got in the audit, and how you take decisions on those matters, how you concluded those matters. So all that he should understand. What are significant matters? What are significant matters? SA 260 talks about that. What are all significant matters? SA 260 talks about that. Significant matters arising in audit, like that we will be discussing in 260 standard. Who is an experienced auditor? A person who has a reasonable knowledge of applicable framework, accounting standard, auditing standards, knowledge of client business. But remember, he is not part of your team. Who conducted this audit, who prepared this documentation, that fellow is not part of it. But you should prepare documentation in such a way that an experienced auditor, by looking at your documentation, should understand how you planned and performed the audit. Further, what should be the documentation of nature, timing and extent of audit procedure. Further, in documenting NTE, the auditor shall record what are all the tests that performed, who performed it, who verified it, what are the significant matters, what are the differences and inconsistencies if at all identified, and how it was resolved. What you should document? You should document. We always tell in the audit, nature, timing, extent of audit. What is nature, timing, extent of audit? Nature of audit means, are you doing compliance procedure? Are you doing substantive procedure? Are you verifying past data? Are you verifying future data? It depends on so many. Nature of audit procedure is a very wider term. Timing of audit procedure. How many days you are doing? When you are doing, both are covered. Timing includes both. It's not just when. Nature, timing and extent of audit procedure. Extent means what? Are you covering 100% of the transactions? Are you covering sample? For some items, we cover 100%. For some items, we cover only sample. So, the documentation should cover all the following elements. In documenting nature and timing, the auditor shall record. They'll ask you a question on this, 4 marks question. What are the points the auditor should consider? What are the points the auditor should document, especially regarding nature, timing and extent of audit procedures? You should document what tests that you performed, who reviewed it, what are the significant issues that are arising in the work, whether any inconsistencies, like the auditors, sometimes they identify some inconsistencies, some exceptions. That exceptions has to be documented. How they were resolved also should be documented. One of the example of inconsistency is exception. Exception is nothing but, suppose I sent external confirmation to third party. I sent, sir, in our books of accounts 10 lakhs is the outstanding balance. What is there in your books of accounts? Please reply. They said 8 lakhs. They said 8 lakhs. This is called inconsistency, not a misstatement. This is called as what? Inconsistency. Then we will investigate. Whenever inconsistency is there, whenever there is an exception, we investigate whether that resulted into a material misstatement or not. Now, what are the factors that affect documentation? The form, content and extent of documentation is affected by various factors. In which format I have to document, what are all I have to document, all that is affected by various factors. One of the factors is size and complexity of the entity. If the business is very complex, entity is very big, your documentation will be very big. And nature of audit procedures performed. What type of procedures you perform? Have you performed test of controls? What you perform? Like substantive procedures. It depending upon what you are performing the most. Depending upon that, the content of documentation will affect. Nature, form and content. A form, content and extent. In which form the documentation should be? What should be documented? To what extent it should be documented? It depends upon so many factors. Suppose, if a company is completely automated environment, the documentation that is completely electronic. If the company is having a manual and automated environment, then documentation will be mixed. If a company is having completely manual environment, we also maintain documentation in manual. Risks of MMS identified. Higher the risks you identified, higher the audit procedures you perform, higher the documentation. Significance of the evidence obtained. Sometimes, some documents, we just see and give it back to the management. We don't document it because we felt it is not significant. Sometimes some documents, we will take a copy and then document. Significance of the information, that is also one of the important element. Very simple. Like, what are the factors for you to take running notes? If I ask you this question and give me an answer, it depends on so many things, right? Significance of the point that you listened. Correct? And it depends upon the risk or importance of that point. So many, like if at all I ask you, what you'll be writing running notes, right? Some of you, which I tell always no to strict no to running notes basically. But if at all you're maintaining running notes, if I ask you a question, give me a 4 marks weightage. What are the factors that affect notes taking? How to write that? That is what exactly auditing subject is like. Every time they ask you, what are the factors that affect form, content and extent of documentation? Nothing but what is the question, On what basis you decide so and so thing has to be documented? On what basis you decide in which format you will document? It depends upon not my interest. It depends upon other parties also. Size of the entity, complexity of the entity, risk involved, significance of the information that I am getting in that particular client, extent of exceptions identified. Exceptions means what? Differences, inconsistencies. What is it called as? Inconsistencies. Need to document a conclusion. Is there any necessity for me to document a conclusion? Sometimes no. I will be verifying some accounting estimates, and I am concluding that the estimate is reasonable. I am concluding that useful life is reasonable. Now, how I concluded useful life is reasonable, that also I will document. And audit methodology and tools. It also depends upon audit methodology and tools. If at all you are using automated environment, if at all you are doing audit in an automated environment where completely systems are automated, you're also doing audit digitally, the format of documentation varies. So any 4 points you have to write in this. This itself can be asked as a 4 marks question. And purpose of documentation can be asked as a 4 marks question. Next. What are the documentation examples? Like in exam they'll give you, write about meaning of documentation and objective of documentation, give you examples. 4 marks question. Examples means what? What all I'll document? Whatever queries I am issuing, that I will document. Whatever evidences I am gathering, that I will document. External confirmations I will document. Audit program I will document. Audit program plan strategy I will document. My analysis I will document. Issues memorandum means queries memorandum I will document. Summaries of significant matters I will document. Letters of confirmation, letters of representation, engagement letter, all that I will document. Checklist I will document. Correspondence means the conversation I had, the communication I made with the management through emails, WhatsApp, all that communication I will document. Whatever things various standards on auditing says me that you have to document, all those things I will document. These are all examples of documentation. Suppose I am doing purchases audit. In purchases, one bill I found where that was completely entered wrongly. Then I told management and they rectified it later. That bill I will document. That is an example of documentation. What are the examples of documentation? Nothing but whatever you are collecting and keeping in computer soft copy or hard copy in the file, they are the examples of documentation. And these papers, these files, either they may be belonging to planning process, analysis or issues memorandum, summary, significant matters or representations or confirmations, correspondence, anything it can be related to. The documentation what you are doing can be related to any of this. Correct? Next. Can auditor include copies of entities record as a part of documentation? Can an auditor include copies of entity records? Nothing but can I take accounting record as a documentation? Absolutely no problem. The auditor may include copies of entities records. For example, some big contract agreements and all is there. Loan agreements is there. You want to take a Xerox and then keep it with you. Your wish you can document. But tell me, audit documentation is not a substitute for accounting records. Audit documentation is not a substitute for accounting records. Obviously, what are they trying to tell? Just because entity already has entire data, that doesn't mean you are exempted from documentation. Like some auditors, they may say, why should I document, sir? Whatever I verified, it is there in the company itself. I can go and simply verify, whenever I want. Why should I keep a copy of it? Audit documentation is not a substitute for entities accounting. That is their record. Tomorrow, for 7 years, you have to retain, right? If some regulatory authority came for inspection, at that time you and that client are not having good bonding, how will you? So better you maintain always your own documentation. What audit documentation does not include? The auditor need not include the following items. What are they? Superseded drafts. What is superseded draft? Rough workings will be there, na? So some rough working is there. Then again I showed it to the management. Once again we redrafted the workings. Now first rough working is there. Why should I document? I can leave it. That is called superseded document. Suppose I prepared a report. I prepared some letter, external confirmation. Some mistakes are there. Now I throw that and I rectified mistakes and I again took a printout of the new letter. Again in that some mistake is there. I removed it. Again I took a printout with corrections. Now tell me, all the three should I retain? Whenever I print a new letter, it superseded the old letter. They are called as what? Superseded documents. Incomplete or preliminary thinking. Some rough workings that you are doing, you need not document. Previous copies of documents which are corrected for typological errors, you need not document. Duplicates of the documents, you need not document. Understood? Common sense. Entire documentation chapter is what? Common sense. Now, timely preparation and assembly of documentation. Timely preparation and assembly of documentation. What documentation does not include? A 3 marks question is possible. Now tell me, when should we document? Is it better for us to document as and when the work is completed, that area, or shall we sit at the last of the audit and document at the time? First method, as and when the work is completed, we should always document immediately, then and there, instead of documenting at the end of the audit. Why? Timely preparation of documentation, because I worked 40 days back, I started purchases work. Today I am doing something else. Now today if I have to think about what are all important issues I found in purchases, and today if I sit for documentation, that will not be effective. So the moment when I do purchase audit, at the time itself, all the issues related to purchases, whatever I felt I have to store it, I should document then and there. So the auditor shall prepare documentation on a timely basis. Preparing audit documentation on timely basis helps to enhance the quality of audit. Documentation prepared after the work is performed is less accurate than the documentation prepared at the time when the work is performed. So logical. So this itself can be asked as a 3 marks question. Write about timely preparation of documentation. Then further, once audit is completed, you are preparing timely the documentation. Whatever purchases work you are doing, at the time itself you are gathering all the documentation. Whenever you are doing sales audit, you are gathering entire documentation at that time itself. Whatever works you are doing, your team member is doing. As a partner, you told your team members, please document as and when that work is completed, and they are all following. Now after that audit is over, like we all sat for summary meeting, summary is discussed, conclusions reached, opinion also decided, audit report is also given. Now these many staff, almost 20 members were their engagement team, very big listed entity. They all gathered so many files, so many folders, so many copies, so many physical hard copies, so many folders and all were there, so many files were there. Every file is there in their own laptops. Now one day we should sit and we should assemble it neatly. What you did first day, what you did second day, what you did third day, what you did fourth day. So let us assemble it clearly. Why we need to assemble it? See, to retrieve the information, structured assembly is required. To retrieve the information, very simple. Assembly means what? Assembly of audit file. Suppose this book is there. When I'm preparing this book, some 350 pages is there. If I follow a particular format, all documentation related questions should come in one chapter. All risk assessment questions should come in one chapter. All so and so chapter related questions should come in the same chapter. If I zigzagly arrange, tomorrow if I have to search which question is here, it takes lots of time. Retrieval takes time. You are documenting everything. The book contains every question, but where it is containing, structuring should be there, right? Assembly should be there, right? So assembly of documentation is important for a better representation, for a better retrieval of the data. So what is assembly? The auditor shall assemble the audit documentation. Audit documentation, you have to assemble it. Assembly means neatly, properly, in a structured manner. Now tell me, assembling process is there, right? Is this an audit procedure? I am assembling the audit file. So no. Is this an audit procedure? It is not an audit related procedure. It is an administrative process. What is it? Administrative process. Audit procedure means what? When I am verifying some client's information, when I am verifying books of accounts, when I am verifying financial statements with a view to obtain some evidence, with a view to obtain some information, that is called as what? Audit procedure. This is not an audit procedure. So audit documentation is an administrative process. Generally it is done on a timely basis after the date of audit report. Within what time you should assemble this? Standard on quality control says please assemble it within 60 days. Again, after 60 days now you will forget, you will lose grip on this client audit, and again you will be focusing on some other audits, you will leave this completely. Please arrange the files, whatever working papers you collected, please arrange them in a proper order, assemble them in a proper order within 60 days from the date on which audit report is given. Next, and remember, this assembly process is a administrative process. The completion of assembly of final audit file after date of audit report is an administrative process, does not involve new procedures or drawing new conclusions. I am not doing any audit here. It is just an administrative. I will not be taking any decisions now. I will not be taking any audit procedures now. Nothing. They are administrative. The assembly process is purely administrative. What I will do in this assembly, I will discard some superseded documents. If some useless documents, I will throw it. I will cross-reference working papers. In computer, some work is a so-and-so folder. Here, some paper is a related paper. I will be cross-referencing it, sequencing it. I will be cross-referencing, sorting, collating, all that sequencing, signing off on completion checklist. Like as and when the work is completed, that respective team member has to come and sign that. Documenting evidence that auditor has obtained and discussed and agreed with relevant members before the date of audit report. Whatever evidences that we have gathered now before the date of audit report, all that we will store it. So this process is called as what? Assembly process. Now, how long you have to retain? 7 years from the date of audit report or the date of group auditors report, whichever is later. Audit documentation shall be retained for how many years? 7 years. Audit document, the retention period is ordinarily no shorter than 7 years from the date of audit report or later in case of group audit report. Nothing but date of audit report or date of group audit report, whichever is later. Suppose you are giving audit report on standalone financials and audit report on consolidated financials. Generally, first which you will give? Audit report on standalone. Only once the standalone financial statements are finalized, consolidation can be prepared. Now, if consolidated financials are there, standalone financials are there, which date you will consider? Consolidated financial statements audit report date you will consider. From that date, it is 7 years. Suppose you are doing a branch audit and my branch financial statements, no, approval was so and so date. I gave branch audit report on so and so date. Main auditor is also giving audit report, right? He is giving audit report on so and so date. From which date I should consider 7 years? Main auditor's report date. Clear? Who is the owner for documentation? It is property of the auditor. Audit documentation is property of the auditor unless otherwise specified by law. If the law says something else, that you are not the owner, then you are not the owner. Otherwise, by default, if the law is silent, who is the owner for documentation, audit documentation? Auditor himself. But can auditor provide documentation to the client? Yes, that is his choice. But can a client demand the auditor? No. Sir, you have taken printout on my paper only, so it is my property. No. Paper, if you want, I'll reimburse. The content on the paper is mine. Yes or no? Further, we have to document significant matters and related professional judgment. We should document what? Significant matters that were arising in audit. We should document that. We should also document professional judgment. Like you see, documentation related to professional judgment. Very important question in this chapter. These two questions are very important. These two parts, entire 6th question is very important. And even 7th question is also very, very important. In this chapter, question number 6 and question number 7. These two are extremely important. That doesn't mean remaining you should not study. I told you 3/4 strategy means entire chapter you have to study. Don't leave at all. Because documentation chapter, either MCQ is possible or descriptive question is possible. Sometimes both they will be asking. Now, what do you mean by documentation of significant matters? First of all, whether a particular matter is significant or not, it requires an analysis of facts and circumstances, correct? Depending upon the given facts and circumstances, we should analyze whether it is significant or not. That is what they are saying. Judging significance of a matter requires an objective, unbiased analysis of the facts and circumstances. What is significant in one client may not be significant in another client. So depending upon facts and circumstances, you should analyze whether it is a significant matter or not. Generally, when do I say that matter is a significant matter? If it is resulting in modification to the opinion. Suppose if I find some issue, suppose if I find some misstatement, because of that I feel like I have to modify the financial statements, then that matter is a significant matter or significant issue, correct? So findings that could result in modification to audit opinion or inclusion of emphasis of matter paragraph, any reason because of which you felt to modify the opinion, or any reason because of which you want to include emphasis of matter paragraph, even other matter paragraph, or even key audit matter, they all come under what? Significant matters. Or auditor felt significant difficulty in applying audit procedure. Auditor felt significant difficulty in applying some audit procedure. That could be a significant matter. I mean, auditor is feeling significant difficulty. For example, no, by default, client must have completed entire GST reconciliation. He didn't do at all. The client is not performing any background calculations, nothing. He is just paying tax and he is not keeping any records properly. That's a significant matter. Why? Because client not preparing all the reconciliation, I have to sit and prepare. It's a difficulty for me. And the result of audit procedures indicating financials are materially misstated. This could be a significant matter. When you are performing audit procedure, you found evidence that financials are materially misstated. That could be a significant matter. Or when you are performing audit procedure, when you are verifying, you understood that your previous assessment of risk has to be revised. Originally you thought risk is low, but when you are actually verifying that particular class of transactions, you found that here risk is high. Means you need to revise your risk assessment, right? Whatever circumstance that necessitated you to revise the risk assessment, that could be a significant matter. All the significant matters you should document. How do you check whether, what are the examples of significant matters? Any matter that give rise to significant risk. Any issues because of which you felt there is a significant risk, or any issue because of which financials are materially misstated, or any procedure or any information you got that indicate you need to revise risk assessment procedure, or circumstances where auditor faced significant difficulty, or findings where it results in modification of opinion or inclusion of emphasis of matter paragraph. All these issues are significant matters. By the way, whether these are significant matters or not, you need to interpret them in the based on facts and circumstances. That's it. So that is what documentation of significant matters means. So how will I explain documentation of significant matters? You see, how to revise, I'm telling you now. First you need to learn like this. Then you need to summarize. Then you need to revise. Many ask me how to remember this audit subject. We are unable to remember. There is no rule for this how to remember. First, focus on how to understand the context better. Focus on how to understand the context exactly. Correctly you should understand. Focus on that understanding part first. 95% of the student, I can say, they never understand what they're reading in audit. You know, I don't know how many of you read this question earlier. Documentation of significant matters. How they articulated, you see. First point, what they articulated, whether a particular issue is a significant or not, is a matter of analysis of facts and circumstances. Correct? So they are not directly jumping into how to document significant matters. First they are telling you when it will be a significant matter. Then they are giving you examples of significant matters. Examples, what are they? Any matter where significant risk is there. Any issue where you felt significant difficulty. Any issues where you performed some verification, right? The result indicates some misstatement in financials. Or any result of audit procedure that indicates your risk assessment is going to be revised. Or circumstances that indicating modification of opinion or inclusion of emphasis of matter paragraph, or circumstances where auditor is finding difficulty. All these are examples of significant matters. All these points, they are covered in 260 also. Significant matters. The auditor has to communicate significant matters to those charged with governance as per SA 260. This is context based understanding. You revise like this. Generally what we do is we read once, we understood or not, we again read once again without trying to understand. Then we leave that and proceed to the next topic without even understanding. Then how do you remember? This is one of the complex topic. This one, and even documentation related to professional judgment, is also one of the complex topics. These two are complex topics in this chapter. 99% they don't understand this. They don't understand why they were discussed like that, how they were discussed. Observe what they are discussing. Understood? Next, documentation of professional judgment. What is it? Documentation of professional judgment. How will I document professional judgment? For example, I'm explaining you the class and I'm seeing your facial expressions and all, and I'm judging accordingly whether you understood it or not. How did I judge whether you understood or not? How should I document? How complex, no? How should we document judgments? How we should document judgments? Very simple. An important factor in determining the form, content, and extent of documentation of significant matter is professional judgment exercised in performing the work and evaluating the result. This alone I'm explaining in detail. An important factor in deciding the form, content, and extent of documentation of significant matter is the extent of judgment exercise. You look at the question, write about documentation of significant matters and related significant professional judgments. First of all, how should you document significant matters? Okay, I decided to document significant matters. You understood that they are very significant, right? On what basis? How do you document the judgment? So documentation of significant matters and related professional judgment. Clear? They both are interlinked. But in exam, they'll ask you any one only. Write about documentation related to significant matters. Write about documentation of professional judgment related to significant matters. That they will ask. Now, one of the important factor in deciding documentation of significant matter is the professional judgment we exercise. If the judgment is very high in that, judgment is high means what? You see, purchases, whether it is right or not, purchase invoice will be there, e-way bill will be there, transport challan will be there, purchase order is there, amount is there, everything. No judgment required. Here, no judgment. It's an actual transaction. Depreciation. Is it right amount or not? It is based on judgment. Because if somebody asks me what is the useful life of a particular mission for this company, I will give some number. If I call somebody else and explain this facts and circumstance, he will give some other number. Third person, he will give another number. Because useful life is highly subjective. When it is highly subjective, it is judgmental. If the judgment is significant, if the judgment is what? Significant level. Significant level means what? The estimates used in that, assumptions used in that judgment, no. They are very debatable. They are highly fluctuating. Are you getting it? That is even more challenging. Documenting professional judgments related to significant matters is even more challenging. Now you see, documentation of professional judgment serves to explain auditor's conclusions and reinforce the quality of judgment. Suppose, dear Mr. Auditor, on what basis you agreed Reliance Industries life, plant and machinery life is increased from 30 to 50 years, right? On what basis you agreed to it? That time I worked on audit. At that time I saw everything, but I didn't document on what basis I agreed. I documented life is revised to so and so because it's a significant matter, and I documented what are the consequences, all that. But whether the 30 to 50 it is increased, no, is that right or not? I'm unable to. I verified all that, but I didn't document. Today, when somebody coming and asking me how did you conclude it is reasonable, I don't have answer. So my analysis behind acceptance for change in accounting estimate, which involves significant judgment, that analysis also should be documented. So in the following cases, you see, the auditor shall document his use of professional judgment. Wherever you use professional judgment, especially in the following cases, you have to compulsorily document. What are they? If such a judgment is relating to matters which are related to significant matters. In the following cases, your professional judgment process shall be documented. Professional judgment process, how will you document? Okay, you verified useful life from so and so to so and so, right? You saw the assumptions, right? That assumptions you document. On what assumptions the life of machinery is revised from 30 years to 50 years. How do you decide that this assumption is reasonable? Some expert and all gave a report. You also saw the remaining petroleum companies across the world. They also have revised it like this in the previous circumstances, useful life from so and so to so and so. That information you use it, right, to decide whether this action is correct or not. That information you document. So how do I document? See, I will be deciding based on some facts and circumstances, right? Just to document those facts and circumstances and write there how this particular fact you analyzed, how this circumstance you analyzed, that you document. That itself is nothing but documentation of professional judgment. So what is the rationale for auditor's conclusion? Where a requirement means probably accounting standard requirement or auditing standard requirement, whatever it is. A requirement provides that the auditor shall consider certain information or factors, and that consideration is significant in the context of the particular engagement. What is the auditor's rationale? What is the rationale for auditor's conclusion? When an accounting standard or auditing standard provides that auditor shall consider some information. Suppose when there is a change in useful life, the accounting standard is asking you, how useful life can be changed, How useful life from so and so to so and so is revised? On what basis it would have been revised? It would have been revised based on some expert's opinion. It would have been revised based on industry average. It was revised based on so many facts and circumstances. That facts and circumstances you document. Second one, on what basis you concluded that the reasonableness of subjective judgment? Right now I told revised useful life has been revised from so and so to so and so, right? On what basis you felt this useful life is reasonable? On what basis you felt this useful life is reasonable? Related evidences you document. The basis for auditor's conclusions about authenticity of a document. The basis for auditor's conclusions about authenticity of the document, this further point is ignored. The basis for auditor's conclusion about authenticity of a document. Originally, when the Reliance company has revised from 30 years to 50 years, no, you felt that this is completely wrong. You felt that this is completely wrong. Later, based on some documentations, yes, based on right documentations, original documents and all, after they showed expert workings and all, they showed, you convinced that you should document. Clear? So these are the points that you must document related to professional judgment. So one of the important factor in determining documentation of significant matter is professional judgment exercise. To what extent? Is it a limited judgment or high judgment? If it is a high judgment, high uncertainty is involved. If it is high, means significant judgment. Suppose in this case, Reliance is having 4 lakh crore worth of plant and machinery. The useful life is increased from 30 to 50 years. Obviously, high amount of judgment would have been involved in this. High amount of assumptions would have been involved in this. Suddenly, useful life is increased by double. That to the value of plant and machinery is 4 lakh crore, significant. And why you have to document? It will serve to explain my conclusion and to reinforce the quality of judgment. It will help me to prove whether my judgment is qualitative or not. And in the following cases, auditor shall document his professional judgment relating to matters that are related to significant. Directly you can say, in the following cases, the auditor shall document his use of professional judgment if that judgment is related to significant matters. What? First point, what is the auditor's conclusion? What is the auditor's conclusion? When a requirement provides that auditor shall consider so and so factors in the context of particular engagement, in the context of a particular work, what factors you should consider as per accounting standard to decide a judgment? All those factors you document. Second, what is the basis that, on what basis you understood so and so's judgment is reasonable? On what basis you understood so and so judgment is reasonable? That, see, for useful life, no, we need to verify for sure certain points. What are they? Point number 1, I should verify who did this revision, who has taken this decision. 2, some engineer would have certified the fitment certificate. Some engineer would have given fitment certificate for this plant and machinery. Some environmental authority or some authority, some legal and regulatory authority, somebody would have been there. Some engineer, somebody, they would have given that this useful life is, the asset is useful from 30 years to 50 years, something they would have said. So that report you document. What are all the information and factors that are useful for particular judgment, that you document. Now, information you documented. How did you analyze this information and concluded that it is reasonable? Some workings will be there now, that you document. Finally, the auditor's basis for conclusions on authenticity of the document. Now, above you are documenting expert report, engineer report, all that. How do you think they are genuine? On what basis you felt that they are genuine? Document. Sir, this so-and-so expert report is given by so-and-so particular engineer who is governed by Engineering Institute of India. So he is having a membership number. Same like we have a UDIN number portal, they also have some unique identification number. Based on that, I concluded that the document is genuine. What is the proof that whatever documents you used for professional judgment, how far the documents are genuine, on what basis you concluded that they are genuine, that also you document. Clear? Indirectly, whatever significant matter is there, inside that if any judgment is involved, what is the information used for that judgment? Documented. On what basis you concluded that this judgment is reasonable, means analysis you should document. How do you know these documents are genuine? That analysis you should document. This is called summarization. This is called summarization and revision. If you understand like this and once again you read later, you will remember. blindly without understanding, without interpreting. If you keep on reading it 10 times, reading is equal to 10 times writing something, all that, they don't work. Clear? Then finally, audit summary memorandum. Generally for big audits, issues will be so many. 20-30 members of us are working. Different areas we are working. Now, every one of them will have some issues. Some mistakes or some issues they would have found. Some observations they'll be having. Some queries they will be having. All the queries of all these 20-30 members, we will summarize it and filter it, so that this summary will be discussed with the top management and resolved it before final audit report is issued. Now that summary, whatever we are preparing, that is called as what? Summary memorandum. Generally all the significant matters will come in summary memorandum. See, the auditor may consider it helpful to prepare and retain as a part of documentation a summary that describes significant matters identified and how they were addressed. What are all the significant matters that we identified in audit by multiple team members? That can be documented into a small summary. Such a summary will facilitate review and inspection of documentation, particularly for large and complex audit. So preparation of such a summary will help the auditor to better consider significant issues. It also helps the auditor whether is there any individual standard objective that cannot achieve, that would prevent, that's not required. That's third point. Only first 2 points are enough. 3 marks question, it is important. 3 marks question, it is important. Clear? All of you? That's it. Documentation chapter is over. Easy or not? So let's begin the chapter audit evidence. So inside that, the first thing I want to start is with 501, 505, 510, 550, then 610, then 500. 5 standards. So the order in which you also revise later is first 2, 3, 4 and 5 and finally 6. Evidence topic you discuss at last. This is the order. If you learn in this order, you will get the best understanding. So the first thing that we will discuss is 501. So 501, what is 501? Audit evidence, specific considerations for selected items. Specific considerations for selected items. So like the standard, if you observe, specific considerations for selected items. It's actually an extension to audit evidence standard. This is 501. Audit evidence is actually 500. Extension to it is 501. Generally, most of the standards, if you observe, they only tell you theoretically what you have to do. So they simply tell you, you have to check whether financial statements are as per applicable framework. You have to obtain relevant audit evidence. You have to obtain appropriate audit evidence. You have to obtain sufficient audit evidence. They specifically select a particular area of the financial statements and they will not tell you what exactly to do. But this is one standard where they specifically selected 3 issues. Where they specifically selected what? 3 issues. What are they? 3 issues they are selected. Inventory, litigations and segment information. What is it? Segment information. 3 items were selected. And what specifically for these 3 items you should consider? What are the specific considerations for these items also they are discussing? For inventory, you should consider existence and condition. This is the consideration for inventory. For litigation, completeness of presentation and disclosure. Segment information, presentation and disclosure as per applicable financial reporting framework. For these 3 selected items, the auditor has to specifically consider. For inventory, you have to specifically obtain sufficient appropriate evidence regarding existence and condition of inventory. Valuation is not covered. Valuation we need not check. Anyhow, accounting standard is there. You will have to check whether as per accounting standard to valuation is completed or not. So no need to specifically talk about valuation once again in auditing standard. existence and condition of inventory you should check, because condition of the inventory is one of the fundamental principles for valuation of inventory. If an inventory is in bad condition, deteriorated condition, it should be valued at NRV. If inventory is not in good condition, obviously obsolete, it should be valued at NRV. Slow moving inventory generally valued at NRV. Condition of the inventory decides the valuation principle. Accounting standard tells if inventory is obsolete, if inventory is in bad condition, value at NRV. The rule it says. Whether inventory is in bad condition or not, how do you check? Auditing standard says. Then litigations. You need to check whether all the litigations pending against the entity, were they completely presented and disclosed as per applicable framework or not, you have to check. Then another one is what? Segment information. So let's look at one by one. So first let us look at segment information. Let's look at segment information. What auditor has to do here? Auditor has to obtain, the auditor shall obtain sufficient appropriate evidence regarding presentation and disclosure of segment information. Is it in accordance with the applicable financial reporting framework? Whether segment information presentation and disclosure, is it as per applicable framework? Do you have the knowledge of segment reporting standard? In segment reporting standard, how to identify reportable segments, there are some testing methods. By applying those testing methods, I didn't remember much, but I think some asset test, revenue test, is that? Yes. So some testing methods they have given. If a particular division of the entity or a product of the entity, if it is matching with that particular formula, if it is matching within that norms, then that particular product can be shown as a separate segment, reportable segment we call it as. Now the methods are suggested by whom? Standards. The accounting standard discusses the methods. Now what we need to check here, whether the methods used by the management for identifying segments, reportable segments, whether the methods used are appropriate, whether are they as per accounting standard or not, we need to check. Further, we should also check previous financial year how many segments were there, this year how many segments were there, last year how many segments were there, this year how many segments were there, that also we should check. So previous year how many were there, this year how many were there, that is one more responsibility for us. So that is one more reporting. So that only they are asking. First obtain an understanding of the methods used by the entity for obtain the understanding of methods used by entity for determining segment information. Obtain an understanding of methods. Exactly what methods are used. Are they in accordance with the applicable framework? So they use so and so method. That is what suggested as per accounting standard. You also test that method. See, do you get the same answer? What entity has got same answer? Do you get or not? Check out. Perform analytical procedures as appropriate in the circumstance. 1. First, what methods they are used? Is it as per standards? 2. Test those methods and you calculate how many segments your answer you are getting and how many they reported. Check last year how many segments were there, this year how many were there. Analytical procedure means that only. Are you getting it? The auditor is not required to perform procedures that would necessary to express opinion on segment information on a standalone basis. Obviously, we are doing this entire work. Do we want to give a separate opinion on segment information? You do all these procedures as a whole financial statements audit with a view to give opinion as a whole on the financials. You necessarily don't do this separately as a separate opinion on the segment reporting. Now, one of the important thing is what methods management is using. One of the important thing in this entire standard is what method. Depending upon the circumstances, example of matters that may be relevant when obtaining an understanding of methods used by management in determining segment information, whether those methods are likely to result in disclosure as per applicable framework. What methods used by the management for segment reporting? Generally, they will use same methods as given by accounting standard. If at all they used some other method, whether those methods give the same answer as if the methods given under accounting standards are used. How to check that? Look at the following: segment transactions, sales transfers, charges between segments, comparisons with budget and other expected results, allocation of assets and costs among various cost centers and segments, consistency with the prior period. While understanding the methods, exactly look at sales transfers, charges between segments and elimination of inter-segment amounts, comparison with budgets and other results, allocation of assets and cost among the segment, consistency with the prior period. This is what, by looking at these items, we will generally analyze whether the segment information is presented properly or not. For example, last year, some segments they presented. What are the sales happened between them? What are the inter-segment transactions, all, what are they? How the assets were allocated to these segments. Now, this year, how many segments were there? Whether how these reportable segments, how they were calculated. What applicable framework says, as per the framework, how many it will come. By doing entire this analysis, we will understand what methods the entity is using. If you understand the methods, you can understand whether that is a right method or not. If it is a right method, you will ultimately check whether it is presentation disclosure proper as per accounting standard. Finally, audit is over. With respect to segment information. So the objective is very simple. The objective is you should obtain sufficient appropriate evidence regarding presentation and disclosure of segment information as per applicable framework. Another item is what? Litigations. Another item is what? Audit procedures regarding litigations and claims involving the entity. Audit methods. What is a general audit procedure? Generally, how do I know whether litigations and what are all the litigations and claims that are there? How do I know? Inquiry management. Some entities, they will have an in-house legal counsel. Big entities like Reliance, Adani Groups, Infosys, they will have a legal department. They will have an in-house legal lawyers. In-house lawyers will be there. Continuously, whatever case the company is receiving, they will only argue. So there is an in-house legal department. Inquire them, talk to them. Review the minutes of the meeting of top management and legal counsel. Correspondence between entity and external legal counsel. Apart from internal counsel, these entities will also have external counsel. Some cases of the entity which are there in Supreme Court and all. No. Internal lawyers will not argue. Some big lawyers who are external parties, they will argue. Some independent lawyers will argue. They are all called as what? External legal counsel. Speak to the management. Speak to the internal lawyer. Look at the communication happened between the company and outside lawyers. Check the legal expenses account. Why am I checking all this? Ultimately, by the way, what is the objective of this standard? We want to identify litigations and claims involving the entity that may give rise to risk of MMS. Suppose some litigation is pending against the company, but the company did not recognize in books of accounts. Will it be a misstatement or not? If a pending litigation against the company not recognized in books of accounts, obviously will it be an issue or not? So litigations and claims may have a material effect on the statements. Therefore, they require disclosure and accounting sometimes. So since they have a material impact on the financial statements, auditor has to obtain sufficient appropriate evidence whether the pending litigations are completely presented and disclosed. How do I know what are all the litigations were there? First ask the company, ask the lawyer, look at the company communication between this and external lawyer, check the legal expenses account, for what purpose legal expenses are paid, review that. In addition to the procedures above, using information obtained through risk assessment procedure carried out as part of understanding the entity and its environment will assist the auditor become aware of litigations involving the entity. Maybe when you're doing risk assessment, that time you might have got some knowledge about some pending litigations, because when you're understanding the entity and its environment, you understood that some strikes are going on, some journalist comments and all were there, media comments and all were there, adverse comments. That will give you a hint about some pending litigation. Audit evidence obtained for the purpose of identifying litigation. Sometimes you get information about litigations, right? You will also get evidence regarding valuation and measurement regarding litigation. Sometimes when you are when you are reading case documents, you not only understand that so case is pending, you also understand how much amount is involved. So that will help you to calculate the amount of contingent liability. Yes or no? So that is what they're saying. Now, some circumstances, we have to directly communicate with external legal counsel. This itself can be asked as a straight question, 4 marks question. Straight question. So, under what circumstances the auditor shall communicate to external legal counsel? If auditor assess, you see here, if auditor assess a risk of MMS regarding litigation and claims, or audit procedures indicate that some other litigation may exist. If auditor assess risk of MMS regarding litigation and claims, if I feel that some litigation is there, but company is not disclosing me, the auditor shall seek direct communication with external legal counsel shall seek a direct communication from external legal counsel. I think based on, when I'm checking legal expenses account, so many expenses were paid to so and so lawyers, fees paid to lawyer were there. When I investigate, fees is paid for something which is not available, that information. When I ask management, they are not giving me the data. I will directly communicate with the external lawyers. So seek communication with seek direct communication with the external lawyer. How will I do this? Through a letter of inquiry, requesting external lawyer to communicate directly with the auditor. I will prepare a letter of inquiry. I will ask the management to prepare letter of inquiry. I will send it from my mail ID. You also, I will attach your mail ID also, so that the lawyer will think that, okay, I am your auditor, so he can reply. Otherwise, lawyer is also bound by confidentiality rate. For lawyer, I am the third party, obviously. Though I am the auditor of the company, from the lawyer point of view, I am third party. He will not reply me. If further, the entity's external legal counsel can communicate directly to the auditor. Sometimes no. These lawyers are bound by confidentiality principle. They were prohibited by some law, regulation, or as per their code of ethics to discuss anything about the case to third party. In that case, the external counsel, the entity's counsel, if law regulation prohibits the external counsel from communicating to the auditor, means if at all external lawyers are prohibited to respond to us, in that case, we will not get any information from the lawyers. Then how can I get information about the case? Alternative procedure. Suppose it is considered unlikely that entity's external counsel will respond appropriately to a letter of general inquiry. Sometimes they will not respond if you give a general inquiry. Like you sent a mail like this, sir, I am the auditor of so and so entity. Based on our records, we understood that you are dealing with many cases about the company. Can you please give us list of all the cases that you are dealing about the company and what is the status of each and every case? I asked. This is a general inquiry to the external lawyer. Sometimes they will not respond to it. Sometimes when we are when we are raising communication with external lawyer, you have to specifically inquire on a particular case. So the entity has paid you on so and so date, so and so fees for so and so purpose. For what case this fees is paid for you? Can you please give details about it? This is called a specific inquiry. Whereas first one is what? General inquiry. If it is considered unlikely that external counsel will respond appropriately to general letter of inquiry, if it is considered unlikely that they will respond to general inquiry, the auditor may seek direct communication through specific inquiry. The auditor can directly communicate through specific inquiry. For this purpose, a letter of specific inquiry will include exactly the what litigation and claim you are asking. Where available, management's assessment of outcome of the litigation. A request that the entity's external counsel confirm the reasonableness of management's assessment of litigation. Very simple. Sir, our company, they showed so and so case as a contingent liability, sir. You are only dealing with it. Based on the facts, I am unable to understand, is it a contingent liability or real liability? This is a so and so case where it is pending in Maharashtra High Court. Okay, so in Maharashtra High Court, so and so case is pending, sir. So the company is saying that it's a contingent liability, sir, but I'm not sure whether this is really a contingent liability or not. You kindly reply whether this case, whatever management assessment about this litigation that it is a contingent liability, is that assessment right or not? Just reply, sir. Don't give me any information. Company did this thing, you just give me a reply, that's enough. This is called as what? Specific inquiry. What is a general inquiry? I send him a letter asking, sir, you're dealing with so many cases, please give me a list of all the cases, what is the consequences, what is the status of the case, what our company has to do right now. Some lawyers will unlikely to respond like this. In that case, what you have to do? You have to seek direct confirmation from the lawyer through specific inquiry. When it is a specific inquiry, you should specifically list what is the case you're talking about. Suppose the case knowledge is not there, then you talk about, sir, legal expenses paid to you on 7th July. What is it related to? So that you can ask. This is called as a specific inquiry. Generally, lawyers will respond only if it is a specific inquiry. If it is a general inquiry, they will not respond. First of all, if at all responding itself is prohibited for them as per the code of ethics, as per the lawyers, they won't respond. If they don't respond at all, what you have to do? Alternative procedures, you should obtain evidence regarding pending litigations and claims. Suppose there is no alternative procedure. I am unable to get information about some legal expenses paid, for what purpose it is paid, no information. Lawyer is also not responding. Non-availability of evidence. What I will do? Modified opinion I will give. Qualified or disclaimer. Not adverse. Evidence is not available. When I am not getting required information, how can I give that is wrong? Adverse means what? Saying that it is wrong. If you want to say it is wrong, show me proof. I don't have proof. Then how can we give adverse opinion? So either qualified or disclaimer of opinion. Sometimes no. Okay, this is through inquiry. Direct communication with external legal counsel. Sometimes communication you may feel this communication through letters and all is not sufficient. You may feel direct meeting with the lawyers in some circumstances. When? If the auditor determines that matter is significant risk, or when the matter is complex, or when external lawyers and management, some issue is going on between them, disagreement. External lawyers and management, they both have disagreed on some issues. Why exactly what is happening? I may want to know by meeting to them directly. External communication is what? The external confirmation is what? Direct communication or direct confirmation, both are same, right? Technically. External communication or external confirmation or direct confirmation or direct communication with external legal counsel. It is nothing but external confirmation only, right? How we do external confirmation? We will prepare the confirmation letter on management letterhead, or we will prepare this in the management mail ID. From the management, we will send the mail to third party. Who will send this mail? Auditor will send by sitting with the management. In that mail, we will mention our mail ID also. Please respond to me directly. This is how direct communication we do. Direct confirmation we do like this. Now, management and lawyer both are disagreeing on a particular issue. Tell me, through this external confirmation procedure, will I get a proper evidence if at all they both are disagreeing to each other? In that case, what is best for me? Directly meet them if possible. Clear? Ordinarily, these meetings require management's permission and are held with a representative of management. You don't directly go and meet secretly. You will take some management staff also along with you, and then you will do. So that's it. So they'll give you an exam. Under what circumstances the auditor may judge it necessary to meet external legal counsel? This itself can be asked as a 3 marks or 4 marks question. Or they'll ask you this question, write about direct communication with external legal counsel. Or they may ask you this D point, under what circumstances auditor will consider that specific letter of inquiry is required. So, what are the contents of, what are the points you include in a specific letter of inquiry? They'll ask you specifically this question. Finally, suppose if management is refusing. Sir, no, you are not permitted to directly communicate because lawyer is saying he will not reply. You are not permitted. Okay, you don't permit. I will try to get evidence in alternative way. If alternative way is also not possible, ultimately non-availability of evidence, modified opinion, qualified or disclaimer. Getting it? That's it. Next. What else is the pending item? One more pending item is what? Inventory. Inventory, what we need to check? What we need to obtain? We need to obtain sufficient appropriate evidence regarding existence and condition of the inventory, whether inventory is in existence. If so, in what condition it is existing? You should inspect the inventory for checking the condition of the inventory. You should visit the inventory and perform test count to check whether inventory is in existence. Whether inventory is in existence, you need to visit, go down and then physically check. Suppose if inventory is with third party, what we should do? Confirmation again, third party, confirmation. Suppose if at all you feel the confirmation given by third party is not reliable, you will directly visit, or you will send another auditor to go and check it. That is what question number 5. When inventory is under custody and control of a third party, which is material to the financials, the auditor shall request confirmation from third party. What you will ask in that confirmation? What is the quantity of inventory you held? In which condition you held? Further, you may perform inspection, in some other circumstance, like, you may perform inspection of inventory which is there with the third party. Like, you will look at the documents regarding inventory held by third party, or confirmation from other parties when the inventory is pledged as collateral, attending or arranging another auditor to do third party, like whatever inventory is there with the third party, you will arrange directly or send somebody or get another auditor's report or a service auditor report on the adequacy of third party control. Sir, what is a service auditor's report? Ignore it, right now not relevant. Getting it? Suppose if the inventory is maintained at the third party location. Suppose no, we are dealing with some good, ours is a retail store, very big retail store, and we are also registered as a seller in the Amazon. And many of our goods, whatever we want to sell, no, we first transfer it to Amazon warehouse, centralized warehouse. Amazon makes the packing and they'll keep it ready. They maintain entire store management and they'll do properly. But that's my inventory. Whenever sale happens, Amazon quickly delivers. For a quick delivery purpose, the stock is maintained by Amazon. So advanced packing, everything will be done. Just that address sticker will be attached to it and then sent. For that reason, Amazon maintains warehouse, Flipkart maintains warehouse, centralized warehouses. Now inventory is with third party. So in that case, no, I want to know Amazon, that warehouse is enough. For that warehouse, there's an auditor. Whether the warehouse is maintaining the inventory in a good condition or not. There will be an audit of the warehouse. That audit report is called as what? Service auditor's report. What do we call them as? Service auditor. Service auditor means what? Amazon is providing me service right now. What service they are providing? My entire goods are they are maintaining. So Amazon is a service organization for me. Service organization auditor is called as what? So when the inventory is with third party, what I will do? I will either send another auditor and check, or I will take service auditor report. Means that a company auditor's report I will take. That company audit report is called as what? Service organization. Services provided by service organization. We have a discussion 402 standard, which is there in CA final. Just a minute. Fine. So service auditor concept. Getting it? Service auditor concept. What is that service auditor concept? I just told you. For example, we have a specific standard on this, which is 402. There is another standard called 3402, which we have in CA final. Just you might have read this entire standard earlier also. Have you got this clarity? Some of you, whoever have attended my class probably. Suppose, one more thing. Okay, if the inventory is with third party, I understand. What if inventory is in the entity itself? What if inventory is within the entity itself? As on the year end, you must plan to attend entity's physical inventory counting. Every organization will do physical inventory counting at 31st March. You must plan to attend that physical counting, which is performed by management. Okay, what will you do by attending it? By attending attendance at physical inventory counting, you will do. What you will do by attending it? I will check how management is instructed the staff on counting. I will observe how they are counting. I will go and inspect the condition of the inventory. I will also perform test count. Means like management, he said in one rack 49 items were there. I will also go and see whether 49 items there or not. That is called test counting. I will not do each and everything I will counting because they are doing. I'll just sit and observe how they are counting. Suppose if at all it is impracticable for you. If at all it is impracticable for you to attend management counting date, because I have not one client, I have 10 companies for which I am auditor, and every one of them are doing on 31st March only the counting. Okay, sir, at one place you finish and go to another place. One is in Delhi, one is in Kanyakumari. How can I cover these two places? And remaining 8 are there in 8 more cities. So it is impracticable for me to attend all my clients' physical inventory counting on the same date. In that case, what I will do? If attendance, I will perform audit procedures over entity. Okay, this is continuation only. So first I will observe, I will attend the physical inventory counting and I evaluate all these reserves, all that, and I also reconcile with the records. So whatever count they are saying, is it matching with the records or not? Further, attendance at physical inventory counting involves what and all? Inspecting the inventory to know whether its existence and condition, checking the compliance of management's instructions, what management instructed to the staff on how to count and how they are counting, whether the management instruction is correct or not, all that I will check. Now, what are the matters relevant in planning attendance at inventory counting? Like what points you should keep in mind when you are planning to attend the inventory counting? You should first keep in mind nature of inventory. What is the nature of inventory? Is it oil reserves? Or is it some air conditioners? What is the nature of inventory? Something that is tangibly can be counted by us, or something that requires an expert assistance. For some entities, I cannot go and observe physical inventory counting. Even if I go and observe also, I don't understand anything. Oil wells will be there for some companies, properties. In the well, how much is the inventory? We can't. Some companies will store some paddy and rice generating units. So they will store in silos. We call them as what? Silos. So like big, it looks like a reactors, silos, and they'll have a gauges, weight gauges. So that is something that I'm not technically used to. Look at the nature of inventory that you're going for. First observe that. What is the stage of completion in case if it is work in progress? So when you're attending inventory counting, these points you should keep in mind. Are you verifying finished good, or are you verifying work in progress? What? Nature of inventory, again, once again, it also comes as raw material, work in progress, finished good. That also, that interpretation also you can take. What is the risk involved? What is the internal controls related to inventory? What is the timing when they are doing this inventory counting? Whether entity maintains a perpetual record for every inventory, for every inflow and outflow, are they maintaining perpetual record? Whether, I mean, the location where the inventory is held, is there any assistance for auditors expert? Before you go directly blindly for physical inventory counting, check what is the nature of inventory, what is the work in progress stage of completion, where it is held, at what time they are counting. Do I require help of an expert to go and assess the inventory condition? At some inventory, I may not require any expert assistance. For some inventory, I require expert assistance. Understood? Next. Suppose no. So this is what, right? As on 31st March at the year end, whenever company is doing physical inventory counting, I must attend. Suppose if inventory counting is conducted other than the financial statement date, not on the balance sheet date, but on the other date. Okay. Go on the other date, perform the test, whatever we told above. No, same you perform on the other date only. But between 31st March to the counting date, whatever changes happen, see whether they were properly accounted or not. That's it. Next. Suppose if your auditor is unable to attend physical inventory count, you are unable to attend physical inventory count due to unforeseen circumstances. If at all it is impracticable for you to attend all your clients' inventory counting, try to attend on alternative date if possible. Suppose physical counting itself is impracticable. See, here two types of impracticability. On the date it is impracticable for you, or counting itself is impracticable for you. Which one? If it is on the date, it is impracticable. Alternatively, you plan. If at all physical counting itself is impracticable, it is not possible. Why? Godown was blocked. The roads to the godown was completely blocked. Some strikes are going on in that particular region. It was completely blocked. Floods were there, completely blocked. Are you getting it? Or some natural calamity occurred. That is the reason I cannot go there and verify. So lockdown is there in that locality. If at all physical counting itself is impracticable, I will try to perform alternative procedures to get evidence. I will try to get evidence, yeah, whether really in that godown inventory there or not, I will try to get evidence. How can I get evidence whether inventory is there in the godown? CCTV camera footage. And when goods were delivered into the godown, some proofs will be there that they were delivered right into the godown. So that proof of delivery I will check. And from that godown, no deliveries were there later on. So deliveries were there inside, but output is not there, outflow is not there. That means inventory is inside the godown, right? In this way, I will get an evidence that yes, in the godown inventory is there. Though I physically did not go and see, but I trust that inflow is there. Inflow I trust because I have a convincing evidence that there is an inflow, there is a delivery. Next, if it is not possible, suppose even alternative procedure is also not possible, you modify the opinion. Which opinion you will give? Qualified or disclaimer of opinion. Why? You are unable to get evidence regarding existence and condition of the inventory which is there in the godown. You are unable to get. You are unable to get means you don't know whether it is really there or not. So which means I will give which opinion? Modified, qualified or disclaimer. So some, in some cases attendance at physical inventory counting may be impracticable because of the factors such as nature and location of the inventory. The matter of general inconvenience. By the way, I feel inconvenient to go there. Can I call it as inventory counting impracticable? No. You have to make yourself convenient. Going there itself is impracticable. That's a different scenario. General convenience of the inconvenience of the auditor is not a sufficient decision that inventory counting is impracticable. You cannot say just because it is not comfortable for you, you don't say that physical inventory counting is impracticable. Further, the matter of difficulty, time, cost in itself is not a valid basis for the auditor to omit an audit procedure to be satisfied with the evidence that is done. Persuasive. What does it mean? You should not show time, cost, difficulty as a reason for not performing an audit procedure. I don't have time. Your pay under fees gida idigum. You can't ida adigam and the mother you can't say like that. So tell me whether you do audit at free of cost or whether you do it for remuneration. You must obtain sufficient appropriate evidence. Agreed? Suppose whether the doctor is operating the patient with remuneration, without remuneration, with the fees or without fees. The number of stitches should be adequate, right? Pre-operation 2 stitches போட்டு அனுப்பலாமா? Auditor's duty is also as severe as such, because your report is ultimately going to be trusted by many. So you need to tell whether they are really true and fair or not. Yes or no? Whether you are doing audit for a lesser fee or highest fee or no fee doesn't matter. You are telling so many outsiders that the financial statements are true and fair. How can you tell they're true and fair? Only when you convince yourself that they're true and fair. When you will convince that they're true and fair, only when you satisfy that the information is correctly recorded. Correct? The matter of time, difficulty, cost is not a valid basis for the auditor to omit an audit procedure or to be satisfied with an evidence that is less than persuasive. You should not satisfy less than persuasive. You should convince yourself. Only when you convince, you give opinion. Without convincing yourself, you cannot give opinion and say that I don't have time. Clear? Alternative procedure means what? Inspection of documentation of subsequent sale, or inspection of documentation that goods were inflowed, goods were sent to that go down. That documentation you will see. So this documentation will help you as an alternative evidence that inventory is there in that particular go down. That's it. So entire standard is over. Easy. Mostly I covered, technically speaking, I covered in depth only, not like a revision. Like one doubt many are asking, how should we revise day before exam? Iva first padikave maata. எக்ஸாம் முன்னாடி நாள் எப்படி ரிவைஸ் பண்ணும், இது பற்றி யோசிக்கவே இருப்பா. முதல்ல படிங்க. ஃபர்ஸ்ட் யூ ஸ்டடி, then you can think of day before exam how to study. I'm telling you, the day before exam, again படிச்சா அவ்வளவுதான். Again, day before exam, that 1.5 day what you have, which is equal to 20 hours of effective time you will be having. Like, if at all you don't have costing exam, of course, anyhow that's the first paper, right? So 1.5 day before exam only let us count. If at all you are having one more day extra, that's a bonus. Lucky you are, if it is so. Let us assume 1.5 day. Generally you finished costing exam and came back. That day let us assume you have 2 hours of time. And the next day you are having 14 hours of time, let us assume. Since tomorrow is exam, today alone you have to work for extra 14 hours, let us assume you are working. 10 hours, some 6 hours sleeping, 4 hours other activity. So 10 hours, 14 hours you are having. 2 plus 14, 60. And that next day, exam day, morning, 3 hours at least you can study, right? Anybody. May not be 6-7 hours, but 3 hours you can study, right? Close to 18 to 19 hours is the time that you are having. 18 to 19 hours. Like the doubt which is asked by them is, can I revise it from this book, which is 350 pages, or can I go with a chart book? Chart book is convenient, right, to revise. That is what people argue. Tell me, suppose you watched a movie, you want to watch it again. What is the, you want to watch it, but you don't want to sit entire 3 hours and watch. So what you have to do generally, you have to hire one video editor and sit with him, watch each and every scene, and edit the movie into multiple cuts. Whatever the shots that you want to watch, that shots you cut into it. Merge that video into 45 minutes. Whatever 3 hours movie, make it into 45 minutes. Now sit and happily watch that 45 minutes. This is only a dumb guy will do. What I will do, I will fast forward and go. This is common sense layman. Whether you study a big bulky book or a small book, your mind has the ability to fast forward it, no? Yes or no? Suppose right now I have to say this. Do you think I will take again? So what is there in this? I will be just plainly reading it. First question, nothing is there. Second question, okay, physical inventory counting. Attendances, physical inventory counting, unless impracticable to, okay. Auditor has to check what? Evaluate instructions of the management for recording and controlling results. Observe performance of the count procedure. Inspect the inventory. Perform the test counts. Reconcile with the records also. So performing audit procedures over entity records to determine whether they reflect actual inventory count. Attendance at physical inventory counting involves inspecting the inventory to ascertain its existence and condition, observing how management instructions are complied. Then What are the matters that are relevant for me when I'm attending at physical inventory counting? The matters relevant in planning attendance at physical inventory counting include nature of inventory, stage of completion, risk of MMS, nature of internal control related to inventory, timing of physical inventory count, whether entity maintains perpetual records or not, location where it is held, whether expert assistance is required or not. Write about audit procedures where physical inventory counting is conducted at other than financial statements. If the physical inventory counting is conducted at a date other than balance sheet date, you just have to perform procedures regarding changes in inventory between balance sheet date and other date. Then what are, when if auditor is unable to attend physical inventory counting due to unforeseen circumstances, if auditor is unable to attend physical inventory count due to unforeseen, the auditor shall observe physical inventory count on an alternative date and perform the audit procedures on intervening transactions. Physical counting, suppose if it is impracticable, if attendance at physical inventory counting is impracticable, the auditor shall perform alternative. The auditor shall perform, just a minute, I'll be highlighting also. If attendance at physical inventory counting is impracticable, the auditor shall perform alternative procedure to obtain sufficient appropriate. If at all it is not possible to do so, then he will modify the opinion. Then I will recollect which opinion, either qualified or disclaimer. In some cases, attendance may be impracticable because of the factors like nature of the inventory is like that, location where it is held is like that. Matters of general inconvenience is not a sufficient reason for the auditor. Fine. So I think there is no other much complicated point in this. Rest of the points I can, even if I don't read also, not a big issue. Then suppose if the inventory is under the custody of third party, what? When inventory is under the custody of third party and is material to the financial statements, auditor shall obtain sufficient appropriate evidence. What? Request confirmation from third party regarding quantity and condition, perform inspection and other procedures including inspect documentation regarding held by third party. What is the proof that third party has inventory? Look at the documentation. Request confirmation from third party if possible. Attend physical inventory counting of third party, or arrange another auditor, or get another auditor report or service audit report regarding adequacy of the third party controls for maintaining this inventory in proper condition. See, one part is over. How much time it take right now? Hardly 5.5 minutes. In that 1.5 minutes I gave introduction unnecessarily, 4 minutes. Remaining rest of the standard I will revise in another 5 minutes. How much time it take? Same book I use, you know. You have the ability to filter the data. The most, when you can filter the data better, you know. Tell me which movie you can fast forward very quickly, the scenes and all you can understand, the movie which you thoroughly watched. If the first time you're watching the movie, you can't do fast forwarding. You don't understand exactly what to skip, what not to skip. So in order to have that fast forward technique, first you must have a thorough understanding on the book. You must get the command on the book, whatever book you follow. Only when you get the command on the book, when you're reading it for the next time or that next time, you know what to ignore, what not to ignore. Then why separate chart book? Tell me. You give me ICA book, I will filter and read only the important points. In the same 5 minutes I'll read. You give me 1000 pages book only with this standard. I know how to filter. First time even if I read, doesn't matter. I know how to filter. Filtering is an art that we have. The more you use it, the better you shine, the better you sharpen it. So don't think 1.5 day before exam, how can I prepare from this book? Some students especially, sir, ICA book can I study? Yeah, I want to study ICA book, sir. But how to revise day before exam ICA book? This much lengthy book, how can I? Whatever point, no. First you read that entire book once. You will understand where relevant point is there, where irrelevant point is there, you will get an idea. Then when you're revising later, whenever you're reading, this point appears relevant, ignore them, go to the next point. That skill we have. Understand that skill. If you understand that, you don't require any chart book, short notes, all that. In fact, chart book is dangerous. You can't understand MCQs if you read from the chart book. You can't understand any MCQs, all that from the chart book. It's impossible for you. Only if you read it from the main book, you will understand. Suppose, I am reading this. If in chart book, how this point will be there, Enquire management, review minutes of the meeting, review legal expense account, and sometimes information for evidence, litigation will also help you for valuation measurement. Like that, something will be there. If you read like this, in exam, they'll give you one full sentence. One full sentence they'll give you. They'll give you MCQs especially with these options. Sometimes, enquire management. Option 2, enquire management wherever applicable, entity internal legal counsel. Option 3, enquire entity in internal legal counsel. Like that they'll give you. Unless you read full sentence, how will you pick up the right answer? Understood. Sometimes in exam MCQs, not sometimes, most of the times MCQs, you see, they sentence on completeness of a sentence. They test on completeness of a sentence. If you read incomplete sentence based book, how will you identify complete right sentences? Your learning process should be right. 99% of the people, I'm telling you, they're having herd mentality, sheep mentality. Means they don't think anything. But right now I just showed you, within 5 minutes I read this entire standard from the same book. Whereas I explained it in 15 minutes here. Whereas in my regular class I explained it for 1.5 hours. This entire standard we discussed for 2 hours actually. Whereas here we discussed 20-25 minutes. And we revised it in another 5-10 minutes. Hardly. The moment you read like this for 2 hours on the standard, original reading, first time reading, understanding, you will get a grip like anything on the standard. Okay, in this book, these points are all there. When I'm reading late, next time I will ignore. You see, I'm ignoring and then reading. No, when I'm explaining you, I'm directly ignoring and reading you the relevant point which you can understand. That skill you develop when you master reading in that book once. First, get a grip on the book that you're reading. Then filtering becomes easy. Now, for filtering, what are you doing? You're ignoring the book where you got the grip and reading some other book altogether, some chart book. When you're reading that chart book, another friend will bring another chart. And you also sit reading, you start reading that chart also. Your result became chart. What? So believe in the process. Very few understand the right process is the easiest route to success. Right process is the most easiest route to success. Very few know that. In the process of shortcut, we are making our result complicated. In the process of finding a shortcut, you are making it complicated. That's why we always start from scratch. Sir, I'm failing from past 5-6 attempts, sir, 10 attempts, sir. What should I do? Give me some tips. No tips, nothing. Go, stop repairing your methodology of learning. Start from scratch. Restart everything. Start as if you're a fresher. As if you're coming from a foundation, you start afresh. The moment you start watching the class, I know it and fast forward. No, don't do that. Restructure your learning. Rewire your brain. We call this rewiring. If you start from scratch and once again learn thoroughly, slowly, neatly, you will construct your learning once again properly. And that's the easiest route. We have so many students who qualified in 12th attempt, 13th attempt, and I have made an interview with one of the highest attempt candidate, 18th attempt. He qualified in the 18th attempt after coming to us. He's failing so many times. Somewhere he saw my video where I spoke about the start from scratch and he was impressed. And he thought of trying it. And you know what? He didn't tell me that he bought the course also. He just bought in our website and started watching. And finally, after result, he messaged me saying, 18th attempt, I qualified listening to you. The only difference is nothing. We are not discussing the subject at an extreme super level and all. We are discussing decently. The point is the process he trusted. So any number of times you fail or first timer doesn't matter. The process you follow, if it is right, that's enough. Don't look for shortcut. The right process is the easiest route to success. MS Dhoni, he also says the same. The right process is the easiest route to success. The point is, like what students complain, when they say about audit, well, no matter however we don't understand. What you don't understand? Show me one thing in this which you don't understand. If you're not able to understand, means the mentor whom you're following is useless. Probably that. Or you are not listening to him carefully. Any of these two, analyze that. Where am I lacking? Is it because the one whom I am following, are they not giving me the right content? Or is it me who are unable to digest that content properly? So you can evaluate on your own. If you think the answer is 2, means it is your focus, your lack of attention. Why you are lacking attention, identify the reasons. You have chosen education as the medium for leading in life. And I'm telling you, education is the less riskiest route to succeed in life. The very riskiest routes to succeed in life are something else. Sports, cinemas, all these are highly risky, highly hardworking. Most easiest, less riskiest route to succeed in life is education. ஏசியில் உக்காந்துட்டு ஹாப்பியாக கேட்டுட்டு படிச்சுட்டு அதுதானே நீங்கள் பண்ணணும். This is the only thing that you have to do, right? Nothing, no hard work. Hard work na enna? What is hard work? Go to metro workers. Go what metro workers are doing. That's hard work. What you're doing is not hard work. We are just focused. Analyzing focusfully we are analyzing. That's it. That is what we are doing. We unnecessarily you know what, we satiate our mindset in such a way that we are doing something proudful, we are doing something professional, we are doing something hard work. You continuously tell yourself that you are doing hard work, hard work, hard work. You feel that it is hard. Promise, I'm telling you, in my entire CA preparation process, I never felt CA is a difficult course. I never felt that. The only reason I never felt is because, whenever I read something, I understand. I'm understanding everything. What is there in this difficulty? What logic is there here? Of course, that time papers are easy. So whatever limited chapters were there, that chapters only we used to read. But I never felt it is so difficult. Probably my atmosphere is like that. We all, like my friends, every one of us were like first attempt candidates only. Like we all qualified in first attempts only. In the sense, see, first time not a big deal for me. I don't consider that also because I don't believe in that. You pass in the exam, you studied well. If you have not studied well, you will fail. That's the only logic. So if at all you qualified in first attempt or second attempt or third attempt, whatever it is, irrespective of that, you qualified in the attempt in which you studied really well. Nowadays, even if the student is studying extremely hard also, they are failing. Why? Because they are not understanding what they are reading. How many of you honestly tell me understood audit at this level? If at all you have not listened to my class, generally, before you attend this class, how many of you have this grip on audit? Very less. Because they feel always auditing is a boring subject, auditing is something, a theory, we can't understand anything. This is a subject, nature itself is like this. For every line in this, I will show real example. For every line in this, I will show real example. Suppose just now I told Amazon inventory lying with third party. What example you know earlier? Inventory lying with third party, job work, that. What example I gave? That is what real learning is. The example you imagine, that and all decide. Service auditor, have you ever thought of what is service auditor? Just blindly, you plainly read without understanding why it is so. And now I told what is service auditor. Getting my point? I'm not saying that I will give the best content like that. Learning should be that way. When I read that sentence for the first time in my life, what is service auditor? I got this thought. Okay, they used some sentence, okay, fine. I will not think like something they used, I should remember this. I will not be like this. I will think of what is service auditor, what are they talking about. Then when I investigated further, I got to know there is something called 402 standard, service auditor, service organization. We are using service organization, we are user entity, we are user auditor. And that standard is there in the CA final syllabus. The level of understanding should be at this level. Now tell me, again people say, sir, this level of understanding takes lots of time. How? Just now I showed, in 30 minutes I revised, So, in-depth knowledge takes more amount of time. That's false. That statement is false. Discussing the best examples takes time. That's false. Because I covered all the beautiful examples in half an hour itself. Correct? So, most of the assumptions we have in our life are 99% false. Most of the assumptions. The point is, we don't competently analyze them. We don't analyze them with a real knowledge. Lack of knowledge is the main drawback for all this. Main reason for all these failures. People say, no, my favorite thing. நம்ம நல்ல ஹானஸ்டா இருந்தா லைஃப்ல ஜெயிக்கவே மாட்டோம். Have you heard of this? If you're honest, you will never win in the life. It's not about honesty, it's about competence. Competence is the one which is important for succeeding in life. Even a thief requires a skill to steal. A thief requires a skill. Competence is most important. Develop your competency. What Mukesh Amban, is he cheating anybody? Is Adani cheating anybody? Is Tata Group cheating anybody? No. They are creating products which is useful for lakhs and crores of people. The number of people that are using your product determines your success rate. As simple as such. Your financial success depends upon how many crores and how many lakhs and how many thousands or how many hundreds or how many tens. How many are using your product. That decides your success rate. Mark Zuckerberg is the 4th richest guy in the world because close to 150 crore people across the world is using Instagram. 150 crore number of people are using Instagram. That is why he's super successful. Google owners all, they are minting money like anything because 300 plus crore people are using Google. It depends upon number of people. So you develop a product, you develop a skill, you develop a competence in such a way that your product is used by hundreds and thousands and lakhs and crores. That's how you can scale up in life. Sorry, it went into a motivation session. But I just want to tell you very clearly, think realistically. Just because somebody is saying this is a tough course, don't say this is a tough course. Just because somebody say auditing is a boring subject, don't say boring subject. Why? Skeptical mindset. Subject itself says you have to be skeptical, but you always switch off it. Entire CARO, I did that 8 minutes revision. You see CARO, entire CARO I revised in 8 minutes. Each and every word, each and every point I covered. Now tell me, when I'm explaining, right now our revision class is going to be 22 to 23 hours. Total scheduled time is 24 hours. Within 24 hours, 3 to 4 hours gone. Some wastage, time wastage, this motivation, camera setting, mic setting, whatever. Within 20 hours, 80% of the syllabus, I revised it to you. It's not reading. Chumma, I'm not opening, reading line by line and going to the next page. No, I'm actually explaining you the concepts. When in 20 hours, when I'm explaining you 75 to 80% of the syllabus, can't you read in 20 hours, one time reading thoroughly? Exactly. There is the answer. So day before exam, how to revise is a fear created by those who are developing charts to sell their charts. It's not true. It's not true. You can happily revise. Just now I showed 20 hours is solid time for you to revise. By the way, you are not doing for the first time that day before exam. Remember that. You already attended some regular coaching. You have already revised it thoroughly. You have attended marathon classes like this. You will once again watch on the YouTube this marathon. You once again read it. Then day before exam, that situation comes. Just think always yourself positive. What is positive thinking? Not questioning your ability. Positive thinking means I am the best, I am the right, I am super. No, not that. Positive thinking means not that. Don't question your ability. Can I do that? Is it possible for me? If you're not thinking like that, that's positive thinking. Positive thinking means not thinking negatively. That's enough. You don't think negatively. And again, don't say I am the best morning. As soon as morning, some Instagram motivators, they say as soon as you wake up, go stand before the mirror, say I am the best. உங்க அம்மா பார்த்தா என்ன ஆச்சு என் பையன் அப்படி அனுப்பாங்க, டாக்டருக்கு கூட்டிட்டு போவான், இந்த மாதிரி எல்லாம் பண்ணா. It's not required. Motivation is not something externally. That is, you should internally feel always strong. No matter what difficulty comes in life, you are not shattered. I'm extremely strong. Emotionally, I'm extremely strong. Like, you don't know about my willpower. I'm extremely strong. Daily how many hours I work every day? 5 hours. Including the class. Of course, when I have a class like this, I don't work beyond that. Only 5 hours I work every day. That is my routine. I work 5 hours generally, and 3-4 hours I play with my kid. My wife will be playing with me. Okay, just joking. So 3 to 4 hours I have a very good family time. Generally, like my mom, my routine, if I tell you, you will laugh, or maybe you may judge me. I don't bother. But 5 hours what I work now, that's intense. Intense working. 4 to 5 hours I work every day. That's intense, extremely intense. I don't work chumma edo. But you're seeing me the way I'm taking class, right? Morning, what energy at 10 o'clock when I start the class, same energy I carry even up to 5:30. The moment I step out of this auditorium, I will fall. But otherwise, I'm super active throughout. So now I'm working 5 hours here in the class. I will not touch in my laptop also. You can ask my team also. I'll not touch laptop after going home. I'll just go happily chill Instagram, something I'll be watching, something. I recently started Mahabharat serial to learn Hindi. I started Mahabharat serial. One episode only completed. I don't know it'll continue or not. So 5 hours intensely I work out. Rest of the time I spend time with my family. I have time for everything in my life. I'm not busy. I'm never busy, first of all. I'm always available. I don't know how many of the students knows. Whoever texted me, they knows they get an instant reply. Unless I'm in class. How many of you have interacted with me over Telegram or WhatsApp? Yes. To best of my knowledge, you got instant reply from me. Most of the times, unless it is midnight, 2 o'clock. That time nobody. Yes or no? That time I'm sleeping. Most of the times I give instant reply because I'm always available. That doesn't mean don't start testing me tomorrow onwards again. Okay. I'm just telling you. Okay. So make up your life in such a way that it is highly disciplined. Disciplined lifestyle. Discipline means not hard work. Structuring your life. You are sitting before book to study 7 hours a day. 7 hours you have to be effective to it. You have to be super strong for 7 hours. See, the 5 hours which I work, no, that's highly intense. Corporate works, corporate, like company you work, right? This 1 hour my revision class, the effort I give is equal to 5 hours of my corporate work. In a corporate, if I work 5 days, here 1 day is equal to. That's the level of energy we consume here. Teaching is extremely hard. Don't think it's easy. It's extremely hard because you have to be continuously alert. Throughout the class 5 hours, I have to focus on how my behavior, how my facial expression, my thoughts. My mind should not divert at all, right? Technically speaking, I don't have the choice of diverting my mind also. I don't, because I'll forget next point. That flow will disturb. All this I'm telling you because you should be very, very confident. You have to be confident. You should be confident. You never question your ability. Day before exam, all this will be taken care. Next 20 days, whatever you have, September exam, for example, give your best efforts. Whatever best efforts is possible, give your best effort without questioning your ability. Be sincere to the process, be sincere to the preparation. Okay? Yeah, let's begin the standard 505, external confirmation. External confirmation standard, the moment we think of, generally, we assume we know very well. But I will prove it right now that you don't know that much. Because in this, so much of new discussion is there. I still feel some students are following old materials, old scheme materials. No, don't follow that. Follow new scheme materials only, either of ICA material or some other faculty or other material which is established standard. And I'm telling you, many materials of various faculties were not updated. As earlier, 505, for example, you take this 505 external confirmation. It is 2 pages standard, just 2 sides, so small content. But now you see, the external confirmation standard is so lengthy, almost 4 pages. That too, I compressed it a lot. Compressed means the size, spacing and all I removed. So it is 4 pages. As per institute book, it is almost 5-6 pages. Getting it? 10 pages it is there. 10 pages it is there. 505. Earlier it was only 2 to 3 pages in the institute book also. So if at all you are having any book that you are following which is belonging to old scheme or somebody else, where the pages are just 1 or 2 pages, external confirmation entirely, that means something is skipped. So many concepts are skipped in that. So 505 in the new scheme CA, actually no, CA inter audit in the new scheme, people think syllabus is reduced. No, it's increased. Company audit alone they removed, and what else is removed? Maybe some 1 or 2 chapters they removed, but whatever existing chapters were there, they increased the depth. 505 standard is increased, 501 is increased, 550 is increased content, 610 content is increased, almost every standard. 570 going concern we did, right? Earlier also that was 2 pages only, now it is 6 pages. Content in every standard has been increased by 2 to 3 times because entire pronouncement book is copied. So what is 505 external confirmation? What is external confirmation? It's an audit evidence, yes or no? Through external confirmation we get information. Through external confirmation we get information. What information? Audit related. So audit evidence as a direct written response. Audit evidence obtained as a direct written response to the auditor from third party. That information directly that you are getting from third party is called as what? External confirmation. How we do external confirmation generally? Why first of all we will do external confirmation? Generally when we feel that the evidence that we obtained from the entity records, if at all you are not getting 100% confidence, exactly like outstanding balance on the balance sheet date, or some transactions that are settled in the year, like transactions over, settlement is also over, outstanding balance or nothing there, but you felt somewhere that this transaction is doubtful, you are not getting convinced, then you will go for what? External confirmation. Now, what is the procedure for external confirmation? First, I will look at the procedure. What is the procedure? First, determine the information to be confirmed. Determine the information on what you want confirmation. First identify the information for which you want confirmation. Do you want to get information for relating to a loan agreement? Do you want to know loan agreement terms and conditions? Do you want to know debtors related outstanding balances? Do you want to know some significant transaction happened during the year? Terms and conditions of the transactions. Do you want to know outstanding balance with the creditors? What? First identify the information you want confirmation. Then select the conforming party. Party selection means what? Suppose I identify debtors. I identify debtors in that one company is there. Let us assume Amazon warehouse. Third party. Now Amazon warehouse, to whom inside that warehouse I should send this letter? Can I go and give it to the security guard and come back? I have to give it to the right party, no? Somebody according to me who has the knowledge of what I am asking. According to me, who has knowledge of what I am asking. To them I should ask. So identify the appropriate conforming party. The second one is what? Appropriate conforming party. Select the appropriate conforming party. In most of the entities, conforming parties are accounts manager, finance manager, stores manager. If they are not responding, you will go for the top management of that entity. Then, okay, you understood the information where you want confirmation. You understood the party from whom you should get the reply. Now send the request. You have to send the request, right? Before sending it, what you have to do first? Design the request. Design the request. This request can be designed in two ways. Positive confirmation request, negative confirmation request. What is a positive confirmation request? Very simple. Suppose, in my books of accounts, there is a debtor. That fellow has to pay me approximately 1.05 crore, 1 crore 5 lakhs. That is the outstanding amount that I have to receive as per the books of accounts. I saw when and all sales were there, when and all amounts were received, net amount and all correctly calculated as per the books of accounts, as per the data I verified. I just want to know from his side also whether this amount is correct or not. Is there any fake transaction which the company recorded? Is there any fictitious transaction which the company recorded? I have some doubts. So I sent a confirmation. Dear so and so customer, dear so and so customer, we are the auditors of so and so company. We found that there is an outstanding amount of rupees 1 crore 5 lakhs receivable from you as on 31st March. Kindly respond. What is the outstanding balance as per your records? Please respond within 3 days. I kept a blank and then sent a request. Now tell me, third party, whatever the balance is there in books of accounts, whether it is matching or mismatching, whether he agree with my books of accounts or not agreeing, both he should reply, right? What will happen if at all he didn't reply within 3 days? I will send a follow-up request. What I will do? I will send a follow-up request. Until I get a reply, I will be following him. I will be following up him. Yes or no? That is positive. Negative confirmation request, what you know? Entire information will be same. I will mention below that. Kindly respond if you disagree with the above information. I will respond like, I will ask him, kindly respond if you disagree with the above information. Otherwise, ignore. I will mention like this. If at all the above information what is there in our books of accounts is matching in your records, ignore it. No need to reply. Within 3 days, if at all we didn't receive any reply, we assume that records are matching. This is called negative confirmation request. Tell me which is superior? Positive. Why positive confirmation request is superior? Because you get a positive evidence here. Negative confirmation request, we don't know whether it is really matching or not. Maybe he did not see the mail. 4 days over. And I assume that everything is matching. But in fact, what happened is he didn't see the mail itself. And when we go investigate further, no, actually, it was a mistake in our books. He is right. Our books are wrong. But he didn't respond. Since he didn't respond in an NCR format, what I thought, everything is matching. So that is the side effect of negative confirmation request. This is PCR, this is NCR. So you need to design the request and then send. Now when you're designing the request, you should consider certain factors. When you're designing the request, should I design a positive format or should I design in a negative format? What factors I should consider when designing confirmation request? What assertion you are addressing? Are you asking him to confirm outstanding balance on so and so date? Valuation, balance, outstanding amount, existence of the balance, or are you asking about inventory condition? Existence of balance you are asking, or are you asking some condition of the inventory, or are you asking something valuation, are you asking something ownership? What assertion you are testing? specific risks of MMS. In that particular case, what risks is involved? If the risk is high, I'll go for positive confirmation. If the risk is low, for that item, I may even go for negative confirmation. The layout and presentation you should keep in mind carefully. Prior experience of the auditor. In past, with this entity, based on my understanding of this entity and its behavior with the third parties, I will get an idea whether to go for positive format or negative format. Management's authorization or encouragement to the conforming parties to respond to the auditor. How far management is telling the clients, the third parties, sir, our auditor will ask confirmation, please respond. Is management telling third parties like this or not? Is management interested, first of all, if I do external confirmation? And how far the third party has the ability? How far the third party has the ability to confirm? All these factors I take into account when I'm designing confirmation request. Finally, I will send the request including follow-up request. And see that requests are properly addressed, including the addressee to whom you are sending. Ensure that the address is right. Follow-up request, if you may send an additional request when a reply to previous request is not received. And remember, a response to positive confirmation is providing reliable audit evidence. Correctly? For a positive confirmation request, when we get a response, that is reliable evidence. That is reliable. Okay, what he responded, that's a second issue. What he responded is a second issue. So the auditor may reduce this risk by using a positive confirmation request. Which risk? Suppose a negative, no, there is a risk. If at all he didn't see the request, that's why he didn't reply. Is it a risky element or not? This risk can be reduced by sending positive confirmation request. So what is the external confirmation procedure? Decide the information to be confirmed, select the conforming party, design the request keeping in mind all the risk factors, all that, send the request including following request, follow-up request. Now third party will reply. Suppose third party replied, positive or negative or whatever, we got a reply. And in that reply, third party given some amount which is not matching with my records, which is not matching with my entity records. We call that as exception. What do we call that as? Exception. What is an exception? It is a response from third party. What it indicates? Difference between information requested to be confirmed or contained in entity records and information provided by conforming party. Exception means what? It's a difference between information requested by us. What we request, whatever is there in our client records. So information requested by us or contained in our records and information provided by third party. If there is a difference, we call it as what? Exception. Exception means what? Inconsistency. Are you getting it? Now tell me, can I call it as material misstatement? No. Exception means there is a difference. Now when there is an exception, what will I do? I will verify, I will go for further works, I will go for further documentation. Like I will go for further investigation. Whose books of accounts are wrong? Is it my books of accounts which is wrong or third party books of accounts which is wrong? I will go investigate further. I investigated, I understood it, third party only accounted wrongly. Then my client, though there is an exception in the confirmation procedure, my client books of accounts are genuine, they are right. Third party books only wrong. When I did further investigation, I got to know. So exception does not mean misstatement. MCQ can be tested on this. If a difference between third party records and your client records, if there is a difference, what is it called as? Misstatement, huh? Exception we call it as. Clear? Now, can I use negative confirmation request? Can we use negative confirmation request? Yes. Now, we understood that positive confirmation is best, not a negative. But where we can use negative, then why standard has this method also? Can we use negative request? If so, when we can use? If all the following conditions are present. If all the following conditions are present, auditor can also use what format? Negative confirmation request format also we can use. What is it? The auditor has assessed risk of MMS low. The auditor has assessed risk as low. And auditor also has an evidence that controls are effective for that assertion. For the item that we are asking confirmation, no, controls are extremely good. In our company, controls are extremely good. There is no scope for misstatement in our records. And the risk is very low. Or exception rate is low. A low exception rate is expected. Many students don't understand exception definition in this standard. Without understanding that, you can't understand half the standard. What is exception? The possibility of disagreement between our records and third party records. the disagreement between these two records, that possibility is low, then you can use NCR format. Negative confirmation request can be used where the exception rate is low. Low exception rate is expected. That's the meaning. And auditor is not aware of any circumstance or condition that would cause recipient of negative confirmation request to disregard that request. What does it mean? I don't have any information or knowledge that whatever NCR I send, they will throw it away. Which means what? I assume that whatever request I sent, they will for sure read it. And if I do not get a reply, it is only because they have seen it. Since everything is matching, they didn't reply. If I have that level of assurance, no, it is nothing but called as low chances of non-response from third party. What is it called as? Low chances of non-response. Means third party for sure he will respond if something is there. In that kind of third party, for that kind of third party, I can send what? NCR. So negative confirmation request is generally not suggested to use unless all these conditions are present. Low assessed risk, controls are effective, exception rate is low, third party non-response chances are low. That's it. By the way, failure to receive a response to NCR does not explicitly indicate receipt by third party, correctly? Just because for a negative confirmation we did not receive any response, can I say the third party received it? Remember that fact. Accordingly, a failure of confirming party to respond to an NCR provides less persuasive evidence than by a positive. So for a NCR, if you don't get a response, that doesn't mean third party received it. If third party, negative confirmation request, if you fail to receive any response, that doesn't mean third party has received it actually. That is why negative confirmation request is less persuasive, less convincing, less reliable than positive confirmation request. This question was asked in CA final for 4 marks in November 22 exam. What? They have sent a confirmation request to some debtor. NCR format. Debtor has not responded. What is your response in this? They asked this question in CA final. And in CA inter also somewhere in MTP or RTP I saw this. So this answer is what they're expecting you to write. So confirming party is more likely to respond, indicating the disagreement with the confirmation when information requested is not in their favor. Tell me when third party will be showing curiosity to respond. If at all my books of account shows higher balance that he has to pay, but his books of account shows lesser balance, he will definitely respond. Sir, no sir, I have to pay this much only. Suppose if my books of accounts are showing lesser balance, his books are showing higher balance, he will less likely to respond to the situation because it's favorable for him. Keep all these factors in mind before you use negative confirmation request format. Now, how should we evaluate the evidence obtained through external confirmation? How we should evaluate the evidence? Very simple. The auditor shall evaluate the result of confirmation. What is the result of confirmation? You get a response, no? You match that response with your books of accounts. So what you will get? What conclusions you will get? Either you will get a response where he will indicate agreement. One response is what? One kind of response you get from third party is what? He responded saying he is agreeing with the data that provided by you. Or a response deemed unreliable. Maybe you might get a response which is not trustworthy. Means somebody else has sent you the response who is not the right candidate in the organization. Or you will not get a response. Or you will get a response that is indicating exception. Exception means what? Some difference in the record system. So when evaluating result of external confirmation, the auditor may categorize the result as follows. Like external confirmation, you did. What you got? No, I didn't got a response. Or I got a response which is fraudulent. Or I got a response where they agreed everything. Or I got a response where they didn't agree. Simple. Correct? So they'll give you this question itself as a 4 marks question. Evaluating evidence obtained through external confirmation. Getting it? This third point is not required. These two enough. Evaluating evidence obtained in external confirmation. Evaluating the result of external confirmation. Right. 4 marks question they'll ask. What are the factors that you should keep in mind while designing confirmation request? 4 marks question they'll ask. Negative confirmation request, non-response. How auditors shall interpret? 4 marks question. Under what circumstances negative confirmation request can be used? 4 marks question. Anyway they can ask. Clear all of you? That's it. So with this 505 standard, predominant main discussion, which is complicated part, is completed. Okay. So we'll continue discussing the next standard in the next session. Are you confident until now? That's it.